This audit subject is such a mess. How to cover all 11 chapters? So lengthy syllabus is there. Do not worry guys, be rest assured, we have got you covered. Yes guys, we are bringing to you brilliant marathon revision of CA Inter Audit, and most importantly, it's in only English. Yes guys, only English audit marathon where we cover all 11 chapters, detailed revision. Yes guys, be rest assured. This is one of the best marathon you will ever find on YouTube for CA Inter Audit English revision. What you can expect from this marathon? Three things. Number one, detailed coverage of all 11 chapters, detailed revision. Number two, excellent conceptual clarity of all the concepts. Number three, whichever answer you need to learn, okay, from ICI perspective, we have given enough time so you are able to learn in the lectures itself. What we expect from this marathon? Number one, you watch this as many times as possible. If possible, one time, two time, okay? Every time extra you watch, I bet you, I promise you, your confidence will surely increase and you will be much more confident in audit. All I want is you clear CA intern as soon as possible, and as soon as you come to final, put a nice comment here. I cleared because of this marathon. That's the only thing we expect. I hope you love this lecture. Give this marathon lots of like, lots of love, okay? Lots of whatever it deserves. Why? Because only this is a reward for us. I hope that this marathon helps you to clear CA intern as soon as possible. That is what I want to say. Nothing else. Enjoy this masterpiece. Enjoy our hard work. Enjoy our baby. It's all yours. Make sure you watch this. Make the best use of this marathon. One last thing. From where have we done the revision? Guys, we have done revision from this magic book. Sir, what is so magical about this book? We have compiled or covered entire syllabus of ICI in just 86 pages. We have tried our best to include all concepts in 86 pages. That is why we call this the magic book. Only hard copy we have because we believe only hard copy brings hard result. Unless you don't write, you don't scribble, okay, results don't come because you need to read not one time, multiple times. See, I have also written, okay. So unless you don't write, result never comes. So we don't have soft copy. If you wish, you can avail this from our website. Thank you so much. Enjoy one of the best revision of CA Inter Audit on available on YouTube in only English. Let the show begin. Thank you. 1, 2, 3. Let's start. Essay 501. After this 10 minutes essay we will do. Okay, let's start. Chapter 4, Audit Evidence. Audit evidence is which essay? Essay 500. But what is this? Audit evidence specific consideration for selected item. For certain items, I don't know how to get evidence. So new standard came. They said, baby, don't worry. We will give you extra evidence. Okay. We will give you some points. How to collect evidence in this case. One more time. What is the name of standard usually? Audit evidence. But in certain areas, I don't know how to get evidence. So standard said, don't worry, I will guide you. Audit evidence, specific consideration for selected item. One more time. This is also audit evidence, specific consideration for selected item. So selected item, this will give us guidance. Which selected items are there? 3. Normally, I want evidence with standard. SA 500. But if I want evidence, specific evidence, okay, audit evidence, specific consideration for selected items, okay, selected items, how to get evidence? So it basically talks about 3 items. Objective of auditor is to get sufficient and appropriate evidence about existence and condition of inventory, completeness of litigation and claim, presentation and disclosure of segment information. So normally SA 500, but in these 3 areas we had little doubt. So new standard came 501. Okay, let's start. Number 1, existence and condition of inventory. Remember one word. How to know whether inventory exists or not? Physical verification. So simple. Condition. Why condition is relevant? Condition of inventory is relevant for valuation purpose. Which purpose? Valuation. If condition good, value good. Condition bad, value bad. Start. Existence and condition of inventory. Okay. When inventory is material to the financial statement, auditor will obtain. Question can come. Whenever inventory is material, what to do? Okay. So, when inventory is material, auditor will get sufficient and appropriate evidence regarding existence and condition of inventory. How to get the evidence? When inventory is material, auditor will get sufficient and appropriate evidence regarding existence and condition of inventory. By how to get evidence? Number one, attendance at physical inventory counting unless impracticable. Go and attend physical inventory counting. Existence of inventory can be known only that way. Attendance, you don't have to count, you just have to go. Attendance at physical inventory counting. There 4 points are there. Number one, evaluate management instructions and procedure for recording and controlling physical inventory counting. Just understand, as soon as you go there, no, there will be management. Management will give you a lot of instructions. Sir, today we have stopped the production. Today we have stopped the dispatch. You said, sir, why all this? Because there is no confusion in counting inventory. Okay, so just listen to their procedures. Then you will get more comfort on existence and condition. Okay, they will say, sir, we have done dispatch is stopped today. So there is no confusion. 31st March, we want to close the inventory. So evaluate management instructions and procedure for recording and controlling inventory. Second, observe performance of count procedure. They will count everything. You will have a sheet. They will count. Just observe, are they counting properly? Third, inspect the inventory. How to inspect? Either sheet to floor or floor to sheet. Let's take example. Sir, what do you mean by sheet to floor? You can say, sir, where is this inventory? Where is this inventory? Where is this inventory? Reverse also we can do. Okay, okay. Sorry, this is sheet to floor. Sheet to floor. Floor means where inventory is. Okay, floor. Then take that floor. Okay, ask them, sir, which this is? Oh, this is in 11th page. Understood. Like that. Inspect inventory from sheet to floor or floor to sheet. Perform test count. You also count a little. You also count a little. Okay. Over. Last, in the end, see whether the entity's final record is matching with actual inventory counting. In the end, we will see whether entity's inventory record is matching with actual inventory counting or not. Over. Very simple. Let us learn. They can ask this question directly, you have to write. Next question also very good. In 10 attempts they asked once, they asked last time. So I don't think it will come for few attempts. This one. But still we will learn. Come here. So I think only one question to learn this one. Nothing as in this standard. Let us start. Tell me, when inventory is material to the financial statement, auditor will get sufficient and appropriate evidence regarding existence and condition of inventory. How to know about existence? Attendance. Attendance at physical inventory counting unless impracticable. 4 point. As soon as you go there, management will speak few words. Evaluate the management instructions and procedure for recording and controlling the inventory. Second, okay, they will count, observe performance of count procedure. Third, inspect the inventory, two-way, sheet to floor, floor to sheet. And last, you also count a little, perform test count, over. In the end, see whether the inventory counting results are matching with the books of accounts. Okay, inventory recorded in books of accounts. Over. Super simple. One last time, if you want, I can speak, but take break of 5 seconds. Time up. Whenever inventory is material to the financial statement, auditor will get sufficient and appropriate evidence by attendance at physical inventory counting unless impracticable. Number one, evaluate management instructions and procedure for recording and controlling the inventory. Two, observe the performance of count procedure. Third, inspect the inventory, perform test count. In the end, see whether the counting results are matching with entities' records in books of accounts. Over. Now, this is when you started counting. But before counting, there is planning done. We will read this also. Matters to be kept in mind while planning attendance at physical inventory counting. Tell me, first planning is done or attendance is done? Planning. So in planning, you have to keep in mind these many things. One more time. Matters relevant in planning attendance at physical inventory counting. We are not going there. Planning. One last time. Matters relevant in planning attendance at physical inventory counting. Very simple. Number one, location at which inventory is kept, including materiality of inventory. See, there are 30 locations. We cannot go at all 30. There will be 2 or 3 locations which will contribute 90%, okay, of total inventory. We will select those. Location at which inventory is kept, including materiality. Second, whether adequate instructions and procedure are to be issued for physical inventory counting. Sometimes management will tell, reach at this time, because their evening happens at 3:30, 4 o'clock only. Then you cannot count. Okay. Don't talk with this person. He will mislead you. Whether instructions and procedure are to be issued. Last time someone went, he will give instructions. Whether instructions and procedure are to be issued for physical inventory counting. Third, nature of inventory. Which inventory is it? Raw material, work in progress, or finished good? You have to see that. Okay. Tell me which one is hard to count. Raw material easy, finished good easy. WIP it's difficult to know whether 20% complete or 30% or 40%. Building, you can never judge how much it is complete. Okay. So WIP hard. Stage of completion of WIP. You have to see that is difficult. Okay. 2. Nature of internal control related to inventory. What are the controls? Are controls good? Then checking will be less. Okay. ROMM related to inventory. Dependent on internal control only. If controls are good, ROMM low. ROMM IR into CR. Okay. Timing of inventory counting. What time will you count? Will you count during the day, during the night? Okay. Whether entity maintains perpetual inventory record. What is perpetual? Real-time updation of inventory. Okay. Sometimes it is updated at the end of the day. Sometimes it's perpetual. Is it perpetual? So what is perpetual? Real-time updation. Whether expert is needed, then you need to call expert also. If it is a gas inventory, coal mines you are getting valued. Okay. Some complicated inventory, whether expert is needed or not. Zero chance of coming, but still logically, how to learn, I will tell you. Matters relevant in planning attendance, not attendance. Planning attendance at physical inventory counting. These many points. 1, 2, 3, start. If you were the manager, how you will plan? Location at which inventory is kept, including materiality of the inventory. Second, you reach the location. Now, sorry, before reaching, whether adequate procedure and instructions are to be issued for physical inventory counting. One procedure could be timing of physical inventory counting. 3 points done. Now, very simple. Nature of inventory, which is the most hard one. Stage of completion of WIP. Okay. Nature of internal control related to inventory. Risk of material misstatement relevant to inventory. Nature of internal control relevant to inventory. Risk of material misstatement relevant to inventory. Both points done. Timing of physical inventory counting. At what? Sorry, that to done. Nature. Last. Whether. Entity maintains perpetual inventory system. Whether assistance of expert is needed or not. Whether entity maintains perpetual inventory system. Whether assistance of expert is needed or not. I don't think there is understanding part also here. Learning to anyways we don't have to do. But still, if you want last time, I will do. Matters relevant in planning attendance at physical inventory counting. Number 1, location at which inventory is kept, including materiality. Whether instructions and procedure are to be issued for physical inventory counting. Timing of performance of physical inventory counting. Simple point. Nature of inventory, which is the most hard one. Stage of completion of WIP. Nature of internal control related to inventory. Based on that, risk of material misstatement relevant to inventory. Last 2 points. Whether entity maintains perpetual inventory system, whether assistance of expert is needed. Now all points are logical. Come here. If you could not go on that day, if you are counting on any other day, 2 marks question will come MCQ. Physical inventory counting is done at a date other than the date of financial statement. If you do it on 4th April, then what to do? Ideally, you have to do on 31st March. If you do on 4th April, then difference between count date and date of financial statement is properly recorded. Let me tell you. 4th April, do reverse calculation. Okay. Opening stock plus purchase minus sale is equal to closing stock. Now you got reverse. So what you will do? Minus purchase plus sale of 4 days. 4th April minus purchase plus sale. 31st March balance should come. Over. Do all procedures on 4th April. Just see that difference between count date and date of financial statement is recorded. English. Auditor shall perform procedure to see difference between count date and date of financial statement properly recorded. Over. If auditor is unable to go due to unforeseen circumstance, he will go on another date and do audit procedure. Same what I told, and do audit procedure. Sir, if it is impracticable to go then I did not get evidence about inventory. Listen, impracticable. I did not get evidence. If I feel mistakes are material but not pervasive, qualified report. If I feel this inventory is very much material as well as pervasive, it is 90% of inventory and I could not go or they did not let me go, then disclaimer report can also come because effect could be material and pervasive. Auditor shall do alternate procedure to get evidence. If you cannot go, try to do alternate procedure. Opening stock plus purchase minus closing stock. Sorry, minus sale matching with closing stock. If not possible, we will modify opinion. Which opinion they have not given. So if you cannot go, try to do alternate procedure. If you cannot do, modified opinion. Very important. This is also 2 marks. When inventory is kept with third party, many times we do outsourcing work. My clothes are manufactured in Jalandhar, Punjab. So I have kept inventory. Clothes are mine. I have given there. Then I will take confirmation from third party regarding existence and condition of inventory. Or if I have more doubt, I will call my fellow. Hello, Mr. Haris, why don't you go there? He will go. Jalandhar only he lives. In GMCS batch, we were together. Over. When inventory is with third party, auditors shall request confirmation from third party regarding existence and condition of inventory. Or do second. See, either you can do both or any one also. Allow. Perform inspection and other procedure as appropriate. Perform inspection and other procedure as appropriate. Over. Over. Now, we have 2 more things. Both are super duper simple. I told in this SA 501 there are 3 areas. Existence and condition of inventory done. Completeness of litigation and claim. From here definitely it can come. Very, very simple. Auditor shall do audit procedure to see there is completeness of litigation and claim. I want to know all cases are disclosed. There is not even a single case which is not disclosed. I want all legal case to be disclosed. What to do? LIM, L-I-M. Review legal expense account. Last year legal expense account was 7 lakh. Is this year also 7 lakh? Are you clear? If it is 10 lakh, I will clearly know. Sir, 3 lakh paid to whom? Mr. Sinde. Then where is that case? Oh, sorry sir. Review legal expense account. Second, inquire with management where applicable in-house legal team. You ask management, in-house legal team, sir, are there any cases? To know completeness, okay? Review legal expense account, inquire with management and in-house legal team. Sometimes nowhere you get, but in the minutes of the meeting they discuss about the case. So review the minutes of TCWG and correspondence between entity and external legal counsel. Not printed here, external legal counsel. In your book it will be there. Okay, and just write LIM. Over. One last time, if I want to know about completeness of litigation and claim, completeness of LIM, review legal expense account. I inquire with management where applicable in-house legal team. M. Review the minutes of meeting of TCWG and correspondence between entity and external legal counsel. You will come to know whether all cases are disclosed. Break of 5 seconds. Done? Moving on. Come here. Auditor assesses ROMM regarding litigation and claim. If you find there is high risk of material misstatement, when will you find that? When you feel there are other legal cases. Okay, management is trying to hide. See, if management is not trying to hide, standard over. But when you feel there are other litigation and claim, or ROMM is high, when ROMM will be high, when you feel there are other litigation and claim, you can also directly communicate with the lawyer, external lawyer, through letter of inquiry. You can put a letter, sir, please, I want to confirm cases. I feel there are other cases. Or. ROMM also means, okay, you feel company is telling case we will win, but you feel you may lose. So what difference does it make? We need to make provision. If we are going to win, it's just a contingent liability. We need to make provision. So when we feel there is high ROMM regarding litigation and claim or other litigation and claim exist, we can also communicate through external legal counsel through letter of inquiry. Sometimes law regulation prohibits external legal counsel from communicating. Sir, why the law will prohibit? Confidentiality. Okay, law prohibits, then we will do alternate procedure. If auditor is unable to communicate, they are not letting you talk with external legal counsel, I will give modified report. Last, also obtain written representation that all the legal cases are disclosed as per FRF. Let me explain this part again. 1, 2, 3, start. Auditor assesses ROMM regarding litigation and claim. If there is ROMM regarding litigation and claim, or I feel other litigation and claim exist, there are other cases, I can communicate with lawyer through letter of inquiry. Sometimes due to confidentiality, the law regulation will tell me not to communicate with the lawyer. Okay, then I will do alternate procedure. If I don't get evidence, I will give modified report. I will give which report? Modified report. If we are unable to communicate. Also, obtain written representation that all legal cases which should be disclosed are disclosed. Sometimes I need to meet also the lawyer. I need to meet external legal counsel in 3 cases. 3. Number 1, there is disagreement between management and legal counsel. Management is saying we will win the case. Legal counsel is saying we will lose. We have to listen to unbiased person, that is legal counsel. There is disagreement between management and legal counsel. This matter is a significant risk. Maggie, going concern. Going concern is going to get affected. Lawyer is saying this lead is too serious. There, huge penalty could be there. It's a significant risk. Matter is complex. In 3 cases, I will meet. Okay, there is disagreement between management and legal counsel. The matter is a significant risk. The matter is complex. Such meetings are done with representative of management in attendance. Management will also remain present in the meeting. So tell me, when will I meet? 3 cases. DSC. There is disagreement between management and legal counsel. The matter is a significant risk. The matter is complex. Such meeting is done with a representative of management in attendance. Last, segment information. Third part of standard. Completeness of segment. What is segment? Reliance has 4 business. They have done proper segment reporting. Let me show you. See here, product segment. I don't think I will get, but if I have paid money, this is paid version. See here. Please upgrade for segment result. What is segment? From which segment? From Geo, how much money is coming? From refinery, how much business is coming? Reliance retail, that is segment. What will I audit in this? Very simple. Auditor has to obtain information regarding presentation and disclosure of segment information. Number 1. Obtain, number 1, only 2 points are there. Obtain understanding from management. Okay, their method for segment reporting. Obtain understanding used by the management for segment reporting and determine. Obtain understanding from management whether which method they use for segment reporting. You will ask them which method you use. Sir, these 2 people are there, Ayush and Ayushi. Then you have to ask Ayush, Ayushi, which method you use? Sir, as per AS 17. Such methods are likely to result in disclosure as per AS FRF. Okay, is it a suitable method? As AS 17, yes. Where appropriate, test those methods. Test means what? You also check it's properly happening. Perform analytical. What is analytical? You also know no, from which business how much money is coming. So roughly see, is it correct or not? Simple. Obtain understanding of the method used by management for segment reporting. Determine whether such methods are likely to result in disclosure as per FRF. Second, where appropriate, test the method. 2, do analytical procedure. Over. With this, now how many essays are pending? 3. Let's do one more. And then if more energy, one more or as enough. As you say. If you want, you can finish also. Very, very, very easy essay. Only one question can come. Let's finish. Initial audit engagement. It's applicable in two situations. Initial audit engagement means, how to remember this? SA 510 initial audit engagement. SA 510 initial audit engagement. SA 510 initial audit engagement. Okay. 1, 2, 3. What is initial audit engagement? These are those engagement in which financial statement for last year are not audited. So it's an initial engagement for me. 2, or they are audited by predecessor auditor, another auditor. For me, this is new only. 2 cases this standard will apply. It is an engagement in which financial statement for last year are not audited, or they are audited by predecessor auditor. So here fees will be little more. Why? I need to check opening balance in detail. My fellow colleague has checked, then also I need to check. Not audit, then so definitely I need to check. So fees will be little higher. One last time, what is initial audit engagement? Those engagement in which last year financial statement are not audited, or they are audited by another auditor. 2 things I have to see here. Number 1, as I told you, opening balance. Why? Opening plus during the year closing. So closing does have opening, so I need to check opening balances have misstatement that will affect current year. I need to see appropriate accounting policies in opening balance have been correctly brought forward. If there are changes, they are properly accounted, presented, disclosed as per FRF. Not understood. Second, accounting policies are proper. Depreciation, inventory. If you have changed, effect is proper, retrospective or prospective as given in AS. If you have changed, effect is properly accounted, presented, disclosed. So I need to say 2 things: opening balances. Second, appropriate accounting policy in opening balance has been applied. And if there are changes, they are properly accounted, presented, disclosed. Only one question can come, this one. Let's finish this very, very easy. What are your audit procedure regarding opening balance? They will give me case study. And in the last line, write how to audit opening balance. As per SA 510, audit procedure. Auditor shall read the most recent financial statement and predecessor another auditor report if any relevant to opening balance. Very simple, 3 points. Determine whether prior period closing balance is correctly brought forward as opening balance, or if not brought forward, adjustment is shown as prior period item. Easy? No, super easy. Here see. Determine last year closing balance, prior period closing balance is brought forward as opening balance, or if not brought forward, adjustment is shown as prior period item. Please tell first objective to check opening balance. How to check? First point. Determine whether prior period closing balance is correctly brought forward as opening balance. If not brought forward, adjustment is shown as prior period item. Second, determine whether opening balance reflect correct application of accounting policies. In opening balance, all accounting policies are proper. Depreciation, okay, inventory. It is not LIFO, not allowed. So, determine whether opening balance reflect correct application of accounting policy. Third, perform one or more of the following. Where prior period financial statement are audited, take the copy of audited financial statement. In third point. Second, evaluate whether audit procedure done in current year give evidence about opening balance. Listen nicely. See whether audit procedure done in current year give evidence about opening balance. Let me take example. After, when you are auditing, determine whether audit procedure done in current year give evidence about in the current year we are receiving lot of money, means debtor balance is true. In the current year we are making lot of payment, means creditor balance is true. In current year we have sold a lot of stock, it means inventory balance is true. English. Determine whether audit procedure done in current year give evidence about opening balance. Last, if it doesn't give, okay, perform specific procedure to get evidence about opening balance. What is specific procedure? You got appointed on 1st July, do stock take on 1st July and do reverse calculation. Minus purchase plus sale. Is it matching with 1st April? If you got evidence here, no tension. If you don't get, perform specific procedure. What could be specific procedure? You do audit on 1st July. Minus purchase plus sale, 31st March figure should match. If the auditor Obtain evidence that opening balance has misstatement. If you get evidence that opening balance has mistake, auditor will do additional procedure to find exact amount of mistake. If you have evidence that opening balance has misstatement, okay, do additional procedure to know exact amount. Why? To pass journal entry. If auditor concludes misstatement exists, he will tell to management and TCWG. Over. Let us learn this now. We have to learn. 1, 2, 3, start. What are audit procedure regarding opening balance? Auditor shall read the most recent financial statement and predecessor auditor report, if any. Very simple. Number 1. Determine whether prior period closing balance is correctly brought forward as opening balance. If not, adjustment is shown as prior period item. First point clear? Yes, sir. Determine whether opening balance reflect correct application of accounting policies. In accounting policies, all accounting policies are proper in opening balance. Determine whether opening balance reflect correct application of accounting policy. Third, perform one or more of the following. If from one only you get comfort, forget. Perform one or more of the following. Where prior period financial statement are audited, take the copy of audited financial statement. Second, evaluate whether audit procedure done in current year give evidence about opening balance. Not understood, sir. See whether the audit procedures you have done this year give you evidence about opening balance. Like you are receiving lot of money from debtors, you are making lot of payment to creditor, means opening balance is true. Okay. But if you don't get, or perform specific procedure to get evidence because you did not get. What are specific procedure? You got appointed on 1st July, do stock take minus purchase plus sale, you should get 1st April figure. Last, if you feel opening balance is a misstatement, do additional procedure to know exact amount of misstatement and tell to management and TCWG, please correct these. One last time. What are audit procedure regarding opening balance? Very logical. Determine whether prior period closing balance is brought forward as opening balance. Or if not, see adjustment is shown as prior period item. Determine whether opening balance reflect correct application of accounting policies. Third, perform one or more of the following. If last year financial statement are audited, take copy of audited financial statement. Evaluate whether audit procedure done in current year give evidence about opening balance. No, sir. Perform specific procedure to get evidence about opening balance. Over. Second part. Accounting policies are consistently applied. Accounting policies in opening balance of depreciation inventory have been consistently applied. If there are changes, effect is properly accounted, presented, disclosed as per financial statement. Over. Conclusion. Super simple. If you are unable to get evidence about opening balance, tell me which report. Sir, one or two balance or everything? If one or two balance, qualified. Everything, disclaimer. We will give qualified or disclaimer. If auditor concludes, I got evidence that opening balance have mistake, only material mistake, qualified. Material and pervasive, adverse. Effect of which is not properly accounted, presented, disclosed, qualified or adverse. Over. So this cannot come, only one question can come. Easy. Shall we go ahead? SA 510, initial audit, engagement. Shall we go ahead? My to capacity over now. God knows why. Shall we do one more or no? Two to not possible. Possible, we can. What to do? One more you want to finish, related party or no? Tomorrow we will start with chapter 7. Okay, that day we get some time, some chapters smaller, maybe 2 or 15 minutes, then we will take 15 minutes topic, 2 minute pending, we will do whenever suitable. Tomorrow we will start with 7 only. Okay, whenever we have 15 minutes we'll finish this, another 15 minutes this. Okay, so chapter is done, you assume like that. We can do one more if you want. Related party, yes or no? No. Okay. So tomorrow we will easily finish chapter 7. If we get some time, we will do this. From this essay only this one question can come. Nothing else. Okay. So how many essays we have done? 500 audit evidence, 501 audit evidence specific consideration selected item, 505 my balance 5, your balance 5 external confirmation, 510 initial audit engagement, 520 analytical procedure, 530 audit sampling, 555 and 5. Oh my god, you both are related party. Only this much we did. Related party is pending and 610 is also pending. Excellent. Chalo, amazing. So see you tomorrow, same time, 8 o'clock. Bye-bye. Good night. Take care. Now let us finish our 2 chart. Can we easily do? Yes, that is why we are talking so much. Very easily we can finish before 11. So with this, our fully 7 chapter will be over. Only one big chapter pending 5. 8 also big, but okay. Start. Very simple. From here only one question can come or 2 questions. How did I come to know? As usual, you keep asking only from ICI module. I keep looking at module. They add a question. I also feel this can come because they copy paste same question again and again. No bring. 1, 2, 3, start. Welcome back. We are discussing chapter 4, the remaining part. The 2 essays are pending. Yeah, 550, 610. Both are 15 minutes. Concentrate. Super duper easy. Related party. Very important standard in real life. Not that much given here. Maybe in CA final they will give in detail. How to remember? Very easy way. 5 and 5. Oh my god, both are related? Yes. Related party. Related parties in India, 99% fraud happens in related party only. I listen to any conference call. Conference call is investor presentation. They keep talking when related party transaction will be zero. Because whenever I want to increase sale, decrease sale, increase profit, decrease profit, I do with related party because it is my company. Okay, so let's start. Stage 1 definition. What's the track record? Zero. But without definition, we will not understand. What is related party? As defined under FRF. FRF could be AS18 accounting standard. But if FRF gives no requirement, then this is the definition. We will still learn. Person or entity has control or significant influence through one or more intermediary over reporting company. Very simple. I will show you here, then it will be more fast. See, if any entity or person has control, you know what's the difference between control and significant influence? We joke about it. Our wife has control because she has more than 50% stake in us. Everything she will control. But girlfriend, can she also control? Yes. Okay. 20 to 50%. Girlfriend will tell tomorrow wear orange t-shirt, pink t-shirt. You might wear, but she cannot control your life. Okay. So 20 to 50 is girlfriend. Significant influence. You have studied standards for this AS21, AS23. Very good. So if ABC Limited owns more than 50% stake, it is my related party. Or Shah Rukh Khan owns any entity or person. If they hold 20 to 50, then also they are related. Very simple. Entity or person has control or significant influence over reporting company. Which are we? We are ABCL Corporation. Just example. Second, reporting entity has control or significant influence. Here, if I have control or significant influence over a PQR, PQR is related. How to remember this in 1 second? Tell me, my dad is related to me or my children? Both. Why dad? Because dad. Why children? Because children. Last point. Another entity that is under common control with reporting entity. Some entities are under my common control. Okay. 3 example. Common controlling ownership. Example. ABC is my owner. ABC is owner of XYZ also. I and XYZ are also related. Why? Owners are same. Simple example. My dad is Rakesh. My brother Bhavik. His dad is also Rakesh. I and my brother are also related. Common dad. Entities that are under common control, common controlling ownership. Second, owners are close family member. Okay. Example. My owner is Mukesh Ambani. Neeta Ambani owns Mumbai Indians. I and Mumbai Indians are related. Why? Owners are close family member. Very silly example you might not like, but just to explain. Rakesh is my dad, but my mom has different child from another dad. How rude! Just to explain, okay. Then I and stepchild are also related. Cheap example, very good. Moving on, common key management, okay. Jayesh Bhai is CFO of my company and Ashok Leland. I and Ashok Leland are also related. Why? Why? Because Jayesh Bhai can influence decision, common key management. Entities that are under common control as 3 point. Common controlling ownership. Owners are close family member. Common key management. However, all entities that are under common control of central and state government are not related. Like this, don't apply state and central government. Okay. Central government is owner of SAIL, BHEL, BPCL, HPCL. All these are not related because government is the owner. Remember, my dad is related party. But all those who live in orphan house are not related because they don't have dad. So orphan house. I hope you understood. Very silly logic. I hope you understand. All government companies are not related because owner is government. If you want, we can speak this again. It doesn't come, but still let us speak. Why MCQ may come? Tell me, related party as defined under AS 18 or FRF. If they don't define, we have given a standard. First, my dad. Any entity or person has control or significant influence over reporting entity. Second, my children. Reporting entity has control or significant influence over one or more entity. Third, entities that are under common control. 3 point. Common controlling ownership. Owners are close family member. Common key management. However, all entities that are under control of central and state are not related. You just read twice, don't learn. Moving on. Related party. Tell me, in related party risk is more or less? More. Many related party are in normal course of business. They carry no higher risk than transaction with unrelated party. Usually there is not higher risk, but in certain situation there is a higher risk. Definitely can come in exam. Point two again. This one. This one. I have control or significant influence. I am the owner of ABC company. I have more than 20 to 50% stake. Then they are also related. Understood? Very easy. Okay. How different from first point? In first point, another entity has control. Your dad has control over you, but you have control over children. Who is related, dad or child? Both. If my owner is ABC, we both are related. If I am owner of PQR, we both are related. Okay. Understood? Okay. Come. Related party can be normal also. However, nature of related party may give higher ROMM than transaction with unrelated party. If you recall, four are significant risk. In that one was related party. However, nature of related party may give higher ROMM than transaction with unrelated party. Now they will say, write few examples. Sometimes nature of related party may give higher risk or higher ROMM than transaction with unrelated party. Give example. So you have to write this 3 point. Copy paste. It is not in your magic book. This is a new chart. I will send you. You will get in message. Okay. Or you can take the photo in the end. Message you will get. Why photo then? Because many people watch recorded version. So they will take photo. Okay. Start. You will get message when lecture end. Listen nicely. However, nature of related party may give higher risk of material misstatement than transaction with unrelated party. For example, NIC. You have to remember this stage 1 learn. Number 1. related party transactions are not done under normal terms and conditions, then there is a higher risk. Okay, example, some transactions are done with no exchange of consideration. You are not receiving the amount, thapa thap sale you are doing. Are you clear? What is the entry? Raj to sale, Virat to sale, Sirat to sale. Who are all these? Related party. You like money not received. Related party when is the higher risk? When related party transactions are not done under normal terms and condition. Example, sales are done without exchange of consideration. 2, information systems may not be effective at identifying or summarizing related party transaction and balance. Usually system will capture transaction. There is a special code of related party in software, but you are bringing new party, then there is a higher risk. You want to do fraud. Information systems are ineffective in identifying or capturing related party transaction and balances. Last, related party operate through complex range of relationship and structure. What is this? You are opening multiple subsidiary companies, Singapore, Malaysia, Thailand, Bangkok, all this company, more company, subsidiary, associate. You are not able to understand, means company wants to do fraud. Complex, what is complex range? Not able to understand. One last time, related party can be under normal terms also, in that there is no risk. However, nature of related party may give higher risk of material misstatement. When write example, then don't write your own example. They want this answer only, 4 marks. NIC, nice. NIC, nice. N, related party transactions are not done under normal terms and conditions. I, information system may be ineffective at identifying or recognizing related party transaction and balances. C, related party operate through complex range of relationship and structure. Break of 5 seconds. Over. Now, general questions read, maybe they can come, so we are reading. Auditor will inquire. What we will inquire? Identity of related party. What changes are there as compared to last year? If changes are there, 2 party added. What is the relationship of entity? Is it holding, subsidiary? Whether entity has entered into transaction with those party? If so, type and purpose of transaction. Anyways, you would have checked this. What is time pass here? Next, auditor will inquire from management and perform risk assessment procedure for understanding controls. See, you want to understand the controls. Control are good enough for what? For identifying, accounting and disclosing related party. Sir, how you identify, account and disclose? See, is there a control there? Okay, system proper. Authorize and approve significant transaction with related party. How do you approve? Authorize and approve transaction outside normal course of business. How are unusual transactions approved? Is there a control for that? Last. Now they can also ask you, how do you identify related party? So this can also come, this is also in module. This high chance, this lower chance. Okay. Auditor may remain alert for related party. You have to remain alert by checking following documents. Now don't try to learn this, try to logically understand how you will come to know related party. Auditor has to remain alert by looking at following documents. There could be new related party. Okay, could be. Number 1, look at income tax returns. If you have paid tax on someone's behalf, maybe he is your related party. Second, information given to regulatory authorities. Okay, shareholding pattern. You will come to know someone has acquired 26% share. Related party. Okay. Significant contract with key management or TCWG. You have entered that major contract, over 80% sale will be done to this. See, is it our related party? LIC policy, you have acquired policy of other company. You are paying premium. Is it your related party? Internal auditor report, maybe you will come to know. Significant contracts and agreements not in the normal course of business. Everyone you are selling at 100, this company you are selling at 70. Why? What is the reason? Over. So you have to look at these many things. One last time, income tax return, information to regulatory authority, shareholding pattern, okay, LIC policy acquired, internal auditor report, significant contract not in the normal course of business. I read this multiple times, I did not find anything. So I looked at module 2 3 times, and in module 2 questions were given. This is 1, this is 2. Last standard. Good we did today. Yesterday I would have taught them fully this. Last standard, and oh my god, what a Saturday. Internal audit. First of all, let us understand 2 minutes what is internal audit. See, in big companies, okay. See, right now I am managing a company. Excellent, amazing, mind blowing. But when company grows very big in size, okay, I cannot do anything. So I set up SOP. What is SOP? Standard operating procedure. What is standard operating procedure? Okay, who will do the work, what they will do, where they will do, why, when, how. Everything is fixed in Tata Group. Who will do the work, when they will do, how they will do, in within how much time they will do. That is a SOP, standard operating procedure for purchase, sale, inventory, cost of goods sold, etc. If you want to know profit, do I earn enough money? Yes or no? Type fast. Do I earn enough money? Yes or no? Type fast. No reply. Reply fast. Depends and yes. See, I might earn enough money, but the day I count my salary, no, money is not much. Why the money is too much? Reason very simple. I am not counting my salary. Had I worked in another company, I would have counted my salary. The day I count my salary, there is nothing left. I don't count my salary thinking everything is mine. So that is how our Indian entrepreneurs work. The day your dad counts your salary, no, nothing will be left. You will feel, oh my god, beggars we are, better to work for someone else. That is what is real life. That is what SOPs are there. So that is why big companies there are SOP. Who will do the work, when they will do, how they will do, okay, for everything. Production SOP, finance SOP, marketing SOP, HR SOPs are there. Now, owner doesn't have time to check SOP, so we appoint internal auditor. Management will say, are we able to follow standard procedures which owner has set? So, internal auditor. Statutory auditor comes only once. Our entire textbook is written from stat audit perspective. In the year end, as per the law, you have to do audit. But internal auditor is every day involved in the company. He will report to whom? Management. Who appointed him? Management. What he will check? All departments, not only finance. Hope you understood. Internal auditor, we have to study only one day, that is today. I will read 4 points. He is appointed by management, external by shareholder. Internal audit not compulsory in India. Compulsory as per some section, but not in our syllabus. External audit compulsory. Internal audit works throughout the year. He can be employee or outside person. External audit is done at the end. Internal auditor is employee of the company. External auditor is an independent person. Internal auditor doesn't give report to shareholder, management. External auditor give to shareholder. Question number 1. Objective and scope of internal audit. Internal audit is an independent function that performs 3 work. 3. Governance, internal control processes, risk management. Number 1. Governance. See, govern means to check is company working properly. Okay, that internal auditor will see. They will see governance. In governance means what? All the top directors, that is TCWG, are they doing proper work or not? Are they independent from management? If management complaint is received, TCWG is taking proper action. Are they responsible for performance management? Is there ethics in the company? Shareholder money is not misused. That's govern. Govern means control. They will assess governance in accomplishing objective on ethics and value. Is the those charged with governance ethical people? Do they focus on value, performance management, communicating risk and control to appropriate areas of organization? Effectiveness of communication is there between internal auditor, external auditor, management, etc. So govern basically means to check is company working properly, is there ethics, is there moral, is there risk and control. Okay, proper communication between external, internal auditor, management and TCWG. Second, risk management. Here we will check, okay, what will internal auditor do? may help the entity in identifying and evaluating significant risk. These are the significant risks and contributing to areas of risk management and internal control. It helps entity in identifying significant risk and contributing towards risk management and internal control. Last, activities relating to internal control. 4 points he will check in internal control. FICO, I think we say coffee also nice, but whatever, same. Examination of financial and operating information. So internal auditor will check what are the, review the means to identify, recognize, measure, classify financial and operating information. How is it identified, recognized, measured, classified? Make specific inquiry into individual items. If I feel there is a fraud in purchase, supplier, I will check in detail. I am internal auditor. So review of financial and operating information. Evaluation of internal control. You will see control is designed properly, implemented and working properly or not. Specific responsibility for reviewing control, evaluating their operation, recommending improvement. Very good. He will also check compliance with laws, rules, regulation. Assigned to review compliance with laws, rules, regulation and other policies of the company, whatever is company. Review of operating activity, not only financial, operating also, other activity, production, finance, marketing, HR. Review the economy, effectiveness and efficiency. 3 words. What is economy? Work should be done in budget. What is effectiveness? Work should be done. What is efficiency? In less time. Okay. So review the economy, effectiveness and efficiency of operating activity, including non-financial activities. Over. What is non-financial? Production, finance, marketing. Let us learn this. And then we move on to the last question. Start. Question can come. What's the objective and scope of internal auditor? Not external, internal. What's the scope? What's the scope? Gear. He will go to gear. Number one, activities relating to governance, activities relating to internal control, activities relating to risk management. Sir, my last question. What will internal auditor do? Go to gear forest. Activities relating to governance, activities relating to internal control, activities relating to risk management. Sir, in internal control, what he will do? Drink coffee. COFI. Very simple. Review of compliance with laws and regulation, review of operating activity, review of financial and operating information, review of internal control. One last time. Objective and scope of internal auditor. Coffee. Gear coffee. Activities relating to governance, activities relating to internal control, activities relating to risk management. Inside internal control, coffee. Review of compliance with laws and regulation, review of operating activity. What's operating? Other department. Review of financial and operating information. Check how financial information is identified, recognized, measured. Make inquiry into specific account and review of internal control. This is done. Now, what's the question? Okay, they can ask this also, but they can ask another part also. This one. What is SS 610? Can external auditor use the work of internal auditor? Oh, but why I will work on my own? If he has done the work of, let's take one example, compliance work. Can I copy his work? Oh, good doubt. Okay. So two things are there in this standard. Using work of internal audit function. Using any of his work, coffee, compliance, operating any work. Let's assume compliance. Or use internal auditor directly to provide direct assistance under direction, supervision, review of external auditor. Either using his work or using him directly under our assistance. Can we use? First question, I have to check three things. These are given in detail. We are just reading points. Evaluating. The external auditor shall determine whether work of internal audit function can be used. Depends on 3 points. Okay. Evaluating internal audit function. The external auditor determine whether work of internal audit function can be used. Depends on 3 points. Cost. Level of competence of internal auditor. Ask them, are they qualified enough? What qualification they have obtained? Do they have knowledge of professional standard, legal and regulatory requirements? Ask them in days. If they don't know, don't use the work. Level of competence of internal auditor. Second, the extent to which internal auditors organization status and policies and procedure support objectivity of internal auditor. Are they unbiased people? How to know, sir, they are unbiased? To whom they report? Who made their appointment? Very simple. If management has made their appointment and they are reporting to management, don't rely. If TCWG has selected them, they are independent people. They don't report everything to management. Then you can rely. Are they objective? Are they told? If they are told directly, what? Let's take two examples. If they are told, anything you tell to external auditor first tell to us, only then tell. Don't rely. No. Or second example, even management is not looking at the report. Your own management is not looking at report, what we will look. Okay, second, the extent to which internal auditors functions and policies and procedures support objectivity, are they objective? Third, whether internal auditor uses systematic and disciplined approach. Do they have a set procedure for everything? For documentation, materiality, do they work like that? Do they have proper approach, policies and procedure of the firm? All this they don't have. Then don't take. Tell me, evaluating internal audit function. The external auditor shall use the work of internal auditor depending on three things: cost, competence, objectivity, systematic and disciplined approach. Competence, objectivity, systematic and disciplined approach. Level of competence of internal audit function. Oh. Whether internal auditors function and policies and procedures support objectivity of internal auditor. Whether internal auditor uses systematic and disciplined approach. Cost, competence, objectivity, systematic and disciplined approach. This question came before two exams. In following cases, never use the work of internal auditor. In following cases, never use. Never. ROC judgment. Let us understand. In following situation, external auditor shall not use work of internal auditor. Higher ROMM at assertion level. If risk is huge in purchase area, sale area, controls are weak, don't use the work. You have to work on your own. Second, if internal auditors are not objective, they are fully biased. Everything they tell. Arey, external auditor went bathroom 4 times. External auditor, we told them this report. Arey, their article was talking to us. Okay, if they are not, if they are less competent, BCom people they are. And last, more judgment is involved in planning and performing audit procedure and gathering the evidence. More judgmental work is there. Lot of assumptions are required in this audit. Don't take the work. In following situation, external auditor will not use work of internal auditor. ROC judgment. ROC judgment. Higher ROMM at assertion level. If internal auditors are less objective looking at their policies and procedure, reverse we have to do. If internal auditors are less competent, more judgment is involved in planning and performing audit and evaluating evidence gathered. Super easy. Sir, in following situation, don't use at all. No. See, why learning important? They can ask this case study. Any one point they will put. There is a higher ROMM. Shall we rely on the work? Directly you have to type first point. In following situation, why I remember? Because in module same question is given. If while in following situation, external auditor shall not use a high ROC judgment. Higher ROMM at assertion level. If internal auditors are less objective looking at their policy and procedure, if internal auditors are less competent, judgment, more judgment involved in planning and performing audit and evaluating evidence gathered. Over. Everything over. Now only one chapter we may not finish in 3 hours, that is Monday chapter. Rest all chapters simple. Can you tell one more time what is operating activity and information here? Operating activity here is financial. How used to identify, recognize financial information and make detailed inquiry into any balance. Second point here, which one? This one? Which second? Object, are they unbiased people? You have to look at several points. How you know unbiased? Whether they report to management everything, then they are not unbiased. Okay, who has made their appointment? Look at them. Okay, are they unbiased? Okay, do they tell every single thing about the external auditor to management? Then they are not unbiased. Okay, you look at policies and procedure. Do they every single thing or every single, are they part of management only? Then understood. Understood. Now you have to make a judgment. 2 3 points are given, you can read in main book. You will easily understand. Jatin has one doubt. For related party, chart should be fine. For this you can read in detail. Related party, fine. Yes, new point chart only. In module also that much only given. So we are not skipping anything. Okay. So that is it. Amazing. See you. New one. Yes, new one only. Old one don't do. See you later on Monday morning. Everything same. It's a biggie chapter on Monday, but no tension whatsoever. Tuesday, we might cover the pending part of Monday. Bank audit small chapter. Bye bye. Good night. See you. Take care. Very good morning, guys. Warm welcome to the best lectures of FMSM and Audit nationwide. Welcome to your own YouTube channel. Many people say, sir, all chapters good, but chapter 7 little difficult. Audit completion and review. It is not difficult. It's one of the most simplest chapters. When we look at the audit order, okay, chapter 1, nature, objective, scope. Chapter number 2, strategy, plan, program. Chapter 3, risky areas identify. Chapter 4, audit evidence. 6, documentation. 7th is what you do during completion of the audit. Okay, when we are just completing the audit, what things I need to keep in mind. Okay, so it deals with all essays, all standards on auditing which are dealt with during end of the audit. Okay, brilliant lecture. This revision lecture will be what you can expect from this lecture. Excellent conceptual clarity of all the concepts, plus whichever answers you need to learn from the exam perspective, you will be able to learn in the lecture itself. So be rest assured, enjoy this masterpiece revision of chapter number 7 in only English. Yes guys, you heard it right, in only English. Hope you like this lecture. And if you like the lecture, do give a like button, okay, and share with your friends too. Thank you so much. Enjoy the most beautiful revision of chapter number 7. Thank you. Very good morning, guys. Welcome to the best lectures of FMSM and Audit nationwide. What are we discussing? Till now, we have finished 6 chapters. Chapter number 1, 2, 3, 4, 6, and 11. Today is the 7th chapter out of 11 chapter. Easily we will finish because it's not that big chapter. So let's start chapter number 7, audit completion and review. We are almost on the end stage of audit. If you tell me all chapters, they are very nicely linked. Chapter number 1, what was the name? Nature, objective and scope. Chapter number 2, what did I make? Audit strategy, planning, program. Chapter 3, what did I do? Identified the risky areas. Chapter number 4, what did I get? Audit evidence. Chapter number 6, I maintained what? Documentation of everything. At the same time, I was very ethical in doing audit. Chapter number 11. Now, I am in the end of audit. while completion, while just signing audit report, what standards you have to keep in mind, this is covered in this chapter. Okay, so we are almost on the verge end of audit, flag end of audit, what things you need to keep in mind. Okay, so all the standard will deal with one aspect, completion of audit. Okay, let's start. We have 6 beautiful standards here. Let's try to finish majority before the break. Let's start. So first, there are 2 big standards. Let's start with the bigger one, that is SA 560. Okay, contingency, auditor and subsequent event. How to remember this standard forever? Let's assume 5 is a balance sheet date. Okay, assume 5 is balance sheet. So we here deal with all events that occur after balance sheet but before auditor's report, after balance sheet but before signing report, and after signing the report also, that we will discuss. So how to remember? Assume 5 is balance sheet. After 5 what will come? 6. So here basically we deal with all events that occur after balance sheet date. Can we start? Yes sir. Now, before we start, very important is what? Just understand AS4. AS4 we need to understand so we can do this standard in a better way. Can we understand AS4? Yes, for 2 minutes. Okay, come here. Just understand this much first of all. 31st March 2025 is a balance sheet date. Any doubt here? Absolutely no doubt whatsoever. Moving on. After 31st March, 10th June financial statement are approved by Board of Director. Irrelevant. Moving on. 20th June is signing of audit report. I hope this is clear. Signing of audit report is 20th June. Then the audit report is published and AGM is held. Let's understand these timelines one more time. 31st March is balance sheet. Till balance sheet, whatever happens, we are not concerned. 10th June financial statement are approved by Board of Director. Irrelevant. 20th June signing date. Now I want to ask one question. If anything happens during 10th June, anything happens during, okay, 10th April, anything happens during 10th May, it will come in which year? Your direct question will be said 25-26. Why? Because it is the next year. Absolutely wrong. This standard is saying though many events occur after balance sheet, but they are to be adjusted in 24-25 only, not 25-26. Sir, why? Why? As per accounting standard 4 and in days 10. Are you clear? One more time I am telling, understand the standard. Many events occur after balance sheet date. Sir, can you tell me what is after balance sheet? After balance sheet means 10th June, okay, 10th April, 10th May. Though it is 25-26, but it will be recorded in 24-25. That's the beauty of this standard. I hope you understood. Now, after audit report is signed, it will be published and then AGM is held. Very simple. Audit report is published to shareholders and then AGM should be done before 30th September. Concentrate now. Here in AS4, in days 10, we will only deal with what? Balance sheet date and audit report. Balance sheet date and signing of audit report. Only this much as per AS4. Okay, this is not in standard. Let's start. So AS4 deals with all events, accounting standard 4, contingencies and events occurring after balance sheet date, deal with all events that occur after balance sheet date before date of auditor's report. 2 events are there, adjusting, non-adjusting. What are adjusting events? Though they occur after balance sheet, but they are to be adjusted on balance sheet. Means though they occur next year, we need to adjust in last year only. That is why the name only given, adjusting event. Okay. All events which are not adjusting are non-adjusting, will be shown next year. Very obvious. Now, sir, which are those events which though occur next year are to be shown in current year? 3 events. Number 1, required by law, proposed dividend. In proposed dividend, we don't need to show the amount, only disclosure. So see, whenever we propose a dividend in May or June, it is of which year? Last year. It is of last year. So ideally it should be shown last year, but no. As per AS4 and in days 10, what they are saying, only disclosure is required. This will also cover in chapter 5, but again I am telling. So proposed dividend, you need to disclose in last year. In notes to accounts, we have declared this much dividend. It will be shown as expense in next year only. Remember that. Second, affects going concern. If your company is only, if you don't know, whenever going concern not followed, asset and liability are shown at NRV. What is NRV? Net realizable value. Okay, so now your going concern affected. Why to wait next year? Next year maybe you will wait, but company will not remain. Okay, so show last year only. But most important is third point which come in exam. Second also doesn't come. Third, if it gives you further evidence of condition existing on balance sheet date. See, on balance sheet we had some condition, now we got further evidence. So we need to adjust last year only. Both example I will repeat which come in exam. Okay, there is a court case going on in the company on balance sheet date. But in July, we lose the case. Now audit report is not signed. Sir, show it next year. No, it is giving further evidence of condition on balance sheet date. What is the condition on balance sheet? Court case is going on. What is further? We lost. We need to show provision last year only. It will not come in next year. We need to show last year. Why? Because it is giving further evidence of condition existing on balance sheet date. Second, you did provision for debtor because he was not giving amount. I did a provision for debtor because he was not giving amount. Now that debtor became insolvent in June. I need to show last year only. Why? Because it is giving further evidence of condition existing on balance sheet date. Are you clear? So whenever we have some condition and we get further evidence, we need to show last year only. Over. This is the only important point. Last, all events which are not adjusting are non-adjusting. In non-adjusting, material or immaterial. If material, disclose in BOD report. Immaterial, ignore. Example, there is fire in the factory. It's not, it is material event, okay, but it doesn't affect going concern. Affect going concern, then it will come adjusting only. Okay, but it is not affecting going concern, but it is material. I will just show in board of director report. Okay, I sold the SBU, major part of business, doesn't affect going concern. I will just write in what? Board of director report. Over. One last time, whenever any event occur after balance sheet but before auditor report, divide into two parts: adjusting, non-adjusting. Okay, adjusting, though they are done after balance sheet, they need to be adjusted last year. Non-adjusting, just disclose. Who will do all this? Management. I have to check. Now standard is starting. Till now what you are discussing? AS4. Let us start the standard. 1, 2, 3. Chapter number 7 has 6 standards. Standard number 1, a biggie one, big one. Let's start right away. 1, 2, 3, start. Concentrate. How to remember this standard? Again, I am telling 5. Assume is a balance sheet date. So this standard deals with 5 or 6. 6. All events after balance sheet date. So name is subsequent event 560. This standard deal with event occurring after balance sheet date and before date of auditor's report, and facts that come known to the auditor after date of auditor's report. After auditor's report also, if anything occurs, that also this deals with. Objective: to get sufficient and appropriate evidence that all the events that occur after balance sheet date and before the auditor's report that require adjustment, that is adjusting, or disclosure is appropriately done. Second, respond appropriately to facts that come known to auditor after auditor's report. Had he known before, he would have amended the report. This standard also deals with those facts which auditor come to know after the report. Had he known before, he would have changed the report. That also this will cover. So let me explain you scope of the standard third time. Come here. This standard deals with what? All events that occur after 31st March and before signing report. And all events that occur, second part of the standard, after signing the report. Okay. But had I known that event before, I would have changed the report. Those events also this deal with. What to do? That will study. Which question can come? According to me, only one. Rest all are understanding question. Let's start this question. What is the question? What are risk assessment procedure or audit procedure regarding subsequent event? If they ask this question, you have to write this only. Why? I have not taught anything else. Okay. First point. What are audit procedure or risk assessment procedure for subsequent event? 5 points are there. Number 1. How to audit subsequent event? Number 1, go to the management. Obtain understanding of any procedure management is established for identifying subsequent event. Ask management simple question. Sir, do you have any procedure for subsequent event? What they will say? Sir, we have two people. This is Ayush, this is Ayushi. They basically, all the event after balance sheet, they maintain in a notepad. And based on that, we decide it's adjusting or non-adjusting. Okay, so first point over. As soon as you go, obtain understanding from management whether they have any procedure for identifying subsequent event. They told them Ayush and Ayushi. Second question, inquire from management. Sometimes TCWG is where appropriate TCWG, whether any subsequent events have occurred in the financial year. This year, have you identified has any event occurred? What Ayush and Ayushi have done? So you go to them, ask them, inquire from management, where appropriate TCWG. Any subsequent events have occurred which are adjusted in financial statement. You explain the procedure beautifully. How many subsequent events you identified? They will reply. Third, read the minutes of the meeting of owner, management, TCWG after the balance sheet date and inquire about matter for which minutes are not available. See, sometimes they talk in minutes that we have lost a case. They talk in minutes that our big debtor turned insolvent. Okay, in the meeting is there, so minutes of the meeting are recorded. If certain thing is not mentioned in detail, read the minutes. CA will read, okay, and we will come to know, oh my god, this point, this point, this point could become adjusting event. Okay, read the minutes of the meeting of owner, management, TCWG after a date of financial statement. Inquire about matter for which minutes are not available. They could become adjusting event. Last, read the entity's latest interim financial statement. By the way, 31st March audit report, when is it ready? Maybe somewhere in 1st July. Somewhere 1st July or maybe August. Okay, sometimes 15th August, 10th August. Let's assume report is ready by 10th August. Now here what they are saying, read the quarter 1 financial statement. Quarter 1 starts from when? First limited review. We don't check in detail LR. 1st April to 30th June. Read that financial statement of next year. Many times we come to know certain events. Oh my god, debtor became insolvent in June, but we did not know. Let us reverse last year only. We'll tell management, though you have shown in quarter 1, that is next year, it should come last year because it's an adjusting event. Second example, okay, we lost this case. You have shown 30 lakh, it should be shown last year. Sir, what difference does it make? No. As per our standard AS4, you have to show it last year. Read the entity's latest interim financial statement. If auditor comes to know anything that require adjustment or disclosure, see it is appropriately done. Proposed dividend, they are showing in next year. Arey sir, we just need to give disclosure. You show in next year, but disclosure is required. Over. Last, to be on safer side, take written representation from them that you have disclosed all subsequent event. Though we have checked, but still take. The auditor shall request management and TCWG to give WR, written representation, that all the event that require adjustment or disclosure is appropriately done. Simple. Very, very easy. Even if you want, you cannot go wrong. Only one question will come. Do we need to understand? Big yes. Learn? Big yes. Start. What are audit procedure regarding subsequent event? If they ask, or risk assessment procedure regarding subsequent event. Only remember first point, rest all should be easy. Number 1, obtain understanding from management whether they have any procedure for subsequent event. Okay. Second, they tell this is the procedure. Inquire from management where applicable TCWG whether any subsequent event are identified. Procedure understood, whether you have identified any event. Third, okay, read the minutes of the meeting of owner, management, TCWG after the date of balance sheet and inquire about matter for which minutes, inquire about the matter for which minutes are not available. Okay, anything required. Last and most important, most favorite point of mine, very easy to judge. Read the entity's latest interim financial statement, quarter 1 report, and inquire about matter that require adjustment or disclosure. Is it appropriately done? Over. Last, take written representation from management. All the event that require adjustment or disclosure is appropriately done in financial statement. Break. Any doubt you can ask. Then we move on to the last part. Gautam is saying no doubt. So learning time. This last point will not be there, so you can take photo in book. Done. Learning also done. Too good. Let me show learning break of learning also done. Very fast. But still, according to me, some student must not be done. So here, I will just explain briefly. English you can learn at home. Number one, obtain understanding of any procedure management has established or identified for subsequent event. They say this is the procedure. Inquire from management where applicable TCWG whether any subsequent event are identified. Okay. Third, read the minutes of meeting of owner, management, TCWG after the or after the balance sheet date. Inquire about matter for which minutes are not available. Then quarter one financial statement and take WR from management. Over. All clear? Then we'll go ahead. Any doubt? Waiting for 5 seconds. Time up very nicely. All clear. Chalo, then move on to the second part. From here, this is too much complicated, so they are not asking. Now, not asking doesn't mean not ask. Okay, they can ask, but this one's complicated, that one's easy. Start. Here. Now, total in standard, there are three parts. Biggest part is done. Okay, which is biggest part? Events occurring after balance sheet date, before date of auditor's report. Now come to part number two. Facts which come known to auditor report, okay, after auditor report, but before it is issued to member. See, first issued to member, then AGM is held. So, facts which come known to auditor after the date of auditor's report, but before it is issued to member. If I come to know of any fact, had I known it before, I would have changed the report. If I come to know any such thing, then what to do? Let's take example. Report is signed, but before issuing to member. Let's take example. I am in Goa watching news and I get a news. Patanjali drug medicine has not got approval. I am there in Goa and in news is that Patanjali medicine doesn't get approval. And I just realized we finished the audit of Patanjali last month. Okay, they had 120 crore of stock of this medicine. Now they have not got approval. It was their breakthrough drug for weight loss. Directly weight will become zero. Are you clear? Very much weight loss. They did not get approval. So now this medicine is good for no use. This inventory is valued at cost or NRV, whichever is lower. 11 standard third day. Now, NRV of drug is zero. Cost understood 100 crore. No net realizable value. Selling price zero. Now what to do? What to do? I need to book 120 crore loss in balance sheet. But audit report is signed. So then next year book. Maybe company will not remain. Our standard doesn't tell like that. One last time. Facts which come known to auditor after auditor report. But before report is issued to member. Are you clear? So directly what I will do, 3 points I have to do. If I come to know of anything, had I known it before, I would have changed the report. But report signed, but not issued to member. Number one, discuss the matter with management. I will call Baba Ramdev. Hello, discuss the matter. Second, I will ask question. Inquire whether financial statement needs amendment. Do we need to change? Big yes. Determine how management will address this in financial statement. Three questions you need to ask. So an auditor needs to be vigilant in the, of course, everywhere. After becoming CA, life more tough. 24 hours you have to watch news. What is happening? Okay. 1, 2, 3, start. Discuss the matter with management. See whether financial statement needs amendment. And inquire how management will address this in financial statement. Very simple 3 points. Discuss the matter with management. See financial statement need amendment. And inquire how management will address these things in financial statement. Very simple. Come here. If management says we will change financial statement, very good, congratulations. What you will do? Auditor will perform audit procedure again, okay, and issue new report on amended financial statement. Here, financial statement change. Do audit procedure, issue new report on amended statement. Story over. But sometime management little smart. If management changes the statement, but they are saying we will only change to the extent of subsequent event. We are not changing full. Okay, limited. This is the old date. We will give new date to financial statement and tell that our profit has reduced by this much due to this event. Over. Only that much they are changing. Then what to do? Full they are not changing. Only that much note they are writing. Okay, then amend the report to include additional date restricted to that amendment. You also write one more date. We did audit on this date, but between this and this date we check subsequent event. Okay, dual date audit report. If amendment is made only subsequent event, amend the report to include extra date restricted to that amendment. Between this and this date, I have only checked subsequent event. Dual date audit report. Last, provide new report with EOM or OM paragraph. Okay, if many people say a dual date very clumsy, I don't like, third class. Okay, so here provide new report with EOM paragraph. Now you will say, what is EOM? Emphasis of matter. We will study Monday. Okay, provide new report with EOM paragraph. In that paragraph, what we will write? That we have done work on subsequent event. Over. One more time, provide new report with EOM, emphasis of matter paragraph, which we'll study on Monday. And write, in emphasis of matter, we have checked subsequent event. Over. Clear? Okay. Sometimes management will say, now audit report signed, we will not change financial statement. If they change, then I will explain to you. If they don't change, then inform management not to issue report. Management, please don't issue the report because you are not changing. Don't issue report till the time I tell. Okay. But management will still issue. Then what to do? Take legal action to prevent reliance on a report. Public notice you can put. See, what is legal? If they still issue, you told don't issue report because you have not changed financial statement. If they still issue, take legal action to prevent reliance on a report. You can give public notice in newspaper. Don't rely on this report. We have not audited this. Over. Rest shareholders are smart enough to assume. Last point. Sir, what if I come to know certain things after report is issued to member? Still my responsibility. Till what time? Till next year maybe. Facts which come known to auditor after report is issued. After report is issued, I came to know same thing. Patanjali medicine did not get approval, 120 crore loss. Same 3 point. Discuss the matter with management. See, financial statement need amendment. Inquire how management will address this in financial statement. If they change, then same point, copy paste. Everything same here. Sir. If they don't change, then ensure every recipient is informed of the change. Tell management, please mail to every shareholder that this thing has occurred. Ensure every recipient means shareholder, is informed of the change. If you're not changing, inform everyone that this has happened. If they don't inform, take legal action to prevent reliance on report. Over. I hope you understood. Very much story. If by mistake you read module, then the over only. Only you will understand what happened. No one else will understand. You understood this very tricky. This is very tricky. One more time or no need? Reply fast. Geetanshu saying no need. What about others? Reply fast. One more time or no need? No. No need. 100% done. No need. Still I will explain. Three situations is there. First one question can come. What is the second situation? I come to know certain things after auditor's report, but before report is issued to member. Okay. I come to know certain things. Had I known before, I would have changed the report. Number one, discuss the matter with management. Two, see whether financial statement need amendment. Inquire how management will address this in financial statement. Come here. Sir, if management change financial statement, then I will do audit. I will do audit procedure and issue new report on the financial statement. Certain management smart. We are changing only subsequent event. We are changing, we will write one note. Subsequent event profit reduced by this much. Then amend the report to include extra date, dual date report. You also write between this and this date. I checked subsequent event. Many people don't write dual date. They don't like. Then what to do? In auditor report, add one EOM paragraph, emphasis of matter, that we between this and this date we have checked subsequent event. Sir. Now the report issued. What if management don't change? Tell them not to issue report. Let them wait. Byju's waited 2 years because auditor did not agree. Tell them not to change, okay? Not to issue report. If management still issue report, then what to do? Take legal action to prevent reliance on report. This is so simple. Sir, after report is issued to member, then same 3 points. See, financial statement need amendment. Inquire how management will address this. Okay. If they change, we will again do audit. Sir, what if they don't change? Tell them everyone is informed of the change. If they don't inform, take legal action to prevent reliance on report. Big standard done. One more big pending that we will do later. Come to small cute essay 580. Okay. WR from management. What is WR? Written representation from management. Okay. Let's understand practically for 2 minutes and superb standard. Very simple. In 10 minutes over. Come here. Why written representations are important? Okay. Why is it needed? See, written representations are written statement given by the management to auditor to confirm certain matter or support other evidence. I know a thing, but if someone will give in writing, no, I know it is good. See, you know you are studying, but your parents tell you are studying very good. Your confidence will increase. Why this is a brilliant standard? See, it's in written form. So written more reliable than oral. It's directly obtained to the auditor from lion's mouth, management mouth. Third, it is in original form. That is why it is brilliant. Sir, usually what I take in written representation, 10 things we have done. But let's take only 5. You know financial statement are prepared as per schedule 3. Let management write. Management will write financial statement are prepared as per FRF. Second, all subsequent event are disclosed. Let them write. All related party disclosed. Let them write. There are no fraud done in the year. We know. Let them write. Okay. All legal cases are disclosed. Let them write. Okay. There is no doubt about going concern. Let them write. Everything I will assure take in writing. With that, my risk will be less. It doesn't mean I will not do audit procedure. Always remember, written representation are never primary evidence. Baby, they are secondary evidence. Okay, you have to remember that. Come here. 4 points. Number one, it is very, very important. Why? It's coming from management. Two, it's compulsory to take. Third, it is never a primary evidence. It is always secondary evidence. Okay. It is not substitute to audit procedure. Now I took from management or related party complete. It doesn't mean I will not work on related party. I will still work. There is no doubt about going concern. Doesn't mean I will not follow SA 570. I will still work. Okay. It should be obtained from those who are responsible for preparation and presentation of financial statement. Means management. Don't take from other people in the company. Management should say. Are you clear? Okay. And last, it should be taken before auditor's report. Why? Because our report is based on that. You don't take after the report is signed, we took WR. What is this then? What is the evidence then? Are you clear? Take as close. Don't take too much early also. Why? In written representation, you also write about subsequent event. They occur after balance sheet. So take as near to the date of auditor's report. Superb standard, nothing there. Let us read same thing second time. Written representation are written statement given by the management to auditor to confirm certain matter or support other evidence. I know there is no doubt in going concern. But when management you told no, I loved you. Support other evidence means what? Related party completeness. You knew, but now they wrote, so support. What is audit evidence? All information collected by auditor in arriving at conclusion on which his report is based. Written representation also evidence. Written representation should be taken from those who are responsible for preparation and presentation of financial statement. Don't take from Pune. Take from CFO. Okay. Written representation do not give sufficient and appropriate evidence on their own about any matter. Just writing doesn't mean we have to do audit procedure. This is not a substitute to audit procedure. Written representation does not affect nature or extent of other evidence. Management has to take, sorry, auditor has to take above fulfillment of management responsibility or specific assertion. Now, till now, what you have done? Nothing. First question, actually, last two questions are good, but let's assume this can also come. What's the objective of auditor regarding WR? Sir, why will a auditor take WR? Number one, to respond appropriately. With WR, I can respond in two ways. To written representation given by management or not given by management. If they give, tell me what will happen. Confidence will increase. If they don't give, then stay tuned. Important question. Read. Respond appropriately to written representation given by management, or if management doesn't give WR. Simple. Second objective is to obtain written representation. With that, we get confidence. Management has fulfilled its responsibility for preparation of financial statement and completeness of information given to auditor. If they give in writing, we know they have done their work. Last, to support other evidence. See, we know that, but to support that, relevant to financial statement or specific assertion in financial statement. Let's take both examples. Going concern affects entire financial statement. If they write, it will support financial statement. Specific assertion is what? Related party. Related party completeness, I have little doubt. Now you have given in writing, my confidence increase. Okay. So written representation will support evidence relevant to financial statement or specific assertion in financial statement. Let us learn. Sir, what is the objective of auditor regarding WR? Sir, what is objective of auditor regarding WR? Rows. R, to respond appropriately. O, to obtain written representation. SE, to support other evidence. One last time. Sir, what is objective of auditor regarding WR? Rows. To respond appropriately. To obtain written representation, to support other evidence. Small break, 10 seconds. Over. Moving on. Can management take WR from others who are expert in their field? Yes. If management doesn't understand particular matter, they can ask those who are experts. Okay. Management may also ask others who have specialized knowledge of the matter. Very simple. Internal counsel legaling legal claim. You tell management, please give in writing all cases are disclosed. They are like, let us lawyers will disclose. That's more reliable. Of course. So internal counsel about legal claim. Actuary, actuarial calculation, PF, gratuity, they can give responsible for actuary determined calculation. Environmental liability we don't have in this building. Please give in writing. So let staff engineers certify. They are more intelligent. Okay. So about environmental liability. In that MCQ may come. Can management use qualifying language to the best of knowledge and belief? We feel there is no liability. Yes. You are also giving reasonable assurance. Are you giving complete assurance? Then let them also write such language. Management may include qualifying language to the best of knowledge and belief. It is allowed provided it is coming from those who have responsibility and knowledge of the matter. Okay, so it's coming from the right people. Then qualifying language also allowed. Sir, my one more question. What should be the date? It should be as close to auditor's report. It cannot be too early. Why? You are also writing that subsequent events are disclosed. It cannot be after the report. Report is based on WR. Oh yeah. So date of WR should be as near to but not after auditor's report. These two question favorite now. This and this. Both can come. Did it come last time? I don't know. If come, then not come. Otherwise, definitely come. 1, 2, 3, start. You have doubt about WR. Okay. When doubt will come, they are saying there is no impairment loss. There are no fraud in the company. But you found 3 frauds. Doubt specially will come when audit evidence contradicts the written representation given. In written representation, this was written. Totally reverse happened. 3 fraud we are able to find. Related party, everyone disclosed. You found 4 new related party. So doubt specifically will come when audit evidence is inconsistent with other evidence obtained. Then what we will do? Auditor will do audit procedure to solve the matter. We will try our best. Let's try to find out total amount of fraud, how much this, that. I will try to solve the matter. I will talk with them. They are not cooperating still. If auditor is still unable to solve the matter, we will re-evaluate the dice of management. Sir, what is dice? Diligence. 4 words. Diligence, integrity, competence, and ethical value. They are not cooperating only. Understood, I found fraud. But if I am not able to solve the matter, they are not giving data. They are still not cooperating. Sometime what they will tell, oh, sorry, we forgot. Then I understand. But they are not able to solve the matter. If auditor is still unable to solve the matter, we will re-evaluate dice of management. Diligence, integrity, competence, ethical value. After reconsidering this, okay, it's your judgment. If you still feel WR is not reliable, means entire financial statement are wrong, I will give disclaimer report. Modified report, but disclaimer. Why disclaimer? Effect could be material and pervasive. Every figure is wrong. The person who has prepared is only lying. Are you clear? Over. 1, 2, 3, start. Doubt about WR. Number 1 point, what you have to write? When does doubt come? When the audit evidence obtained contradicts the WR, contradicts the written representation. Then auditor will do audit procedure to solve the matter. If auditor is still unable to solve, management not cooperating, we will re-evaluate dice of management. Diligence, integrity, competence, ethical value. If after that auditor feels WR are not reliable, it's your judgment, okay, then we will give disclaimer report, okay, because we have not got evidence. Over. Second, management doesn't give only WR. You talk to management, WR not required, fees to given. Fees given, then WR, what is all this third class? Okay. Number 1, discuss the matter with management. As if they don't give, cabin you can go. Discuss the matter. Don't come for discussion. Re-evaluate the integrity of management. What effect this will have on reliability of WR and audit evidence. Last, take appropriate action, including giving disclaimer report. Over. What to explain? What to explain? Easy? No. Time pass. Sir, management not giving only. Discuss matter with management. Evaluate what effect this will have. Okay, sorry, re-evaluate the integrity of management and what effect this will have on reliability of WR and audit evidence in general. Take appropriate action, including giving disclaimer report. Sir, my last question. 2 cases we will give disclaimer report when WR is not reliable and management doesn't give only WR. I hope you understood. You can read this if you want. In 2 cases, we will give disclaimer report. Management doesn't give WR or doubt about WR. Any doubt you have to reply. 2 essays are done. Amazing. Superb going till now. Shall we go ahead? Which is disclaimer report question? Not understood. When to give disclaimer report like that? In 2 cases. When WR are not reliable or management doesn't give WR. No question. I am saying here disclaimer report, here disclaimer report. There is one question given in module in 2 case disclaimer report will come. That I have not written. Why? Because I have separately written here. In 2 cases disclaimer will come. When there is doubt about WR or management doesn't give WR. Shall we go ahead? Type Y. Too much time is there. Before 9 o'clock, one more essay we will finish. I think all essays we will finish. Then we might take break for only one essay. Because for that again 10 minutes brain required. Super duper easy essay, third essay. This is even more silly than the last one. Last one little intelligent. 7. Evaluation of misstatement identified during audit. Do you remember or you forgot? What are misstatement? Tell me, TOC, you find mistake, that is a misstatement, or TOD? Quickly reply. TOD. While doing test of detail, if I find a few mistakes, is called as misstatement. Here we'll deal with two things. Number one, identified misstatement, uncorrected misstatement. Please listen to me. Identified misstatement and uncorrected misstatement. What's the difference? I identified mistake of 100. They corrected 30 rupees. So what is uncorrected? 70. I have to deal with 100 or 70? Both. English learn. Objective of auditor: to see two things. See the effect of misstatements identified during audit. SA 450, evaluation of misstatement identified during audit. Okay, please remember SA. Number one, misstatement. Okay, I identified mistake of 100. Then what's the effect of uncorrected misstatement on financial statement? So here we'll look at two things. Number one, effect of misstatement identified during audit, 100. Effect of uncorrected misstatement, if any, on financial statement. I explain only name. Continue. Page number not able to find, maybe it will be an extra sheet then. Start. Number one, listen to me nicely, it's a story type thing. Auditor will accumulate all misstatement identified during audit. Make total of all the mistakes you identified. Sale, purchase, this, that, everything. Auditor will accumulate all the mistakes or misstatement identified during audit. First question, not asked, but I'm just telling. What question will come in exam? Only one, that also I will tell. Okay. I need to change overall audit strategy and overall audit plan in two cases. One more time. I need to change overall audit strategy and overall audit plan in two cases. Number one, when total of all misstatement exceed materiality. See, I thought materiality is 1 crore, but mistakes are coming more than 1 crore. Means there is a doubt in audit. Okay, I need to lower materiality. English, listen. Auditor has to change audit strategy and plan in two cases. When total of all misstatements exceed materiality, or I feel based on other misstatements, they may exceed materiality. Or based on nature of misstatement, nature means item, I feel there are other misstatements, they could exceed materiality. Then I need to change strategy and plan. First question. Read. Auditor needs to change strategy and plan if, let us read second point for. Aggregate of all misstatement identified could be material or exceed materiality. If based on circumstances I feel there are other misstatement and the total could exceed materiality, then what I will do? I will request management to examine class of transaction, account balance, disclosure. Okay, please examine in detail what's the actual amount of mistake so I can pass journal entry. Okay, I will tell them to know actual amount and make adjustment in the financial statement. Simple. Now, we may tell management to correct the mistake. They may agree, they may refuse. If they refuse, ascertain what reasons they are saying, why they are saying, okay, maybe immaterial. We tell management to correct the mistake. If they refuse, evaluate the reason and see whether financial statement are free from material misstatement. So till now, first part is over. What is the first part saying? This standard is of 8 minutes only. Okay, 4 minutes done. 1, 2, 3, start. Number one, do total of all the misstatements identified during audit. We need to change strategy and plan in two cases. If aggregate of all misstatement exceed materiality, or based on nature of misstatement, I feel there could be other misstatement and the total could exceed materiality. Then I will tell management to examine class of transaction, account balance, disclosure to know actual amount of mistakes. Why? To pass journal entry. Now I will tell them to correct. If they correct, well and good. If they don't correct, I will see whether financial statement are free from material misstatement. Moving on. Now comes second part. Okay, second standard, second part. Evaluating effect of uncorrected misstatement. Why uncorrected? Few they did not correct. If they correct all, this part will not come. So identified misstatement, evaluating effect of uncorrected misstatement. Prior to evaluating effect of uncorrected misstatement, we will again calculate materiality. Okay, why? Why? Very simple. See, our sales figure got changed because we passed certain journal entry. Profit got changed, so materiality will also change. Prior to seeing effect of uncorrected misstatement, we will again calculate materiality. In exam, only this question is given. Sorry, not exam. Exam never asked. Okay. In module, only one question given. This one. Nothing else given. Let us learn. While seeing the effect of uncorrected misstatement, while evaluating effect of uncorrected, we will evaluate size and nature of misstatement. What is size? Amount. Nature means item. Which account the mistake is, fixed asset, current asset. While evaluating effect of uncorrected misstatement, we will evaluate two things: size and nature of misstatement in context of particular class of transaction, account balance, disclosure, and financial statement as a whole. See, you have to see account wise mistake also and financial statement as a whole. So while evaluating effect of uncorrected misstatement, auditor will evaluate size and nature of misstatement for particular class of transaction, account balance, disclosure, and financial statement as a whole. And effect of uncorrected misstatement related to prior period. Is it a prior period misstatement on class of transaction, account balance, disclosure, and financial statement as a whole? Sometimes financial statement as a whole, it might not be material. Individual account material. You have to learn this much part. One last time. While evaluating effect of uncorrected misstatement, we will evaluate two things: size and nature of misstatement in relation to particular CAD or financial statement as a whole. Second, effect of uncorrected misstatement related to prior period on particular CAD or financial statement as a whole. Now, as soon as you find uncorrected misstatement, talk to the DAD of management, TCWG. Please correct it. See here. The auditor shall communicate with TCWG uncorrected misstatement and their effect and request TCWG please correct, and the effect of uncorrected misstatement related to prior period. If they correct, well and good. If they don't correct, then take WR from them that they are not correcting because they believe that the uncorrected misstatements are immaterial. Auditor shall request WR from management or TCWG that they believe uncorrected misstatements are immaterial individually and in relation to financial statement as a whole. Over. Lastly, I will document three things. Right. Amount below which misstatements are immaterial. Below this amount, don't check. Okay. Amount below which misstatements are immaterial. It is usually 5% of materiality. Nowhere given in the book. Second, all misstatements identified during audit, whether they are corrected. Auditor's conclusion as to whether uncorrected misstatement are immaterial. Over. For this standard, there is a brilliant summary given by ICI. So I will read that now. This should be in our book also. This is a storybook standard. So once we read the story, it will be triply clear, not doubly clear. Start. Whatever we have learned, CAD, class of transaction, account balance, disclosure. What is class of transaction? P&L. What's account balance? Balance sheet, disclosure, notes. First point. Accumulate all the misstatement identified during audit other than those that are trivial. What is trivial in English? Immaterial. First point. Make total of all mistakes. Second point. Consider if we need to change audit strategy and plan in two cases. If total of all misstatement exceed materiality, or based on nature of misstatement, I feel other misstatement could exist. Okay. Consider if the above process indicate exists that when aggregated with other could be material. If so, If mistakes are material, if so, we need to change audit strategy and plan. Then I will tell management to identify exact amount of mistake. Why? To pass journal entry. Please pass journal entry. Correct the mistakes. Okay, come here. Communicate all the misstatement with appropriate level of management and request them. Please correct, sir. Please correct, sir. If they correct, very good. If they don't correct, find out the reason. Evaluate the reasons. Is the effect of uncorrected misstatement material or not? Prior to seeing effect of uncorrected misstatement, don't forget one point. Again, recalculate materiality. Why? Why to recalculate? Because figures have changed, so materiality will change. Upon management refusal to correct all, obtain understanding of not making correction. And C, financial statements are free from material misstatement. Now, there is one question which I told you. Prior to seeing effect of uncorrected, while evaluating uncorrected, we will see what? Size and nature of misstatement for particular CAD and financial statement as a whole. Effect of uncorrected misstatement related to prior period on CAD and financial statement. Now I will request TCWG, please correct, please correct, please correct. If they correct, well and good. If they don't correct, then take WR from them, written representation that they believe the effect of uncorrected misstatement is immaterial. Over. Communicate with TCWG regarding uncorrected and effect they will have in aggregate on auditor's report. Request WR from management that they believe uncorrected misstatement are immaterial. Sir, we cannot take WR if I believe that misstatements are material. Then they will not give WR. Material misstatement means qualified report will come. Okay, understood. Maintain documentation. Possible question from SF 450. Lots of understanding question, but this one. Now you must be asking, it is never asked, how do you come to know possible only this much will come? Because this is in ICI module. So I took ICI module fully. Okay, whatever is written, that is the maximum they can ask. That is also very silly question. This one. If you also want to know what can come, every chapter module question uploaded. Case study, descriptive, case study, everything. Chapter wise uploaded. That is maximum they can ask. Shall we go ahead? Any doubt? Again ask. Super duper easy essay. Why am I saying so many times? Still 3 minutes are left. Moving on. Go ahead. Till now, 3 essay done. 2 more are like this only. 10 minutes. And then last one is there. We are done. Essay 260. Oh my God. Significance of communication with a TCW. Till now, 3 essay. What is the name? After 5, 6 will come. So after balance sheet, subsequent event. 580 WR from management. Essay 450. Evaluation of misstatement identified during audit. Now, significance of communication with those charged with governance. First point, understand who is TCWG. TCWG is above management. See, who is management? Tata Steel, Tata Motor, Tanishq, Tetley is managed by individual people, they are management. Who supervises all this? Tata Group, Board of Directors, those are TCWG. TCWG are the people who are responsible for strategic direction of the company. They set vision, mission. They are responsible for overall oversight of financial responsibility. Every management is working properly. Communicate with auditor. Focus on ethics. Nothing wrong happens in the company. They are independent directors also. Those are those charged with governance. Now, you will be shocked what is the meaning of this standard. First, let me explain. 2 minutes only. Not book, general meaning. Auditor will talk with TCWG. For that, they made entire standard. What to talk? So, TCWG people are there. Okay. Who are TCWG? Board of Directors, Supervisory Committee, okay, who are responsible for ethics, performance management, integrity, okay, for overseeing the financial reporting, for communicating with auditors. What you will talk when you go in meeting with them? For that entire standard made. Now, here what can come in exam? What you talk? 4 points are there that can come in exam. What if they don't talk properly? Tell me now. What if they don't talk properly? You go to meet Ratan Tata. You're like, no, no, get out. Useless you are. If they don't talk, what will happen? Standard made, so we went to them. What if they don't talk with you properly? Take WR. That we already will take. That we will take. That is SA 580. Withdraw. No. See, why to withdraw? This small thing means what? Data they are giving, no, your work is with management, not TCWG. If they don't talk, what will happen? ROMM will be high. For that assignment, risk of material misstatement will be high. I need to take more evidence over. Why I will withdraw? Money I will not sacrifice if someone doesn't give respect. Are you clear? So ROMM will be high. I will take more evidence. Standard over. Listen now. Only one question can come. What I will talk with them? What to talk with you? Over. That's the only question. But let us read. Objective of auditor: to communicate clearly with TCWG. Responsibility of auditor in relation to audit. An overview of scope and timing of audit. What's the first objective? To tell to TCWG clearly, my responsibility is to form an opinion on the financial statement. This is my scope, this is my timing. I am not here to prepare financial statement. That management has to do under oversight of TCWG. So first objective is my responsibility is to form an opinion. So that is why the standard came. To tell them that my responsibility is to form an opinion and this is the scope and timing of audit. I will come at this time. Keep arrangement ready. So that is why the standard came. Second was what? Obtain from TCWG information relevant to audit. TCWG, when I meet you, you give me a lot of data. That is why standard came. Third, to communicate with TCWG observations which are significant for financial reporting process. I will tell you few points which I observed in financial reporting, few internal control weaknesses, few things I felt were wrong in the company. Last, two-way communication between both of us. That is why we made standard. At times objective can come. Don't think I will go at that down level. Okay. First question. Matters to be told by TCWG. Here what standard is starting. What I will talk with you. Listen. What I will talk with you. Number one. Planned scope and timing of audit. Okay. We will communicate with TCWG. This is the scope which we learned in chapter 1. Timing of audit, which also includes communicating significant risk identified by the entity. Okay, so this is our scope of audit, this is our timing, and this risk we identified. So what I will talk with TCWG. Number one, matters to be told by auditor to TCWG, planned scope and timing of audit. Independence requirement. In case of listed company, we have to communicate to TCWG that we, our network firms, our partners and our staff are independent, nowhere dependent. Okay, we are ethical. We have to communicate to TCWG in case of listed company. What? Whether partner, our team, our network firms. What's network firm? ENY you have heard. ENY has 9 firms. Ernst & Young, SR Bartley Boy, SV Ghatalia, SR Bartley Boy, etc. Have complied with independence requirement. And if there are threats to independence, we have taken threats to eliminate them or reduce to acceptable level. Super duper easy. Okay. Third point. Our responsibility is not to prepare financial statement. It is to audit those financial statements that are prepared by management under oversight of TCWG. Auditor is responsible for forming an opinion on financial statement prepared by management under oversight of TCWG. Fourth point, this can come separately also. Auditor will talk with TCWG significant findings from audit. I think this is the only question. By looking again and again at this standard, I find nothing. So I found this question. This is not in module maybe, but this can come. What I will talk in significant findings from audit, what auditor will tell with TCWG, will learn also. Stage 1, understand. Significant qualitative aspect of client's accounting policy, practices, estimate. I will tell, sir, these are the good aspects or bad aspects of your accounting policies, practices, estimate, disclosure. Why a particular accounting policy, I have not written here, that is most appropriate under FRF is not suitable for your company. Example, many times LIFO not allowed, but we can tell them your business works on LIFO only. Last goods come first out. Okay, fashion business it is. You don't work on FIFO, you work on LIFO. So I think you should follow LIFO. Significant qualitative aspect. First thing what I will tell in significant finding, significant qualitative aspect of client's accounting policies, practices, estimate. Why a particular accounting policy that is most suitable under FRF is not suitable for your company. Second, significant difficulties found during audit. Sir, I found this difficulties during audit. Inside this nothing written. Significant matters that were discussed with management. Sir, what? See, how to remember this? Significant difficulty encountered. I discussed this with management. Second point, significant matters during the audit that were discussed with management. Any other significant matter that in auditor's judgment is relevant for oversight of financial reporting process. This is, I did not discuss this with management, but management itself comes very late. They don't focus on internal control. I can tell any other significant matter that in auditor's judgment is necessary for oversight, means supervision of financial reporting process. Last, circumstances that may affect form and content of auditor's report. What is form? Format. What is content? Inside. Sir, if you don't pass this journal entry, I am telling your Sunil is there, no? Who Sunil? Management. I told him minimum 8 times he's not passing entry only. Why? Because company's financial will turn into loss. I am telling you last time, if you don't pass entry, entire format and content of report will be changed. We will be forced to give qualified report. Form and content is qualified, disclaimer, adverse. Yes. Over. These things I will discuss. Come on, one last time. Significant findings from audit. How many point? 5 point. Significant qualitative aspect of client's accounting policies, practices, estimate. Why a particular accounting policy that is most appropriate is not good for a company. Second, significant difficulties encountered during audit. With whom you talked? Management. Significant matters that were discussed with management. Any other significant matter that in auditor's judgment is necessary for oversight of financial reporting process. Circumstances that will affect form and content of auditor's report. Very logical it is. One last time. Sir, significant findings from audit. What I will discuss? Number 1. Okay. Significant qualitative aspect of client's accounting policies, practices, estimate. Why a particular accounting policy that is most appropriate under FRF is not suitable for your company. Second, significant matters, significant difficulties encountered during audit. I will tell to TCWG. What can be difficulty? Also tell to significant matters that were discussed with management. Any other significant matter that in auditor's judgment is fundamental for oversight of, is relevant for oversight of financial reporting process. Circumstances that may affect form and content of auditor's report. Over. How to remember all 4 points? I think understanding question comes, but still. I will talk with TCWG. सिर्फ इतना सा ख्वाब है. What I will talk? सिर्फ this much I will talk. SIRF. What is S? Plan, scope and timing of audit. I independence requirement. R. Our responsibility is to form an opinion on financial statement. F. Significant findings from audit. Is this question easy? Super easy. Hey, I want to talk with TCWG. सिर्फ इतना सा ख्वाब है. One last time. Plan, scope and timing of audit. I. Independence requirement. R. Responsibility is to form an opinion on financial statement. F. Significant findings from audit. Sir, one more time. सिर्फ इतना सा, one more time. Plan, scope and timing of audit. Independence requirement. Responsibility is to form an opinion. Significant findings from audit. English, most important. Get up for 1 second. Two things I will give in writing. Independence and significant findings. I have to give in writing. If I communicate orally, then what to do? Two things I have to keep. What did I communicate and to whom? What did I communicate and to whom? Sir, if writing, then take Xerox. Retain copy of documentation. Standard over. Sir, what you will talk in writing? If I communicate orally, then two things. Okay. With whom communication took place and what matter? I will keep a record. Over. Standard over. Auditor shall communicate with TCWG format, timing, and expected content of communication. I will talk with them. This is could be the format. Okay, means I will discuss these things, this time and expected content. In writing, two things: significant finding, independence requirement. Last, if communication is not good, then if they don't talk properly, we will evaluate what effect this will have on ROM. Risk will be high, and I need to get more evidence. Over. Documentation. When matters are communicated orally, auditor shall include in documentation when and to whom it was communicated. When communication is in writing, I will retain copy of documentation. Xerox, I will do. Sir, one more time. What matter I will talk with TC? सिर्फ इतना सा ख्वाब है. Plan, scope and timing of audit. I. Independence requirement. R. Our responsibility is to form an opinion. F. Significant findings from audit. Shall we go ahead or any doubt? This is the fourth standard done. Fifth is even more easy. Most easy of the whole lot is next one. Super duper easy. Anyone, any doubt? Or go ahead. You might feel it is big, but it is super easy. After this, we have last standard. Start. Significance of communication with TCWG. Here, new standard came. Communicating deficiencies in internal control with TCWG. See, if I want to talk SIRF with TCWG, SA 260. If I want to talk about deficiencies in internal control, SA 265. That's the only difference. One more time. Communicating deficiencies in internal control to TCWG. You will be shocked when I tell you this standard because there is nothing there. Let me still explain. Why? To make it sound little logical. Answer few questions, otherwise you will feel when standard started, when it ended, you will only get confused. Sir taught also this or not? That much easy. So what I will do? Intentionally try to make little logical. Number one. First question you have to reply. Who is responsible for preparing financial statement? In both, as auditor is talking with TCWG, correct. Who is responsible? Management. Second question. Management will implement internal control, bolo yes or no? Yes. So there are no material misstatement. Yes, sir. But, what is deficiency? When internal control cannot prevent or detect and correct material misstatement, that's deficiency. When a control is either missing or control is not good enough to prevent or detect and correct material misstatement, that is deficiency. Now I want to ask you last question. When does auditor usually find deficiency? Reply. If you can answer, too good. A deviation you understood, that too much detail alone you went, that much not required. In TOC I find correct. But do I find during control risk also ROMM? Yes or no? So in ROMM I found deficiency. My work is not to find deficiency, it's to do audit. Okay, I am not only commenting on deficiencies, but while calculating ROMM. Now you'll ask me, why ROMM you calculated? To know control risk. Why control risk? To plan about further audit procedure. I came to know certain deficiencies. I want to talk to TCWG. Tell me, you will talk with TCWG all deficiency or significant one? All deficiency or significant. Employee not coming on time is also deficiency. Tell me, significant ones. So normal deficiency, whom I will tell? Management. You have little problem in life, you tell mom. Big problem, dad. So normal deficiencies in internal control, I will talk with management. Significant deficiency, I will talk with TCWG. In writing, I will talk not only deficiency, I will write description of deficiency and its possible effect and sufficient information to enable TCWG to understand context of communication. Over. But. Normal, I will talk with management. Significant, I will tell to management and TCWG both. In one case, I will not talk significant deficiency to management. Which case? If it's deficiency about management only. Normal deficiency management, significant deficiency TCWG. But if it is deficiency about management only, I will not tell management again. I will only talk with TCWG. In fact, I became too ambitious and explained you whole standard. Let's go slowly. Start. Super easy. If by mistake I will explain also insert, I just have to read. You will automatically tell, sir, understood. Auditor is required to obtain understanding of internal control while calculating ROM. Why? IR into CR. What is objective? Communicate to management and TCWG deficiencies in internal control that are of utmost importance. Why? It is their company, not my dad's company. First question. What is difference between deficiency and significant deficiency? Deficiency exists when control is missing or control is unable to prevent or detect and correct material misstatement. Significant deficiency are those deficiencies that are of utmost importance in the judgment of auditor. Whatever you feel is utmost importance is significant deficiency. Significant deficiencies are those that are of utmost importance. But sir, I don't understand this utmost importance. Then second easy word, whose probability and impact is high. There is a high chance this error can occur. Or if they occur, amount could be high. Simple, understood now? Okay, significant deficiencies are those that are of utmost importance in the judgment of auditor or whose probability and impact is high. Sir, how to identify? We shall determine, are there deficiencies in internal control? Based on that, auditor will determine whether individually or in combination they could become significant deficiency. Over. We have to accumulate all deficiencies. Based on that, we'll apply our judgment either individually or in combination. Are they of sufficient importance to merit attention of TCWG? Is it a good enough point that I can tell to Ratan Tata? Only those things. Now, what is good enough? Entirely judgment. Sir, in audit, in real life, if I don't understand all this, then what to do? Ignore. Not compulsory standard, time pass standard. In syllabus, they have to include few essays, so they include it. If you don't, like anyways, I will tell to TCWG, no, in your company, 4 things are wrong. Okay. By the way, standard over. Communicate deficiency. Auditor will communicate in writing significant deficiency to TCWG. Auditor will also talk with management. What I will tell with management? In writing significant deficiency and other deficiency orally. Other deficiencies that are of sufficient importance to merit attention of TCWG. If someone is giving you money, you will talk about their company, no? Directly, when they are paying you 5 crore, what you will tell? Sir, I think 4 things are wrong in your company. Of course, we will tell. Now, they told that for that standard is there. Oh, thank you for telling. Anyways, I will tell just to show that you gave 5 crore to right person. Over. Now, what is in module question? How to write deficiency? This question. Case study. Super easy. Auditor shall include written communication of significant deficiency. Don't only write deficiency. What to write? 5 crore you have received. So write 5 lines. A description of deficiency and its possible effect. So this is the weakness, this is the possible effect. Sufficient information to enable TCWG to understand the context of communication. So much English, yes. Description of deficiency and its possible effect. Sufficient information to enable TCWG to understand context of communication. Let's take example. Sir, cash is not deposited daily. It is collected but employee keeps it at home. Every day our cash collections are 4 crore. Now don't write this much, write 8 lines. Weakness, segregation of duty not present. Person responsible for cash and collecting same person. Now write in detail. This can lead to material misstatement in the future. It's a weakness of whatever you English, how much ever you know. But remember, our aim is to do audit, not to identify deficiency. This we identified, so we report it. But we don't give report only on deficiency. We give report on entire financial statement. This is the question in module. Standard over? Yes. I did not find anything in this standard. So I was searching from where to bring question. Then I found one more question, so I included. This memory technique will not be there in your books. Okay. So please correct it. Over. Last question. English listen. Examples of matter which help in deciding whether deficiency or combination of deficiency can become significant deficiency. If you are not able to understand only, then they have given few examples. Examples of matter which help in deciding whether deficiency or combination of deficiency can become significant deficiency. It is given in your book, only technique is not given. Why? We invented later. Start. Number 1 point. Likelihood of deficiency leading to material misstatement in the financial statement in future. Probability that there can be fraud in this area, so it can become significant deficiency. Likelihood is probability. Likelihood of deficiency leading to material misstatement in financial statement in future. There is a high fraud, purchase fraud will happen. Likelihood, so it can become significant deficiency. Second, I. Alone this is not deficiency, but if 2-3 deficiencies come together, no, then this can become big fraud. Right now we are doing purchase in cash. He is good person, but if tomorrow if he leaves, then fraud. Interaction of deficiencies with other deficiencies in internal control. Interaction of deficiency with other deficiencies in internal control. Simple. Possibility of loss in related asset or liability. P. That is example, no segregation of duty. Person receiving cash and reconciling cash is same, may lead to fraud. Possibility of loss in related. Don't keep too much reliance on anyone. Though it is owner, your brother, your sister, all are ultimately chore in life. Are you clear? So possibility of loss in related asset or liability. S. Subjectivity and complexity in determining estimated amount. Your deficiency can be there because we might write more amount or less amount based on profit we want to pay tax. Subjectivity and complexity in determining estimated amount like fair value, actuarial valuation. Last point, volume of activity that has occurred in an account balance or class of transaction. Our 98% sale is coming from one vendor. It's a deficiency. Business model is wrong. Volume of activity that has occurred in account balance or class of transaction. Over. Sir, can we learn this? Why not? Example of matter which help in deciding whether deficiency or combination of deficiency can become significant deficiency. Lips, lips, lips. Lips, if lips are not good, it's significant deficiency. How to kiss? Are you clear? L, L, L. Likelihood of deficiency leading to material misstatement in the financial statement in future. Likelihood of deficiency leading to material misstatement in the financial statement in future means probability. I. Interaction of deficiencies with other deficiencies of internal control. Possibility of loss in related asset or liability. Example, person collecting and reconciling cash is same. Subjectivity and complexity in measuring estimated amount. Volume of activity that has occurred in an account balance or class of transaction. I found hard, but when I read second time, I found easy. That is what is the magic. What are example of matter which help in deciding whether deficiency or combination of deficiency in English can become significant deficiency? Lips. Likelihood of deficiency leading to likelihood of deficiency leading to material misstatement in financial statement in future. Interaction of deficiencies with other deficiencies of internal control. Possibility of loss in related asset or liability. Subjectivity and complexity in determining estimated amount. Volume of activity that has occurred in an account balance or class of transaction. See, lips is normal, then I added volume of activity just to make 5 points. Small break, 10 seconds. Time up. Example of matter which help in deciding whether deficiency or combination of deficiency can become. Lips. Likelihood of deficiency leading to material misstatement in the financial statement in future. Interaction of deficiencies with other deficiencies of internal control. Possibility of loss in related asset or liability. Subjectivity and complexity in measuring estimated amount. Last, volume of activity that has occurred in an account balance or class of transaction. Shall we go ahead or no? With this is also done. What is difference between 260 265? In 260, significance of communication with TCWG. 265, okay, communicating deficiencies. If I want to communicate sirf this, if I want to communicate deficiency this, it is becoming too heavy or normal. What to do? 260 is sirf and 265 is deficiency. Sirf and lips, yes. Tell me fast. It is becoming heavy, or shall we finish the last essay also, or the break? As you say, this is bigger one. Bigger means we were how much big? Not that big. Then after the break, what to do? Chapter 4 last essays they are saying. Some are saying break, some are saying what to do. Final. Break. Okay, it's 26. We shall come at what time? You tell. 40 is good or no? 45, as you say. 45. Okay, then we'll continue till 11. Hopefully, we will end both essays also today easily. If we finish early, it's okay. 11. Okay. Bye bye. Good night. Take care. See you. Start. 1, 2, 3. Start. Welcome back. Before reading, SA 570. SA 570, next we are going to discuss auditor and going concern assumption. Okay. How to remember this essay? Very simple. Let's find it. After 5, tell me what will come 6. So after balance sheet, subsequent event. If after 5 you don't do 6, your 7 will happen, which is bad for you. After 5, 6 should come, 7 is harmful. So that's going concern. See, after 5, 6 is subsequent event. If 6 doesn't happen for you, 7 will happen. That is auditor and going concern assumption. And whenever there is doubt on going concern, you have to take WR from management. So that is SA 580, WR from management. All 3 essays, how to remember with a silly logic forever. One last time. Okay, we can in fact take 4 essays. 5 and 5 both are related. We will discuss after this. 550 related party. After 5, tell me what will come. 6 after balance sheet subsequent event. If you don't do after 5, 6, your 7 will happen. SA 570 auditor and going concern assumption. Whenever there is doubt on going concern, you take WR from management. SA 580 WR from management. Before starting this standard, we need to know little basic. How to read this standard. Many people don't know only how to read. Then what happens? You find this hard. Once you know the order of reading, this is super duper easy. So let us understand. I am not explaining standard. How to read. You can take photo of this later. Okay. I will show you how to take photo. Number 1. Always remember 99.99% case going concern is always valid. So there is no doubt on going concern. In 99.99% audit or wrong 99.999999 real life this standard doesn't apply. Going concern is always valid for a foreseeable future. Now your next question, what is foreseeable future? as per accounting standard interpretation 1, foreseeable future is 12 months from balance sheet date. So whenever you go to do audit, Tata, Reliance, Adani, just ask one question: will company continue for 12 months? Answer comes yes. Standard over, this standard will not apply. But we have to study not a real life, we have to study audit. Okay, if you feel okay 12 months also it cannot continue, then this standard will start. One more time, we don't have to check going, sir, company will close down after 3 years. Okay, nothing to do. Company will close down after 2 years, nothing to do. We always check going concern only for, last time I'm saying, foreseeable future, 12 months from balance sheet date. Sir, what will happen if company doesn't continue? Today only, I need to show asset and liability at NRV, net realizable value. I need to show true value of asset, not cost. Okay. So, and all loss will be charged to P&L. So, shareholder get true picture. But sir, when I will come to know that company might not continue for 12 months, when there are indicators, certain financial, operating, other. What is a financial indicator? Company is in loss, cash flow is negative, net liability is greater. What are operating indicators? We have lost major customer, key management person are leaving, labor difficulties are there. What are other indicators? There are 3 cases on company. If these cases happen, we have to pay the amount and we will not have a penny. I hope you understood. So whenever there are indicators, what I will do, I feel there is a doubt on going concern. Company may not continue for 12 months, but I cannot directly tell to someone. Okay, if someone is failing, I can never tell to someone. I will tell in a nicer way. What is your plan to pass? Okay, so same way. Okay, one more point is that not saying anything about going concern doesn't mean going concern is valid. Why? Auditor's ability to detect misstatements for future is always higher. We don't know future. If I don't say anything about going concern, doesn't mean company will continue. Who would have thought Kingfisher will close down? Very big. Who would have thought this Tata Docomo will close down? Who would have thought Sahara will close down? Who would have thought Byju's will close down? So not saying anything about going concern doesn't mean that going concern is valid. Okay, in future anything can happen. That's the inherent limitation of audit. Now, whenever there are indicators, one last time, whenever there are indicators, I will tell management, do you have a plan to escape? Okay, do you have mitigating factors? Have you set up a plan? I will check the plan of management if they have a plan. After that, 3 assumptions are there. I feel plan is good enough, going concern valid. I feel plan is third class, going concern invalid. Last point. Sometimes you feel I love you, I hate you. I love you as a friend. Okay. So going concern is valid, but there is material uncertainty. If these things happen, going concern will not be valid. 3 assumptions can be there after looking at the plan: valid, invalid, valid, but there is material uncertainty. Means there is certain factor, if this factor happens, going concern gone. Or last situation can be management doesn't give a plan only. We don't have any plan, do whatever you want. Once you understand this, standard is time pass, we can do in 15 minutes. Start. This photo, if you want, you can take first. We have included now in magic book, thinking that if someone will read only magic book, then so now we have included here. So you can take this photo. How to read SFI 17. Exam, it has zero relevance. Now exact 15 minutes over. Concentrate. Auditor and going concern. Auditor has to get sufficient and appropriate evidence that going concern is valid, or check if there is material uncertainty relating to going concern. However, there can be limitation on auditor's ability to detect misstatement for future. If I don't say anything about going concern, doesn't mean it is valid. It's a limitation of audit. Auditor cannot predict future event. So absence of any material uncertainty absence of anything wrong cannot be viewed as a guarantee that company will be valid only. Example, Sahara. okay, Byju's. No one thought, okay, biggest ever company. Who would have thought? Satyam, third largest company, could close down. Moving on. So whenever, sir, when I will have doubt about going concern, when there are indicators, okay. I thought this will not come, but it came in last exam. So now 2-3 attempt, definitely it will not come. This came in last exam. Event or condition that may cast doubt on going concern. Try to remember 3 events. God knows why to remember. Just like that, try. Number one, it will not come 101% for few attempts at least. Okay, it may come again. Financial indicator, net liability or net current liability, liability greater than asset, negative operating cash flows since many years, fixed term borrowing approaching maturity, you need to pay but you don't have money of EMI, okay, without realistic chance of payment, or short term loan taken to meet long term liability, withdrawal of financial support by creditor not supporting our company, adverse ratio is there, debt equity, proprietary, everything wrong. Just read once, small break, 5 seconds. Next, what are operating indicator? Here I have a favorite technique to remember. Only remember 3 words: raw material, work in progress, finished good. All 3 are required for operating. Raw material, what you will write? Loss of major supply. WIP, who will make? Worker. Okay, labor difficulty. FG, whom to sell? Customer. Loss of major customer. 3 point done. Let's add 2-3 more points. Loss of key management. Okay. Management intention to liquidate entity. Management feels that children don't want to continue for 5% business, 7% business. These days, children not interested. They're like, dad has already 7,000 crore rupees we have. Why to work like that? Dad was beauty. Dad was like that. I have brain. I will not work. Okay. So just remember, over. Management intention to liquidate the company. Loss of key management. Loss of major market, customer, license, labor difficulty. Shortage of important supply. Emergence of highly successful competitor. Break, 5 seconds. I told you that technique is best. RMWIPFG. Moving on. Other indicator. Non-compliance with capital adequacy or other norms. Okay. Capital adequacy or other requirements we are unable to fulfill. If you don't know, for bank, we have to maintain CRR, SLR. I am unable to maintain. Close down. Second, pending legal cases, if successful, will result in a claim company can't pay. Sometimes companies of 200 crore, cases of 900 crore. Though we know it will not fulfill, but still, changes in law, regulation, government policy. Government says ban plastic. We have plastic multi-billion dollar crore business. We have alcohol business. Government says ban alcohol. 40% GST. It means as good as ban only. Okay. Uninsured or underinsured catastrophe when they occur. Uninsured means what? You have not taken insurance, or you have taken less insurance. Okay, so if disaster will happen, if you don't take insurance, company close. We have a hotel, but our hotel insurance very less. Underinsured, or we take less insurance. Or very simple. Other indicator, non-compliance with capital adequacy or other norms. Pending legal cases, if successful, will result in a claim company can't give. Changes in law, regulation, or government policy. Uninsured or underinsured catastrophe. Now, most important, whenever these are indicators are there, I have a doubt on going concern, I will check management. Are there mitigating factors? Do you have a plan? This is the only question which can come. Break, listen nicely. Does not come, it can come. Start. When does this, see, understand, whenever there is a doubt, how I will know doubt? By indicator, financial, operating, other. Whenever there is a doubt, I will ask management, do you have a plan? Additional audit procedure. Why additional? Because these are done only when event or condition are identified. Very important, we have to understand. Yes, learn big yes. Okay, auditor has to do following procedure. First step, see, don't try to learn. If you were there, you would also do the same. Only English written here. If management has not yet done assessment, we will tell management, please do assessment of going concern. VIP industry makes bags, okay? Their children are not interested. What you will tell? Sir, I feel there is a doubt on going concern. Liability greater than asset. First tell them, Mr. Parekh, but he will not listen to you, another fellow. But no problem, still tell. Where management has not done assessment, okay, tell management, please make assessment of going concern. How you can tell since 25 years I am running? Sir, we have been told by our standard, please make assessment. You only make. Sir, our standard has told you know your company better. First point. Where management has not yet made assessment, tell management, please make assessment about going concern. Point number two, evaluate management plan in relation to going concern. Is the plan valid? Will it sustain? You understand business little. You are not small person. You are chartered accountant. Evaluate the management plan in relation to going concern assessment. Is the plan valid, feasible? 2 points are done. Third, in plan, what is there? Cash flow forecast. In cash flow, look at two things, assumptions and data. See the reliability of data and assumptions in the forecast. Means they have taken higher cash flows or what? Okay. Assumption means what, will grow at 20%. You are growing at -20, baby. Don't be emotional. Okay. Third, when entity has prepared cash flow forecast, analysis of forecast is important. See two things here, reliability of data, and there is adequate support for assumptions in the forecast. Reliability of data, adequate support for assumptions in the forecast. Clear? Next. Fourth, consider any additional. See, management made a plan. 2 months have passed. Consider any additional facts or information is available since the time management has made assessment. Sir, you made assessment in 2 months. Are there any changes? Mr. Parekh, please tell. Are there any changes? Okay. Whatever they reply, Raj, take WR. You want to be on safer side. Okay. Request WR from management regarding future plan and feasibility of the plan. After this, listen nicely. We might have three conclusions. Going concern valid, going concern invalid, going concern valid, but there is material uncertainty. Okay, don't forget that, because some people feel after this standard over. No, baby. After this, something more will come. Okay, let us speak this. 1, 2, 3, start. Additional audit procedure when event or condition are identified. Okay, sir, please speak. These are when events are identified. They will ask you additional procedure or mitigating factor. What will auditor do? 2 times we will revise. Where management has not yet done assessment, we will tell management, please make assessment of going concern. Second, they make assessment. Evaluate the management plan is valid in relation to the future and going concern assessment. What is there in the plan? Where entity has prepared cash flow forecast. See, the reliability of data and assumptions used in the forecast are reasonable or not. 2 months have passed since the plan is made. Consider any additional facts or information is available since the time management has made assessment. Last, request WR from management regarding the plan and feasibility of the plan. Wow! Yes, yes, yes. Oh, वो chart is pending still, Gidanshu. Don't worry. Pending. That you have to written in exam. You have written this all points. We told you special break. If you were absent that day, then okay. Now I will explain one last time simple English. Where management has not yet made plan, take management make the plan. Second, see whether their plan is valid. Third, in plan, what is their cash flow? Do data. Data, assumption. Data, assumption. Data. Additional situation available. Last, take WR. Over. If you need more time, we can take. Otherwise, we will go ahead as you feel. Reply fast. Whatever is your conclusion. Waiting for others. Whatever you want, we will do. Arshita is saying done. Others. Shall we go ahead? Go ahead. One last time. What are additional factors? What are additional factors? Additional factors when there is a doubt. 4, 5 points. When management has not yet done assessment, tell management to do a assessment. Evaluate management plan is valid in relation to the future and going concern. Where entity has prepared cash flow forecast. See reliability of data and assumption in the forecast. 4. Consider any additional facts or information is available since the time management has made assessment. Request WR from management regarding plan and feasibility of the plan. Over. Now, three answers are there. If I show you here no, you will find very difficult. You will, what is so hard, so hard. If you answer, you will find easy. Like that it is. Many times we look at the book, oh, so hard. Chalo, now I will ask you question. Though it might take 2 minutes more, but okay, we are done with standard. We are on very much safer side. 1, 2, 3, start. My first question. If going concern is valid, what to do? Three conclusions after checking this plan. Okay, mitigating factor. Three conclusion auditor will have: going concern valid, invalid, valid, but there is material uncertainty. What if going concern is valid? What to do? Reply fast, we are getting late. If you don't know, reply don't know. Nothing, ignore, wrong answer. We will give normal report, means nothing. Unqualified report. Understood, understood, understood. Okay. Now moving on. Going concern invalid. Now, if you don't know, let me remind you. Whenever invalid asset liability is shown at NRV, loss chart to P&L, they are saying don't touch our. Okay, so okay. Second. They are saying no problem. We will show asset liability at NRV. Okay, management shows asset liability at NRV. Then what to do? No final conclusion now. Going concern invalid. Management has shown asset liability at NRV. Then what to do? Reply fast. Amended report. Amended so we have not taught. By the way, reports we will study tomorrow. Two people are only replying. If you don't reply, whatever you want, you can reply. Don't know, also reply. One last time. Asset liability, you have to show it NRV. They showed it NRV. What? Tell them to change. They changed. Are net real going concern not valid, so asset liability are shown at market value. They have shown at market value. What to do? Now normal report we don't have. Adverse report Kajal tool. Tell them to change. That they changed. EOM report. English don't read. EOM we have not taught you. EOM is not taught to you. Tomorrow we will learn. Clean report. Everything is perfect. In EOM paragraph we will write. If you want to emphasize anything, you write in EOM. What we will write? Management has followed alternate method of accounting. Simple. You did not have to use brain. See here. Going concern is inappropriate. If management has prepared financial statement on liquidation. Liquidation means NRV. We will give unmodified report. Clean report. But in EOM we will write. What we will write? We have followed alternate method of accounting. Any doubt? If every box is clear only, then I will go ahead. Is the left side box clear? Ideally, I thought you will only answer. Any doubt? Any doubt? Moving on. Come to this side now. They are saying don't touch our financial statement, we will show at cost. Don't touch, we will show at cost. Then what will happen? If management has prepared financial statement as per going concern, but going concern invalid, then adverse report. All figure are wrong. We will give adverse report because it affects all accounts. We have to show NRV, everything is wrong. Adverse report. Any doubt? Hopefully no doubt. Come here, last point. Going concern valid, but there is material uncertainty. Means little, if this happens, going concern could be invalid. It's valid, but there's material uncertainty. If adequate disclosure about material uncertainty is made, okay, your financial statement are shown at cost only. If adequate disclosure about material uncertainty is made, then we will give unqualified report. Simple, clean report. But auditor report, Monday we will study. In audit report, there is a separate section. There we will write there is material uncertainty relating to going concern. Just write a note there. Over. Okay. Clean report we will give. But in auditor's report, there is a point which we'll study. We will write there material uncertainty relating to going concern. They are saying, don't write. These rubbish things don't write in our financial statement. No. If adequate disclosure is not made, then we will give qualified or adverse report. If you feel misstatements are material but not pervasive, qualified. If you feel material and pervasive, adverse report. Okay. In basis of opinion, right? Why did you give such report? We have to write there is material uncertainty, but same is not disclosed in financial statement. Over. Sir, what if they don't make a plan only? They are not making any plan. Then we will give disclaimer report because I am unable to form opinion. If management doesn't make a plan of going concern, okay, management is unwilling to make assessment. In such situation, we will give qualified if I feel misstatement could be material but not pervasive, or disclaimer report because we did not get evidence. We did not get evidence. I think it went little fast, so again we will go slow. But now I will not reply. You will reply. 1, 2, 3, start. Tell me fast, fast. I won't reply. Exactly in 2 minutes we want to close this now. 1, 2, 3. Going concern invalid. If management shows asset and liability at NRV, what to do? Reply. Management invalid it is. Management is showing clean report will come. But in EOM, if you don't understand this, you will understand Monday. In emphasize, we will emphasize that there is alternate method of accounting. Come this side. Don't touch our financial statement. We will show as per going concern only. Everything valid. We will show financial statements are shown at cost. Tell me which report? Adverse report, because every figure is wrong. No note, nothing. Understood? Chalo, the first part is over. Last part. Going concern valid, but there is material uncertainty. If they give adequate disclosure about material uncertainty, then if adequate disclosure is given, then unmodified report. But in auditor's report, in going concern point, what we will write? There is material uncertainty relating to going concern. They are not saying no disclosure. Go all these third class things we don't want. Material uncertainty. You will write about me. Since 62 years I am doing business. You became auditor since 5 years CA. But you will tell me then which report? Then which report? Then qualified or adverse. If you feel misstatements are material, qualified. Material as well as pervasive. It's your judgment. Adverse report. Are you clear? But in basis of opinion, right? What is basis? On what base I formed the opinion? I will write there is material uncertainty, but it is not disclosed. Last point over. Management says, you tell management, sir, I feel there is doubt on going concern. Please make assessment. Please let's check going concern. We will not make any assessment. All such rubbish things you do at your home. You and CA Institute both do. Did we make assessment whether you will pass CA inter exam or not? We did not make. You don't make our assessment. Tell me fast. Then what to do? Management is not making assessment. If you feel misstatement could be material, qualified. Could be material and pervasive, disclaimer. Qualified or disclaimer. I hope very logical, very clear. Any doubt? Again, they don't ask such complicated questions. Reason I don't know. All this I am explaining, but I have not seen much more of this. They should ask, but okay. Now last time I will speak this if you want. Okay, you can take photo. Going concern is always valid for foreseeable future. What is foreseeable future? 12 months. How to know when there is a doubt? If there are indicators. Whenever there are indicators. But there's nothing about indicator doesn't mean going concern valid. No. Because future is in no one hand. So whenever there are an indicator, we will check mitigating factor. After that, make 3 conclusions. Valid, invalid, valid. But there is material uncertainty. Or management doesn't make a assessment only. I don't want to accept my mistake. Over. What a beautiful day. Amazing. Very good morning, guys. Warm welcome to the best lectures of FMSM and Audit nationwide. Welcome to your own YouTube channel. Many people are saying, sir, we are approaching the end of audit. We have discussed chapter number 1, nature, objective, scope. Chapter 2, audit strategy, planning, program. Chapter number 3, risky areas identify. Chapter number 4, get lot of evidence. Chapter number 6, documentation. Chapter 7, completion. But why are we doing all these things? Why? To give a report. So here we are with brilliant revision of chapter number 8, audit report. Yes, it has lots of essays, lots of interesting concept. One of the brilliant chapter, and you will find the best revision of this chapter in only English right now itself. Yes, guys, what you can expect from this lecture? Excellent conceptual clarity of all the concepts. Wherever required, whichever answer required, you will be able to learn in the lecture itself. Be rest assured, sit back at your home and enjoy masterpiece revision of chapter 8 audit report in only English. I hope you like the lecture. If you like, give a like button and share with your friends too. It gives us lots of motivation. Thank you so much. Take care. Very good morning, guys. Welcome to the best lectures of FMSM and Audit nationwide. We have till now finished 7 chapters. We are starting with the 8th chapter. It's a little bigger chapter, high weighted chapter. Okay, it's of 12 to 15 marks chapter. That is why if some portion is left of this chapter, maybe CARO portion will be left. Otherwise, so everything should be done. Okay, we will do it tomorrow. If we get time, of course, we'll finish today because tomorrow is a smaller chapter of only 4 to 6 marks. That is bank audit. Okay, so today is a bigger one. Let's finish that first. Audit report. After that, only I think 3 chapters are left after today. Let's start. Audit report is number of essays. Okay, number one, how is this linked? First of all, we need to understand that. Okay, look at all the chapters and this is a deep link with all chapters. Let's start chapter number 1, nature, objective and scope of audit. Chapter number 2, audit strategy, plan, program. Chapter number 3, identify the risky areas. Chapter number 4, get lot of evidence. Okay, chapter number 6, don't forget to maintain documentation. Chapter 7, while just completing audit, there are few essays. Now, why are we doing all this? Not for fun. Are you clear? Whatever we did till now, last end, oh my god, I forgot, we have to be ethical also. Why are we doing everything? Just to give that report. Okay, so final conclusion of entire audit is that one audit report. Now, how reporting will be done? There are several essays based on that. Okay, so that is what we have to study in this chapter. Can we start? Yes, sir, right away. Let's start. Number 1, we have to study 700, 701, 705, 706, 710. So 5 essays we have fixed. Let's start right away. First of all, 700. 700 is what? Whenever you give unmodified opinion, that is a clean report. What is the format of the report that we will study? In India, whenever clean report is given, yes, 299 as well. How is it given in India? So that format we have to study. Very less questions come from this. Okay, but anything can come, as they say. Okay, so we are doing it. Number 1, what is the name of essay? Forming an opinion and reporting on financial statement. Forming an opinion and reporting. Tell me, first we form a opinion or report? Form a opinion and then a report. Why this standard came? Earlier, everyone had different format for reporting. Someone will use this format, someone will use this format. Standard said, close this masti. We want to do grand masti. And they introduced one common format. So whether I look at financial statements of Tata Motors or Mahindra, both will be same. Okay, format of course. Okay, so it's comparable. I want to compare Tata Motors with Tesla globally. Format is same because we have copied their format only. I hope it is clear. So number 1, why do I learn this essay? To form an opinion. How I will form? Based on evaluation of conclusion drawn from evidence obtained. If you want to simple English, I will get evidence. On evidence, I will form conclusion and give a report. So this standard came. Second, to express that report clearly through a written report. It cannot be oral report. Why? There are so many shareholders. Moving on. Purpose. Why this standard came? It's aimed to address the gap between consistency and comparability in global reporting. Okay, let's take example, consistency. I want to compare with my last year. I cannot compare, format different. Now I can compare, format same. Second, comparability. As I said, Tata wants to compare with Mahindra, Tata wants to compare with Tesla. You can compare with everyone because dash is same. Format. Next, it will increase the value of audit report. Why? Everyone will understand. This is the format. This is how I read the financial statement. Okay. As I said, this is not so important essay. So I will also tell you what to learn. Okay. But understand very nicely. What to learn doesn't mean I'm telling you important things. I am telling you whatever is possible, this much only they can ask. Rest is irrelevant. Okay. So this is favorite essay for maybe numbering. They can ask after this point will come. So total 13 points are there in auditor's report. Number 1 point in every auditor report, you can see Reliance, TCS, Tata, okay, is a title. So title will be there. First point, there are 13 points. Title will clearly state it's a report of an independent auditor. Okay, so first line is report of independent auditor. Now you will ask me why such title is required. See, if the word is independent, confidence of shareholder will increase that this auditor is nowhere associated with the company. He will give unbiased report. So this is must. Number 1 title. What is the title? Report of an independent auditor. Can any question come? No. Second line in the report we write, okay, addressee as required by circumstances of engagement, whom to address, whom to give report. Okay, so usually company audit report is given to shareholder, branch audit report is given to company auditor, internal audit report is given to management. So as required by circumstances, tell me you bought a Cadbury, whom you will give? Whoever is your current girlfriend at that time. Are you clear? Circumstances of engagement, title, addressee. Third point can definitely come, auditor's opinion. First thing we should have is opinion. Auditors, see, earlier what was there I will tell you, but why God knows, but still let me tell. Earlier we had basis of opinion and then opinion. So our shareholders were wondering, are basis opinion they don't find, they find every other rubbish thing. So now Gen Z, your generation, you're like, don't forget, I don't want all this. Just tell me opinion. I am not concerned with basis and thesis and all. Okay. So first opinion will come, then basis for opinion will come. So opinion. In opinion, what we will write? I will write, if it is a modified opinion, I have to write qualified disclaimer, but that is next standard. So first I will write opinion. In opinion, how many points are there? 4. Do I need to learn? Yes. How you know? Because it's in module. 1, 2, 3, start. I did very simple. Third point, we should have a heading opinion, auditor's opinion. 4 point it will have. Identify entity whose financial statement are audited. Second, state the fact that the financial statement are audited. More rubbish. Third, identify title of each statement comprising financial statement. What is title? Balance sheet, P&L, cash flow, statement of changes in equity, notes. Oh, notes you forgot. Again, refer to notes including summary of significant accounting policy. Last, specify the date or period covered by each statement comprising financial statement. What is date or period covered? P&L is for the year ended. Balance sheet is as at. Are you clear? So you need to write P&L is this, balance sheet is this, cash flow is this. Over. In real life, this all is written in just 2 lines. Okay, but we have to learn this. Is it easy? No, it is too easy. Number 1, identify entity means we have audited financial statement of Reliance. Number 1, identify entity whose financial statement are audited. 2, state the fact that financial statement are audited. We have audited. Third, identify title of each statement comprising financial statement. Name each statement which is part of financial statement, balance sheet, P&L, etc., etc. Don't forget notes. Refer to notes including summary of significant accounting policy. Last point, specify the date or period covered by each statement comprising financial statement. Small break of 10 seconds. Easy, super duper easy. Time pass this is. What's the track record? Of late never asked. Of late zero track record. This is more understanding standard. Sir, time up. I think you can go ahead. Okay, very simple. So you have to learn. Come here now. In India, 2 type of opinion are there. Okay, sorry, unmodified opinion. When you give clean report, we give in 2 ways. This is a very, very important question, but track record is 0. Who feels it is important? Only me. ICI never felt important. Maybe they feel this at final level, but still, come here. There are, whenever we give opinion in India, we give in 2 ways. One last time, we give in 2 ways: fair presentation and compliance framework. In fair presentation, what language I will write? Financial statement give true and fair view in all material aspect as per FRF. This language I have to write. They never ask drafting question, but they can ask. Whenever I use compliance framework, what language I write? Financial statements are prepared in all material aspect as per FRF. Now your second question, why such language? Why? What is the meaning? Now I will explain. Come here. Fair presentation means what? Okay, I just want to look at everything is presented nicely or not. Okay, so there are two formats, fair presentation and compliance. What is fair presentation? It gives permission to go for additional disclosure or amend the requirement of FRF for better presentation. Not at all understood. See, I can go for additional disclosures or I can amend the financial reporting framework. Let's take example. Format of P&L is P&L for the year ended. But I am a new company. I am working only since 8 months. So I can write P&L for 8 months ended. Why? Because it is giving better presentation. Okay. So I can go for additional disclosure. Amend the requirement of FRF for better presentation. Second, life of asset is 20 years. I feel it will work 30 years. I can take 30 years in fair presentation. Why? Because it is a fair. Okay. It gives permission to go for additional disclosure or amend the requirement of FRF for better presentation. Example give Schedule 3. Whenever you get Schedule 3 audit, it is not compulsory that you follow the format. If it is looking better, you can change the format for better presentation. Come here, come here, come here, come here. But certain audits are there, compliance framework. No permission is given in fair presentation. Here I only have to check whether format is nice or not. I don't want to check fair presentation. Financial statements are prepared as per FRF. I only need to check format, baby. Tell example, insurance, banking. In this, they don't want fair presentation. All they want is follow our format. RBI has given format. IRDA has given format. Understood? Yes. In exam never asked, so we don't know. Okay. But one last time. If they ask, they will ask for 4 to 6 marks. Okay. In fair presentation, I just see sometimes what happens when you give house. Okay. You want to build a house. Some people will tell architect what? Okay. Build the best house possible. If you want to change little, change. Okay. But some people tell what? Don't touch. Do whatever I tell. This is the format, just follow this. No, don't apply your knowledge. Keep at home only. Are you clear? So this is compliance, which is better, that we don't have to write. Are you clear? But language understand. So if this language comes, what you have to write? Financial statement give true and fair view. Okay. In all material aspect as per FR. It means I have checked overall structure, content, presentation is awesome. In compliance, financial statement are prepared, I write, not true and fair, because I have only checked preparation, are prepared as per FRF. Over. More I am not going and discuss because it doesn't come in exam. Okay, let's come to till now 3 points are done. Title, addressee, opinion. One more time. Title, addressee, opinion. Now, basis of opinion. How did you arrive at that opinion? Sir, from my brain. No, not allowed. Okay, this can also come how given in module. Okay, very time pass. Number one, how you gave opinion. Audit was done as per standard on auditing. Second, refer to section of auditor's report that describes auditor responsibility under SA. Baby, I have followed auditor responsibility under SA. Very good. Third, statement that I have also studied chapter 11. Auditor is independent and has followed ethical requirement and code of ethics issued by ICI. Very simple. I studied first chapter also. Whether auditor has got sufficient and appropriate evidence to form an opinion. Now, this whole India knows this. But if you don't write this 4.0, they will write basis of opinion. What should be written? You are basis out of syllabus question. No, this 4 points. Number one, how do you give opinion? Audit was done as per standard on auditing. Second, refer to section of auditor's report that describes auditor's responsibility under SA. Third, statement that auditor is independent and has followed ethical requirement and code of ethics issued by ICI. Last, auditor has got sufficient and appropriate evidence to form an opinion. Over. I hope this is super clear, very easy. One last time, how to remember? Number one, I followed SA. Number two, I followed what? Okay, auditor responsibility. Number three, code of ethics. And number four, sufficient and appropriate evidence. I think after this, only one question to learn. Over. Basis of opinion. 1, 2, 3, start. Audit is done as per standards on auditing. Second, refer to section of auditor's responsibility. Sorry, auditor's report that describes auditor responsibility under SA we have followed. Third, okay, statement that auditor is independent, has complied with ethical requirement and code of ethics given by ICAI. And last, whether sufficient and appropriate evidence is obtained to form an opinion. Over. Small break, 10 seconds. Done? 1, 2, 3, start. Number 1, audit is done as per SA. 2, refer to section of auditor's responsibility that describes auditor's responsibility under SA. Auditor is independent and has followed ethical requirement and code of ethics given by ICI. Whether auditor believes he has got sufficient and appropriate evidence for forming opinion. Now nothing to do. Can you explain third point one more time? Third point, this one. This is third point. Fast reply. No. This is third point. Third point in real life means what? Okay, you have to write one statement. We have audited financial statement of Reliance, and in that we have checked balance sheet, P&L, cash flow statement, changes in equity, notes to accounts. Over. Explain. That they have written in English. Shall we go ahead? In English they have written all this. Okay. In real life it is 100 times more easy. By mistake, if you read this, then you will be confused. But ICI wants this only. Moving on. Now nothing I think we have to learn. Concentrate fast. Going concern. Whenever there is a doubt on going concern, okay, we have to write here. In two cases, when going concern is invalid or when there is material uncertainty about going concern. So in real life, 99.9999999% this point is blank. Okay, we don't write anything because always going concern is valid. But if that one situation it is invalid or there is material uncertainty, point will come here. So practically in real life 0 point. Question can be asked from here, impossible. Why? Because we have a separate essay. Key audit matter. This I will teach you exactly after 20 minutes. Oh my God, very good. Oh, one last question I told no, it can come. Responsibility of management. Your management not written. Tell me what responsibility management has. In 1 second over, preparing the financial statement as per FRF. For preparing internal control to ensure financial statements are free from material misstatement. Assess the entity's ability to continue as going concern. You already know. They can ask what are responsibilities of management. 3 responsibilities. But they will ask not here. Maybe chapter 11. But still let us learn. Number 1. Preparing financial statement as per FRF. 2. Internal controls to ensure financial statement are free from material misstatement. Last, assess the entity's ability to continue as a going concern. Management will check going concern valid or not. Over. Read one small break, 10 seconds. Time up. Moving on. Now, nothing to learn in this essay. Now, big point is given. Auditor's responsibility for audit. We have already studied entire auditor responsibility. So, I will just read. Impossible, this can come. Till now, 0 track record. What is auditor responsibility? Number 1, you have to write objective of audit. State objective of audit is to get reasonable assurance that financial statements are free from material misstatement. Over. Now describe 2 words in detail. Reasonable assurance is a high level of assurance but not a complete assurance. Very good. Misstatement are material if they can influence the decision of user. Over. Shall. Over. Same thing written. Moving on. Auditor responsibility shall further. Arey auditor, wait. This is the only first chapter. Second, third chapter also you studied, no? So that also you have followed. We will write that. Entire summary they have given till now. Number 1, you have done professional judgment and professional skepticism. Second, okay. Arey first point, you have found out ROMM auditor. It's your responsibility. A second point. Arey, but ROMM, you found out in ROMM what? IR into CR, control risk. You found out control risk for the purpose of further audit procedure, not to express opinion. Very good. Third, you also checked accounting policy and accounting estimate. Ah, yes, I checked. In RAP, if you remember, scope of audit. Second, array, SF 570, you checked whether going concern valid or not. Oh, yes, I checked. We are checking. Array, fifth point, you checked whether financial statements or fair presentation, overall structure and content is proper. That were studied before 2 minutes. Oh, yes. In case the work is taken of another auditor, you describe what work is done by another auditor. So if he does fraud, you are escaped. You have to write these branches are audited by another auditor. Over. Shall I learn this? No. Why did I explain? I also don't know. Moving on. Oh my God, your responsibility shall further. Wait, also shall. These three are also your responsibility. You studied no chapter 7 yesterday, then same, that we forgot, okay? You have to talk with TCWG. What? Significant finding from audit. It's your responsibility. Do सिर्फ we write plan, scope and timing, independence, response significant. Second, अरे you have complied with ethical requirement, that also communicate with TCWG. I. Last, key audit matter that we will study later. Done. Over now. Layout of description of auditor's responsibility. My next question. Tell me, auditor responsibility were too much or too less? Auditor, too much responsibility was there, not too less. So they are saying auditor's responsibility you can also write in separate way, where in the body of auditor's report. Understood. Second, you can write in appendix to auditor report, but give clear reference to the paragraph or appendix where it is written. Example, it's too bulky, so where you can write, you can say that we are writing in 92 page, give reference to 92 page, which note number. Third, you can also write in website of appropriate authority if law or regulation permit. Your next question, which appropriate authority? SEBI website? No, company's website. If law permits, okay, so that also. Law means country law, whichever country. Three places we can write. In India, though, we write everything here only. Why? So much who will read English? Are you clear? Anyways, no one reads the report. Tell me, auditor's responsibility can be written at different place also. Number one, in the body of auditor's report, in appendix to auditor's report, okay, but give clear reference to appendix. Last, website of appropriate authority where law or regulation permit. Last, other reporting responsibilities are also there. What is other reporting? See, as per Companies Act, not only audit report, in India additional requirement are also there. Auditor check this, auditor check this, auditor check this. So if other reporting responsibilities are there, then I will write here. Okay. As example, CARO we have to check. Okay. There are different sections which we have to check, that will come here. If reporting responsibility under other law is same as SA, then no need to write here. In SA we followed this responsibility. Same are there, then don't write. Otherwise we have to write here. So this is different from every country. In India we have CARO. Australia we might have SARO. France we might have MARO. Are you clear? Whatever we have to write here. If other reporting responsibility are different, then those given under SA, they will be written here. Reporting on other legal requirements. Next, signature of auditor. Very, very good. In this, what to write? You have to write your membership number and. If it is a firm, write your membership number. Also firm registration number. Okay, CF form you are working, firm registration number, your membership number, and then of course sign. Earlier what was done? Physical sign. Now listen what is done. UDIN is there. Question comes on UDIN definitely. Of course, in module question we have discussed, but still I will explain. What is UDIN? Unique Document Identification Number. Many CAs were projecting themselves to become CAs. Okay, fake signature was done. It is a big practice in India. Lot of fake signature was done. So, okay, they were forging themselves to become CA. Reliance audit is done by me, but fake sign someone can do. So all that was happening. So ICI introduced UDIN, Unique Document Identification Number. Every CA who will sign audit report or certificate has to register on UDIN. So first of all, you need to register on UDIN. You need to enter create your ID, password, etc. Now, whenever you want to sign any report, you want to sign any certificate, first of all, upload that certificate in UDIN portal. UDIN will automatically generate a number. For example, 4532Q, that number generated. Means, okay, permanent that record will be stored. That this 4532Q is which document? Oh, audit report of Adani. Very good, signed by me. How they will know signed by me? Because I use my digital signature. If you don't know, through pen drive it is done. Okay, document is uploaded. So permanent ICI will have record in cloud that this document was signed by me. Sir, what if someone from your computer will insert fake digital signature? That all no one can cover. I hope you understood. Okay. Shall I explain again or understood? UDIN portal is created. Any CA who wants to sign any report just need to register in UDIN and upload that document. Unique number will come. This will be a permanent number in future. Government can track. Very good. Then place of signature. Usually we write the city where the report is there. So we will write name of city. Date. Date will be which? After management has got representation. After I have got audit evidence. Okay. Without getting evidence, how will report be signed? So last 3 points are time pass. SPD. Signature, place, date. Shall I show you? It will be too much detailed. Nothing comes in exam, so I thought that why to show. Do we have fast anything available? This Reliance will take lots of time. Date modified, date modified. The small company, so we can show you fast. Board report I don't want. Give me audit report. Over also, God knows. See here. Very simple. See, first of all, this is a proprietor firm. If firm was there, firm registration. Paresh Vora, partner, membership number, UD, over. Then second was what? Place, here. And third date, over. Okay. Now, you had doubt in one point. No, let me show you that also. Where it went, where it went, where it went, where it went, where it went. Basis of opinion. No, opinion you had doubt. See here. We have audited Chetna, which comprise balance sheet, P&L, cash flow, over. Same. Then write period of balance sheet, P&L, over. So simple. So with this, we are done very quickly. Rough type, according to me, nothing should come from here, but still. We don't want to take zero risk in life. Start. We will learn entire thing just for understanding. See, why am I making you learn? One MCQ can come. After this, which point will come? Before this, which point will come? Only that. Okay. So with 6 points to break. Number one, title, addressee, opinion, basis of opinion. How to remember? Title, addressee. What are you giving? Opinion. How are you giving? Basis of opinion. Title, addressee, opinion, basis of opinion. Going concern, key audit matter. Going concern, key audit matter. Going concern, key audit matter. Responsibility of management, responsibility of auditor. Responsibility of management, responsibility of auditor. Responsibility of management, responsibility of auditor. Sir, listen now. Auditor responsibility very bulky, very big. So you can write separate also. Layout of description of auditor's responsibility. Layout of description of auditor's responsibility. Read this much. Last date should be 30th September, I think. Audit report last date is before AGM. AGM last date is given. Audit report last date, there is no law in India. But ideally, it should be before 30th September. As per law, no date given. One last time, title, addressee, opinion, basis of opinion, going concern, key audit matter. Going concern, key audit matter. responsibility of management, responsibility of auditor, layout of description of auditor responsibility. Done. Now the very simple. Other reporting responsibility, other reporting SPD, signature, place, date. And one more time, signature, place, date. One last time, signature, place, date. One more time, done. Other signature, place, date. Small break, 5 seconds. Only remember before and after, bus. Don't, if you don't know 13 points, still okay. Chalo, time up. Moving on. Now, this is good question. It's a part of module question. Okay, definitely it can come. Okay, not as since new syllabus, but still it can come. See, such weird question is there. Answer is maha time pass. Third class answer. But ICI likes all these things where you don't know question only, answer very easy. So no one can write because no one has read. See what question can come. Specific evaluation by auditor before forming an opinion. Now you will think out of syllabus this came. No, but it's in module only. Specific evaluation means check following things before forming an opinion on financial statement. If they are specific evaluation by auditor before forming an opinion, only you have to focus on learning, understanding, utter time pass. Number one, first point, terms used in financial statement including title of each statement is appropriate. You need to check term used in financial statement, title is appropriate. P&L, balance sheet, cash flow, statement of changes in notes, proper heading they've given. Sir, these anyways I will check. Specifically check. Second, information present in financial statement is relevant, reliable, comparable, understandable. Sir, these two anyways I will check. Again check. Specifically check. Third, financial statement disclose significant accounting policy selected and applied. All accounting policy whichever select, okay, disclosure should be proper. Example, accounting policy, depreciation, inventory, okay, method of accounting, etc. Accounting policy selected and applied should be consistent with FRS and as per the law. So these I will check. I know again they will specifically check. Third, accounting estimates used by the management are reasonable. Sir, that too in chapter 1 only I checked. Specifically checked. Last point. Financial statement adequately summarize significant accounting policy selected and applied. Important accounting policies selected and applied. Notes in accounts to accounts give. That too I will give. Specifically give. Provide adequate disclosure to enable user to understand material transaction and event. Definitely it can come. Why? It's a specific question. No one will read. One last time. Specific evaluation by auditor before forming a opinion. Can we start? Simple? No, very simple. Number one. Terms used in financial statement including title of each statement is appropriate. Second, information present in financial statement is relevant, reliable, comparable, understandable. Third, okay, financial statement adequately disclose significant accounting policy selected and applied. Accounting policy selected and applied are consistent with FRF and are appropriate. Accounting estimate used by the management are reasonable. Financial statement adequately disclose significant, provide adequate disclosure. Financial statement provide adequate disclosure to enable user to understand significant event and transaction. How to remember? First, remember 2 points. Done. Next, third point. Third are two accounting policy point. Financial statement adequately disclose significant accounting policy selected and applied. Accounting policy selected and applied are consistent with FRF and are appropriate. These 2 points. Accounting policy. First, disclosure you have done. Those disclosures are as per FRF. Remember 2 points. Next point. Accounting estimates done by the management are reasonable. More time pass. Last. Financial statement provide adequate disclosure to enable user to understand material transaction and event. Understanding zero required, learning full required. Over. Shall I speak one last time? If you want, we can. Tell me, what are evaluation by auditor before forming a opinion? Okay. Number one, terms used in financial statement, including title of each statement, is appropriate. Next, information present in financial statement is relevant, reliable, comparable, understandable. Financial statement adequately disclose, okay, significant accounting policies selected and applied. Third, accounting policies selected and applied are appropriate and as per FRF. Next, accounting estimate used by the management are reasonable. Financial statement provide adequate disclosures to enable user to understand material transaction and event. All points are extremely rubbish because you have checked this multiple times. Small break, 10 seconds. Learn this nicely and then we move to another interesting essay. Good one. This is pure learning question. It's a module question you are learning right now. That's the only difference. Moving on. 1, 2, 3, start. Let us learn last time. Specific evaluation before forming an opinion. Number one, terms used in financial statement, including title of each statement, is appropriate. Second point, okay. Information present in financial statement is relevant, reliable, comparable, understandable. Third point, financial statement provide adequate disclosure, okay, regarding accounting policies selected and applied. Accounting policies selected and applied are appropriate and consistent with FRF. Accounting estimate used by management are reasonable. Financial statement provide adequate disclosure to enable user to understand material transaction and event. Over. Now let's move to another essay. 705. This is pure understanding essay. Nothing can come as learning question. Let's start. Modified opinion. In India, whenever you have to give modified opinion, now you'll ask me question, what is modified opinion? Qualified disclaimer adverse. Unmodified is clean. This standard is followed. Good thing about the standard, nothing to learn. Hot favorite MCQs come. We will go, of course, 10 level more detailed in exam. Very simple questions are asked. Can we start? Why not right away? Modified report. Whenever you want to give modified report, qualified disclaimer adverse, this standard comes. I think we should end in 10 minutes. Qualified report. When is it given? After obtaining evidence, I feel misstatements are material but not pervasive. Okay, I need to explain you one word first. Pervasive. Today, officially, I am explaining. What is pervasive? Pervasive means effect of the financial statement is not is spread to multiple accounts. Okay, then it is pervasive. Pervasive means effect is spread to multiple accounts. I have problem only in hand, then it's not pervasive. But I have problem in heart, effect is spread everywhere. Entire body will be damaged. I hope you understood. Pervasive means effect is spread to multiple accounts. Second point, If it is spread to one account, it's a substantial portion of financial statement. Example, mistake is only in sale, but it covers 90% of sale. Then debtor, inventory, everything will be wrong. I hope you understood. If you don't understand this word, very difficult to understand standard. One last time, what is pervasive? Effect is not spread, sorry, effect is spread to multiple accounts, that is pervasive. Second, if it is spread to one account, it's a substantial portion of financial statement. Moving on. Qualified report is given when I feel mistakes are material but not pervasive. Okay, let's take example. Mistake is in depreciation of 40 crore. I tell management correct. Management saying I will not correct. Now I cannot say everything is wrong. Except fixed asset depreciation, all is correct. So what I will do, I will give qualified report. In qualified, drafting can be asked. If they want to go one level ahead in life, okay? They are like, we're too much easy asked in life, let's go one level ahead. Then drafting is asked. In drafting, what you have to write? Financial statement give true and fair view as per FRF, that we write. But in qualified, change little, kuncham. What we will write? Except for the effect of fixed asset, financial statement give true and fair view. Except my hand, I am proper. You have to write what language? Except for the effect of depreciation, financial statement give true and fair view. Till now, how many times drafting question asked? Zero. But I don't know what they will ask in this. So I am explaining something. Except for the effect, it gives true and fair view. Second, one more time qualified report can come. When I don't get evidence, then disclaimer. No. If I don't get evidence and I feel mistakes could be material but not pervasive. Why could be? I did not get evidence. I went to all factory, Australia factory, they are saying you cannot do. Now, Australia factory is 10% of inventory. It's material thing, but it's not pervasive. Effect is not spread. Okay, then which report will come? Qualified. Except Australia, everything is good. So here what language I will use? Except for the effect, no, except for the possible effect given in basis of opinion. Except for the possible effect of depreciation given in basis of opinion, financial statements are prepared as per true and fair. Over. And one more thing, one more MCQ can come. Your basis of opinion will not come. You have to write what? Basis for qualified report, basis for adverse report, basis for understood, fully understood. One last time, okay, just understand in your brain when qualified report is issued. When I feel mistakes are material but they are not pervasive. I did not get evidence. I feel they could be. English could be material but not pervasive. Take one more example. Inventory overvalued by 40 crore. I tell management correct. If they correct, then nothing to do. This standard will not apply. If they don't correct, it is material, baby, inventory material. But I cannot say it's pervasive. Understood, fully understood. In language also this time, very good. Next, adverse report. Tell me in adverse what is that? Mistakes are both material and pervasive. I got evidence, I feel mistakes are material. Can you take one example? Why not? Going concern not valid. So financial statement should be shown at what? Cost. Sorry, NRV. NRV. Whenever it is not valid, I told you that financial statement are shown at NRV. But we are showing at cost only. Why? Correct? No. Management not correcting. No one can show it NRV. I will show it cost. Now everything is wrong. Asset wrong or liability. Everything. Sari duniya jala denge. Everything is wrong. Mistakes are and material and pervasive. Over. Your language is never asked till now, but I don't want to skip one word also. Because of significance of matter in basis of opinion. Here what you have to write? Because of significance of opinion, financial statement do not give true and fair view. Right, like that. Do not give true and fair view because of significance. Can you tell one more example? Doubt in current asset, fixed asset, this. 4-5 areas the mistakes are there. They are pervasive. Effect is spread in entire body, baby. Moving on. Disclaimer opinion. It is given when I did not get evidence and I feel mistake could be material. No, and pervasive. Material and pervasive. When I went books of accounts with income tax, I went GST, I went fire. I cannot give an opinion. Here what I will write, you know. Okay, what I will write. Auditor was engaged to do audit. I was engaged, but I could not do. Why? Because on marriage day, girl did not come only. I was engaged to do marriage. She did not arrive only. Here, misstatement could be material and pervasive. English. Because of significance of matter in basis of opinion. Auditor has not got evidence. Here you don't write true and fair view. True and fair view, forget, we did not get because of significance of matter in basis of opinion. Okay, auditor has not got sufficient and appropriate evidence. Evidence only not got. What audit will happen? Because of significance of matter in basis of opinion, we did not get sufficient and appropriate evidence. And one more thing we'll write, we were engaged to do audit. I don't think they ask all this. God knows what they ask. Very simple question they ask. But we don't read only full. Okay. Second, other consideration when you give adverse or disclaimer opinion or qualified opinion. When auditor issues adverse or disclaimer opinion on financial statement as a whole, it means you are telling mistakes are material and pervasive, or it could be material and pervasive. Auditor report shall not include unmodified report with respect to same framework on one or more specific element of financial statement. Not understood. See, you are saying mistakes are material and pervasive, could be material pervasive. Then you cannot say on specific P&L is clean, only balance sheet mistake are there. No, you only said effect is spread to multiple accounts. Sometimes we tell someone, no, you are very good friend, but sometimes you are like mad. Then he is not your friend. You are very good looking, but stomach little more. Means he is not good looking. Be very clear in life. You are very good person, but this thing not good about you. Money you don't spend, not good. Not good. Means bad is bad, good is good. So when you are giving qualified, sorry, not qualified, cut, because in qualified to it's material but not pervasive. Whenever you give adverse or disclaimer report, you cannot give unmodified report within the same FRF for single element of financial statement. If you are saying it's adverse or disclaimer on separate P&L balance sheet, you cannot say it is clean. Are you clear? Bad is bad, good is good. One last time. When auditor issues, auditor report shall not include unmodified opinion in the same FRF on single financial statement or one or more specific element of financial statement. Understood? One more good MCQ. No, that I removed. I shifted that MCQ to other place. But still I will tell. Whenever you give which report, no, let me take there only. Communication with see, when you are giving qualified disclaimer adverse report, one case study can come. Will we talk with TCWG that we are going to give this report? Yes, sir. Then they will not give fees. My fees pending. Then do you feel in surprise we will do audit? Mad you are or what? We need to talk to them. Okay, regarding expected wording and situation due to which modification came. I will talk with them the situation, circumstances that led, and the expected wording. Why circumstance? They might still correct. Why wording? It should not look rude. Understand, they are owners of company. They have invested, they have 70% in a company, ownership is with them. If by mistake share price will come too down, then what will happen? In life, problem will happen for them. So tell them, sir, they will tell, instead of this, can you write it this way? Is it allowed in your standard? You're like, okay, allowed, sir. No problem, I will write. So talk with them, no problem. Case study can come. When auditor expects to modify, this question is there 3 times. Whenever you want to do anything in life, talk with them. If auditor expects to modify opinion, auditor will communicate with TCWG. 2 things. Number 1, circumstances that led to modification and wording of modification. Circumstances and wording. Understood. Opinion should be on overall. Understood. Okay. Now simple. This chart, I will explain entire thing. It's brilliantly given in ICI module. We have not done chart because then language you don't understand. So we wrote full. But very nicely given in ICI book. Good question, understand. I will read everything. Consequence of inability to obtain evidence due to management imposed limitation. Question only not understood. See, you did not get evidence because management imposed limitation. Example. Confirmation will come from all, but it will not come from Rajesh. You are like, why? Just like that, our company. Second, you can visit all factory, but not Australia factory. You are like, why? Our wish. If auditor is unable to get evidence due to management imposed limitation, what is the first step? You think, I will request management to remove the limitation. If they don't agree, I will go to TCWG. Sir, you seem intelligent. Please tell your management, I have to obtain confirmation. I need to go in Australia factory. Are you clear? You try to request. If not possible, do alternate procedure. What alternate I will do? Opening stock plus purchase minus sale, closing stock, Australia factory. Debtor also try to do alternate procedure. If that is also not possible and you feel mistakes could be material but not pervasive, give qualified report. Sir, why could be? I did not get evidence. Give qualified report. They could be material but not pervasive. But change. I feel that qualified report is not enough to communicate gravity of situation. I feel mistakes could be material and pervasive. Only qualified report is not enough. Then what I will do? Withdraw from the engagement. If not possible to withdraw, only then give disclaimer. Story is brilliant. Shall I explain again story? Again story? Yes sir, again explain. But first I will read English. If auditor is unable to obtain evidence due to management imposed limitation, management told, don't check this data, don't check this stock. Auditor shall request management, sir, please remove. If management refuses, auditor will talk with TCWG and determine whether is it possible to do alternate procedure. Management, TCWG, alternate procedure. If auditor is unable to get evidence and conclude, misstatement could be material but not pervasive. It could be material but not. Then give qualified report. Give. If auditor concludes, possible effect could be material and pervasive such that qualified report is not enough to explain gravity of situation. Your doubt will come in this paragraph only. Resign from the audit. If not prohibited by law. Early stages I can still resign. Why? I don't want to give disclaimer report. I don't want the money which is not worth. I have not done work. I don't want money. I don't want disclaimer. Call some other auditor. But if resignation is not possible, then issue disclaimer report. So whenever you give disclaimer report, we follow this entire process. Till here, very simple. If you feel qualified report is not enough to communicate gravity of situation, okay, then resign from the audit. If not practicable under law, then give disclaimer report. Any doubt? No doubts. Moving on. Next. Whenever you give qualified disclaimer adverse, why you give? Due to material misstatement. Yes or no? Yes. How to show material misstatement? Specific amount, right? Include description, okay, where the mistake is current asset, fixed asset, and quantification of amount. If it is not practicable to quantify amount, write in basis of modified opinion. Okay, basis for modified. Why you did not? Second, narrative disclosure. Whenever misstatement are there, describe in detail. Include in basis of modification how disclosures are misstated. You understand what is mis? Don't just write that this thing is there. Describe net worth has eroded, reduced. Don't write like that. Write net worth has reduced by 5 times. Non-disclosure. Whatever is non-disclosed, first discuss with TCWG and describe in basis of opinion. One related party is there, but company has not shown transactions with that related party, hence not followed ASAP. So 3 things we will write. Number 1, specific amount, narrative disclosure and non-disclosure all will be written. With this, over. One simple MCQ again I am telling. Whenever qualified disclaimer adverse report will come, what I have to write? Qualified opinion, disclaimer opinion, adverse opinion. Also, basis for qualified, basis for adverse, wording will change. This good MCQ can come. But I don't know this standard also, nothing comes. Moving on. Super duper easy standard came. Till now we were taking little time. Now this is 5 minute standard. 701. EOM and OM in independent auditors report. This I will explain more because I know more. Very simple standard. 701, 706. Both, why did it come? Let me explain first. In this, only one single solo question is there. Any other question comes, be very happy. Super time pass it will be. See, our audit report were very boring. 90% of the time in CA, I spoke wrong. 99.9999 continue. Clean report only came. So all the people felt CA are useless. Still they feel the same, by the way. CA doesn't do any work. He will do lot of work and in the end give clean report. Over. Like lollipop. So value of audit was decreasing, auditors report was decreasing, and audit dramatically reduced. Third class people auditor are. So to make our report more communicative, to make our report more nice, to make our report more excellent, okay, more communicative, new standards started coming. 701, 706, both are 10 minutes. Can we start? Yes. So this is additional requirement, not compulsory. Two standard I am going to explain, EOM and OM. Let me explain in simple English first. If I want to describe anything which is a part of financial statement has five things: balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. I want to emphasize on anything, I will write in EOM paragraph. If I want to describe anything which is outside financial statement, but is related to audit, auditor's report, auditor's responsibility, I will write in other matter paragraph. Not at all understood. Exactly in 2 minutes you will understand. Don't try to learn this, but you will still learn. EOM, emphasis of matter. It's a paragraph in the independent auditor's report. This much to you know. That refers to a matter presented or disclosed in financial statement that in auditor's judgment is fundamental to users' understanding of financial statement. Anything of financial statement, according to auditor, we need to tell to user, we write in EOM. Simple English. What is financial statement? Balance sheet, P&L, cash flow, statement of changes, notes, anything you want to describe. Take 5 examples, sir. Number 1, profit increased due to prior period item. They know it, but still I will write in EOM. Then they will feel, "Arey, our auditor has worked very hard." Anything you feel. 4 new legal cases are there on the company. Very good. Our expenses increased because we have acquired a company. Very good. Our sales reduced because we sold a company. Very good. And we have checked that in detail. We are auditor. Anything you want to describe here. Our cash flow is negative because a lot of money was stuck in inventory. And we have checked that. Anything you want to describe. Okay. Okay. I hope you understood. Let us write few examples. Profit increased due to prior period item, acquisition, sale. Okay. Change in method of depreciation, whose effect is 42 crore. So all subsequent event, or there are 3 subsequent event, effect of which is properly given. Okay. Anyways, you have to give. One last time, let us learn. EOM paragraph is a paragraph in independent auditor's report that refers to a matter presented or disclosed in financial statement. Why disclosed? Notes are disclosed. That in auditor's judgment is fundamental to users' understanding of financial statement. See, if you see this matter, no, user, your understanding will increase. That is why we are here. Sir, where this will come? Before key audit matter. Key audit matter was that just before that we write. Not in syllabus. For knowledge I am explaining. Now explain other matter. A paragraph in the independent auditor's report that refers to a matter other than those presented or disclosed in financial statement. This matter is not part of financial statement, but that in auditor's judgment is necessary for users' understanding of audit, auditor's report, auditor's responsibility. 3 words only understand. Many people will say, or a fool I will learn. 0 marks. No need, only 3 words. Any matter you want user to understand that will help him in understanding audit better, auditor's report better, auditor's responsibility better. It will come in other matter. Take for example, last year audit not done. I am just explaining audit to you better. Second, last year audit done by another auditor. So my responsibility is not there. Few branches are not audited. Few subsidiary company audited by another auditor. Other matter. One last time. We go to marriage. We keep talking about couple, which is there in marriage because you went for marriage for food only. Okay, but still you talk about, are girl very nice, boy very nice, girl height little less, boy too much weight it is, are girl looking very black, boy to very fair, boy black, girl fair. When we talk about that couple, it is EOM. We are emphasizing on couple. Many people don't look at couple only. Outside only, food very less this time. Items are not good only. Look at how much black money they have, decoration see. Okay, so when you talk outside the couple, it's OM. When we talk about that couple, it is EOM. Just to understand. One last time, whenever we talk of any matter which helps in understanding audit, auditor's report, auditor's responsibility, it's OM. By mistake, I finished whole standard. Now nothing if we read still okay. This ignore. Let us read this again. Why? Because what to do? A paragraph in the report that refers to a matter presented or disclosed in financial statement that in auditor's judgment is necessary for users understanding of financial statement. However, good MCQ, our opinion is not modified. See, EOM doesn't mean modified opinion. I am just emphasizing whenever modified report has to be issued, SS 705. This is not, I cannot write in EOM, we are giving modified report. No, it has to come in opinion. Other matter. A paragraph in the report that refers to a matter other than those presented or disclosed that in auditor's judgment is fundamental to users' understanding of audit, auditor's report, auditor's responsibility. I want to explain to user audit, auditor's report, auditors. Okay, other than those presented that in auditor's judgment is fundamental to users' understanding of audit, auditor's report, auditor's responsibility. Question what it will come? First of all, I think MCQ will only come. Cute MCQ they will ask. If I want to describe anything, where to write EOM? Over. But in module, this question is given. Whenever you give EOM paragraph, how to show if they want to ask for 5 marks, this can come. When auditor includes EOM, auditor shall include the paragraph with separate heading of auditor's report with appropriate heading EOM. So what do you write? Include paragraph with separate heading in auditor's report EOM. Where? Before KAM, but that is not part of syllabus. Second, in that paragraph, what will you write? It should give clear reference to the matter being emphasized and where the adequate details about this matter will be found in financial statement. Profit increased due to prior period item. Profit is in which page? Okay. Legal cases are there 3. Where you have disclosed notes 82 page. It should give clear reference to matter being emphasized and where the disclosure can be found in financial statement. Third, indicate our opinion is not modified. EOM doesn't mean modified because many new shareholders, they will not understand modified report on a third class. I am just describing this. It is not a modified report. This 3 point you have to write. I don't think it will come, but still if it comes. Number 1, include the paragraph in the auditor's report with separate heading EOM. 2, it should give clear reference to the matter being emphasized and where this matter or disclosure will be found in financial statement. Third, indicate our report is not modified. When auditor include other matter, give heading other matter. One more time, same thing. Whenever modified report is given or EOM or OM or KM is given, okay, anything. What is KM? Key audit matter. When auditor includes EOM, OM or KM, auditor will talk with TCWG, circumstances that led to this paragraph and expected wording. Over. Why you are including this? Sir, shareholder can better understand. Now they will request, sir, please leave. You can write in EOM separate that profit increase. Profit reduce, they don't write legal case. It looks very bad. Now that is your personal judgment whether you want to include or not. Okay. So talk with them regarding expectation. Sorry, regarding this expectation and wording of paragraph. Okay. Still 3 more standards to go, but all very simple. This is 2 times or what? No. This question we have done. It will not be in your magic book. You can take photo if you want. I hope you took module photo, or it is part of module also. This one. This one I have included now, but you can take photo. Difference between EOM and that pending, Arun. Wait, Arun. That standard is pending. No, that's the last one. Start. Chalo, start. Now, favorite question, Arun. Key audit matter. Okay. Communicating key audit matter in independent auditors report. Okay. Before explaining Arun question, this is compulsory. It's applicable. Key audit matter compulsory for listed company when required by law. Tomorrow there is a law that for all telecom companies compulsory show key audit matter. Then we have to show. Very simple. Very simple. Okay. For all telecom company. So number 1, applicable to listed company. Number 2, required by law or regulation, then definitely so. Third, circumstances when auditor wants to show key audit matter. If you feel for this company you want to show. Okay, so 3 cases. Number 1, it's applicable to listed company. Second, required by law or regulation. Third, circumstances when auditor wants to show key audit matter. What is key audit matter now? Come here. In 1 minute over. First definition. Key audit matters are those matters that in auditor's judgment are of utmost importance in the audit. People felt I am not doing audit properly. So this matter was utmost importance. This took my 70% time. Key audit matters are those matters that in auditor's judgment are of utmost importance in the audit of financial statement. This matter took my 80% time. You felt I did not work hard. I gave my life to this matter. Full time I was checking this. It was a very important matter, though it's not a modified report. Okay, understood. Sir, but I did not understand. Wait. How to identify key? 2 things, sir. Now you asked doubt, so 2 questions I will solve. Number 1. How to identify key audit matter? Matters told to TCWG. Do you remember? I will tell significant matters identified during audit. SIRF F, significant findings from audit. I told 25 matter to TCWG. Out of which matters which require significant auditor attention, significant time went in 8 matters. Matters that are out of 8, 2 are most significant. That most significant is known as key audit matter, and significant is EOM. One last time. Matters told to TCWG. Matters that require significant audit attention, 8 matters. Matters that are most significant, KM. So which matter will come in KM and which will come in EOM? This guide right now only. That you have to decide when you do to audit. When you sit for audit, at that time you have to decide which were most significant. It's a judgment, baby. But we asked Big Four people, can you give some, throw some color on this? They said we audited 150 companies. We found these 4 were always key audit matter. Why? They took our maximum time. Impairment of asset. Sir, why like this? In this, you have to calculate cash generating unit, CGU, if you remember. This all in CA final. No, AS28, CA inter. I don't know. Tax, significant matter. Goodwill impairment. How to check all this? AS28. Management itself misusing control. There is a fraud in revenue recognition. Percentage completion method. Okay, all these are significant matters. Out of which, how many to remember? 0. I hope you understood. One last time. 1, 2, 3. Matters told to TCWG. Matters that are matters that require significant attention. Matters that are most significant. Over. Now, nothing good to explain. This standard also super time pass. 2 questions here, both hot favorite. Out of which 1 came, so only 1 pending. That also comes usually in MCQ only. Okay, done. Why this standard came? Just to make it more big purpose. Never can come. To increase value of report. Provide additional information to user that help user in understanding those matters that are most significant. Communicating key audit matter help user in understanding entity and areas of management judgment. First question. How to identify key audit matter? This came just in last exam. Brilliant question. Okay. Factors to be kept in mind for identifying key audit matter. When you make a list of key audit matter, baby, this could become key audit matter. This could become number one, area of higher risk of material misstatement or significant risk as per SA 315. Wherever high ROMM is there, of course your time will go more, or significant risk as per SA 315. This could become key audit matter. Factors which help in deciding key audit matter. Area of higher risk of material misstatement or significant risk as per SA 315. Sir, had you not told also no, still I would have understood this. Very good. 2. Auditor's judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty. Auditor judgment. Why? Because it involves management judgment. Why? Because these are estimate with high uncertainty. Example, percentage completion method. All construction company revenue is booked on percentage completion. Now tell me, this building is 42% complete or 48%. It's a judgment. Many times they try to show more. Why? So their revenue becomes more. It will take a lot of time. Tell me, provision for, I was just listening, conference call. One company is their agriculture company, Best Agro. Not good company, drastic share price reduced 60%. But still I was listening to their con call. They were saying our profit will increase by 40 crore this year. Then all people asked out, why? Understand, last year there were a lot of sales return. This year sales return are not there. It's like, why? Last year forcefully we kept the product to retailer. Take. Now we are not forcing retailer. If they want, they will. So last year when we forcefully kept, what happens? Then year end we get a lot of sale return. So company becomes loss. Now auditor, what they have done? They have taken sales return, provision for sale return 50 crore. But this year we have not done only like that. Sale return will be maximum 10 crore. So 40 crore profit we will get. 2-3 times you have to listen this. Did you found this hard? Yes sir. Very good. That is why it's a significant matter. Had you understood, it will not become significant matter. Then it will become normal matter. You did not understand. No. Very good. It is a key audit matter. I hope you understood. Those matters where judgment is required. Okay, it will take your maximum time. Auditor judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty, percentage completion, revenue. Tell me, in OYO, when will revenue be recognized? When you book a hotel, when you do entry in reception, when you go to the room, when you do checkout. Because refund you can ask anytime. Judgment. Auditor judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty. Last, T. Significant event or transaction occurring during the period. What's a significant event? Merger of company. Huge complication. AS14 will apply. You acquired a company. Triple complication. Your whole time will go in this only. You sold a company. Triple time will go. It's always a key audit matter. So tell me, while identifying key audit matter, factors to be kept in mind. RAT. R-A-T, RAT. Okay. Area of higher risk of material misstatement or significant risk as per SA 315. 2. Auditor's judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty. T. Significant event or transaction occurring during the period. Sir, one more time. How to determine key audit matter? Keep in mind. This I don't know why am I speaking too many times, because very important. Though it is asked in exam, it may come as a MCQ. Of course, same question impossible. How to identify key audit matter? RAT. Number 1, area of higher risk of material misstatement or significant risk as per SA 315. Auditor's judgment relating to area that involve management judgment, including accounting estimate with high degree of uncertainty. T. Significant event or transaction occurring during the period. 5-second break. Though you don't need to learn, only for one exam don't learn. But MCQ can come, so understand. This could be key audit matter. Time up. Now this is a good question. This though of course big yes it can come in exam but mostly as MCQ. Key audit matter and EOM. Are you listening? Key audit matter and EOM is not a substitute for three things. Key audit matter and EOM. You can show as extra but it is not a substitute. Okay, what is substitute? Instead of this I will do this. No. Key audit matter and EOM and OM is additional requirement. It's not a substitute for number one. Separate opinion is required on individual matter or disclosures as per FRF. See, whenever you have to give separate opinion on related party, fraud, CARO has to be separately shown. You cannot write key audit matter. We have checked CARO. Okay, baby, you have checked, but write in CARO separately all points. Whenever there is a fraud, there are specific requirement of reporting. We cannot write, we have found a fraud. Okay, you can write, but it cannot substitute when separate opinion is required on individual matter or disclosures are compulsory as per FRF. When FRF is told, you have to show that. You can write EOM separately. But it is not substitute when separate opinion is required on individual matters like fraud, like CARO, or disclosures are required as per FRF like related party. Second, modified report. Many people will write, we have found this matter. No. If it is material, then you have to directly write in modified report, material and pervasive adverse. EOM is not a substitute for modified report. Real life, what happens, I will explain you. That is why this question came. Real time, I cannot give qualified report. Why? The day I give qualified report, I am gone, out of audit. They will not pay me fees also. These people are very rude, all management. Or they may pay fees to me, okay, but next year definitely they will not select me. No problem, sir, another audit. You don't get audit. There are so many CAs in market. Then your children's school fees, eating fees, drinking to no drinking, water fees. Okay, how you will survive? How to survive? So in between we want a solution. So what these people do? They write in EOM paragraph. We have checked provident fund in detail. There are small mistakes, but we believe our opinion is not modified. Maybe it is modified only. They cannot give modified because they are afraid. Not afraid. Majboor, lachar, very much dependent due to their family. So usually this happens. So that is why they wrote EOM is not a substitute for modified opinion. When modified opinion required, give it, give it, give it. Family go to hell. Family is not important. Institute important. Last. When there is material uncertainty relating to going concern. When going concern, there is a doubt. It's invalid or there is material uncertainty. There is a separate point in audit report. Maybe don't write in EOM. Title, addressee, opinion, basis of opinion, going concern. Right there. It's not a substitute for going concern. You cannot say there is doubt on going concern. Okay, you can write here, but write in going concern point. Understood. Standard very strict about this 3 points. Key audit matter and EOM is not a substitute for, oh my god. Separate opinion is required on individual matter or disclosures are required as per FRF. M. Modified report has to be issued as per SA 705. G. When there is material uncertainty relating to going concern. At that time, you can write in EOM, OM, but it's not understood, sir. You can write in EOM, but doesn't mean you don't write there. We need to write at separate places. EOM is extra, KM is extra. So last 3 questions. Key audit matter, EOM and OM is not a substitute for. Oh my god! Separate opinion is required on individual matter or disclosure as per FR. Modified report has to be issued as per SA 705. Okay, last, a substitute for reporting for going concern when there is material uncertainty. Learn nicely. Only this question seems like it can come. If normal paper comes. Chalo, done? Yes, sir, fully done. Moving on. Done. Tell me, what is EOM and OM and KM is not a substitute for three things. Oh my God. Separate opinion is required on individual matter of disclosures as per FRF. Modified report has to be issued as per SS 705 when there is material uncertainty relating to going concern. Over. Now, time pass question is given. What is the language when you write this? Key audit matters are those matters that are most significant in the audit of financial statement. Second, these matters are addressed in context of financial statement as a whole, and we don't give separate opinion on this matter. Means while auditing whole statement, I found this matter. I am not giving separate opinion on them. Any doubt? No doubts. No doubt, sir. With this, last essay is pending. Are you in mood now? We shall finish this. And then one more easy is there, but okay. Let's finish this. Good essay, this one. This one comes, this one also comes less, but when it comes, it gives full marks. Okay. So like that, it is offbeat essay. If nothing good found, then every 5-6 attempt they find this. I think this came before 2 exams. Till now, how many are done? All the biggies one done. 1, 2, 3, 700 forming an opinion and reporting. SS 705 modified report. 701 communicating key audit matter in independent auditors report. 706 EOM and OM in independent auditors report. In this, practically there is one question, but other questions you may find, okay, which are MCQ or understanding one. Start. Very simple. Comparative information, corresponding figure and comparative financial statement. Let me explain first of all. What is this essay? Tell me, our profit is 50 crore. Is it good or bad? Type fast. Profit 50 crore, good or bad? Only two things you have to type. 50 crore profit and 1000 crore revenue, good or bad? Depends. You have to compare with last year. Any figure alone I can never know whether it is a good figure or bad figure. I will know that figure when I compare with the last year. Let's take an example. Okay, last year my profit was, okay, 40 crore. This is 50 crore. Very good. In CA foundation I got 250 marks. In CA inter I got 500 marks. Very good. Are you clear? Because percentage improved. Alone figure you cannot tell, but when you compare with last year, we can easily relate to that figure. Last year our revenue was 1000 crore. This year 100 crore. Very bad. That's a 90% fall. Last year profit 500 crore. This year 50 crore. Very bad. But last year 10. This year 50. Oh my God. So alone figure are difficult to judge. But when you compare with last year, it's easy to know. That is what is given. There is a standard. Whenever you give comparative information, this is current year, this is last year. There are two approaches. Let me explain in one line. Corresponding figure and comparative financial statement. Just listen one line. In corresponding figure, I give audit opinion on this year only. Last year is just for reference. Very good. But in comparative, I give opinion on each year for which financial statements are presented. My audit opinion is for each year. If 5 year is given, I am auditing all 5 years. Which to follow? Point number 1. Given by law, regulation, FRF. Law will say, regulation will say, terms of engagement will say, okay, by mistake, if they are paying you 10,000 rupees fee, will you check 5 year financial statement? Crazy ki yaar hai? No. I will only check for current year. Last year, whatever figure they give, I will put. Are you clear? But, if you are going for IPO listing, we need to compulsory check last 5 years or last 3 years. At that time, I have to follow this approach. So it will be written in terms of engagement or law or regulation. Example, if I am getting a Schedule 3 audit, Schedule 3 tells me you have to check this year only. Last year is just for reference. But when I go for IPO audit, compulsory I need to check all years. 1, 2, 3, standard, almost over except one question. Whenever I give comparative information, there are two approaches. Correspond, how to remember lifetime. See, correspond means what? Just for comparison, time pass. but your financial statement word written, it means I will audit. Cheap way to remember. Let's speak one last time. Comparative information has two children. Corresponding figure, comparative financial statement. Let us speak. In corresponding figure, my opinion is on current year only. Baby, last year is just for reference. In comparative, I give audit opinion for all year for which financial statements are presented. Now I will just read everything and I'll tell you that one question. Nature of comparative information depends on FRF. Okay, what does your FRF tell? Schedule 3 tells check current year only. IPO tells all year. There are two broad approaches, corresponding figure and comparative. Most important line for understanding. Which approach to follow is given by law, regulation or terms of engagement. Sometimes they will pay you money. We are paying 8 lakh, check all year. Okay, we will check. Terms of engagement. Two broad approaches are there. For corresponding figure, auditor opinion refer to current year only. Previous year is just for comparison. Comparative. For comparative financial statement, our opinion is for each year for which financial statements are presented. Okay. Here we have given opinion for all figure. Very good. Now, two potential questions can come. In exam only this comes, this one. Okay. But according to me, this is also good. It can come. Okay. So two questions only to do here, nothing else. Understanding comes, then too good you are. Audit procedure regarding comparative information. I will ask a question. This is which approach, first or second? Second, wrong. This is heading. So question can come on heading only. What are audit procedure for? This is dad. It has two child. Okay. So this is heading. Audit procedure regarding comparative information. Auditor shall see financial statement include comparative information as per FRF. Is corresponding required, that is followed. Comparative financial statement, that is followed. Okay. For this purpose, we will check 2 points. Remember, just 2 points. Comparative information agrees with amount and other disclosures of prior period. Whatever comparative information, it should match with prior period. Check that. Comparative information agrees with amount and other disclosure of prior period. Accounting policies reflected in comparative, that's last year, is same as current year. Accounting policies are consistent, and if there are changes, they are properly accounted, presented, disclosed. Over. Nothing good that I can explain. Okay. What are audit procedure regarding comparative information? Comparative information agrees with amount and other disclosure of prior period. Accounting policies presented in current year are consistent with prior period, and if there are changes in depreciation policy, inventory, effect is properly accounted, presented, disclosed. Retrospective or prospective as told by AS. This less chance. This favorite question, I mean, if they want to ask, looking at past record, this is the only question they ask. Except understanding, anything can come. Listen, let's take break 2 seconds. Welcome back. When I give corresponding figure, I check current year only. I don't give reference to last year. In corresponding figure, our opinion is on current year only. Last year is just for reference. But there are exceptions. In these 4 cases, I also give reference to last year. I think you need break, sir. Right now you told that we will not give reference. Understood. But these 4 cases we will give reference. That is why question is made. Oh, so these are exceptions. Yes. One last time. When corresponding figures are presented, auditor opinion will not refer to corresponding figure except in 4 cases. I hope you understood question. One last time. When corresponding figure are presented, our opinion is on current year only. But English. In these 4 cases, we also give opinion of last year. We will give reference to last year. Very simple. Very simple. Number 1, last year financial statements are not audited. Then we write in other matter paragraph. We will write in other matter paragraph, last year financial statements were not audited. Just reference I am giving. Second, they are audited by another auditor. Instead of Manoj, Saroj did audit. I will give reference. Last year audited financial statement are done by another auditor. I am giving a reference. Okay. Third, if I obtain a evidence that there is material misstatement related to prior period, related to last year's, okay, I can find a material misstatement on which clean report was given. Last year I gave clean report, but there is a big mistake. Then I will write this year I am giving qualified or adverse report. Why? due to prior period material misstatement. Read. If auditor obtain evidence that material misstatement exists in prior period on which unmodified report was issued, auditor will see issue is solved. If not, give qualified or adverse report and write in basis of opinion it is due to material misstatement of prior period. Last point. So I have to give reference because it's a last year mistake. If the previous year we gave qualified disclaimer adverse report and issue is still not solved, this year also I will give qualified disclaimer and adverse report and mention both current year figure and last year figure, okay, in basis of opinion which gave rise to modification. I hope you understood. All 4 points are super duper logical. One last time. When corresponding figure are presented, listen no sir, I give opinion on current year only. But in these cases, I give opinion on last year also. One last time. When corresponding figure are presented, I give opinion on current year only. But in these cases, I will give reference to last year. Prior period financial statement not audited. 2. Audited by another auditor. Third, I find material misstatement related to prior period on which unmodified report was issued. Then this year, I will give qualified or adverse report and write in basis of opinion. It is due to material misstatement of prior period on which unmodified report was issued. If this year we give, even previous year we gave qualified disclaimer or adverse report and the matter is still not solved, then this year also I will modify and give qualified disclaimer adverse report and write current year figure and corresponding figure if not possible effect, okay, in basis of opinion. How to remember in one line? 1, 2, 3. Small break. Let us start. Tell me. In corresponding figure, my opinion is on current year only. But in these cases, I will give last year financial statement not audited. 2. Audited by another auditor. Last year, okay, we gave clean report, but I found prior period material misstatement. Last year, we gave qualified disclaimer, adverse report, and matter is still not solved. Any doubt? Can we trust on prior auditor's work or we must check again? Good question. Depends on fees. Are you clear? If you are not getting money, ultimately you have to look at yourself also. Opening balance is our responsibility. Rest, I don't have that much time that I will be emotional in one only. Are you clear? Fees also is proper work you have to. Over. This though will never come. Just read. In this amount and disclosure, are included. In this, our opinion will refer to each year. When reporting on prior period financial statement, while you are checking last year, okay, but you feel opinion should be different, then write in other matter, last year qualified report, but we feel clean report will come. Just read. When reporting on prior period, auditor opinion differ. Auditor will write in other matter. Why his opinion differ? Oh, superb. Still time is left. Oh, I thought how time left. This duty question is pending. Chalo, what is the mood? Shall we go ahead? Or enough? Let us finish the left side and then take a break. Okay. Joint audit. What is joint audit? Very simple. First of all, how to remember? 9 and 9. 2 both came together to do audit. Very simple. 9 and 9. 2 both came together to do audit. 2 people, 9 and 9 came together. What is joint audit? It is pooling together resources and expertise of more than one firm to do a specific job in a given time which is difficult to do individually. One more time, it is pooling together of resources and skill of more than one firm to do a given job in a specific time which is difficult to do individually. Can you tell some example? Yes. Reliance audit is done by 2 people. One is Chaturvedi, another is Big Four. Why? You have to give report in May. It's very less time. So better 2 people come together. In France, there is a rule. Whenever consolidation is done, it means consolidated statement. Joint audit is compulsory. So what's the benefit of joint audit? Responsibility will be shared. Better work will be there. I can get consultation from 2 people. Very simple. It means pulling together resource and expertise of more than one firm to do a job in a given time, which is difficult to do individually. This chart is not there in magic book. Yes, newly made, I will share. Yesterday chart also I forgot. So in case I forget, please type hi. I will send. I forgot. This also I will share. That one also I will share, which I forgot on Saturday. Start. First question. Joint audit plan. Before starting joint audit, joint auditors will develop a joint audit plan. In that, what they will write? In developing plan, number one. Identify division of separate area and common area. Who will check payroll? Who will check sale? Who will check purchase? Separate area. And who will check common? Common. Identify division of separate area and common area. Second, consider and communicate among all joint auditor factors that are significant in directing team effort. Tell to the team, or this factor very important. Or there's changes in lawyer, check this. Or impairment can be there. Consider factors that are significant in directing team effort. A certain reporting objective. When do you have to give report? When will you communicate with staff? When review will be done? Reporting objective should be clear. So we will do audit accordingly. Ascertain nature, timing, and extent of resources required to do engagement. How much our staff will be required? How much their staff will be required? It should be very clear. Nature, timing, and extent of resources required. Consider results of preliminary engagement or similar engagement done earlier. Last year we had done this audit. What risk we found? Okay. Or similar audits we have done in pharma sector. Did we find any risk? Now, I explained you, but this is copy paste of audit strategy. That we use the technique audit key TRP. It is same. Absolutely same. One difference is there. Who can tell? There is one difference. Who can tell? There is one difference. Who can tell? Of course, first point is different. Don't tell that. Okay, first point. The difference is, okay, joint audit plan. There is no explanation given here by module. It's a module question. Okay, their explanation was given. So that's the difference. Joint audit. In developing joint audit plan, what we will do? In developing joint audit plan, what we will do? Audit key TRP. Very simple, in 1 minute over. Identify division of separate audit area, common audit area. T. Consider factors that are significant in directing team effort. R. Ascertain reporting objectives of the engagement. Next, a certain nature, timing, and extent of resources required to accomplish engagement. Consider results of preliminary engagement and similar engagement done earlier. How much ever time you want, we can speak. Very simple. In developing joint audit plan, we need to keep in mind audit key TRP. Audit. Identify division of separate audit area and common audit area. T. Team effort. Consider the factors that are significant in directing team effort. R. Ascertain reporting objectives of the engagement. One more R. Ascertain nature, timing, and extent of resources required to accomplish the engagement. Consider results of preliminary engagement or similar engagement done earlier. Learn very nicely, super duper simple. Too easy. Chalo, done? 1, 2, 3, 4, 5, 6. Let us start. Tell me, joint audit plan. Identify division of separate audit area, common audit area. Consider factors that are significant in directing team effort. Ascertain reporting objectives of the engagement. Ascertain nature, timing, extent of resources required to accomplish engagement. Consider results of preliminary engagement activity or similar engagement done earlier. Now, We have to issue common, listen, 1 minute, listen. We have to issue common audit report. Both joint auditor will give common audit report. But if you have doubt in any area or you have conflict regarding any area, you feel qualified report will come, adverse will come, then give separate report. When you give separate report, give reference to the other report. That other joint auditor report also refer, because it is different from our report. Over. Only MCQ can come. It should be noted, joint auditor will give common report. However, when joint auditor are in disagreement with any point or any matter, they will give separate report. If you are in disagreement with any point or any matter, give separate report. In such circumstances, also make reference to others' audit report. Normally give common report, but if you are in disagreement to any matter or anything, okay, give separate report. When we give separate report, give reference to the others' report. From here, this is what type of essay, unimportant essay. And last time question came, so I think zero track record is there. I don't think it can come. Advantage came. Shall we learn this because it came last time? Why to do such question after break? You want to finish this? It came last time, so definitely it will not come. So let us finish. But we still have to do. N means no, don't do. We will read no once. You don't have to learn that much, but still it can not come because this comes in 7-8 attempt once. Advantage of joint audit, we will learn this and leave. Over. I will just explain all points. Sharing of expertise. Advantage of mutual consultation can be that I can ask, one firm can ask another firm. Better quality of performance will be there. Client will also receive best level of service. Two best firms are coming. Okay. Workload will be lower. Why? Work will be shared. Lower staff development cost. You train one staff, they will train another. Lower cost to carry out the work. अरे यार, sorry. Start. Lower cost to carry out the work. Why it is shared? Only one point is little good. This one. Displacement of auditor. Taken over in takeover. Often prevented. What is displacement? See, there are two companies. A audit done by Shahrukh. B is done by Salman. Now A is taken over by B. A taken over. So B is auditor unemployed. No. Both can do joint audit of A in English written. Displacement means removing of auditor. Taken over in takeover. Now prevented because joint audit can be done. In respect of multinational firm, work can be given to local firm. You have 8 subsidiaries in US. Do joint audit with US firm. They know their laws better. Last, healthy competition will be there. Someone will do good work, will always feel, Arey yaar, I could also have done. They have so much knowledge about ROMM, etc. Okay. Let us still try to learn 5 points. Sharing of expertise, advantage of mutual consultation. Sharing of expertise, advantage of mutual consultation. Better quality of work, better performance to client. Better quality of work, improved service to client. Better quality of performance, improved service to the client. Remember till here. Done. Advantages of joint audit. Very simple. Sharing of expertise, advantage of mutual consultation, better quality of performance, improved service to the client. 3, lower workload, lower staff development cost, lower cost to carry out the work. One more time. Lower workload, lower staff development cost, lower cost to carry out the work. Last, displacement of auditor, taken over in takeover, now prevented. Now auditor will not be displaced. Displacement of auditor, taken over in takeover, prevented. In respect of multinational company, work can be given to local firm. In respect of multinational company, work can be given to local firm. Sense of healthy competition. Sense of healthy competition. Seems good? Let us try to learn 4-5 points. Sharing of expertise, advantage of mutual consultation, better quality of performance, improved, how better quality? Consult you are doing, improved service to the client, lower workload, lower staff development cost, lower cost to carry out the work. Displacement of auditor, taken over in takeover, now prevented. In respect of multinational company, Work can be given to local firm. Healthy competition. Disadvantage, fees will be shared. Psychological problem, if someone does good work, no, then also we feel bad. Arey yaar, I don't know anything. Okay, psychology will be. So if your friend passes, you are happy. But if he gets more mark than you, then you are unhappy. I am more intelligent. How he got? How? Many times I get called. You will be shocked of what they tell. Sir, my friend did not read and he passed. I read and I failed. Arey, no one is like that. He is just faking. He must have read more than you. He doesn't tell you. Like that it is. We are not happy also. Our friend pass and if we fail, go on. Both pass then okay. But mark should be 1 mark less than me. Indian mentality. Only mine or yours also I don't. Yours is there only because we get call. So we know. General superiority complex of some auditor. Some auditor, we are big four. Arey bhai, go to hell. Problem of coordination can be there. Common areas could be neglected. Who is ultimately liable? Uncertainty about liability of work done. Over. Nothing good. Never come, and this standard will not come. I so much we studied, but time did not pass only today. God knows how. Superb. What time we come back? Reply fast. More than enough studied. Depends what is the mood. No, CARO is not there. This question is pending. Who will teach this? First I will teach this. 10:10. See you at 10:10. We'll finish this. CARO, what I feel tomorrow, tomorrow also small chapter, but little heavy doesn't become. I will only explain applicability of CARO because CARO can definitely come. Only application points will do tomorrow. Okay. Only application. If mood is there, not there, then shift tomorrow. No worries. But this will take 10 minutes only. Okay. Start. See you tomorrow. See you right now after 10:10. Bye. This is extra, so I'm showing you this. See you. 10:10. Chalo, start. Welcome back. Let's start. Now Friday should be our end. I think no, Saturday not needed. Enough syllabus is done and only little portion pending. I think only after today 3 chapters are left. Let's start. Duties of auditor. This is an extra part. After that, CARO little we will discuss applicability and leave for today. Concentrate. Duty means what? With great power comes great responsibility. We have lot of rights given to auditor. That is not part of our syllabus. It is given in company law. Right to audit books of accounts, etc., etc., etc. Right to access voucher, etc. But if you get right, you have to follow duties also. So these are duties of auditor. God knows duty why given, because it's duty to report, maybe that is why. Okay, so duties of auditor. Same thing is also there in company law, okay, but given here also, so we have to study here. First point is duty to inquire on certain matter. I will do inquiry on these matter. If answer is normal or positive, nothing to do. If answer is negative, only then I need to report. One more time. Duty to inquire on certain matter. If answer is positive, blank. If answer is negative, only then I need to report. See, what are the matter? Whether loans and advances made by the company are properly secured and terms are not prejudicial to company's interest. What do you mean by loans and advances? Secured it should be. See, all the loans, proper security is taken. Terms are not harmful. What can be harmful term? Big loan without any date of repayment, not taking proper security, giving loan at very low rate of interest. All these are harmful terms. Okay, so first you have to check loans and advance are properly secured, terms are not prejudicial, harmful to company. If all loans and advance proper, then this point will not come. Two, whether book entry transactions are compromising to interest of company. Sometimes we just pass book entry. Book entry means what? Ram to say. No money is received. Are you clear? So book entry transactions are done. Third, any investment company has done in share, debenture, security. Is it sold below cost price? Investment you have to do, that is allowed in life. share, debenture, security. But most important, don't sell it below cost price. Except investment and banking company can do. Why? Because they do it every day. Every 1 hour they have new investment, purchase, sale, purchase. So loss can be there. But if you are investing, why are you selling below cost? Have you done some fraud? Are you doing engaged in some adjustment with someone? Okay, so any investment is done in share, debenture, security. Are they sold below cost price? Except investment and banking company. For them, it is allowed. It is their business. Second, fourth, whether loans and advance are shown as deposits. See, loan, advance, deposit. Let me explain difference between the all three. What is loan? Given to director, given to related party, given to employee. What is advance? It's usually for business. Raw material they are not supplying, so they are giving advance. Advance is made for machinery payment, unique machine. Okay, so advance is for business. What is deposit? Surety for future. Library you pay deposit. PG you pay deposit. Okay, certain thing you need, you pay deposit. Deposit will surely be received. In school we used to pay deposit, caution money. It will be received. So auditor doesn't audit deposit much because he knows it will be received. So sometimes what I do, I give loan but write as deposit. So auditor won't check. Have I done such thing? Loans and advance are shown as deposit. Personal expense are charged to revenue. I go on a date with my wife, but charged to company's account. Not allowed. I go to Europe, charged to company's account. Okay, not allowed. Okay. Whether shares are allotted for cash, adequate cash is received. If it is not received, position is shown in books of accounts as calls in arrears. Okay, simple. So if I have done these things, nothing to write. If I have not done, then only I will report. Again, I want to tell. If we are doing all these things, nothing will happen. If we are not doing, only then we need to report. I think you have heard these points. Okay. Now, if you want, we can learn, but no need to learn, but still will learn. Duty to inquire. Tell me, auditor will inquire in which matter? Why this will not come? It is in company audit. A, B, C, D, E, F. A, B, C, D, E, F. A, whether loans and advances made by company are properly secured and terms are not prejudicial to company's interest. B, whether book entry transactions are prejudicial to company's interest. C, whether investment is done in the form of shares, debenture, other security, are they sold below cost price? C for cost price, except investment and banking company. D, whether loans and advance are shown as deposit. Whether shares, whether personal expenses, E for expenses, are charged to revenue. Whether shares are allotted for cash. F for cash, adequate cash is received. If not received, position is shown in books of accounts. Just read once. If you want, I can speak once. A, B, C, D, E, F. What is A? Loans and advances. What is B? Book entry transaction. What is C? Okay, below cost price. D, loan and advance are shown as deposit. Personal expenses. Shares are allotted for cash. If you want one last time, English you can make loan and advances, but it will not come. Book entry transaction. Okay. Share debenture below cost price. D, loan and advance are shown as deposit. Personal expenses. F, shares are allotted for cash. Next duty is to sign audit report, I know. Next duty is to comply with auditing standard, I know. Next duty is to audit report. See, I need to compulsory report on these things. Inquire was what? Voluntary. Not voluntary. If I find doubt, only then I will report. Because I will inquire on these things. If doubt, I will report. But here, compulsory I need to report. Compulsory. Okay. On what things? We will just read once. Whether auditor has obtained all information and explanation necessary for the purpose of audit. Did you get all information explanation? Second, whether proper books of accounts are maintained and returns are received from branches which are not audited by him. Yes. Any qualification, reservation or adverse remark on maintenance of accounts, any weakness you found. Whether branch audit report is sent to company auditor, how he has dealt with it. Whether balance sheet and P&L are matching with books of accounts. Whether our financial statement comply with accounting standard. Observation or remark on adverse functioning of the company. Any director is disqualified from appointment as director. Whether company has adequate internal financial control and operating effectiveness of control. See, all these are time pass point. From here one MCQ can come. So let me explain you. Whether, see, earlier our responsibility was only one, what? Give audit report. But these days it is not audit report, I also need to see whether there are adequate internal financial control and operating effectiveness of the control. Are they operating properly? One more time. Earlier I only gave audit report, but now responsibility have changed. It can be asked, auditor is responsible for internal control, big yes. Okay, we are not, sorry, wrong, again I want to speak. Earlier, our responsibility was only giving audit report. Now our responsibility is also checking, not internal control, internal financial control, financial department control. What are financial control? Maybe authorization, okay, access, okay, maybe audit. So company has to check there are adequate financial, internal financial control and operating effectiveness of control. Tell me what is important, coming to lecture or studying? Both. So control is there and operating effectively. One last time, I have to check whether company has adequate internal financial control and operating effectiveness of such control. MCQ can come. But. See, small businessmen are frustrated. In India, what is there? Business is there or not, but compliances are huge. Do audit, do IFC. You will be tired. So it's not applicable to small companies. Which are small companies? Come here. Requirements of internal financial control are not applicable to private company. Which one? One person company, small company. One person company, small company. Company which has turnover less than 50 crore and borrowings less than 25 crore at any point of time. Turnover will be highest in year end only, but borrowings 25 crore. So if you are one person company, small company, or if your company which has turnover less than 50 crore and borrowings less than 25 crore, then exemption is given. No need to do IFC, only audit report. If any one point also not fulfilled, borrowing is 26 crore in June, gone. For one day 27 crore, gone. Turnover 51 crore, gone. So many people intentionally, if it's coming 50.2 crore, they will show 49.9. Why? Escape from third class things in life. I hope you understood. 1, 2, 3, start. These days, we don't have to give audit report. Auditor also has to report on internal financial control, whether they exist and operating effectiveness of control. Not applicable to one person company, small company, company which has turnover less than 50 crore and borrowings less than 25 crore at any point of time. One more thing I want to tell. Tell sir. There are three words which we have to study. Internal control, you know, it is applicable for all departments: production, finance, marketing, HR. Internal financial control are only applicable to finance department. But when auditor comments on those internal financial control, listen nicely. When auditor comments on internal financial control, why he will comment? Because he is told in this point. When auditor comments on internal financial control, it is known as ICOFR, internal control over financial reporting. Okay, so just I am explaining you the word. One last time. Internal controls are set up by company for all department. Internal financial control are controls set up by management for finance department. When auditor comments on this, we call it internal control over financial reporting, applicable to all company except three: one person company, small company, companies having borrowing less than 25 crore and turnover less than 50 crore. Over. Last point, duty to report on fraud. Very important. Only MCQ. Time pass MCQ will come. As per section 143.12. What is 143? I love you. One is I, one letter word. Love, four letter U. I love you. 143.12. Okay. As per section 143.12, read with rule 13. How do we say? प्यार ने 12 बजाई. Rule 13 के साथ. PR is 143. As per section 143.12, rule 13. MCQ will come. If auditor, during his duties as auditor, while you are doing audit, if you have any reason to believe there is a fraud, not error, intentionally fraud, which involves or is expected to involves or fraud is going on, you feel total amount could be 1 crore or above. That is not important. Individually, fraud should be of 1 crore. They will say fraud is of 50 lakh, 40 lakh, 30 lakh. No, then don't report. individually fraud is of above 1 crore is being committed or has been committed, is being or has been committed by officer or employee. Who is doing the fraud? Officer or employee. We will report to central government. Why this is important? Because reporting is done to Modi, Narendra, central government. Okay, so very simple. As per section 143.12, read with rule 30. If auditor during performance of his duties as statutory auditor has reason to believe individually one fraud is being or has been committed individually, it is of 1 crore or above. 1 crore or above, okay, is done by officer or employee, we will report to central government. Why important? Because central. Below 1 crore, we will report to audit committee or board. Over. I hope it is clear. Individually fraud 1 crore, they will ask, do we need to report? Yes, as per section 143.12. With this is also done. Less than 1 crore by officer or employee, whom to report? See here, audit committee or board. Audit committee or board. Any doubt? No. Done. Now we are moving on towards the last part. Okay, that is CARO. Anything comes or not, but from CARO question can surely come. Okay, so chapter I told is of 15 mark, but you can assume it's of 10-12 mark. 2-3 marks point or 4 marks point CARO can come. Okay, but there are cases when CARO has not come also. It's not that CARO will be asked. It did not get asked in last to last exam. Last they asked, I think. Okay, so let's start with CARO. CARO, if you want, we will do inside points. Okay, if you don't want, we will do intro and leave. Intro is also big. With this biggie chapter over. Tomorrow the chapter is little smaller. Not little smaller, it's a 1 hour 45, so we should finish before 2 hours. And then CARO pending part we will do. What is CARO first? Let me explain. Company Auditor Report Order. One more time, English listen. Company Auditor Report Order. Central government met with NAFRA people. Okay. Tomorrow, of course, we'll continue CARO, so listen very nicely. Central government met with NAFRA. What is NAFRA? National Financial Reporting Authority. What these people do? They basically try to identify how accounting and auditing can be better. Wherever fraud is there, okay, auditors should know, so shareholders' money is not lost. So NAFRA basically does what? Better accounting and auditing. So central government met with NAFRA. They said, why frauds are happening? NAFRA said fraud basically happens due to these many reasons. These are hard to catch, but let us do additional reporting for company. Every company has to compulsory give opinion on 21 points. If a shareholder will read these 21 points, no, okay, then definitely any fraud could be catched. Mostly fraud is done in 21 points only. If shareholder will read CARO, no, 101% there is zero chance of fraud. Of course, it will not be written there is a fraud. Okay, you have to catch these 21 points are those points which are already covered in audit, but separately CARO is given. So central government in consultation with NAFRA has given additional requirement for company, only applicable in India, because in India only fraud people are there. Abroad also there, but comparatively less. Abroad might be some other requirement. So it additional requirement. You understood now? Reporting on other legal requirement. CARO is part of that. I hope you understood logic now. One more time. Central government in consultation with NAFRA met and given certain additional requirement for company. 21 points. CARO 21 points. CARO 2020, but points are 21. Why 2020? This came in 2020. Again in 2025 it will be revised. Why? Because some new fraud points will come, so they'll include 2-3 points extra, remove 2-3 irrelevant points. I hope you understood. Now sometimes this will come in inter as well as final. It will come little detailed. Inter, a simple question. CARO doesn't change. Okay, so questions come on applicability only sometimes, so we should know it's applied. Tell me, it will apply to whom? Bigger company. Smaller company, CARO, PHARO, what they will do? They will be tired. They are like, shall we do business? Shall we do audit? Shall we do IFC? Shall we do CARO? Shall we die now? Business is not happening in small company, and so many compliance in India are there. So that is why small company we have escaped. Okay, which are small in India? Very simple logic if you understand. Where public interest is not there, it shall apply to all company including foreign. Foreign company doing business in India apply, but it shall not apply to one person company. Why? Name only one person. We brought this so one people can also start company. Now we will tell CARO, then he will cancel. Let us not form. So CARO exemption is given. Second, small company exemption given. Section 8, not for profit company. What you will do fraud? You are not for profit. Exemption given. Insurance company. Already dad of insurance company has given 2800 law to insurance company. Now one more CARO also we will give. They will also die. So insurance company given. See, government will cover those which are left out. Insurance company already enough rules are there. Private limited company also exempt. Few private limited. Banking company also exempt. Why? Because RBI has given 4800 requirement for them. One last time. For whom does it escape? One will speak. One person got his Samsung S8 insured from a private bank. One more time. One person, don't try to learn. Like that also you'll remember. One person got his Samsung S8 insured from a private bank. One person company. Samsung is a small company. Section 8, not for a profit company. Insurance company, private company, banking company. Insurance company, private company, banking company. First question. In banking company, foreign bank also exempt? Yes. Foreign bank, CARO doesn't apply. NBFC, non-banking finance company, is not a bank. So CARO applies. Such hard question will not come, but still. Insurance doesn't apply. Now. Listen, CARO will apply to private company if certain private company are exempt. Certain CARO applies. Listen, you first of all don't read, otherwise you will get 100% confusion in this. So I want to ask one question. CARO will be exempt for which private company? Smaller private company or bigger company? Reply this much. CARO will be exempt for which company? Smaller or only understand smaller. Don't try to learn English. If you more you fall in English, no, you will fall. English not required. Only use brain. Okay. So CARO applicable to private company if applicable if it is holding or subsidiary of public. See, if your holding or subsidiary is public, let's take an example. I am a private company, holding company is Reliance. So sometimes Reliance cannot do a fraud. It will do fraud in my name. Everyone NAFRA understands. NAFRA champion. CARO apply to you. Why? Because your dad is public. Sometimes I am very smart. All these rule come. No. Let me form subsidiary company. My subsidiary is public. Subsidiary will not do fraud. It will tell holding you do fraud. You are private, no do fraud. CARO will apply. Why? Because my subsidiary is public. If I have any relation with public above or below, CARO will apply. No need to check further points. So for CARO to be exempt, it should be holding or subsidiary of private. Is your holding or subsidiary public? Then don't check further points. Game over. If your sir, my holding and subsidiary private, say I check further point. Yes. This is the main point. Moving on. Other points are what? Paid up share capital and reserve is less than 1 crore. Exemption applies. Paid up share capital and reserve is less than 1 year more than Y return. It will apply if it is more than that. Borrowings from bank or financial institution does not exceed 1 crore. If more, then gone. More, than gone. Father and children probably gone. Borrowings are more than 1 crore gone. Revenue as disclosed in Schedule 3 should not be more than 10 crore. So how do I remember in one line? PBT 1110. PBT 8 PBT 1110. What is P? Paid up share capital and reserve should not be more than 1 crore. Borrowings from bank or financial institution should not be more than 1 crore. Turnover as defined in Schedule 3. Total turnover should not be more than 10 crores during immediately preceding financial year. If above, below, private, and all these three conditions met, then I will be exempt from CARO. My fees of auditor will be less. If CARO applicable, auditor more fee. Hey, audit fees, IFC fees, CARO fees, other so many fees, and we have to hide your fraud. That fee is also required. Okay, 4 fees he will take. I hope you understood. Very simple. Don't fall in English. One last time. CARO will apply to private company or no? Sir, it will apply. It will apply if any relation with public. If no relation, then 3 points. PBT 1110. Paid up share capital and reserve is less than 1 crore. Borrowings at any point of time is less than 1 crore. Turnover during immediately preceding financial year exceeds 10 crore. Any point broken, CARO will apply. Why? Because you are a big company and only a dash can do fraud. Big people. Small people are very good in life. Okay. A person who cuts hair, he will do fraud of what? 10 rupees extra, he will ask 20, 30. But big people, chore they are. Now, let us go in detail if by mistake sum comes in exam. Sums. Sum also comes. Anything can come. Oh, most important, 1 mark MCQ. CARO doesn't apply to consolidated financial statement. Why? It is applying to standalone. I have 89 subsidiary. All 89 are following CARO. Now in consolidation again I will show CARO or what? Then to then 21 points of 81 company. How much big it will become? It applies to individual. Why to apply to consolidated? Logic understand, then you can never forget. If you learn, you will forget. Start. Tell me, in paid up share capital and reserve, what will apply? English read, paid up. In 11th standard, they told. What is included in paid up? Equity, preference, right, bonus, everything. Call in arrear, you have to minus. Why? Call in arrears is not paid up. It is not paid up. Call in arrear. Yes, understood. Call in advance don't include. Why? It is advance call, not paid up. Paid up includes what? What is paid up? Arrears minus. If they ask some. Reserve, all reserve included. Except accumulated depreciation and bad debt reserve. This is not reserve. This is charge against profit. Reserve means what? Appropriation of profit. Transfer of profit is reserve. This is not transfer. It is to reduce its charge against profit. But this all I don't know. Simple depreciation is there, no? That's charge against profit. You don't need to know. Basic English it is. Okay. Reserve means appropriation of profit, transfer of profit. Borrowing all include long term, short term, credit card, DOD, all from bank or financial institution. Revenue should include other income also. Total revenue, they're not saying revenue from operation, other income also included. Taxes exclude, taxes are never part of revenue. We should not take for calculation. Call in arrear means money is pending to be received. Yes. Out of 10, simple. Some. Let us take some. Out of 10, 8 rupees paid up. So you will take how much in paid up? Out of 10, 8 rupees in paid up. So 8. That by mistake I told this thing in English. Of course you will minus 2 because it's not paid up. Understood logic? Okay. Now, tell me, transfer of profit given, but bad debts also given. Will you take bad debts in reserves? No. We will not take. Simple. Bad debt is profit will be deducted. It's not reserve. Borrowings nothing. I hope clear. I hope clear. I hope clear. With this, applicability of CARO is done. Again, if you want, we can speak one last time. Okay. I think first time some came when this K was new. After that, they have not asked. Okay. 1, 2, 3, start. But MCQ can come. See, sometimes very shocking. Whole world will be shocked. First question only CARO. Many people don't read. No, ICI does this. 6 question inside that on applicability. Calculate. Whole India shock. ICI rock. ICI likes all this. Unexpected question. 6 marks they asked on banking. Banking total weightage 4 to 6 marks. Last exam 6 marks they asked, I think, case study. Banking. Take. You did not expect, definitely we will give. So one such thing will be there. CARO. One person got his Samsung S8. Now tell me if paper comes very hard then. If you have done all chapter, your easy questions have to come. 60-70 mark is damn easy. But why you don't find easy? Because chapter which you skipped, question came from there only. Easier ones. And chapter which you did, from their hard ones came. That is the problem. If you do all, that is why in CA who will pass? Tell me who will pass in CA? Who has brain? He will pass? Yes or no? CA exam is for brain people. Yes or no? Reply fast. Late we are getting. No. Whoever doesn't have brain, he will pass. Like me. Little also if you apply your brain, no. Let us, this to last time came, let us not do this. Over. Case file. If you don't have brain, you study everything. 100% you will pass. No brain required. Little also brain gone. Dumb people, what they will do? Read everything little. They will pass because easier question will be there. If you have brain or a weightage, let us calculate chapter wise weightage, topic wise weightage, go on. Theory usually people skip because their practical is very strong in FM, but otherwise we have 2 videos for FM theory. You have to do that. More than enough. Okay. Both uploaded on YouTube, chapter 1 and chapter 2. Chalo, one last time. CARO will apply to all company, including. That is why, see, every topic I am teaching. I could have easily not taught May 25 topic. I said this will come, let's not do this. But no brain required. Every single word you have to do. Okay, it shall apply to all company, including foreign company. What all excluded? One person got his Samsung S8 in short from a private bank. One person company, small company, section 8 company, insurance company, private company, banking company. In private, listen more. It should not be holding or subsidiary of public. If it is holding and subsidiary of private, go ahead. PBT 1110. Paid up share capital and reserve doesn't exceed 1 crore. Borrowings doesn't exceed 1 crore. Turnover doesn't exceed 10 crore. Turnover includes other income also. Borrowing from bank or financial institution. I think we are done. But this is more than acronym. What is there? This is very easy. Like that only, with logic only you can learn this. Acronym good, but very simple. With logic only we can learn. Chalo. Now you want to start CARO or no? Shall we start CARO or no? No. Only Kajal saying yes. No. Enough, you are tired. I thought I am not tired. Don't know why. Maybe Monday, that is why. Tomorrow I will get tired. Okay, so Friday we are going to end. Tomorrow we will do chapter 10, and after that you will say, sir, Friday why? After that only 2 chapter pending. Wednesday we will do which chapter? 9. 9 only, no? I don't know. 9 maybe. And then Thursday and Friday, chapter number 5. And we are done. Not tired, but time is less. Okay, bye-bye. Good night. Take care. Enough we study. Bye. Start. CARO. Those who don't know, we are discussing CARO, Company Auditor Report Order. It includes specialized points where frauds are found usually. So, central government in consultation with NAFRA decided certain additional requirement for company applicable to which company? All company except following. One person got his Samsung S8 insured from a private bank. One person company. Samsung is a small company. One person got his Samsung small company, section 8 company, S8 insured, insurance company, private company, banking company. In private company, it should not be holding or subsidiary of public. Okay. If it is not holding subsidiary, 3 extra point. PBT 1 PBT 1 Okay, so paid up share capital and reserve is not more than 1 crore. Borrowings are not at any point of time does not exceed 1 crore, and turnover including other income doesn't exceed 10 crore. I hope you remember. Start. Now in CARO 2 question can come. One, they will only mention write about this. Then you have to explain whichever points are there. Okay. Then they can write clause. I don't think they will ask clause, but they can. Clause number 10. So total CARO 2020 points are 21. So if clause 11 is asked, you have to write which is the 11th point. Okay. So that can come. Third question, they will ask a case study that this has to be reported. High chance that third will come. This has to be reported under which clause? So you have to type it should be reported in this clause, this. Start. According to me, case study only comes. Okay, start. Fixed asset. So first point they've included is fixed asset. Why? It's the biggest thing of balance sheet. After every 10 points, we will learn also. Don't worry, all 21 points will be learned in half an hour. Start. Whether company is maintaining proper records showing quantitative detail and situation of fixed asset. Why quantitative detail do we have 10? Yes. Sir, why quantitative? How, what quantity is there I should know? Why situation of fixed asset? So based on that valuation is decided. Second, whether fixed assets are verified by management at reasonable interval. Okay, what is reasonable interval? Once in 3 years. Explanation is given in final. Whether any material discrepancies are there. Okay, what is material discrepancy? More than 10% difference in fixed asset. How it is dealt in the books of accounts. So number one, whether fixed assets are physically verified at reasonable interval by management once in 3 years. If there is material discrepancy more than 10% difference, how it is dealt in the books of accounts. Third, whether title deeds of immovable property are in the name of company. I have several fixed assets. Are they in my name or others' name? Are you clear? Very simple. 3 point. If you want, again we will speak. Whether company is maintaining quantitative records showing full particulars of quantitative records and situation of fixed asset. Second, whether fixed assets are reasonable. You just have to write whether are they physically verified at reasonable interval by management. If there is any material discrepancy, it is dealt with the books of accounts. Whether title deeds of immovable property are in the name of the company. If not, give details. Second point, how to remember. Second biggest item after fixed asset is inventory. Only is 2 points. Whether any physical verification of inventory is conducted at reasonable interval by management. In inventory, it is once a year. Once a year, but this will come in final, I think. Whether any material discrepancy is there in the inventory while physical verification, we know this difference is coming. How it is dealt with the books of accounts. What is material discrepancy? More than 10% difference. One last time. Whether physical verification of inventory is done at reasonable interval. If there is any material discrepancy in the inventory, how it is dealt with the books of accounts. Third point, loan. Loan. In loan, we have how many points? 3 points. Loan to related party. Whether loans is given to secure, loans are given secured, unsecured to LLP, other party, maintained under register under section 189. See, now section 189 is in your syllabus or no? I don't know. If it is not there, less chance. But still we have to remember. Whether loans is given secured or unsecured to form LLP for a register maintained under section 189. You just remember 3 points of the loan. Number one, what you will check in loan? Whether loans and advances are not prejudicial to company's interest. What is prejudicial? Harmful. When can loan and advance be harmful? Given at less rate of interest, without any terms of repayment, okay, given without security. Second point, whether the schedule of repayment of principal and interest is specified. If yes, are we receiving principal and interest regularly? Logical it is. Third and last, if amount is overdue, state the amount overdue for more than 90 days and whether steps are taken for recovery of principal and interest. So simple. Many people are saying, sir, how do you remember all this? Brain you have to apply. No need to remember. Whether loan is given to any parties, LLP, firm, under section 189, 3 points. Number one, whether loans and advances are prejudicial to company's interest. Second, if loans and advances are given, terms of repayment of interest and principal is stipulated, mentioned. Are we receiving it regularly? Third and last point, if the amount is overdue for more than 90 days, reasonable steps are taken for recovery of the amount over. What to remember in this? Next point. Loan to director, loan to related party, loan to director. In respect of loan investment guarantee, provision of section 185 and 186 are complied with. Now this can never come. Why? What they will ask for 4 marks? Little brain we should have. But still we will remember when loans invoice is given to director, provision of section 185 and 186 are complied with. Till now how many points are done? 4. How to remember? In 1 second we can remember. Biggest item, fixed asset. Little smaller, inventory. Loan to related party, loan to director. Loan to related party, loan to director. Now, fifth point, how to remember. Where do I get money for loan? Where do I get money? From public deposits. Without deposit, how I will take money? But remember, in India, taking deposit is a crime because 99% of the fraud happen when you take deposit. Biggest example, person who was richest at one time, Sahara, Subroto Roy. Okay, he took deposits and vanished like he never existed. So that is why after that this clause came. This all points have a logic, but we cannot go in that much detail. Moving on. If the company has accepted deposits, okay, whether directives of RBI and provision of section 73 to 76 are complied with. See, you cannot accept deposit, but if you accept RBI, if you have taken deposit, whether directives of RBI and provision of section 73 to 76 is complied with. If not, nature of contravention. Okay, if you have not complied, what contravention you have done? Second, if a order is passed against you, order is passed by company law tribunal, national company law tribunal, or RBI, whether you have complied with the same. Over. Simple. If you have taken deposit, whether directives of RBI and provision of section 73 to 76 is complied with. If not, nature of contravention. Okay, next, if order is passed, see, you have done some mischief. If order is passed by company law tribunal, national company law tribunal, RBI, whether you have complied with the order or not. Over. Next, cost record. There are certain items whose cost cannot increase, like there is a salt, okay, there is petrol, all that cost cannot increase. So for them, government has told what? Okay, you maintain cost records because you can earn only 5% profit above this. So many people will say our cost is more. Show us a record. So for critical sector, cost record is maintained. Sir, can you guide what are critical sector? Yes, I could have guide had you come before 3 years. It was in syllabus. Now deleted. But still I know techniques, so I will guide. Set dip, sugar, electricity, telecommunication, drugs, industrial, alcohol, petroleum and gas. These are critical sector. So government is telling cost record. If it applies to you, whether you have maintained the same. Over. Whether maintenance of cost record is given under section 148, whether such records are maintained. Just check. What time pass? This point can come. Why? See, you have to find such point which has no relation with Companies Act. This can come. Statutory dues. Very simple. Whether company is regular in depositing statutory due. Your next question. What is statutory due? PF, ESIC, TDS, okay, income tax, etc. Whether company is regular in depositing statutory dues. If the amount is overdue, okay, then see, is it overdue for more than 6 months on the last day of the year? If it is overdue for more than 6 months, then you have to disclose. Let's take example. One TD, one ESIC, VAT you have not paid on 1st January. So on 31st March, it will be only 3 months. So no need to disclose. Such problems can happen in any business. But if it is pending since what? 1st September, then it's more than 6 months. In 1 minute over, I will show you diagram. Start. See here. Undisputed dues. Are you regular in depositing? Then ignore. No, sir, I am not regular. I forgot. Outstanding. Is it outstanding for more than 6 months on balance sheet? Show. Less than 6 months, ignore. One last time. Are you regular? Ignore. Outstanding on last day of balance sheet for less than 6 months, ignore. Outstanding for more than 6 months, you have to show. Moving on. Second, where dues of income tax, sales tax, okay, is not deposited due to any dispute. Above was undisputed. If the dues are not deposited due to any dispute, amount involved and forum where dispute is pending, we have to mention. Amount means what is the amount and where the case is going on. High Court, Supreme Court, okay, where. Forum where dispute is pending. A mere representation to department is not dispute. See, you just submit to VAT authority, I have a dispute. That is not dispute. Once they accept your request, only then it is a dispute. Okay, very very simple. One, two, three, start. Whether company is divide dues into two parts: disputed, undisputed. Whether company is regular in depositing undisputed statutory dues. Okay, if any amount is outstanding for a period of more than 6 months on balance sheet date, we have to disclose. Second, because a person who will not pay off government, no, he will not pay anyone. Remember, he is worst person. So we are catching the fraud. Second, okay, if the amount is not deposited due to any dispute, amount involved and forum where dispute is pending, fully 5 marks you will get. Moving on, unrecorded income. Many times government, if you want stock market to increase by 20% today, government just has to make one announcement. You can show your black money as white money. We will never ask you question. You can show your black money as white money. We will never ask you question. Directly, all people will deposit money in stock market because crores of black money is there in India. Why is it not coming in the system? Okay, because they are afraid they have to pay tax. Okay, they will get caught. The day this much money will come, entire market will blast. But that will never ever come. That is why they say always have white income. Because if you have black income, what will happen? Money will never be passed to second generation. Maximum you can give your child, but he will also become like you only, useless fellow. It will never go to his child. 101% fraud will happen, but we don't have time. Okay, come here. Whether any transactions which are not recorded as income are shown as income as per Income Tax Act. Okay, Income Tax Act allows sometimes. Then whether it is recorded in books of accounts, you have to see whether any transactions not recorded in books have been shown as income under Income Tax Act, whether now it is shown in books of accounts. Over. This is also another point which can come. Definitely. Repayment of dues. Always remember the buck starts here. The day you don't pay your EMIs, no, is the starting point you are going to do some big mischief in life. So this is a favorite point. Okay, start. Whether company has defaulted in repayment of loan or other borrowings or interest. Company has defaulted in loan, borrowing or interest. Then we have to give following details. Nature of the borrowing, name of the lender, amount not paid on due date, principal not paid or interest, lender wise detail has to be given in case of default to bank, financial institution or government. Simple. If a company has done default in paying loan, borrowing or interest, then what we need to write? No need to remember nature of the borrowing. Second, number of days the delay is there. Okay. Lender wise, then what is there? Interest is not paid or principal. What are the remarks? Lender wise detail has to be given. Second, whether company is declared a willful defaulter by bank or financial institution. If you are a willful defaulter, means you have money but you still don't want to pay. Are you declared a willful defaulter by bank or financial institution? Third, whether term loan, case study can come, whether term loan are applied for the same purpose for which it is used. If not, amount and the non-compliance. Two things, amount and purpose for which it is used. Let's take an example. You took loan for working capital, but you used for other purpose. Loan are applied for same purpose. If not, amount of loan and purpose for which it is used. Simple. Next, whether funds raised on short term are used for long term. Okay. If yes, amount and purpose for which it is used. Same thing again and again. Nature and amount. Next, whether company has taken any funds to meet the obligation. You took funds to meet obligation of subsidiary, associate, joint venture. Give details of the nature of such transaction and amount. Last, whether company has raised the funds by pledging the security of subsidiary, associate, joint venture. Give details and also report if there is default in such loan. Now you will think, oh, so many points and I will not remember. Just remember each point. Case study will be asked for 5 marks. You directly have to type it is clause number 9. Over. 4 marks you will get. So let's understand all points. Number 1. Whether company has defaulted in repayment of loan or interest or borrowing. Then we need to give following details. Person from whom the loan was taken. Okay. Default is done of what? Principal or interest. Number of days, Okay, lender wise detail has to be given. Second, whether company is declared a willful defaulter by bank or financial institution. Third point, whether term loan are applied for the same purpose for which it is used. If not, give detail of amount and purpose for which it is used. Whether short term funds are used for long term purpose. If yes, amount and the purpose for which it is used. If you have taken the loan for meeting the obligation of subsidiary, associate, joint venture, give detail of nature of the transaction and amount in each case. If you have taken the loan by pledging, what is pledging? Girvi. Pledging securities of subsidiary, associate, joint venture, give details of amount and the nature of the transaction and whether there is default in such loan. Over. 10. Whether money is raised by public issue, IPO, FPO. What is number one? If any amount is raised by IPO, okay, then see whether it is used for the same purpose. If not, specify the amount and the purpose for which it is used and whether subsequent rectification is done or not. IPO, you said factory, but you are enjoying in Singapore, okay. So together with delay and subsequent rectification. Put is preferential allotment. Sometimes we don't do IPO because it's a time consuming process. So I know few people, I will call Gautam, Arti, Jatin, Kinjal, Akansha and Shikha. They are very rich. All are chartered accountant, all have 100 crore. I tell them, can you give me 5 crore, all of you? Definitely your share price will increase to 10 crore in 3 years. They are like, let us try. They will look at me. Okay. Maybe if they want, they will give me. That's private placement. Selected raising of money with few people. So if you have done that, whether funds are used for same, they have given for factory, whether funds are used for same purpose. If not, amount involved and purpose for which it is used and rectification done. Over. Whether it is used for same, whether I have done private placement of share or debenture, requirements of 42 and 62 are complied with and funds are used for the same purpose. If not, amount involved and nature of non-compliance. With this, half CARO is done. Shall we read now? Yes, sir. Definitely all 10 clause in 2 minutes you will remember. Many people, shall I skip? Don't even think of skipping. If you write bad, you know how much you get out of 5, 3. It's okay. I don't need 5 on 5 every time. Start. How to remember in 1 second over. 1, 2, 3, start. Biggest item of balance sheet, fixed asset. Little smaller item, inventory. Fixed asset, inventory. Now what I will give? Loan to related party, loan to director. Loan to related party, loan to director. Fixed asset, inventory. Loan to related party, loan to director. Where you got money from? Public deposit. To give loan, you got money from public deposit. Now one technique you have to remember. CSURU. CS, you are my favorite. URU. Cost record statutory due. Cost record statutory due. U. Unrecorded income. Repayment of loan. Usage of IPO, FPO. Unrecorded income. Repayment of loan. Usage of IPO, FPO. So simple. One last time. CSURU. 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 Cost record statutory due. Cost record statutory due. Cost record statutory due. Usage of IPO, sorry, unrecorded income. Repayment of loan. Usage of IPO, FPO. Unrecorded income. Repayment of, one last time. CSURU. Cost record statutory due. Unrecorded income. Repayment of loan. Usage of IPO, FPO. Break of 15 seconds. 10 seconds on. Now all points are simple. Done. Moving on. Fraud, simple. Whether any fraud is done by the company or on the company, whether you have done the fraud or someone has done on you, it has to be reported, nature and amount. Any fraud done by the company or on the company. Yesterday we learned any fraud done under section 143.12. Central government, whether auditor has reported to central government in form ADT4. Okay, how to remember form? It will not come, but still 4 for fraud. 4 for fraud. So ADT 4. Okay. Whether auditor has received any whistleblower complaint during the year. What is whistleblower? Sometimes your own employee or someone who knows you tells there is something wrong in the company. How did Satyam fraud got caught? By whistleblower. Someone from the company only told they are doing wrong. Over. Fraud. Whether any fraud done by the company or on the company is reported. Amount and nature of the fraud has to be indicated. Whether any fraud under section 143.12, if it is exceeding 1 crore, is reported to central government. Whether any whistleblower complaint is received during the year. Nidhi company came in last to last. 3 attempts have passed. Once they have not asked, okay. Once they asked Nidhi company, God knows other what they asked. But moving on. Nidhi company. 2 points are important here. Nidhi company is what? Their main purpose is unofficial bank. Members should benefit. It's not for others, it's for members. Whether Nidhi company is maintaining net owned funds. See, Nidhi company I forgot to tell. In this member come together, deposit money. So they can borrow at later date. All people come together, deposit money. Anyone wants loan, we will give him. Anyone wants, we will give him. Okay. So whether Nidhi company is maintaining net owned fund to deposit ratio of 1:20. What does this mean? See, you can invite deposits from other, but you should have at least one your own money. So for against every 20,000, 1,000 should be mine. 21,000 not allowed. If I want 21,000, my money should be more. So whether Nidhi company is maintaining net owned fund to deposit ratio of 1:20. For every 20 rupees, one should be mine. Okay. Net owned fund to deposits are from outside. 1:20. Whether Nidhi company is maintaining 10% of unencumbered, means without any condition, term deposit to meet liability. Whatever deposits I get, 10% I have to do FD. Tomorrow any member comes, then I cannot say that I give everything loan. 10% set aside in FD. Whether then you accept lot of money from people, whether you have done any default in repayment of interest, deposits or repayment of the loan, give details also. Very, very simple. You might find this is hard, super simple here. Whether Nidhi company is 3 points. Whether Nidhi company is maintaining net owned fund to deposit ratio of 1:20. Second, whether Nidhi company is setting aside out of total deposit 10% of the total deposits without any condition. Third and last, whether it is doing any default in repayment of interest on deposits or repayment of deposits specified. Okay, we need to give details. Over. Related party, whether all transactions of related party are in compliance with section 177, 188. Both are related. See 7788. And details have been disclosed in financial statement as per AS 18. Whatever written in AS 18, you have followed. Simple. Whether company has a good internal audit system matching with size and nature of business. I am as big as Gautam Adani. Is my internal audit team big enough? I will report. Okay. Whether company has adequate internal audit system commensurate with the size and nature of business. Whether reports of internal auditor are taken into consideration by stat auditor. Okay. Do you consider the reports? You need to mention. So simple. Non-cash transaction. ESOP is a non-cash transaction. I sell assets to director for free is a non-cash transaction. Whether any non-cash transaction is entered with director or person, provision of section 192 is compliant. Less chance of coming. Why? Nothing is given. Understood? So non-cash transaction is giving ESOP. Okay. If I have done any non-cash transaction, provision of section 192 is compliant. Registration with RBI. See whether company is required to be registered as a NBFC, non-banking finance company, under section 45IA of RBI Act. Whether registration is obtained. Very simple. Whether company has to be registered under section 45IA, that is as a NBFC, if the registration has been obtained. Second, whether company has done any finance or housing finance activity without valid certificate of RBI. Next, whether company is a core investment company. You know what is core investment? In many big companies, Tata, Reliance, there is special investment company. It does no business except investing the money of all other companies. So whether you have a core investment company as defined by the regulations of RBI, whether you continue to fulfill the criteria of core investment company, If you are an exempted or unregistered core investment company, you continue to fulfill criteria. Sir, what is the criteria? More than 100 crore assets required, but we are not concerned. Okay. If whether there is more than one core investment company, specify number of core investment company. Simple. Let us learn whether company is required to be registered under section 45IA of the RBI Act, whether registration is obtained, whether company has done any finance or housing finance activity without the certificate of RBI, whether company is a core investment company, okay, whether it continues to fulfill the criteria. If it is an exempted core investment company, it continues to fulfill. Whether the group has more than one core investment company, we need to mention that. Cash loss. See, loss is allowed, but cash loss is a crime. How to find out cash loss? Total profit add non-cash expense like depreciation. Whether company has incurred cash losses in the immediately preceding financial year, last year. If so, mention amount of cash losses. Simple. Whether there is resignation of statutory auditor. If so, auditor has taken into consideration the issues or objections raised by stat auditor. No auditor will ever leave the company. Why? He is getting money. If he has left, whether you have taken into consideration his issues. This will only apply if auditor has changed. Okay. Next point. Whether there is any material uncertainty by looking at the company's balance sheet ratio, whether there is material uncertainty relating to going concern. We have discussed this full point, SA 570. Last two. Transfer of unspent CSR amount. Corporate social responsibility is 2%. Okay, if you don't know. In this, there are two things. Spend the same year, but sometimes what happens? We are doing a project. For example, building a school, building a hospital. In that, 3 years time is given. If it's an ongoing project, I need to spend in 3 years. If I don't spend the amount, am I depositing it to government account? Then government will spend. Okay, so read. Whether in respect of other than ongoing project, means which I need to spend every year, company has transferred the unspent amount to schedule 7 within a period of 6 months from the end of the year. Schedule 7 is PM care fund. If I don't spend the amount, I need to give to prime minister PM care fund. Whether in respect of other than ongoing project, company has transferred unspent amount to schedule 7 of the Companies Act within a period of 6 months from the end of the year. Last, whether any amount is remaining unspent regarding any project, okay, I have to spend in 3 years because a project is going on, has been transferred to special account as per section 135(6). Okay, so other than ongoing project, other than ongoing, I need to spend same year. If not, within 6 months, transfer to special account. Ongoing project, I need to spend in 3 years. If not, transfer. Last, whether there is qualification or adverse remark in CARO report of companies included in consolidated financial statement. Indicate detail of company and paragraph number. Simple. I have 8 companies. Any other company of my group, that's consolidation, has got any bad remark in any CARO point, I need to write here that my subsidiary company 4th point was not followed. In my holding company 9th point was not followed. In my associate company 12th point was not followed. Over. We have to learn now. 1, 2, 3, start. First 10 are already done, but let us do it again. Fixed asset, inventory, loan to related party, loan to director, loan to related party, loan. Where you get money for loan? Public deposit, public deposits. Okay. CSURU, cost record, statutory due, unrecorded income, repayment of loan, usage of IPO, FPO. Now, very simple. Fraud. Two people are biggest fraud in this country. Nidhi company related party, Nidhi company related party, fraud, Nidhi company related party, Nidhi company related party, Nidhi company. How to escape from them? How to save? By internal audit. Very simple, 4 logical point. Fraud. Two people are biggest fraud in this company. Nidhi company related party, in this country. Fraud. Nidhi company related party, Nidhi company. How to save? Internal audit. Break. Learn till here. fraud. Nidhi company related party. Nidhi company, how to save? Internal audit. Now very simple. NCCMCC. We are done. NCMC. NCCMCC. Double N double C double M double C. N. Non-cash transaction by director. NBFC. Non-cash transaction by director. NBFC. Double C. Cash losses consideration of issue by outgoing auditor. Cash losses consideration of issue by outgoing auditor. Material uncertainty relating to going concern. M is one only. Material uncertainty relating to going concern. Last, CSR CARO report of group company. CSR CARO report of group company. NCCMCC. NCCMCC. N. NBFC non-cash transaction by director. NBFC non-cash transaction by director. Double C. Cash losses. Cash losses consideration of issue by outgoing auditor. Material uncertainty. Last, double C. CSR CARO report of group company. CSR CARO report of group company. Done. NCCMCC. Non-cash transaction by director. NBFC non-cash. Sorry. Non-cash transaction by director. NBFC. Perfect. Double C. Cash losses. Consideration of issue by outgoing audit. Material uncertainty. CSR CARO report of group company. Done. Last time. Non-cash transaction by director. NBFC. Cash losses. Consideration of issue by outgoing audit. Material uncertainty. CSR CARO report of group company. Last two chapters are pending. See you tomorrow. Bye bye. Good night. Very good morning, guys. Warm welcome to the best lectures of FMSN and audit nationwide. Welcome to your own YouTube channel. Many people are saying, sir, bank audit chapter, very important or not important? Average important. It's not a very high weighted chapter, but it's a very easy chapter once you understand the approach. And that is what we have covered in this revision lecture. What you can expect from this revision lecture? Excellent revision of bank audit. Number two, excellent conceptual clarity on all possible questions. Okay, and what all can come in exam? Excellent conceptual clarity of all concepts. Number three, whichever answer you need to learn, we will be able to learn in the lecture itself. Though it's a revision lecture, but it's beautifully compiled to help you in your preparations in the best way. I hope and wish and pray that you enjoy this lecture and you like this lecture. If you like this lecture, do give a like button and most importantly, share with your friends too. Enjoy this masterpiece, one of the best revision of chapter number 10, Bank Audit. Thank you. Let's start right away. Audit of banks. 1, 2, 3. I will also tell you which all question to read because it's a small weighted chapter. Okay. Why is it important to do audit of banks? See, bank is the most important thing in anything. Crores, billions of rupees is deposited in a bank. In fact, more than my locker, I trust bank. That is why all the jewelry, cash, okay, our digital money, everything is kept in bank because I feel anyone and everyone in this world can do wrong with me, but one person will never do wrong. That is bank. Bank have got tremendous amount of trust, so we need to ensure that trust is maintained. That is why audit of bank is a must by chartered accountant, because we need that assurance, reliability, accuracy that nothing wrong can happen in a bank. So that is why it's a crucial chapter. More detailed, you will study this chapter in CA final. Okay, let's start right away. The most crucial part from which question is expected and we will devote maximum time is audit of advance. What is advance? Loan. See, bank gives lot of loan and takes deposit. What is the business of bank? Take deposit, give loan. Take deposit, give loan. On deposit, they pay us 4 to 6%. On loan, they charge from us 8 to 12%. And the difference is known as margin, known as spread. That is what is income of bank. Okay. So audit of advance is the most important part. Out of every 10 attempts, 7 attempt question is only asked on advance. So we'll finish that first, advance, and then move to the balance chapter. Let's start. Let's do 2 theory question, then lots of practical. Start. First, 2 questions back to back we will do. Number 1 is this question, audit of advance. While doing audit of advance, auditor has to obtain evidence about the following. They will ask in question, okay, while doing audit of advance, we have to get evidence about what? Okay, we will learn. Number 1, amount advance is a loan. Amount included in the balance sheet in respect of advance is outstanding on balance sheet date. Very simple. If in my SBI balance sheet, State Bank of India, amount is 404,200 crore, it should be the same amount which is given as a loan or outstanding to the bank. Amount included in balance sheet should be outstanding on balance sheet date. You will say, sir, 4,200 crore written, the 4,200 crore only no outstanding. No, at times what happens, bad loans, you know what is bad loans, the money will not be received. That loan I give to asset reconstruction company. Let's take an example. Mr. Raj, I am not going to receive 100 crore from Raj. So now in my loan book is 42,000 crore, but 100 crore I am not going to receive. So I might think this I will not receive, I will sell to asset reconstruction company. There are several companies, okay, asset reconstruction. What they will do? Now, of course, I have security. I can sell security, house, gold, etc. But I don't want to take that headache. I tell to asset reconstruction company, give me some amount. They will give me 70 crore. 30 crore loss. No problem. I will recover by giving another loan. Okay. I will tell to asset reconstruction company, now you deal with Raj. I am not concerned. They are like, okay. So my loan book now is how much? 42,000 minus 100 crore. Okay. So whatever amount is included in balance sheet in respect of advance, it should be outstanding on balance sheet date. That 100 crore is not outstanding because it is now loan of asset reconstruction company. They will recover. Second, it should represent the amount due to the bank. Same. Okay. It should be amount due to me and not asset reconstruction company. Third, there are no unrecorded advance. Always remember, I will try to show advance more only, never less. Why? If more loan I will show, my income will be more, interest income. If that is more, profit more, share price more. And based on that only, bank manager's promotion is decided. Okay, so you will try to show more, never less. Moving on. Okay. All advance are supported by loan document and other document. Behind every loan, I should have proper document should be there. Okay. Next. Okay. Basis of valuation of advance. Your securities are transferred to asset reconstruction. Everything is transferred. Now they will deal with that. There is a separate law in CA final. Okay. Basis of valuation of advance is appropriate and recoverability is taken into consideration. See, all loans are valued properly. If I am not going to receive amount, do you know some provision is done? How much, that we will study. Recoverability is taken into consideration. Appropriate provision is made for advance as per RBI norms. What is the provision? For that 30 minutes we will discuss. Moving on. All advance are properly classified, described, disclosed as per recognized policies and legal and regulatory requirement. Very, very simple. So disclosures should be as per RBI norms and Companies Act both. Over. Let us learn this. Is it easy? No. Is it super duper easy? Okay. Let us learn 4 points. Very simple. I want to audit the loan book of SBI. While doing audit of advance, auditor is concerned with, very simple, amount included in advance should be outstanding on balance sheet date. Amount included should be outstanding on balance sheet date. 2. It should be the amount outstanding to whom? Bank. Okay. 3. There are no unrecorded advance. 4. All advance are supported by loan document and other document. Learn till here. Very logical it is. One last time. SBI, you look at the balance sheet. Amount included in the advance is outstanding on balance sheet date. 2. It should be amount outstanding to whom? Bank, not asset reconstruction company. Third, all advance are supported by loan document and other document. Fourth, there are no unrecorded advance. I hope it is clear. Now, 3 points are there. Super duper easy. Valuation provisioning disclosure. VPD. Valuation provisioning disclosure. One last time. Valuation provisioning disclosure. Basis of valuation of advance is appropriate and recoverability is taken into consideration. Means whatever amount you are not going to receive, deduct that. Basis of valuation of advance is appropriate and recoverability is taken into consideration. 2, 2, 2, 2. Now, for that provision, you have to minus for valuation. Appropriate provision is made for advance as per RBI norm. What is the provision? We will learn. Last, advance are properly classified, described, disclosed as per recognized policies and regulatory requirement. Advance are received by bank, given by bank. Of course, who will give loan? Tell me. Bank. We are auditing banks only today. Valuation, provisioning, disclosure, learn. Done. Chalo. Basis of valuation of advance is appropriate. Recoverability is taken into consideration. Appropriate provision is made for advance as per which norm? RBI norm. Advance are properly classified, described, disclosed as per recognized policies and statutory requirement. Over, over, over. I hope this question is over. If they ask you, no explanation inside required. Okay, start. In doing audit of advance, auditor will obtain evidence about following. While doing audit of advance, we will obtain evidence about number one, amount included in the balance, amount included in the advances is outstanding on which date? Balance sheet date. If some money is paid, deduct that. Second, it should be the amount due to whom? Bank. Three, okay, all advances are supported by loan document and other document. Last point, there are no unrecorded advances. Last 3 points, valuation, provisioning, disclosure. Basis of valuation of advance is appropriate and recoverability is taken into consideration. Next, appropriate provision is made for advance as per which norm? RBI norm. Last point, okay. Advance are properly classified, described, disclosed as per recognized policies and statutory requirement. I hope easy. Once you read, it will be super easy. Come here now, second question. These two are theory, then we'll do lots of practical. Back to theory. Okay. Last theoretical question. Auditor will examine internal control over advance. Now you will tell me why to examine internal control. Now you are champion. To determine nature, timing, extent of further audit procedure. Let me explain what is internal control. Is my control good for giving loan? Do I give loan by looking at documents or just like that? If I give just like that, I could become next Yes Bank. Yes Bank, look at the way it's suffering. There's one more company, India Bulls Housing Finance. Worst system they had. Everything. See, banking is not a business where I can grow 100%. 100% growth I did. Then to, you are mad or what? If today I start or I am giving loan, whole India will come here. Tapada. So this is a business where trust is there. Money, if you give, opposite person has to give it back. So here I will examine internal control over advance to determine nature, timing, extent of audit procedure. Tell me, internal control third class, audit procedure detail, internal control strong, no need to check. HDFC Bank, excellent control. Bajaj Finance, champions they are. Even if you want, Bajaj Finance will directly, if you don't pay, come to your home, tell your neighbor, third class person they are. They will humiliate you like mad person. They will tell your child also, your dad third class, look at it. Mom also like this only. How they give birth to such child. Everyone, they will recover their money. For them, money is everything. How rude? Not rude. That is why it became Bajaj Finance. Are you clear? Start. One, rude you or you took money and not paid. Okay. We will see internal control. I hope you understood question. We will see internal control over advance to determine nature, timing, extent. In that, what to see? Number one, advance is given after seeing credit worthiness of borrower and sanction from appropriate authority. All advances are given after seeing credit worthiness. What is credit worthiness? Rating, credit rating. Okay. And sanction is done by credit manager. Usually in bank, there are a lot of credit manager. All necessary documents should be collected. Very good. Compliance with terms of sanction and end use of fund should be there. In loan, you write, I am using it for plant and machinery. For working capital, you have used for the same purpose. Very simple. Next, sufficient margin is there and test check the margin at regular interval. Usually what we do, I am explaining you. We keep certain things in the bank. Stock is kept, gold is kept, okay, shares are kept. Now, against that we get loan, not full, 70-80%. Depends on policy of the bank. So we have to test check whether sufficient margin is there. If goods value have reduced, loan should also reduce. Understood? Sufficient margin is there and test check at regular interval. If securities are given like share, debentures, okay, they are given to the bank, okay, it should be transferred in the name of bank. There is a mortgage deed. Tomorrow if I don't pay, these shares will be of the bank, not mine. Hope it is clear. In case possession of goods is with the bank, you have given stock to the bank, okay, I give my books, bank give me loan against book, my money stuck in working capital. Content of the goods should be test check. If syllabus is outdated, then what's the use of loan? Understood? Syllabus only gone. I have given fake books. I will not repay. In case possession of goods is with the bank, test check at regular interval. Now, to understand these 3 points, we need to understand the brilliant concept. What is that? CC and OD. Understand very nicely. Small break we can take 2 seconds. Welcome back. Cash credit and overdraft is given for working capital. Point number 1. What is working capital? Money is stuck in debtors. Money is stuck in stock. Now what happens? Unless stock is sold, I don't bring new stock, nothing will happen. If I bring new stock, maybe old stock will also be sold, or my money is blocked in debtors. Debtor is not paying money. Now, unless debtor pays, my business will not go ahead. I keep on calling debtor, but he's not paying money. Hope you understood. So I go to bank. Bank, give me some loan. I will acquire new stock. After that, debtor will pay. I will repay you. Please, please, please. My margin is huge. Don't worry. Okay. They might give loan. That is for working capital. Now, how is it calculated? That I want to explain. Cash credit. Okay. Listen very nicely. So I have to go to a bank. Bank will check my financial statements. Okay. And based on financial statement, give me sanction limit. For every account there is a separate sanction limit. Sir, for your account how much it is? I never need loan. Why? Our is advanced business. Okay, first you pay money, only then show will start. So for our business not required, but many business sanction limit is there. You go to bank, bank will say maximum amount of loan which we can give you is 3 crore, 2 crore, 1 crore by looking at your financial statement. It is fixed yearly, in a year once. Okay. Then my DP is calculated. DP ka Padukon? No, drawing power. How is that calculated? Based on value of security. If I have stock of 1 crore, then 60% I will get loan, or 70, depends on policy of the bank. Okay, that's drawing power. How much I can withdraw? Tell me how much I can withdraw. How much my capital is stuck? If my stock is stuck only of 50 lakh, 60% of 50 lakh, 30 lakhs. I will get 1 crore or 30 lakh, whichever is low, that is 30 lakhs. Let's take another example. My sanction limit is 1 crore, but I have stock of 10 crore. 10 crore stock. Now 60% of 10 crore I will get. That is how much? 6 crore. But maximum amount I can get is 1 crore. So how much I will get? 1 crore. Understood? This don't forget. Okay. For CC, 2 words we have to remember. Drawing power, sanction limit. Sanction is total amount of loan can be given. Drawing power is updated monthly based on value of security. If you say you have stock of 10 lakh, DP will be updated. If you say 20 lakh, DP, drawing power updated. I hope you understood. Okay, moving on. See here what is given. Now all points are simple. Drawing power should be updated based on value of security hypothecated. If my value of security reduced, DP will reduce. All accounts should be within drawing power and sanction limit. Very true. All advance should be reviewed once a year. But large advance review more than once a year. Now your next question. What is large advance? What is large advance? 10 crore or 10% of the aggregate advance of the branch. Okay. Whichever is lower. Not understood at all. Only MCQ can come. See, if any advance above 10 crore, directly it is large advance. But that limit can be lower also when your total branch advance is 90 crore. Branch total loan 90 crore. What's the 10% of that? 9 or 10, which is lower? 9 crore is large advance. Okay. Above that, all advance check more than once a year. Other advances once in a year you can check. Let's take another example. Okay, our total advance 200 crore, 10%, 20 crore or 10 crore, which is lower? 10 crore. So that's a large advance. What is large advance? 10 crore or 10% of the aggregate advance of the branch, whichever is lower. This question is very much okay. Better they will ask practical situation according to me. But still, we have worked so hard. Let us finish it off. Okay, start. Don't forget name of question. Auditor will see internal control over advance to determine nature, timing and extent of audit procedure. One last time. We will see internal control over advance to determine nature, timing, extent of audit procedure. Try to remember only 4 points. Rest all are easy. Advance is given after seeing credit worthiness of borrower and sanction from appropriate authority. Very simple. Second, all necessary documents should be collected before loan is given. Very simple. Third, compliance with terms of sanction and end use of funds should be ensured. For this I gave and you use the money for that only. Very good. Sufficient margin should be there and test check the margin at regular interval. Only remember 4 points. Only 4. One last time. Advance is given after seeing credit worthiness of borrower and sanction from appropriate authority. All necessary documents should be collected before the loan is given. Third, compliance with terms of sanction and end use of the fund should be ensured. Very good. Sufficient margin should be there. Test check at regular interval. Small break of 10 seconds. Over. Now, 3 words you have to remember. Security goods, DP. Security goods, DP. All time pass. If securities are given like share, debenture, ensure it is transferred in the name of bank. Goods. In case possession of goods is with the bank, test check at regular interval. Goods. DP. All accounts should be within sanction limit and drawing power. Ensure that drawing power is updated monthly based on value of security hypothecated. So simple. Last point to general. All advance should be reviewed once a year. But large advances more than once a year. Super duper easy. See, security goods DP is the super time pass. In case security is given in the form of share, debenture, ensure it is transferred in the name of the bank. Goods. In case possession of goods is with the bank, test check at regular interval. DP. All accounts should be within sanction limit and drawing power. Ensure drawing power is updated monthly based on value of security hypothecated. Last, all advance should be reviewed once a year. Large advance more than once a year. 5 point though I think everyone can remember. Last point I am not showing, you know it. Try to remember 5 points. Small break of 10 seconds maybe. Only remember 5. Chalo, time up. 1, 2, 3, start. Security goods DP, that will come later. Auditor will see internal control over advance to determine nature, timing, extent of audit procedure. Okay, number 1. Advance is given after seeing credit worthiness of borrower and sanction from appropriate authority. All necessary documents should be collected. Compliance with terms of sanction and end use of the fund should be ensured. One last point. Sufficient margin should be there of goods and test check at regular interval. Now 3 points. If you remember this 3 also done. Security goods DP. If securities are collected in the form of share debenture, we have to ensure it is transferred in the name of bank. In case possession of goods is with the bank, test check at regular interval. Last 3 points though no one wants to remember, still he will remember. We have to ensure all accounts are within sanction limit and drawing power. One more point, DP. We have to ensure that drawing power is updated monthly based on value of security hypothecated. All advance should be reviewed once a year, but large advance should be reviewed more than once a year. Over these 3 points and any 2 points done. But now, are you ready? Chapter is starting now. According to me, if intelligent person, they will ask this practical only something. They will not ask this rubbish question looking at recent ICI. unless they want that this time failure results should increase. Okay, so we wanted half an hour warm up of 2-3 questions, but now half an hour is most important. 70% chance question will come from here only. Okay, so now I will explain all situation. The patapat. Okay, concentrate. Since last 3 attempts, since new syllabus, they are not asking any single thing except this situation. Start. 1, 2, 3. Patapat, I will revise. When does the account become NPA? Now you will ask me a question. What is NPA? Non-performing asset. Okay. 70% chance question will come from here. We'll finish exactly at 9 o'clock and then we are again back to theory questions. Okay. When does the account become? But why relevant NPA? See, for bank, loan is. Tell me, loan is a asset or liability? Reply fast. We are getting too later, by the way. Loan is asset or liability? Those who don't know, loan is an asset. If you don't know, loan is an asset. If I am regularly repaying to bank, I am a standard asset. But the day I don't make payment, I become an NPA, non-performing asset. Standard asset income is recognized on accrual basis. NPA is recognized on cash basis. Are you clear? Because I'm not paying. So bank would want my account never turns out NPA. What I would want, that is irrelevant. Why? Because we are auditing bank. And bank would want my account never turns NPA. Okay, because the day it turns NPA, they have to do a provision because I am not repaying. Due to provision, their profit will reduce. Profit reduce, then share price reduce. Share price reduce, then lot of things reduce. Let's take one brilliant example, because if you understand little logic, no, then for me it is very easy. Utkars Bank. This, from where you bring all this? Fully free I am. No work in life. See, look at the loss. 300 from 500 crore profit, they got 353 crore loss. Kismat palati. From 500 crore, how you can fall to 353 negative? It's the power of NPA. The day people don't pay, oh my God, you are gone. I hope you understood. So we never want this. Okay. Now everything you will understand. Start. First, we are talking about term loan or bill discounted. When does it become NPA? When I don't pay interest or principal remains overdue for a period of more than 90 days. If I don't pay interest, I don't pay principal, or both, either interest or principal, if I don't pay for 90 days, the account becomes NPA. What is NPA? Non-performing asset. Why is it important? After that, income will be recognized on cash basis only. Understood, sir? Now, after NPA, how provisioning is done? Okay. Had it been little old syllabus, they would ask question in this. How calculation is done. But in book, it is not given. From advance account also removed. So I feel question might not come. But still, to be on safer side, we will do it. Start. Now, NPA also has several categories. 3 categories are there: substandard, doubtful, loss asset. See, if you are a bad person, also no, there is category in bad person. Bad, baddest, worst. Are you clear? Same way. You are NPA. Here you are substandard, doubtful, loss. What is substandard? First I am explaining. Would be the one which has remained NPA for a period of less than or equal to 12 months. So if you remain NPA for less than or equal to 12 months, okay, you have to do provision of 15% of the loan. Second, after 12 months, you move in another category, that's doubtful, which is remained substandard for a period of 12 months. So after 12 months of NPA, okay, you are in doubtful, which has remained NPA for a period of less than or equal to 12 months. In doubtful also 3 categories are there. D1, doubtful up to 1 year. Secured portion provision is 25, unsecured 100. Doubtful 1 to 3 years. Okay, secured 40, unsecured 100. More than 3 years, 100. In between, if internal auditor, external auditor, or management of bank feels we are not going to receive money, it is a loss asset. If it is identified by bank, internal, external auditor as amount which is written off, okay, then directly 100%. Frankly speaking, nothing understood. Same here. Now you will understand. Come here, baby. Let's assume there is a loan of 1st January 2024. Understood this much? I gave you loan. Okay. You are not repaying on due date. It will not turn NPA. We will still recognize the income. I hope you understood. Now let 90 days pass. Okay. After 90 days, if I don't pay interest or principal or both, I turn NPA. Now, just to simplify calculation, we are taking 3 months as 1st April. In exam, if they ask, we have to calculate. I hope you understood. So 1st April, I will become NPA, non-performing asset in the books of bank. This much understood. Again, I cannot explain, so type Y or N. Fast. This much understood. Moving on. Again, if you are telling me again start, then very difficult for me. Okay. Yes. I hope you understood this much. Now, as soon as I turn NPA, first 12 months, substandard asset I am would be the one which has remained NPA for less than or equal to 12 months. 15% provision will happen. For simplicity, loan is 100 crore. So tell me 15% is how much? 15 crore. 1st April 24 to 1st April 25, my provision will be 15 crore rupees. Shall we go ahead? Yes. Now still you are not paying. So from bad, you became baddest person. Come here. Come here. Now you are doubtful. When do you turn doubtful? When you are NPA for a period of less than or equal to 12 months. After 12 months, which the asset which has remained substandard for a period of 12 months goes into doubtful category. Which category? Doubtful category. So now you are in doubtful category. Any doubt? No doubt whatsoever. Okay. Now, 3 categories are there in doubtful. D1, D2, D3. Are you clear? After 12 months only you. Asset which has remained substandard for 12 months goes in doubtful. In doubtful, if it is up to 1 year, then 25% unsecured 100. 1 to 3 year 40 and more than 3 year 100. Percentage in 1 second I will make you learn. Don't worry. Okay. Come here. So 12 months I did not pay. 1st April 25 to 26. How much was provision? 25%. But 15% is already done. Loan is same. See, 15 is already done. So how much extra required? 10 crore. I hope you understood. Total 25. Secured portion we are assuming. Okay. 10 crore. Now D1. D2 is what? Which remains doubtful for 1 to 3 years. 1 to 3 years. So 1 year I was in substandard. 1 year I was in doubtful one. Then for 1 to 3 years, if you remain in doubtful, okay, then it is D2. D2 category. In D2, how much is provision? 15, 25, 40 it is here. 40. But out of 40, baby, this is during 2 years. 1 to 3 years. 25 is done. So how much extra? 15. But 15 will be spread during 2 years. 7.5, 7.5. If after that also I don't pay, full balance amount loss asset. 60 crore will be D3, 100%. I hope you understood. I don't think question will come, but still if it comes. This point again, very good. How much provision is done till now? Sayed, reply fast. How much provision is done till now? How much percentage is done? You have to see this diagram and reply. 15 is done. Absolutely wrong. 15 was done in first category. Then 25% is done. Okay. So 25 means 10 extra I did. This much you understood. This much you understood. Yes. Now moving on. 1 to 3 years is D2. After that also I don't pay. So total 40 I have to do. Yes or no during 2 years. But how much is already done? Reply. How much is already done? Sayed, 25. 15 is saying no. We have done 25. 15 we did extra, 10 extra, 25. 15 extra we have to do. Spread it during 2 years. Why? Because D2 is 1 to 3 years. You can take in first year also, better to spread now. So we spread 7.5, 7.5. Understood now? Small doubt. If they can take deduction after D2, if they can take deduction after D2, they can do fraud. What deduction? Perfectly got it. Not understood. After that, whatever is pending, loss. What deduction they will take? Everything we have to check. That is why you are auditor. Arey, you have to. Why are you learning all this? Not for fun. To check in bank. Okay. Now in 1 second we will remember. Array NPA means you are third class person, but for third class person, three types of third class person can be there. Substandard would be the one which has remained NPA for less than or equal to 12 months, 15%. Doubtful would be the one which has remained substandard for 12 months. In these three category, D1, D2, D3, D1, 25. D2, 1 to 3 years, 140, 100. In Hindi we say 15, 25, 40, 100 over. 15, 25, 40, 100. 15, 25, 40, 100. 15, 25, 40, 100. 15, 20, 15, 25, 40, 100. 15, 25, 40, 100. Any doubt? Any doubt? They can simply ask what is provision for this, then tick mark. I don't think question will come. Shall we go ahead? Super ready? In between, if auditor feels, bank feels it is a loss asset, full 100, full 100, full 100. Okay. Now, agriculture loan. For agriculture is the priority sector of India. Tell me yes or no? Yes. You only have to recognize when does account become NPA. Once it becomes NPA, every time this chart will be followed. But that I think they will ask in CA final. Something should be left, no? Okay. So agriculture loan. There are two types of loan in agriculture: short duration, long duration. For agriculture, that there is how to know it's short or long. Period from sowing to harvesting is less than or equal to 1 year. What is sowing? The time you put crop and the time you get fruit. Okay. If the period is less than or equal to 1 year, it's a short duration crop. What is long duration? Good definition. All except short is long. So if the period from sowing to harvesting is more than 1 year. Now, don't try to remember which are short duration crop and which are long duration. Some regular batch student asked, so we have written the list here. But immediately forget. Don't read also. Because more knowledge dangerous. Tell me, short duration crop, he doesn't pay the amount. 90 days NPA, I know the rule, 90. No. That is for which one? For term loan. Bill discounting, it is 90 days. For agriculture loan, what's the use? 2 crop season we will wait. So for example, your due date is 1st January, you went, hello, pay. As soon as you went there, sir, by mistake, rain came too much, rain came too less. No problem. Wait till 1 crop season, no, 2 crop season, because crop season is 4 months. Sir, if crop season 11 months, then 22 months we will wait. Till 2 crop season, if they don't pay, it is okay. Account will not be NPA. Agriculture it is, okay. So after 2, year 4 months, so add 8 months. 1st January to 8 months is 1st September. It will become NPA. Then again same story. Substandard doubtful loss. Sir, this side. What about long duration? These are crop season is more than 1 year. More than. Here we cannot wait for 2 seasons. The day we go, due date, 1st January, pay. Rain did not come. We will wait for 1 crop season only. Why? It's already more than 1 year. If we wait 2 crop season, then life only gone. After 2 crop season, he will forget, or which bank? Okay. 1st July. So we'll wait for 1.5 years, 1st July 2024. Nothing to remember except this much. Any doubt, reply fast. Only this much to remember. Whoever has more knowledge, problem. No doubt, then I will go ahead. Fast. I hope there is no doubt. Okay. So short duration crop is crop season less than or equal to 1 year. We will wait for NPA, 2 crop season. Long duration crop season is more than 1 year. I will wait just 1 crop season. Everything will be given there. Okay. Time duration will be given. You just have to calculate date of NPA. Brilliant MCQ can come. Brilliant. 6 marks. All situation they will come. I think they asked in last to last exam. Last exam they asked some. Start. CCOD. Cash credit or overdraft. I already explained how is CCOD calculated. Okay, that all I explained. Here also, when does it become NPA? Another category. When account is out of order for more than 90 days. Your question next. Sir, when does the account become out of order? Okay, 3 cases. Amount withdrawn is more than sanction limit or drawing power. Let me explain this point. Come here. Your CCOD was 5 lakh. How is it calculated? I hope you remember. It's lower of sanction amount or DP. Just for knowledge. You utilize 4.5 lakh CCOD for working capital. How much balance pending? 50,000. Now, a check got issued 1 lakh. Ideally, bank will not allow that check. Okay, bank will go, hello, Mr. Haris, 1 lakh rupees check issued. Now balance only 50,000 remaining CCOD. We will not issue. I am customer since 22 years. ICICI Bank shall I shift? I will repay in 2-3 days. Don't worry. Directly give party. Don't reject my check. Like that they fight. Okay. So now your account became out of order because you have withdrawn the amount more than CCOD also. Allowed. Are you clear? But this out of order should not remain for 90 days. Are you clear? Tell me one last time, when does an account become NPA in CCOD? When it is out of order for more than 90 days. When does it become out of order? When amount withdrawn is more than sanction limit or drawing power. I hope you understood. Second, where there are no credits, I am not giving amount only, or credits are not enough to cover interest also. If I am paying the amount, forget CCOD, interest portion also I am not paying. 3 points you have to remember. MCQ may come. Tell me, in CCOD, when does it become NPA? When account is out of order for more than 90 days. When is it out of order? 3 cases. Amount withdrawn is more than sanction limit or drawing power. Case number 2, where there are no credits. Case number 3, okay, where credits are not enough to cover interest portion also. Credit are there, but not covering interest also. Then my account is out of order. One last time, in CCOD, when does account become out of order? For more than 90 days, then it is NPA. When does it become? Amount withdrawn is more than sanction limit or drawing power. 2, there are no credits in the account, or credits don't cover interest portion also. Moving on. Now all are 1 minute situation. Tell me, I take 5 loan from ICICI Bank. Car loan, home loan, game loan, personal loan, gold loan. 5 loan taken. Only one loan I am not able to pay EMI. Only one loan. 90 days have passed. All loan will become NPA. Why? Other to I am paying. You have to look at borrower. His intention, why is not paying for that loan? Okay, tomorrow he will default in other also. That person will become NPA. We have to look at the person. We don't have to look loan wise. We have to look person wise. Okay, so if that person is NPA, he will become. Of course, if he has taken loan from other banks, those are not NPA. I will become NPA in book of HDFC Bank. For ICICI, I can take a loan. Moving on. Not account wise, borrower wise. If one loan is NPA, all are NPA from same bank. Next to very time pass. Okay. Mukesh Ambani net worth 20 lakh crore. Very good, sir. Congratulations. Mukesh Ambani forgot to pay one EMI and 90 days have passed. Will Mukesh Ambani become NPA? Yes. In the textbook, it is not written interest or principal except Mukesh Ambani and Ratan Tata. No. Everyone, you bank will call you unlimited times. If you are Mukesh Ambani, become like Mukesh Ambani. Repay. Okay. If you are not paying, irrespective of net worth and materiality, you will become NPA. As I am teaching you, every situation is asked for one mark. Last to last exam, I think so. Or maybe before 2 exams. Maximum in 3 years. Every situation. Consortium. What is consortium? Sometimes 5-6 banks come together and give a loan. Why like that? I cannot give, I don't have that much money. So there's one main bank, that's the lead bank, that will do coordination, SBI. All others are member bank. They are giving together 1000 crore loan to Reliance. So Reliance cannot take from so many people. A lot of compliance. So better take from one bank. Okay, SBI. SBI will tell other bank, you also participate. Give me loan, I will give to Reliance. You will get your EMI. Very good. Now, Reliance is, see, all these are member bank and this is the main bank, lead bank. Now, Reliance regularly paying EMI to lead bank. Reliance is paying to ICICI, dhapadhap, take. But SBI is not paying the share to member bank. ICICI, HDFC, PNB, IndusInd. They have also contributed. SBI doesn't pay to member bank. Tell me, will this account become NPA? Yes or no? Yes. Why? Arey yaar, you have to look at your books, not other books. Your best friend passed. You also passed. No. You have to look at yourself. Are you clear? If I am not receiving the account, I will become NPA. So it will be NPA in books of ICICI, HDFC, PNB, IndusInd. Why? Because they are not receiving their share. I hope you understood. Member book will become NPA. One beautiful idea, if you don't know, bank employee. If you are ever working in a bank, you get loan at discounted rate. Why? So if market rate is 9%, you get at 4%. Why? That's the benefit of working in a bank, right? Okay, with this bank, what benefit they will get? You will never leave the bank. Why? Because of cheaper loan. Many people stay in bank just due to this reason. Why loan is cheaper? Because there is no doubt in recovering amount. Why? Because it gets deducted from your salary only. So your salary 1 lakh, 40,000 EMI will be deducted. You will get 60,000. Now your criteria of 90 days will not apply. It will become NPA from day one. Why? Anyways, money is deducted from salary. And in spite getting salary, you are not paying the amount. No 90 days. Immediate NPA from day one. Remember. Why? Intention. You got salary and you are putting mail. This time don't deduct. My child not well. Hospital we have to go. All this not allowed. You stay in hospital only, but loan repay. For bank employee, same day it will become NPA. Because anyways you are getting salary but you don't want to pay loan. Intention bad. All this situation I need to remember. Yes. Only one page is given in Magic Book. Read everything covered. Moving on. Advance against Kisan Vikas Patra, Indira Vikas Patra, NSC, okay, National Savings Certificate. Several schemes are there in government, okay. For example, you invest insurance policy, Ayushman Bharat. Government keeps on introducing all these schemes. Now, here loan you get based on policy value. So, policy value is 1 crore. They will give you loan of 60 lakh. Now, EMIs are there, of course. Okay, you have taken loan against LIC policy, Ayushman Bharat, okay, etc. Now, EMI 5 lakh, 5 lakh, 5 lakh. They are saying it will not become NPA till the time surrender value is available. What is surrender value? If I have a policy, I tell to that LIC agent, I will not pay EMI from tomorrow. They will say, then you will get 20 lakh rupees only. That's surrender value. If you stop paying EMI, you get very less portion. Okay. If you don't pay, you have to pay for 10 years. After 5 years, you say, I will not pay. So basic amount, certain small amount you will get. That's surrender value. Till the time that value is available, account will not become NPA. So 20 lakh is surrender value. Okay. EMI 5 lakh 5. 4 EMIs will not become NPA. Why? Because surrender value available. From 5th EMI, if I don't pay that also for 90 days, it will become NPA. I hope you understood. Okay. Surrender value is included in loan amount. Loan amount is absolutely different. Surrender value is value of policy. Tomorrow I don't pay, I will still get certain amount. Are you clear? Okay, that's surrender value. So till the time surrender value available, it will not become NPA. After that, it will become NPA. Okay, if I don't pay that EMI for 90 days. Moving on. Very easy, very simple. This is very good. Value of security. I had given gold. I had given any security. So security value fall drastically. Okay. Now, if the value of security fall below 50%, directly it will be doubtful asset. Okay. No need to do classification substandard. Direct doubtful. Example, I gave houses security. That house value fell by 90%. NPA is straight away under doubtful category. Sir, my huge doubt. Value of security fall below 10%. People say this is Bhoot Bangla. Washed house. Are you clear? Means 90% fall is there. Sir, you told 10%. Value remains below 10. Means 90% fall. Directly loss asset. Directly loss asset. 1 mark question can come. Brilliant. Those who have read only can answer. One last time, value of security fall below 50%, direct doubtful. Value of security fall below 10, means 90% fall, loss asset. Oh! Sometimes what they do, okay, when your account is becoming NPA, no, biggest pressure is not on you, okay, but the biggest pressure is on whom, manager. Bank manager bamboo. every day. Hello, call that account, call. So he will call you 20, 25 times. In the last, you still don't have money. So he will tell, sir, we will give you one more loan. With that loan, why don't you repay? Brilliant idea. Wow. Yes, bank used to do this. Okay, we will give you one more loan. With that, you repay all loan. 89 days are there. It will not become NPA. Then this loan, we will again to give another loan. Don't worry. If such cheap thing is done, just near the balance sheet date, you are seeing fresh credit coming out of the bank. They are giving you CC loan, OD loan to prevent old NPA. It will be deemed NPA. Deemed NPA. Why? You are doing cheap thing. This cycle will keep on increasing. You are causing nothing but harm to bank. This person will not pay old loan also, new loan also. Very cheap person, directly NPA. Sometimes what these people have understood all this because all our student. Okay, so they give now loan to wife. If you feel suspicion is their wife loan given to repay husband loan, still NPA. This I am telling future CA final. Regularization near balance sheet date. It will be deemed NPA just at the time of NPA. If customer is getting offer for CCOD and there are few credits only, okay, or credit is just near balance sheet date to prevent NPA, it will be deemed NPA. You have to look at intention. Very last point, we are done. Brilliant. Government guaranteed advance. Two people will give guarantee. State government, central government. State government gives guarantee. Stalin, Tamil Nadu, Stalin, okay. Stalin, whatever name, I don't know, okay. Or you can take here Gujarat also, but forget. Stalin only we will take. If Stalin is giving guarantee and for 90 days you are not paying the amount, state government guarantee, we will repay, don't worry. Overdue for more than 90 days, it will become NPA. Stalin has no value. Tamil Nadu government no value, Gujarat government no value, Karnataka government no value, all state government no value. Why? Because it will become NPA. Now come here. Sir, what if यह है मोदी की गारंटी, नरेंद्र gives guarantee, Amit Shah, central government. First you look, is it overdue for more than 90 days? Yes, it will not become NPA. Why? Central government, respect, respect. No NPA unless such guarantee is cancelled by central government. But now comes the real twist. Though it is not NPA, it will be shown as standard asset, but income will not be recognized on accrual basis. It will be recognized on cash basis only. Not at all understood. Same here. Come here. First, did you understand this much reply? Standard asset is recognized on accrual. NPA is recognized on cash. This everyone knows. What is accrual? Accrual. What is cash? Cash. This you know? Very good. Now, if central government gives guarantee, the account will be standard only. Oh, so balance sheet side, benefit will be there. It will be standard. But income will be recognized on cash only, not accrual. So benefit is only given for asset side, not income recognition. So benefit is given for asset classification and not income recognition. Why such cheap thing? It's called fake respect. If I meet you, what you will tell? Oh, sir, very amazing teaching. Oh, I love you. Wow. As soon as I go, third class. Teaching doesn't know. Only shortcut and all this. Not good teacher. Understood? Same like this. So benefit is given for asset classification, not income recognition. Okay, let us read. Though it is not NPA, income will be recognized on cash only. Exemption is given for asset classification and not income recognition. 3-mark question, as far as I remember, just before 2 exam. Now, whatever you want to ask me unlimited. Everything taught. Eighth point, ignore, it doesn't come much. Ignore. Till the time surrender value is available, it will not become NPA. Eighth, ignore. Eighth, not good. Eighth point, they have only not given clarity. No NPA. Mic is off, voice. Done everything. Any other doubt? No NPA, but for income recognition criteria of NPA. Yes, true. So it is a standard asset, but income will be recognized on cash basis. Yes, income recognition criteria will apply, not for asset classification. I hope all situation understood. 90, not 90, more than 70% chances something will come from here. Nothing else will come. I hope you understood. Now shall we move to other questions, small ones? Okay. Patti, let us finish in 40 minutes. If by mistake this doesn't come, we are getting prepared. Rest all the charts are theory. Okay. So I have explained you what. I am not reading this again. This entire chart I explained you. Part 2. I am not reading this. It will be time waste. Moving on. First question, regulatory framework, it will never come. I will also exclude in few 2-3 attempts. I will wait. Okay. Yes, last I will teach DP. See, there is one question which came for last time 5 marks. That I am not teaching again. Why? Because it will not come again. In the end, I will tell you how to calculate DP. In the end, okay, because that is less important. Of course, for only one attempt, so that is why I will teach. Regulatory framework, you can also ignore. I am also ignoring, but still I will read once. Okay. Which laws are applicable to bank? Now they will ask this, not at all. Why? Only name given. Banking Regulation Act apply, RBI apply, Companies Act apply, SBI 1955 apply, SBI Subsidiary Act apply, Banking Company Acquisition and Transfer of Undertaking Act apply, RRB apply, IT Act apply, PAMLA Act apply, SARFASI, Securitization and Reconstruction of Financial Asset and Enforcement of Securities Interest Act. What is this act first of all? When I sell bad loans to asset reconstruction company, how it is done. Okay, but not SICCA Act will apply, Payment and Settlement Act apply. What is SICCA? How credit information companies regulation, how you get rating, A rating, B rating, C rating, like that. Ignore. First question, this can come. Whichever can come, I am only teaching that. How you come to know these questions can come? Since 3 attempts, nothing they are asking except only practical stuff. But these are given in module, so I feel only this can come. First potential question, we did 2, this is question number 3. Peculiarities in a bank audit, cute question for 4 marks. What are peculiarity in bank audit? Strictly time pass, very easy. Wide geographical spread of bank network. Bank network very big. In that, what the network they do? Large range of product and service offered. Okay, product service are used, saving account, current account. Due to which huge volume and complexity of transaction is there. Absolutely. So many product volume. Extensive use of technology bank does. Very good. Strict vigilance by regulator. Bahubali of bank, RBI very strong. Over. Just learn once, inside no explanation given. What are peculiarity in a bank audit? Peculiarity. Number 1. Wide geographical spread of bank network is there. Bank network very good. Okay. Wide range of product and services offered. Okay. In that large range of, huge volume and complexity of transaction. Strict vigilance by banking regulator. Extensive use of technology. Peculiarity means unique points in bank audit. Tell me, in bank audit, what is unique? Wide geographical spread of bank network, large range of product and service offered, huge volume and complexity of transaction is there. How such huge volume? Extensive use of technology. Strict vigilance means supervision by regulator, Bahubali, RBI. Just learn once. God knows why they included this in module question. Very time pass. Last time. Peculiarity in bank audit. Wide geographical spread of bank network. In that network, what they do? Large range of product and service offered. Very good. Huge volume and complexity of transaction is there. How? Due to extensive use of technology, strict vigilance by banking regulator. Again, a reading question. Various audit reports are issued in bank. Number one, stat audit report, we know. LFAR, every bank has to prepare long form audit report. Okay. For example, for other people we have CARO. For bank we don't have CARO. We have LFAR. Before 30th June it has to be submitted. I will show you. Come here. Terms of appointment of auditor of private sector bank, public sector bank, foreign bank require auditor to furnish LFAR. MCQ can come, it has to be submitted before 30th June. What matters are included in LFAR is specified by RBI. Like we have CARO 21 points, LFAR is there for bank. Moving on. Bank also have to report on tax audit report. We know that this will come in CA final. We have to report on internal financial control. Yesterday only learned, okay, and compliance with SLR, CRR, statutory liquidity ratio, cash reserve ratio. Nothing can come. Moving on. Now there is bank audit approach. Okay. This question is not in module, but I like this question. So definitely I feel it can come, but track record is 0. Never come. While studying controls in a bank, one last time. While studying controls, remember there are two similar questions. Number one, internal control over advance that we studied. This is general controls, not only advanced, general control. In bank, while studying control, we have to keep in mind following things. Let us read. Don't forget question. While studying controls in a bank, we have to study this. So bank audit control approach. While studying controls in a bank, internal control over advance, that will come. This question has never come. Only I feel it is point wise, so it can come. But track record is 0. So we will read once, but you read like that only. Based on nature and thrust of operation, nature of adverse feature, level of compliance, etc. Following questions have to be kept in mind while undertaking control activities. Okay. So while auditing controls of the bank, not internal control over loan, controls of the bank, control activity, I will keep in mind following things. Very simple. Who, what, when, where, why, how. Just remember 5 points. Who, what, when, where, why, how. Who, what, when, where, why, how. Simple. Number one, who perform the control? Does he have the authority and knowledge to perform the control? Example, who approved the loan? Shreya. Does she have authority and knowledge? Is she qualified enough? Does she have banking rules? You just have to ask question. If answer comes yes, strong control. So substantive will be less. Understood. Who? Two question. Okay. Who perform the control? Does he have authority and knowledge to perform the control? Simple. Learn. Very simple. In 2 minutes, we'll finish this. Second, what is the evidence that the control is performed? Tell. Shreya has approved this loan. What is the evidence? Is there sign of Shreya? Is there a software? Understood. Second, what is the evidence that the control is performed? Question you have to ask. Third, when and with what frequency is the control performed? What time she does the work? With what frequency? Every loan is approved. Is the frequency enough to prevent or detect and correct material misstatement? Every loan does she approve? When and with what frequency is the control performed? Is frequency enough to prevent or detect and correct EMAM material misstatement? Break 5 seconds. Just read once. If you are able to remember, excellent. No, ignore. Over. Where is the evidence of control performed? For how long is it retained? Is it available for auditor? Simple. Is there a file where loans are approved, or is there a software? What is there? Okay. Where is evidence of control performed? For how long is it retained? Is it retained for 7 years? Is it available for auditor? Frequency means every loan is approved, Suvidha, or only few? Every loan approved. Small loan also Shreya approves. Then where is evidence of control performed? For how long is it retained? Is it available for auditor? Second, why is control performed? What type of errors are prevented or detected and corrected? Simple. Why is control performed? What type of errors are prevented or detected? Why control? So unauthorized loans are not sanctioned. If unauthorized loans are not there, NPA will also not be there. Last. How is the control performed? What are control activities? Can the control be bypassed? Can the bypass be detected? How are exceptions identified? What is time frame for resolving exceptions? Everything you know. Yes. I have read 2032 times. Start. How is control performed? Means whenever any loan is approved, how is it approved? Or let's take another example, ATM. What's the control there? PIN and ID pass. PIN is there and card. So what are control activity? PIN and card. Can it be bypassed? Yes. Someone can go without a card in ATM. But bypass will be detected. Okay, because he doesn't have PIN, so we'll detect it. How are what is deviation? Which doesn't happen daily. Okay, so deviation is what? Money did not come, balance deducted. Money did not come, balance, deviation. What is the time frame for solving deviation? Then you get refund in 48 hours. Bank will reconcile. Oh, account minus, but money did not get. Okay, file not matching. Refund. How is control performed? What are control activities? How are exceptions identified? What is the time frame for solving exception? How are deviation? Okay, one last time. How is control performed? What are control activity? Can control be bypassed? Can the bypass be detected? How are exceptions identified? What is the time frame for solving exception? Over. More I look at this question, more I feel now it will not come. But still okay. We have included, so let's. Teaching this since so many attempt, track record 0. Over. One last time we will do it. Okay. Don't forget question. Bank audit control approach. Just write 2 points. Who, what, when, where, why, how. Who, what, when, where, why, how. Over. Slowly we will go. Who perform control? Does he have authority and knowledge to perform the control? What? What is the evidence that the control is performed? When? When and with what frequency is the control performed? Is the frequency enough to prevent or detect and correct? EMM, material misstatement. Where is evidence of control performed? For how long is it retained? Is it available for auditor sub? Why is the control performed? What type of errors are prevented or detected through performance of control? Last. How is control performed? What are control activities? Can the control be bypassed? Can the bypass be detected? How are exceptions identified? What is the time frame for solving exception? Over. Better questions are there, so we are not doing this. This is also part of module question, but I don't know such small question how they can ask. But still, how is form and content, format and content? Okay, as per section 29 of Banking Regulation Act, every banking company has to prepare balance sheet and P&L as per third schedule. Schedule 3 we know. As per section 29, every banking company has to prepare P&L and balance sheet as per schedule 3. Form A contains format of balance sheet. Form B contains format of P&L. How to remember? Balance sheet is ISAB. ISAB what? The calculation of several years. Balance sheet is not 1 year, it's several years. We write balance sheet as at 31st March 2026. It's several years. So that is why Form A. P&L is only 1 year. So Form B. Cheap logic to remember. One last time. As per section 29 of Banking Regulation Act, every banking company has to prepare balance sheet and P&L as per third schedule of the Act. Form A contains format of balance sheet. Form B contains format of P&L. Over. So from here, I hope everything I explained. Moving on. Come here. This can definitely come for 1 mark. Okay. Or they can ask all 6 situations. Why? Because auditor is involved. Okay. Let us start. How is auditor appointed? Don't learn. Logically understand. Banking company. Tell me HDFC Bank, ICICI Bank, who will appoint auditor? Appointed by shareholders of the bank, but prior approval of DAD is needed. Who is DAD? RBI. Over. Appointed in the AGM by shareholder. Prior approval of RBI. Over. Don't learn. Any banking company appointed by shareholders of the bank in the AGM. Okay. But prior approval of RBI is needed. Second, nationalized bank appointed by board of director of bank but prior approval of RBI. Done. Small break, 2 seconds. Learn. Lifetime learn. Banking company, nationalized bank. Done. SBI. SBI is which company? Government company. If you know little company audit rules, okay? Government company auditor who will appoint? CNAG in consultation with central. CNAG will appoint. But here they have added in consultation with central government. Why? Because SBI does banking on behalf of government. So government has to appoint a reliable auditor. But CNAG is also required. Appointed by Comptroller and Auditor General of India in consultation with central government. How to remember this? SBI is a government company. Government company auditor is appointed by CNAG. But as it maintains accounts of government in consultation with central government. Subsidiary of SBI most easy. Appointed by SBI. RRB appointed by the bank with the approval of central government. Over. Just read once. This also, they don't like anything except NPA. New syllabus, guys, I am saying, but only sample size is small, only 3 attempts. I will speak one last time. Banking company appointed in the AGM by shareholder, but prior approval of RBI is needed. Nationalized bank appointed by board of directors of the bank, prior approval RBI. SBI appointed by Comptroller and Auditor General of India in consultation with central government. Subsidiary of SBI appointed by SBI. Last point, RRB appointed by the bank with prior approval of central government. With approval of central government. Over. Next, remuneration as per section 142. Ignore. Nationalized bank and SBI, the remuneration is fixed by RBI in consultation with central government. So if remuneration comes, fixed by RBI in consultation with central government. Nationalized bank and SBI. LFA are done. This also less chance, only MCQ can come. Mode of creation of security. Tell me, bank doesn't give loan just like that. You have to give some security. Now, in India, how to create a charge, create a security, in law you have already learned. But here also given, so I have to teach. Several ways to create security. First is mortgage. Remember, I will explain practical. So MCQ comes, you can tick mark. Okay. Mortgage is always for immovable property. In India, most favorite loan against immovable property is housing loan. Of course, everyone takes a housing loan. There are two types of loan here: registered and equitable mortgage. Mortgage is done for immovable property. In registered mortgage, a mortgage deed is signed. So I will sign a mortgage deed. What I will write in mortgage deed? Okay, I will sign and assign bank as mortgagee. Tomorrow, if I don't pay EMI of the house, bank will become owner of the house. Stamp duty, etc. is done. So charges is there. What is equitable mortgage? Here no mortgage deed is signed. Mere delivery of title deed. I give my house ownership document to bank. So cost is less. Why? Because no deed is signed. I cannot sell the house because documents are with the bank. Which is better? That bank will decide. Every bank has different policy. Some do registered, some do equitable. One last time. Where mortgage deed is prepared? Registered. Where just title deeds are given? Equitable mortgage. Okay. It is always for immovable property. Moving on. Pledge and hypothecation is for movable property. If I give my movable property to bank, I have created a pledge and against that I get a loan. If I keep the goods with myself only and still I get a loan, then that is hypothecation. Let me explain. What is pledge? I will deliver the goods to bank. Example, gold I have kept with the bank, stock I have kept with the bank, against which I get a loan. So bailment of delivery of goods by borrower to the lending bank. What is hypothecation? Okay, in this I hold the goods as a trustee of the bank. In this there is an agreement where I hypothecate the asset to bank. Tomorrow if I don't pay, ownership of the asset is with the bank, but still I am holding the goods as a trustee of the bank. Car, you know, Ola car, Uber car, it is written hypothecated to Canara Bank, hypothecated to SBI. Means on behalf of SBI, I am driving a car because on that only I get income and I will repay. Hypothecation. Are you clear? Possession of the goods is with us only. Okay. Best example, CCOD. I get CCOD based on value of stock. CCOD stock is with me only. Hypothecation. Registered means transferring ownership. Yes, if I don't pay, agreement is made. If I don't pay, they will become owner. Hypothecation, assignment. In assignment, I will transfer my what? Future debt. I will transfer my LIC policy and debtors to bank. I tell bank, see, I have to receive 2 crore and 1 crore LIC policy. Give me loan. So I transfer my debtors and LIC policy to get a loan. If I don't repay, they will recover money from debtor and sell my policy. Set off. I have two accounts. One is a loan account, one is FD account. If I don't pay loan of 2 crore, government can sell my FD provided it is in the same bank. HDFC, Ahmedabad branch, I have a loan. Mumbai branch, I have a FD. I am not paying only Ahmedabad loan. Then they can sell. Same bank, okay, same bank. They can sell my FD and recover the money. Set off gives a statutory right to the bank to set off two accounts, one deposit and one loan account, provided it is in the same name and same bank. If it is my wife account, they cannot touch. We both are different. Moving on. Lien. What is lien? General lien. Tomorrow I don't pay, bank will sell my assets. Whatever I pledge, bank will sell that. Lien. Over. Very okayish. Your same process is written. We are not reading anything. Same process is written. In module, we have two questions, okay, but I will still explain one. Money laundering can happen in bank. Of course, money laundering means black money to white. So what bank should do? Do proper KYC they have given. Proper KYC should be done. Okay, nothing great. Nothing can come from here. Same repeat process is there. How to do audit in real life. Are we done with everything? Yes. Last two charts are there, but before that, one favorite question is there. If they want to ask a nice question, they will ask this. It is not in your book, so you can take photo if you want. We have already discussed in module questions, okay? But still, if you want, you can take photo. Why I added? Because I found this new question and it's an interesting one. If they want to ask something offbeat, they can ask this. Engagement team hold discussion. See, while doing audit, we hold discussion at planning to understand bank and its environment and internal control. How to remember? ROMM. What is ROMM? IR into CR. Engagement team hold discussion to understand bank and environment. What is bank and environment? IR. And internal control CR to assess ROMM. Understood? Tell me, what engagement team discussion will happen in bank? Very simple. Bank's engagement team means the doing audit will hold discussion at planning stage to understand bank and its environment and internal control to identify and assess ROMM. What do you discuss usually? They can ask you what points we discuss. Errors that are more likely to occur. Errors that have occurred in prior year. Why? So I will do substantive audit detail. Errors that have occurred in the past year. Errors that are likely to occur. Methods by which fraud can be done by bank staff. Bank staff can do fraud by this method. What I will respond? Audit response to engagement risk. Pervasive means overall risk and specific risk. What is our response? Okay. Further audit procedure. What is our response to engagement risk? Pervasive risk, specific risk. Need to maintain professional skepticism throughout the audit. What is professional skepticism? Being alert to circumstances there can be fraud. Same thing. Need to remain alert that may indicate potential for further misstatement. Same thing written. Need to remain alert that there can be potential for further misstatement. Same. Definitely it can come. What discussion matters will take place when engagement team discussion? These many matter. Error that are more likely to occur. Error that have occurred in past. Okay. Third, method by which fraud can be done by bank staff. Now what I will do if sees many things, respond. Audit response to engagement risk, overall pervasive risk, specific risk. Need to maintain professional skepticism throughout the audit. Need to remain alert. There can be potential for further misstatement. It is too logical. If they ask best, I will be happy. Same copy paste I have to do. You can take photo if you want. Done? Chalo, moving on. One last time. Engagement team will hold discussion to understand bank and its environment and internal control to identify ROMM. Okay. Number one, discussion include errors that are more likely to occur, errors that have occurred in prior year, method by which fraud can be done by bank staff, audit response to engagement risk, pervasive risk, specific risk, need to maintain professional skepticism throughout the audit, need to remain alert that there can be potential for misstatement. Everything else is done. These two questions are my favorite. They are not asking another story. This last chart is also my favorite. According to me, 1, 2, 3. Out of these three also questions can come because all three are in module. But before that, we'll finish this and we are done. Start. This is general. Fat. You know everything. I'm just revising. Number one. While auditing income accounts, see, there are two things in P&L, income and expense. Income accounts, what to see? Reasonable. In doing audit of income, auditor is concerned with obtaining reasonable assurance that income took place from proper amount, proper account, proper period. While seeing every income, we just have to see what income came from. Proper account it is recorded, proper amount it is recorded, proper period it is recorded. Time pass. Oh, chart not visible. Screen gone, yes. Fast. Done. Okay. So while doing audit of income, we have to get reasonable assurance that income, okay, is recognized in proper account, proper amount, proper amount, and last is proper period. Okay. Yes, sir. Moving on. Second, very simple. Accrual, if income is more than 1% of gross income, if you have taken on gross basis, if you have taken on net basis, 1% of the PBT, profit before tax, okay, if it is more than 1%, then recognized on accrual basis. But if it is less than 1%, you can take cash also, we will not qualify the report. Let me explain. I am doing audit of debit card. So debit card, I will receive income 200, 250, etc., etc., etc. I will see total income of bank is 100 crore. If fees from debit card are more than 1 crore, then I have to compulsory recognize on accrual basis. If I am receiving only 20 lakh from debit card, then I can take cash also, I will not qualify. Second example, in debit card costs are also involved. Yes, chip charges, internet charges. If you are taking net income is 30 lakhs, then compare with net profit. Okay, very simple. Let me read. RBI has advised if any income exceeds 1% of total income, it is taken on gross basis. 1% of net profit, if income is taken net of cost, should be recognized as per AS9. Any income below 1%, okay, if you are taking net or gross, will be recognized when received. You can take on cash also, we will not qualify. Accrual, if you take, brilliant. This you already know. Income from NPA, tell me when is it recognized? On cash basis. Most important, another MCQ, reversal of income. Listen very nicely. I will ask you one question. Tell me, when does an account become NPA? Reply fast. When does the account become NPA? Go on screen. Hello. When does the account? 3 months. Okay. So till 3 months, I will still recognize income. Yes or no? Yes or no? Big yes. Till 3 months, I will recognize income. Okay. But actually, that is not received. So brilliant rule they made. They said whenever any account turns NPA for the first time, it turned NPA, reverts all the income which is not received. Very smart rule. When an account becomes NPA, all the interest accrued and credited will be reversed, which is not received. It applies to government guaranteed advance also. Over. Kisan Vikas Patra Indira may be taken to income account till margin is available. Okay, so till margin is available, no NPA. Bill purchased, very simple. Bill discounting income we recognize, 1000 rupees bill, we pay 800, for bank income is 200. Now if this bill is spread during 6 months, 1st January to 30th June, then income will be spread to 2 years. 1st January to 31st March, I will recognize half income, and then 1st April to 30th June, another half. Let's take example. My income total 2000, I will spread it 1000. Understood? Okay. Bills for collection. Sometime I tell bank, please collect this money on my behalf. So they will collect it from income tax, refund, etc. When they will recognize income? When they pay the money to me. Okay. Only commission should be taken. Of course, commission. After paying to customer on whose behalf money was collected. Very simple. Renegotiation. Sometimes what bank does? Bank said, you are not able to pay. Just pay us 2 lakh charges, and for 2 years we are giving you moratorium. No need to pay. Give us 2 lakh resettlement charge. This 2 lakh will be recognized when? Over a period of 2 years, because I am not paying for 2 years over rescheduled terms. Test check interest, time pass. Now tell me, total 4 things we have to study: interest income, other income, interest expense, other expense. Okay. 3 months तक तो record किया होगा ना. It has to be received in 3 months. After this, yes. After 3 months, it will be reversed. When you become NPA for first time. I hope you understood. Okay. Partial recovery in NPA. Brilliant. Okay. Tell me, if tomorrow I become NPA, but customer, or lottery I got, our business now working. Okay. If he pays the money, will I recognize as income? Yes, on cash basis. Partial recovery will recognize as income. However, we need to ensure that credit is not out of fresh loan given. You have given a loan and they are repaying. That should not be the case. Last point. When an account turns NPA, will you stop see, now you are not going to receive money. Yes. We don't recognize income, but will we maintain accounts of that person? Mr. Harish is not paying. Understood. Very good. Now I want to ask a question. Will we maintain accounts of Harish or forget? We will still maintain rough working. What if tomorrow he comes? I want to repay everything. Okay. On NPA, bank will reverse all interest but still keep record in memorandum for control purpose. For which purpose? Control purpose. How can interest accrued and credited be reversed? Debit to P&L. What you credited, debit will be there. How to reverse? 1 second. Now, these are for 1 mark MCQ which we discussed. These all 3 questions are too good. All 3 can. Only in books. Yes, books only. No. We will get true picture in books only. Money though we did not get only. How to reverse? Money though we did not get only. How we can reverse money? Which money you got that we can reverse? Money though I am calling you, you are not replying only. What we can do? Nothing. Brilliant. Last 3 questions, after that 1 sum and we are done. Amazingly. All these 3 are good questions but they are too easy. Start. Audit approach for expense, no, interest expense. I have already shared this chart with you. Interest expense. Listen nicely so you feel it is easy. Otherwise you will feel it is hard. Start. They can ask you how to audit interest expense. First of all, first point, listen 2-3 points practically I will tell. First, see overall interest expense. Compare with average liability. Why liability? Deposits are liability for bank because they have to repay you. So, see overall interest, compare with average liability and see overall percentage is reasonable or not. Let's take example. For example, 10,000 is deposit and your interest is 1,000. 10%. Absolutely unreasonable. It should be 4 to 5%. So first point. Okay. Auditor will see while doing audit of interest, overall interest is reasonable or not reasonable by comparing that amount with liability side. Okay. Total deposit. Second, there are several schemes of interest. Okay. Deposit. FD is there, recurring deposit is there, okay, Ayushman scheme is there, okay, saving account is there, current account is there, flexi account is there. Find out a weighted average rate. What is weighted average? In FM we study waka weighted average rate. You find out a weighted average rate of all the scheme and compare that rate with different schemes. Okay, in FD the rate is more. Inquire into the reasons. Oh, FD weighted average rate 5 but FD rate 8. Oh, FD rate is more. Saving account 4. Okay, understood. Flexi this much. Okay, understood. Okay. So find out a weighted average rate, compare with several schemes and inquire into difference if any. Third point, we can also compare the interest paid month on month with deposits. Deposits are increasing, decreasing. Interest is also increasing, decreasing. We can also compare the interest paid with deposits also with last year. Last year this was the percentage. This year this is the percentage. Last point, we can test check on reasonable basis. Interest is provided in all deposits. Second, interest is as per the FD certificate. Interest rate is as per RBI regulations. Okay, on all the saving account, interest is properly given. Over. Logically, if 2 times you read no, you will answer better. Now let me go slowly. How to do audit of interest expense? In carrying out audit of interest, we have to see overall interest is reasonable. How to know? By analyzing interest paid on different deposits. See, with average liability. See, overall that figure is reasonable. Is it 4 to 5% of liability? Good question. Second, also find out a weighted average, waka weighted average rate of interest, and compare that with different schemes and find out difference if any. FD is this much. Okay, understood. Third, auditor should also compare average interest paid with deposits of last year. Month on month deposit, you can compare the interest and analyze the difference. Last, we should test check on reasonable basis. Do test. Interest is given on all deposits up to date of balance sheet. Whether any excess interest given, short interest given. Interest rate are as per the bank regulation of RBI norms. You are not giving more interest to anyone. It should be as per bank regulation of RBI norms. In case of FD, see the interest rate is matching with FD certificate. Interest on saving account can also be test check. See, for bank, every branch is a profit center. Every branch separate accounts are maintained. So if you have taken loan from another branch, interest on inter branch balances have been given as per the rate given by head office, and interest on overdue or mature deposit is given. Overdue means FDS renew, FD overdue or mature deposit is given. Will you comfortably write yes or no reply? Is this good, comfortable question or no? Reply fast. Shall we go ahead? Very logical. Yes or no? Yes. Moving on. For audit of operating expense, even more easy, more time pass. I don't think this can come. They will ask harder one only, but still. First point, what you write? We will evaluate internal control over operating expense to determine nature, timing, extent of audit procedure. Nothing you remember, write this point. Internal control over expense to determine nature, timing, extent. We will see trends in respect of major expenditure. Is any major expenditure done? See the trend. Expenses can also be compared month on month. Verify expense with purchase note or invoice. Very good. Compare reasonableness of expense by comparing with last year. Okay, last year expense were this much, this year this much. We can also compare the expense with total expense. Total expense 100, traveling is 2%. Last year it was 3%. Or what less traveling we did? Okay, printing and stationery. Compare that expense with total expense and with last year. 2%, 3%, 4%. Very time pass. Even if you want, okay, I don't think they can ask this. If they ask, too easy. One last time I will speak. How to audit operating expense? First point, auditor will evaluate internal control over expense to determine nature, timing and extent of audit procedure. We will see trends in respect of all major expenditure. Third, we can also check the expense by seeing the document, voucher or debit note. Expenditure should be analyzed month on month and see if any major variations are there. We can also compare individual expense with total expense and find out a percentage and compare that with last year. Traveling this much increase, okay. I don't think this can come. This can definitely come. So my interest expense or provision, both are good. Provision is more simple. Three words you have to remember in provision. One, remember NPA word. Another, remember tax provision. Another, remember other provision. Three words remember. NPA, tax, other. NPA, tax, other. Okay? Start. Number one, ensure compliance for various regulatory requirements for provisioning in various circular have been fulfilled. Ensure various requirements of provisioning as given in various circulars have been fulfilled. RBI keeps on bringing various circulars. You have fulfilled all the requirement. You should not know the circular. Second, now NPA. Obtain understanding of how bank classifies the loan into standard loan and NPA. Further in NPA, how banks classifies into three: substandard, doubtful, and loss asset. Third, obtain detailed breakup of all the loans which are standard asset and NPA. See provision done by the bank for NPA, okay, into three parts: substandard, doubtful, loss, is as per the RBI norms, whatever percentage you study. Over. Next, obtain tax provision working from the bank and see items debited or credited to P&L is as per taxation norms. Tax, you understand? No, debit credit should be as per tax rules. Last, ensure provision for other expense is as per circumstances. Other expense is what? Warranty, telephone bill, etc. Because it might come later. Provision for other expenses as per the circumstances, warranty, and after discussion with management. Proper discussion you have done. Over. Simple, very simple. If you tell me, I can easily write 3 points. NPA, tax, other. I will write in my own words. Ensure that compliance for various regulatory requirements as contained in several circular for provision has been fulfilled. Obtain understanding of how bank does breakup of standard loan and NPA. In NPA, obtain a working of substandard, doubtful, and loss asset. See the balances of loan amount is matching with total loan balance. Total of all should match with total loan balance. See how bank does provision for substandard, doubtful, and loss asset. And see the RBI norms are followed. Very simple. Obtain tax provision working from the bank and see items debited or credited is done as per taxation rules. Last, when other provision is done, see it is as per the situation warranting the same and discussion with management is done. Over. Super revision we did. Hopefully question comes from NPA. Now we have to discuss one question. Shall we do module question or our book question? Module you do. Module is already solved. Okay. So you can do. We will do our book question. Because module already solution is there. 2 times same question. Why do? This came in last exam. Copy paste. Oh, I think one thing is pending. One question pending. I looked at this. We will discuss that also. But first, let us read this. How is drawing power calculated? What is drawing power, sir? DP. Okay. DP calculated. So first of all, you have to look at stock less. See, you want your money is stuck. Okay. So working capital is stuck. Okay. So you need loan only for the stuck portion, not for entire portion. Okay. Whichever money is stuck, you need money for that only. Okay, and bank will give only if it is a good loan. Otherwise, it will not give. So 1000 rupees our stock is stuck. Less. We have not paid to creditors 300. So that is not the money stuck. Net money stuck is 700. Though your 1000 rupees is stuck, but you have not paid for 300. So your money stuck is 700. Less. Letter of credit also you got of 300. So net money stuck is 600 rupees. Is not stuck. 600, so you are also not paying. So your money stuck is only 400. I hope you understood. For 400, bank will not give full loan. They will deduct certain margin. What if value of stock will reduce? They will mention in question what is the margin. So margin is 25. So drawing power is 300. Against stock, you will get 300 rupees loan. Moving on. Debtors, 1000. Some are ineligible debtors. No payment done since 5 years. I will not give loan against those later. No, 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 no. 200. So eligible debtors are 800. Margin for debtor always given in question, it is more. Why? Many debtors might not pay. So I will deduct 40% and pay you how much? Balance 60%. 8 6 are 480. Total drawing power 780. Same question came. Copy paste. DP. How much loan will be there? Sanction amount or DP? Whichever is lower. We have to be conservative. Any doubt? No. So you have to take net stock, net debtor, less margin, you will get the amount. Moving on. One question is still pending. This one. Computation of DP. Let us read. Account which exceeds sanction limit and drawing power should be brought to notice of management. Sanction limit is maximum loan which can be given. Though I have discussed all this, but still. Drawing power is arrived based on stock statement and guidelines of the bank. Every bank will have different guidelines for drawing power. Some bank will say give 60% loan, some 70, etc. However, large borrower cannot submit stock statement regularly because the stock keeps on changing. But older than 3 months stock statement not allowed. If I don't submit stock statement for 3 months, my loan will be blocked. So stock statement older than 3 months are not allowed. If an account is based on drawing power calculated from stock statement older than 3 months, that account is irregular. That account is irregular. Next. Very good MCQ. Stock audit has to be done by all banks where amount of loan is more than 5 crore. If you are giving more than 5 crore, go to that warehouse where that stock is kept. Do a audit, appoint a auditor. We used to do this audit. Stock audit is done for all accounts by bank where loan amount is more than 5 crore, or if bank feels they want to do audit. Bank feels though loan amount is less but their stock is fake, then also they will send auditor. Done, done, done. Brilliant. I don't think beyond this anything should come. Okay, full chapter amazingly we have done. Very good morning guys. Warm welcome to the best lectures of FMSM and audit nationwide. Welcome to our YouTube channel. Yes guys, today we are going to revise very small chapter of audit, but a good chapter, half an hour chapter, audit documentation. Brilliant revision we will do. What you can expect? Number one, excellent conceptual clarity of all the concepts, plus whichever questions can come in exam, you have to learn them. Okay, you will be able to learn in the lecture itself. So be rest assured, enjoy the best revision of chapter number 6, and do like the video and share with your friends too. Thank you. Very good morning guys. Warm welcome to the best lectures of FMSM and audit nationwide. We have till now finished 9 chapters. We are left with the last 2 chapters. The big chapter, the chapter which covers almost I think 20-25 marks. if not more. Okay, of course 25, 12 to 15 marks is the last chapter, and this is also of 8 to 10 marks. Okay, so total 20, 25 marks. Many students, they just get 35 and don't get 45. The difference is these two chapters. Many students get 55 and don't get 65. The difference is these two chapters. Many students get 59 but don't get 60. The difference is these two chapters. The two most ignored chapters we are going to start today. Okay, that's chapter number 9. Of course, we'll finish only this today and then move on to chapter number 5, which is a high ticket, high weightage, 12 to 15 marks chapter. This is still 8 to 10 marks chapter, but that is a short 12 to 15 marks. Okay, so I think most important is to do these chapters as well. You have already cleared if you have seen all lectures till now, but to get that edge, to get little more, so you don't fail in aggregate, these chapters are must. Don't even think of skipping these chapters. Last time we had a brilliant question, time pass question of 6 marks on government audit. If only revision lecture also you saw, still you would have easily answered. Without wasting any time, let's start right away. Okay, what is the weightage of chapter? How does chapter look like? Let me explain briefly for 2 minutes and then we start. Okay, come here everyone. What is this chapter all about? It is a 8 to 10 mark chapter. Ideally, we should finish before the break. But still, if you have little load, we take a break and come back for 15-20 minutes. Okay, listen nicely now. Here, see, our main audit is done, so that is not a headache. Okay, you don't have to understand anything, nothing brain required. Main audit is done. Here we will audit different entities. Your next question, what is different entity? Government audit, cooperative society. How to audit them? How to audit government of India? Is Narendra Modi working properly? Are you clear? Is your state government Stalin working properly? Okay, is this Bangalore government, Karnataka government working properly or not? That we have to audit. Oh, that also, yes. CA will audit everything. Okay, they say no, in God we trust, rest all others we audit. So only trust God. Do audit everything else. Second, after government audit, we will audit cooperative society. From here, one question will come. This chapter has two questions. Okay, so one is government audit or cooperative society. Either of the two, one question will come, which we will end in exactly 30-40 minutes. Okay, moving on. That is only three charts. So out of three charts, one question should come. Moving on. After that, we have all children, hotel, hospital, leasing company, and whatnot, NGO, okay, charitable, all combined together. There are 8, 10. Out of that, one question will come. So I hope you understood how chapter looks like, how weightage looks like. Okay, so of course, government and cooperative society we will do in detail. Rest we will give you an idea how to read. Okay, till the time you are tired, we will keep on revising. But you say, sir, understood, all are same only. Then we will leave. I hope you understood. Now we will not waste any time. Let's directly stick to the concept. Government audit and cooperative society we will study in detail. High chance that no chance is there. See, it's been 3-4 attempts of new syllabus. Last attempt government came, before that 2 consecutive attempts cooperative society came. So anything and everything can come. I hope it is clear. Yes sir, let's start. Can you start teaching now? Nothing you have taught till now. Yes sir, come here. Government audit, we are not auditing government company. First of all, take a break and understand, we are not auditing sale, bail, BPCL, HPCL. No, we are auditing government of India. Now many people will ask question, who is government of India? These people. Is Narendra Modi just going to Italy and enjoying that with his they say so called what girl, I don't know the name. Okay, Melinda, whatever. Okay, Amit Shah is working properly or not? Is Gadkari Saab just making roads just like that or not? Smriti Irani to out, she is right now doing Kyunki Saas Bhi Kabhi Bahu Thi. Okay, we have Jai Shankar, then we have this Jai Shankar, foreign minister. This is Ravi Shankar. Are you clear? All these people are using the funds properly. We will audit them. We will go to their office and check in detail. Okay, come here now. Now, who is going to audit them? CNAG. But joke of the day you will enjoy today. What is CNAG first of all? Comptroller and Auditor General of India. He is a person, Mr. Rajiv, keeps on changing. Okay, as of now, I think it's Rajiv. Okay, Comptroller and Auditor General of India will audit. Now, look at the irony and you will be shocked. Tell me who appoints CNAG? President of India. Who will appoint President? Government. So listen now. Government will appoint President. President will appoint CNAG. That same CNAG will audit government. It is like me auditing my father. Our hotel is there, I only audit. Tell me, will I find any fraud? Of course not. I want to stay in house or not. Are you clear? So understand. First of all, government appoints, they say, I don't know whether true or not. They say the person who doesn't take authoritative decision, who listens to government, who is fully under government control, he is the president. And president will select a person who is fully in his control as CNAG. So CNAG will only find frauds of opposition party if wherever their government is there. Wherever ruling party government is there, fraud never comes out. Why? Because who appointed you? President. Whose president appointed? Same. I hope you understood. But forget, we are not into politics. Concentrate. Sir, in government, what to audit? Will we go Narendra Modi's home? No. There are three audits in government. Audit of expenditure, audit of receipt, audit of store and stock. What is receipt? Whether government is receiving money properly or not. Okay. Whatever money should be received, are they receiving taxes? Second, audit of expenditure is detailed. It comes in exam. All expenditure incurred properly. Store and stock means whatever stock government has, the prices are reasonable. Extra stock is not kept. Okay. Government does have stock. Road, railway, highway, they build. No, that is why. Okay. Now, I don't want to make you understand that. I want to make you understand this. Most important, listener. In government, there are three governments: central, state, union, territory. Okay. So, what does CNAG do? CNAG will compile the accounts, and central government accounts are known as CFI, Consolidated Fund of India. One more time, please speak: Consolidated Fund of India. State government account are Consolidated Fund of State. Union Territory account are CFUT, Consolidated Fund of Union Territory. Now, they will report to whom? CNAG will not, of course, will audit. He will compile the accounts and report to central government accounts. He will report to president. State government, he will report to governor of that state. Union territory, he will report to administrator. So these are basic things. One last time, I want to explain two words and then go ahead. We are not auditing government companies, SAIL, BAIL, BPCL, HPCL. No, 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 no. We are auditing government of India. Okay. Central government accounts are prepared in Consolidated Fund of India. That's the fund from where every expenditure is incurred. CNAG will compile accounts and send report to president. State government accounts is Consolidated Fund of State, and report will be sent to administrator. Union territory is Consolidated Fund of Union Territory, and report will be sent to administrator. One last time, who is CNAG? CNAG is not any organization. He is a person, Comptroller and Auditor General of India. Who appoints CNAG in India? President. Who appoints president? Ruling party. The central government will appoint person who will listen to them as president. President will appoint person who will listen to them as CNAG, and that same CNAG will audit government. Let us start now. I hope you understood. Now everything is super simple. Start. In India, government audit is done by CNAG through Agency of Indian Audit and Accounts Department. Very good. Who will appoint CNAG? President of India. Very good. Sir, when he will resign? These all questions don't come on ground of proven misbehavior or incapacity. Now you will ask me, what is proven misbehavior? If by mistake he is doing some fraud, okay, or he is getting influenced by the government, at that time we can remove him. Who can remove? When each house of parliament, Lok Sabha and Rajya Sabha, vote with 2/3 of the member present and voting, they can remove that CNAG. But sir, if he is doing fraud, good for government, no, he will not find out fraud. What is written in book, I am explaining that. Okay, he can be removed when both house of parliament present and voting, for 2/3 of the member present and voting. Second, incapacity. When will it become incapacity? 6 years or 65 years. Are you clear? So maximum he can stay for 6 years. But if he becomes 65, then go early. Why? Because after 65, the brain doesn't work. So Narendra Modi 75, his brain works. Okay, Prime Minister brain works, but the person who audits Prime Minister brain doesn't work. What is this? No problem, but just explaining. He will be paid salary equal to judge of Supreme Court. You have your next question. Oh, so much high salary. Why? So he is not influenced. If tomorrow I will pay money, 1 crore I am paying, don't show our fraud, Government of India fraud. No, I am getting enough salary so I can remain independent. From here, any chance? I don't think so, but still, once we will read. On ground of proven misbehavior or incapacity. Can you explain what is proven misbehavior? Anything, okay? When two houses of parliament, more than two-third member present and vote, we can remove. Incapacity means what? 6 years or 65 years, whichever is early. First question. Duty of CNAG. Definitely it can come. Definitely. Okay. Let us go little slow. And duty of CNAG. Number one duty is compile the accounts and subsidiary accounts and report to. See, they will not prepare the accounts. Listen. They will compile. Compile means what? Summary. Are you clear? Tell me, I have prepared this book or compiled? Compiled. Inside this, many people feel, or your ICI language is there. Of course. Do you think I am so intelligent that I have my own language? Of course not. We have just compiled this magic book. Many people keep asking, or very much brain applied, your own language. Own language, I don't know. This much then, I would be an ICA chairman. Are you clear? Understood. Compile. So CNAG will compile the accounts and subsidiary accounts and report to. Central government account is known as Consolidated Fund of India. Report is sent to President. Central state government account is known as Consolidated Fund of the State and report is sent to whom? Governor. Union Territory accounts is known as Consolidated Fund of Union Territory and the report goes to Administrator. Can you tell one Union Territory? Are Delhi, Chandigarh, are you clear? Leh, Ladakh, all these are Union Territory. Understood, sir. Second duty. Audit of receipt. What is receipt? Whatever taxes should be collected are collected. There is no double refund. Are you clear? Tell me third point. Okay, the method of collection, the controls are proper. Third, audit of expenditure. This we will learn in detail. Don't worry. Okay. Audit of all expenditure from CFI, CFS, CFUT. Now I will never ever speak full form. What is CFI? Consolidated Fund of India, Consolidated Fund of State, Consolidated Fund of Union Territory. Audit of store and stock. These are three famous audit. What is store and stock? See that stock which is acquired by government is acquired at reasonable price. Second point, whether the quantity of stock is reasonable. Third, compare the stock with last year we had this much stock. Why this year we have so much stock? Okay, inquire into cases of abnormal loss, normal loss. Next, audit of, till now three are there. Very easy to learn. Remember, we have only three audits in syllabus. Usually they ask from audit of expenditure. Receipt and store and stock you read once. One last time. One, two, three. Three big audits are there. Audit of receipt, audit of expenditure, audit of store and stock. One more time. Audit of receipt, audit of expenditure, audit of store and stock. Will you remember? Yes, sir. Lifetime. Moving on. Third, audit of receipt and expenditure of any authority that is substantially financed from CFI, CFS, CFUT. Earlier, these two conditions were not written. Then I felt you will not read main book also. You are so lazy. So I included two conditions. One last time. Audit of receipt and expenditure of any authority which is substantially financed from CFI, CFS, CFUT. Now you will say, which authority is substantially financed? Two conditions. Amount of the grant to that authority is more than 25 lakh. So if I have given grant to any authority, municipal corporation 50 lakh, 42 lakh, 30 lakh, okay, and more than 75% of the expenditure of that authority is coming from grant. For that, Kelsey, you have to require example. Okay, 50 lakh is the total expenditure of authority. What is 75%? 37.5. More than the grant is more than 25. Yes, if the total grant is more than 37.5, then that authority is substantially financed from government. We will audit that authority also. Very simple. If government is giving me major money, who is my owner? Government. I will audit that also. One last time. Audit of any authority which is substantially, tell me my dad audit is going on. My audit will go on. Yes, because I am using my dad's money. Understood, sir. So audit of any authority which is substantially financed from CFI, CFS, CFUT. Question number 2. What is substantially financed? If the amount of grant is more than 25 lakh and more than 75% of that expenditure of that authority is coming from the grant. I hope it is clear. Okay. You can take photo of this condition or you want to write. Reply fast. Reply fast. Reply fast. Okay, okay. After 2 minutes, take photo. All right. Okay. After 2 minutes, wait. After 2 minutes, let us finish 2 points. Audit of grant and loan. If I give grant or loan to any person, okay, I will audit. There are conditions for which grant is given. Build a road, build a school, build a hospital. We will see whether grant and loan is used for same purpose or not. Last one. Audit of government company. That CNAG will do? No. They will appoint CA plus COP. Who is COP? Are a chartered accountant having certificate of practice. So it is my duty to appoint. Okay, Mr. Rajiv, the CNAG, will appoint a chartered accountant holding COP to audit what? Government, company and corporation. I hope it is clear. Like sale, bail, BPCL, HPCL. Over. Can you make us learn? Definitely learn. But first write this. Everything is written except point 1 and 2. If you want, you can take photo, small break. 5 seconds, 10 seconds we will give. If done, write D. Chalo, done. Moving on. Now in 1 second I will make everything learn. Tell me what are duties of CNAG. All point you will be able to learn. So in exam only 5 is required. Number 1. Compile the accounts and subsidiary accounts and report. Compile the accounts of central government accounts are known as Consolidated Fund of India. I will report to President. Okay. Second, state government is known as Consolidated Fund of the State and I will report to whom? Governor. Okay. Union territory accounts are known as just add two words, Consolidated Fund of Union Territory. I will report to administrator. Then three famous audits are there from where question can come, and that is the only thing in government audit. Audit of receipt, audit of expenditure, audit of store and stock. One more line. Audit of receipt, audit of expenditure, audit of store and stock. Receipt and store and stock. Question comes less, but you have to read. Audit of expenditure we will do in detail. Next, audit of any authority which is substantially financed from CFI, CFS, CFUT. Next question. What is substantially financed? If the amount of grant is more than 25 lakh and more than 75% of the expenditure of that authority is coming from the grant. Last 2 points. Audit of grant or loan and audit of government company. Audit of grant or loan, audit of government company, audit of grant or loan, audit of government. I hope everyone is able to not understand but learn. Small break, 10 seconds. Super easy. They ask very easy question. Why? Because no one does all this. So best. This point you read first. Time up. Now this to is easy. 1, 2, 3. Audit of receipt and store and stock. Just once read from module. 2, 3 points you should know. Okay. Not right now, later. Moving on. Chalo. What are power? Power I don't think will come. If they want to ask power, better ask duty. Duty used to come unlimited times. In new syllabus, they're asking very easy questions. Not all this. But still, one last time we'll speak duty. Okay. Compile the accounts and subsidiary accounts and report. Okay. Next, three audits favorite. Audit of receipt, audit of expenditure, audit of store and stock. Audit of expenditure, audit of any authority which is substantially financed from CFI, CFS, CFUT. Audit of grant or loan, audit of government company. Now power, so in 1 second we can learn. Very simple. Tell me what's the power of CNAG? Inspect any office under the control of union or state government. Any damn office you can go. Amit Shah office, Narendra Modi office, all people you can directly go. You are CNAG. Inspect any office under control of union or state government. After that, what you will go? Ask for books, demand any books, document, record, whatever they are doing work. Your work is important. Third, put such questions which you feel necessary for information. If you have any doubt about document, put questions. Last, in carrying out audit, we can check any account or class of transaction in detail. You can check why for health this much expenditure incurred, why Ayushman Bharat this much expenditure incurred. Or what is this? Your marketing expense this much? Why what? Your political party or a private agency? Anything you can ask. Tell me four power. How to remember? Only remember one. Rest three automatic. Inspect any office under the control of central or state government. Inspect any books, document, record. Ask any information or explanation or call for such information. In carrying out audit, we can check any transaction or account in detail. Very, very simple. Only 4 points. How to remember? Just remember one point. Are you clear? Number one, inspect any office under the control of central or state government. Demand any books, document, record. Third, after in that's what is that? Put any questions which you may think necessary for information or explanation. Last, in carrying out audit, we can check any account or transaction in detail. I hope it is clear. Yes. Now come here. From here only question comes. But in revision also I teach so much detail. Last time they asked most rubbish question. Had we read only once in 3 minutes, then also it will be there. But we will of course do in detail. I thought inside they will ask. They just asked MCQ. Super simple. It means you have to be in 6th standard to answer that. By mistake you are doing CA, then wrong. Once also if you have read, it's easy. So audit of expenditure comes usually, we have 5 heads under this. Okay, audit against rule and order, audit against sanction, audit against provision of fund, propriety, performance. We will study all in detail. Moving on, audit against rules and orders. See, whatever expenditure is incurred, it should be as per the rules and orders. Okay, so very simple. First you have to check, you are who? CNAG. Check all expenditure is as per rule and order. There are 4 points. Will you understand? No, you will be able to learn also. Here we'll see rules, regulation issued by executive authority. Who is executive authority? These people. They frame central rules and regulation. We have to see all expenditure which they are incurring is as per the rules. Simple. 4 rules. Okay. 4 things we will check. Number 1, all expenditure should be as per provisions of constitution or law made thereunder. See, there is certain things written in Samvidhan. Now you will say, what is Samvidhan? Constitution. All expenditure should be as per provisions of constitution or law made thereunder. Second, they are not in conflict with, okay, rules made by higher authority. See, constitution is something which cannot be changed. That Rahul Gandhi keeps that red book. This is in danger. Constitution danger. That is constitution. Second, it should be also not in conflict with rules made by higher authority. Now, the government, higher authority can make different rules. Okay. For example, for foreign, if you want to go, maximum expenditure allowed is 5 lakh. Now they can make 10 lakhs. So see, it is as per 10 lakh. Whatever rules they make, we are not concerned. Second, okay. They are not in conflict with rules made by higher authority. Third, they are as per the requirement of audit and accounts as laid down by CNAG. CNAG will also make rules. Do we have to learn all these rules? No. Too much it will become. In case they are not approved by authority, in case it's a highway expenditure, it's not approved by road minister, then necessary authority has rule making power. They have the power to approve, though they have not approved till now, but they can easily approve. It's a small expenditure. So whenever you check any expenditure, audit against rule and order, 4 points are there. Simple, no time pass. Number 1, expenditure should be as per provisions of constitution or law made thereunder. Second, it should not be in conflict with rules made by higher authority, executive committee. Third, it is as per the requirement of audit and accounts as laid down by CNAG. In case they are not approved by competent authority, necessary authority has rule making power. Over. Who can be controlled? Higher authority. Government. I told no, executive committee. This is the authority. Over. Learn nicely. At times I don't understand most educated people in India. They don't run government. Forget. Too much if we speak, jail. Done. Very simple. One last time. Audit against rule and order. Number one, it should be as per provisions of constitution or rule made there under. Second, okay, they are not in conflict with rules made by higher authority. They are as per the requirement of audit and accounts as laid down in C and AG. In case they are not approved by competent authority has necessary rule making power, but higher than them, constitution is made by Nehru. Are you clear? This is first point. Every government makes their own rule, so it should be as per our constitution or this both. B.R. Ambedkar, you don't know all this how we can teach. Moving on. Next, fully time pass. Sanction. Expenditure is covered by a sanction and person sanctioning it is competent for the purpose. Let's take a beautiful example. For example, we want to open school. It is under which ministry? Education. So expenditure should be covered by sanction, and it should not be sanctioned by PM. It should be sanctioned by education. Of course, PM is higher authority, but let's take another example. It's sanctioned by Pune. Let us open your school because my child is studying. No, it should be sanctioned by right authority. So two things you have to check: expenditure is covered by sanction and the authority sanctioning it is competent for the purpose. Fourth point, very simple. In case they are not approved by right authority, but they have the power to approve. Small expenditure, so Nitin Gadkari said, I will not approve. But if we ask Nitin Gadkari, he will easily approve. Like that. Moving on. Second, audit of a sanction. Expenditure is covered by sanction and the authority sanctioning it is competent. For example, school. Who should sanction? Education Ministry. 2 points. So, very simple. God knows why. If by mistake you read, no, it will be more fast. One more time. Expenditure is covered by sanction. Authority sanctioning it is competent for the purpose. Next. Expenditure against provision of funds. Okay. So, I set up funds for beautification of city. Putting lights in city. What I will check here? Two things. Okay. Number one, expenditure is incurred for the same purpose for which provision is made. That is beautification of city. Expenditure is incurred for same purpose and amount of expenditure does not exceed provision. Provision was 82 crore. Then beautification should be done in 82 crore only. Over. Very simple. Audit against provision of fund. Number one, expenditure is incurred for the same purpose for which provision was made and amount of expenditure does not exceed the provision amount. Over. Are we on to last two? Propriety audit. Till now we have done three: audit against rule and order, audit against sanction, audit against provision of fund. So many times expenditure is as per rule and order, it's as per sanction, it's as per provision, but it could be improper, avoidable, wasteful expenditure. I have to find out those cases here. Many times though expenditure, fourth point, done no? Okay, so many time expenditure is as per the rule and order, it's as per the provision, it is as per what? One more point was there, no? Okay, I forgot. Sanction. But it could be wasteful, improper, avoidable expenditure. I will find those cases. Example, going to movie allowed or not allowed? Allowed. But allowed. It is as per your authority. Yes, sanction and provision. Yes. But you could have avoided going to movie. Such cases we will find out. Very rubbish example I took, but still. Okay. Propriety audit. Let's take nicer example. Okay. Some general principles laid down are. So these four principles can come if they want to ask nice paper. Okay. Four principles in propriety audit are. Number one, expenditure should not be more than what occasion demands. Every government officer would exercise same vigilance as a person of ordinary prudence will exercise. Very simple meaning. Never incur more than what occasion demands. Let's take simple example. We have built a brilliant statue of unity. Those who don't know, In Gujarat it is. Amount, if you listen, you will get shock. I will get double shock. 3,000 crore. In a country where per capita income is only 2 lakh, people don't get money to eat. Do we need to incur that 3,000 crore? You will say, yes, sir. Very good. It could be built in 300 crore also. Expenditure should not be more than what occasion demands. Rather than that, feed the people. There are so many people who need education. Give them education. Their lifetime, they will build one statue, 300 crore. All people will be worth at least 30 crore. But for that, government doesn't win. Tell me, when will government win? Government wins only when government wins. So they say there's a one rule in politics. Government has only forget nothing. There is no rule in politics. But it should not be more than what occasion demands. Okay? Rather than that, give education, give midday meal to everyone. If they will study, even if one child becomes rich, he will contribute different statue. Every day you can build one statue at home. Are you clear? Provided you study. So one last time, we are not saying don't incur all this necessary, but 300 crore necessary. 3,000 crore, 2,700 crore, lot of things can be done. Number one, expenditure should not be more than what occasion demands. Every person should have same prudence as a person. If your home is there, will you build 3,000 crore statue at home? That is what they are saying. Then why CNAG not pointing out? Who appointed CNAG? Government. Very good. Second, no authority sanctioning expenditure shall pass directly or indirectly to its own advantage. Don't give that statute contract to someone who is related to you. No authority sanctioning expenditure shall pass order directly or indirectly to all. Third, it should not be utilized for a particular person or benefit of particular community. Patel Samaj, Lava Samaj, Lohana Samaj, all Samaj Famaj leave, Muslim Samaj, Hindu Samaj. It should not be for particular person or section of community. Are you clear? North, South, no, India. Okay. Last, amount of allowance should be regulated. Example, each allowance means what? Allowance. See, whenever you give allowance to someone, for example, travel, it should be regulated. So it is not a profit to recipient. Many times in travel, rules are there. Maximum you can go in this much flight only. Otherwise, what will happen? I will say flight cost is 28,000. But I went in a flight of 4,000, 24,000 in pocket. Okay, so like that, amount of allowance should be regulated. There should be rules. So allowance is not my salary. My salary is my salary. I hope you understood. Okay, allowance is not a profit. We will learn these 4 points. Tell me, many times expenditure is everything is proper, but it can be improper. 4 principles are there. General principles in audit code are very simple. Number one, expenditure should not be more than what occasion demands. Every person should exercise same prudence as a person of ordinary prudence will. Second, expenditure should not be, no authority shall sanction expenditure, okay, which will be directly or indirectly to his own advantage. Third, expenditure should not be for benefit of particular person or particular section of community. Last, amount of allowance should be regulated, so it is not a profit to the recipient, it is not a source of profit. Limit should be there in allowances. I hope you know. Read, small break, 10 seconds. Sir, time up. Very good. Tell me general principles laid down in audit code. If they ask full 4 marks, amazing question. Okay. Expenditure should not be more than what occasion demands. Every public officer will exercise same vigilance as a person of ordinary prudence will. Second, expenditure should not be sanctioned that it is directly or indirectly to our advantage. Third, expenditure should not be for benefit of particular person or section of community. Last, amount of allowance should be regulated. It is not source of profit to recipient. Moving on. Performance audit. Here we have triple E, economy, effectiveness, efficiency. I will explain all three one word first of all. So MCQ comes, it is easy. What is economy? Always try to do things in less cost. Are you clear? Though we have money, it is not our own money, it is taxpayer money. Understand? Okay. In India, we have to meet politician, okay, then it is big thing. Oh, I met Modi Sahab, I met. Come on. They are our servant. That is what people. Actual meaning is government is our servant. We are paying tax. Why I am telling in our society, okay, whenever any local MLA comes for any work, okay, society, light, etc., then everyone compulsory today attend. Very important. Leader coming today from this government. Everyone has to come. We have to give mala peram. God, no, big message. And if I don't come, first of all, politician comes at night 11 o'clock. The morning, who will take lecture? Then I get message, you are not cooperating only, no respect. What respect? I have to do my respect or his respect. Then in our society, every month they come. God knows what is famous in our society. Moving on. Performance audit. Till now, how many times I have gone? Zero. Economy audit. What is economy? Government has acquired physical, human and financial resources economically. Okay, whether you have spent any money, whether you have given salary, or whether you have acquired any physical things, it should be done in economical manner. For riverfront, money needed, interest rate should be less, people needed, pay them average salary, not less, physical anything needed, okay, pump, pipe. Second, whether spending authority have exercised economy. Is it simple? Very simple. Number one, whether government has acquired physical, human and financial resources economically. Second, whether spending authority have exercised economy. Effectiveness means what? See, you planned a particular scheme for particular objective. Are we able to achieve those objectives? Appraisal of various programs, schemes, targets. Compare them with targeted objective. Efficiency means attainment of objective. We have so many schemes in India, Make in India, Stand Up India, Sit Up India, okay, this India, that India, Jago India, Pago India. Are we able to achieve objectives with that growth is happening, or only India we are doing? Okay, appraisal of various programs, schemes with targeted objective. All the schemes which are running, are we able to achieve objective? That's effectiveness. What is efficiency in that? Right, everything. First, same copy of economy, whether schemes and projects are done economically. Second point, whether they are giving desired result, effectiveness. Third, only one point remember, relationship between goods and service produced and cost used to produce them. See, I'm getting this much benefit, but at what cost? Are you clear? If you are studying today 10 hours, is CA course worth? No, it is worth lifetime. Study 100 hours, but only 24 hours, then what to do? Understood. Okay. One last time, what is efficiency? 3 points. Whether schemes and projects are done economically. Second, whether we are able to achieve objective. Okay, last point, efficiency means what? Relationship between goods and service produced and cost used to produce them. Balance. Fully understood. Read this much. See, this is easy. This is easy. Your same copy given. Only one point you have to learn. Be very smart. So what we have done? Order we changed. Otherwise, nothing changed. Order changed. In your book, it will be little different. You can do 1, 2, 3. Allowed. Allowed. Nothing as we have. Moving on. Now, 2 points are there. Audit of receipt and audit of store and stock. Audit of receipt and audit of store and stock. What is receipt? All the money. You read once, all the money which should be collected is properly collected. There is no case of double refund. Okay, the method of collection, internal controls are proper. What is store and stock? Store and stock is acquired at reasonable price. Okay, second point, the quantity of store and stock is reasonable as compared to last year. There is no abnormal loss. Just read. 3 4 points, try to remember. We are done. Nothing else can come in government audit. But as this came last time, again, now we are moving to which? Cooperative society. Favorite here also I will tell you 5 to 7 question, nothing can come beyond that. Ideally, okay, in an ideal world. Not ideal, but they don't ask only hard these days in this chapter. So it should be easy according to me. Listen, cooperative society also only 2 minutes. Real cooperative society, if you understand, all question time pass. Come here. High chance anything can come from here only. Why? Because these has two charts. Government has one and it came last time for 6 marks. Concentrate. See, democracy you have heard. Yes, sir. For the people, by the people, of the people. So come here. Now, cooperative society, main aim is not to earn profit, but to avoid middlemen. All members' profit should be there. That's the aim. Aim is all the people should come together, live together, earn little money. That's the objective. Objective is to avoid middlemen, give better service to consumer. Are you clear? Their aim is not profit. Again, I am telling you, private company aim is profit, but cooperative society is member welfare. Don't forget that. Very good. So usually we have cooperative society for housing, milk and farmer. Okay. What is housing? In a house, everyone is given shares of 100 rupees. Total share capital will be what? 100 into 100, 10,000. Okay. That much only. Milk is also there. Why? So farmers benefit. Usually what happens? Okay. There are businessmen who procure from farmer at cheaper rate. Like that they do. Businessmen very rude. So farmer said, we will only produce, we will only sell. So customer also get cheaper rate, we also get right amount. Okay, why am I explaining? Because all this is relevant. Last, farmer also we have cooperative society. Just for practical understanding, I want to show you top 10 cooperative society in India. So this Yahoo is good for no use. See this. Amul is a cooperative society. Okay. Karnataka Milk is cooperative society. Okay. Indian Farmer is cooperative society for fertilizer. Indian Coffee House you have heard. Saraswat Bank. I hope you understood. Now listen nicely what we have to study. There are two cooperative society. Single state, multi-state, single state, multi-state. What is single state? Whose objectives are only in one state. Karnataka Milk Cooperative Society operate only in Karnataka. Understood. What's multi-state? Whose objectives are not limited to one state. Amul doodh pita hai India. Amul, the taste of India. So it's whole India. Moving on. Now, sir, if you are restricted to one state, is it single state? Yes. Tell me, who will manage you? There is a registrar. Registrar is a person who is your friend, philosopher, guide, who will see that are you working properly? Are you not working for your benefit? You are working for member benefit. Okay. Your main aim is not to earn money, but to avoid middlemen, give better service. Who will check all this? See, for me, if I do anything wrong, my mom and dad are there, they will directly give me slap. Are you clear? So for cooperative society, who is mom and dad? Only one, register. Come here. Multi-state cooperative. Now tell me, multi-state Amul, okay, mother dairy, they have to deal with so many people. Why so many state? Registrar is a person. In India we have so many state, all state people will call. So for them we have kept central registrar. Whom we have kept? Central registrar. Who is registrar? Friend, philosopher, guide. If they do anything wrong, registrar will scold them. Over. Now everything you will understand. Whatever we read, all time pass. Come here. Audit of, first we'll do single state, then we'll do multi-state. What question can come? 3-4 times I will repeat. Every question we will learn only. Start. So your half chapter is done practically. Registrar will audit or tell any person to audit by general or special order. Cooperative society at least once a year. Simple. Registrar, for example, for Gujarat, registrar is DP Desai. Now I will not show you the proof. Remember, Desai Bhai. Desai Bhai himself will audit or tell any other person, you audit on my behalf. Compulsory audit has to be done. Can this question come? No. Who will be auditor of single state cooperative society? Okay, CA, person holding diploma in cooperative accounts, or person working in cooperative department of government. Why? Because there are so many. So all CA will not be available. CAs are less, cooperative society so many. So three options are given. Can this come? Less chance. CA, person holding diploma in cooperative accounts, person working in cooperative department of government. Anyone can do audit. Sir. No, okay, nothing. Come here. Audit concerns. Certain concerns are there. This can come. Less chance again. But still, we will read. No member can hold more than 20% share. Why? Otherwise, he will control entire cooperative society. If any member given more power, it will become private company. Here we have to listen to all members, not one member. Understood? And total value of shareholding cannot exceed 1,000. Why? Because share are of 100 rupees. So maximum 10%. We cannot see. Our main objective is member welfare. We don't want to give welfare to everyone. Only our member. Okay? Can't give loan to any person other than member. With special sanction of registrar, we can give loan to any other cooperative society. State government may also put further restriction. Don't think it will come. Tell me, their main member, thing is welfare to member. Can't give loan to any person other than member. We can give to any other cooperative society if registrar approves. Moving on. Borrowing. From whom you will accept money? Member may accept loan and deposit from member subject to restriction and bylaw of the society. What is bylaw? Rules. Now, first question definitely can come. It has come. Whatever money we earn, one more time, whatever money I earn, cooperative society not loss making, whatever, 25% has to be transferred to reserve fund. 25. I can reduce the percentage, but not less than 10%. Okay. Registrar can reduce percentage if profit is less, but not less than 10%. Before giving dividend or bonus to member. See, whatever left out, give to member. But before that, 25% to be transferred to reserve fund. Yeah, next question. Why reserve fund? That I will explain after 2 minutes. Moving on. Section 33. Section, if you remember, very good, otherwise okay. Section 34. With sanction of registrar, we may contribute an amount not exceeding 10%. Okay. After transfer to reserve fund as contribution for charitable purpose. After reserve fund, we can also do charity. Okay. With sanction of registrar, we can transfer amount exceeding not 10% of the net profit after transfer to reserve fund as contribution for charitable purpose. Contribution to education fund is a charge on profit. What is charge? It's not transfer, but from there profit is reduced. Okay. Last, according to certain state act, dividend equalization and share redemption are also charged against profit. Simple sir, not understood. Come here now. Practically we will show. 100 rupees you have earned. How much will go to member? 25% transfer to reserve fund. So how much left? 75. Sir, I can reduce percentage up to 10. Yes, but that not usually. Okay. Net profit after reserve fund is how much? 75. Up to 10% will go for charitable purpose. Oh. With special sanction of registrar, up to 10% can be transferred. Let's assume full 10 we are transferring. 7.5. So how much left? 67.5. From their dividend or bonus we will give. Hot favorite MCQ. Very hard paper they want to set, they will ask all this. One last time. Whatever single state cooperative society earns, what they will do? 25% will be transferred to reserve fund. We can reduce, but not less than 10. After transfer to reserve fund, 10% will be transferred to charitable purpose up to 10%. After that, we will give what? Dividend or bonus to member. Education fund is a charge on profit. So education fund will be deducted here only before reserve fund. It is a charge. Charge means what? Profit will be reduced. Over. First question. Now, super duper all question important. Okay. Come here. Sir, reserve fund will be used for what purpose? Came in exam. Investment of fund. Everything has come in exam. Start. Reserve fund can be used for three purposes. Number one, in business of society as working capital. Tomorrow, any Karnataka Milk Cooperative Society has problem. Then we cannot ask money from member. Okay. They are poor people. Okay. Not poor, average people. So, I can use it out of reserve fund. Second, may invest as per provisions of the act. I will invest the money of reserve fund. Where? That is next question. May be used to for public purpose, likely to promote objectives of society. See, ad we can also do. Karnataka Milk Cooperative Society can also do ad. Why? To get more sale. For public purpose, likely to promote objectives of society. that in this society we don't work for money, we work for welfare, we give goods at right prices. Okay, understood like that. So tell me one last time, reserve fund can be used for three purpose. Number one, in business of society as working capital. Second, I may invest as per provisions of the act. Okay. Last, may be used for public purpose, likely to promote objectives of the society. One last time, tell me, reserve fund can be used for three purpose. Number one, in business of society as working capital. May invest as per provision of the act. Third, and last point, likely to promote may be used for things likely to promote objectives of the society. Public purpose likely to promote objective. WIP. So technique can become work in progress. Okay. Number one, may in the business of society as working capital, may invest as per provision of the act, may be used for public purpose likely to promote objective of society. You can write WIP there. Moving on. Next, sir, so my one doubt I have. Invest means where to invest? Where? Share market? No. Listen, five things you can invest. This came, I think, before a few exams, maybe two exams, I don't know, but somehow it has come. Tell me, I can invest the funds for five things. Okay, reserve fund can be invested. They can ask question. Five things, right? For 4 marks. Very simple. A society may invest reserve fund in five things: in central or state cooperative bank, in any other cooperative bank other than central or state as approved by registrar. Can you name one cooperative bank? Yes, Saraswat. Sir, one more is there. Sir, Cosmos Bank. Are you clear? Very good. Tell me, reserve fund can be used for first 2 points. Remember, can be invested in central or state cooperative bank, in any other cooperative bank other than central or state as approved by registrar. Third point, okay, in shares, debentures, bonds, security, shares, debentures, bonds, security of any other cooperative society with limited liability. Okay, remember, these people are obsessed. They only want one thing: cooperative, cooperative, cooperative. Okay. So now last one, in shares, debentures, bonds, security of cooperative society with limited liability, in any of the securities as specified under Indian Trust Act. Indian Trust Act will say these shares are safe, you can invest. So a security specified by Indian Trust Act. Last, in any other money permitted by central or state government. Central government says we are launching these debentures, these bonds. Allowed. Any other money permitted by central or state. Just write 5 points, get full marks. One last time. Sir. Reserve fund can be used for what purpose? 5. Simple. It can be invested in central or state cooperative bank, any other cooperative bank other than central or state as approved by registrar. Third, in shares, debentures, bonds, security of any other cooperative society with limited liability, in any of the securities as specified under Indian Trust Act 1881. Last, in any other money permitted by central or state government. You have to learn this. Big yes, already it has come. One last time. Sir, reserve fund can be used for three purposes. WIP, in business of society as working capital. I may invest as per provision of act, likely to be used for public purpose, likely to promote objectives of society. Sir, invest where? Invest where? It can be invested at five places. Number one, in central or state cooperative bank, any other cooperative bank other than central or state as approved by register. Okay. Third. In shares, debentures, bonds, security of any other cooperative society with limited liability, in any of the securities as specified under Indian Trust Act. Okay. Any other purpose, any other in any other money permitted by central or state government. Learn nicely. Small break of 10 seconds. Tell me, one, two, three. Reserve fund can be used for what purpose? Five. Okay. Invest in central or state cooperative bank. Any other cooperative bank within 25, of course, 25% only. Yes. Or maybe within 10 also, Arun. Who knows? Okay. In central or state cooperative bank. Any other cooperative bank other than central or state, in shares, debentures, bonds, security of any cooperative society with limited liability, in any of the securities as specified under Indian Trust Act, in any other money permitted by central or state government. These all are time pass points. We will just read once. Okay. Simple. Special features of cooperative audit. I don't think good question can be made here, but still okay. In cooperative audit, I need to examine, classify bad debts into two parts. Okay, debts I will classify. That is money I have given. Okay, 6 months to 5 year, more than 5 years. Separate classification has to be done. So auditor can audit. Why? Because we can book a provision. We can book a provision. Second, that interest which is pending of 6 months to 5 year and more than 5 year, it should be excluded from interest outstanding and accrued. Why? Because not received in 6 months, what we will receive? Very good. Bad debts. Bad debts will be there in cooperative society only when auditor certifies. If auditor does not certify, managing committee of society can also certify. Simple. Asset and liability refer to AS2 and AS10 they have written. Most important, just for understanding. Cooperative principle. See, our main objective is not earning money, but following the cooperative principle, not in terms of profit, but giving welfare to the members. Middleman commission should be avoided. Expenses are incurred economically. Okay, that's the main thing. I will still read. Check whether objectives are achieved not in profit, but giving member. Expenses are incurred. There is no wastage, commission avoided. My second, no, one more time pass question. When I give loan to any member, okay, then I will also check his book. In his book, loan is there. Many times what happens? I will tell that I have given loan, but put money in my pocket. I know this person will never understand, and I can do fraud. Many people do like that. In cooperative society, fully fraud. Okay. So what people do? They give loan, but in your book, I will not write loan. You don't know, only you have taken loan, and I will put money in pocket. Examine the entry in the member's book regarding the loan given. So I will look at member book. Okay, is there loan given? And confirm with him loan balance in persona. I can also confirm. Go to cooperative society and confirm. Favorite question, definitely if they can ask, this will come. Special reporting to register. Register is a friend, philosopher, guide. I will give him special report in 4 case. Definitely it can come. If auditor notices there are serious irregularities in cooperative society, he will do special reporting to register. The registrar on receipt of special report will take action. In 4 cases, special report will be sent. How many cases? 4. Okay. 1, 2, 3, start. In 4 cases, special report. Why it can come? See, from name only understand question. It can come. Okay. Special report will be sent to registrar by auditor in 4 cases. On receipt of report, registrar will take action. FMDP. But that later. Number 1, there is a fraud relating to expense purchase tour. Any person doing fraud, what we will tell? Sir, look at this. Look at this person. He's not working as per cooperative society. Fraud he is doing. Okay. Mismanagement. Decision against cooperative principle. I am procuring raw material from my son's agency. Here we don't have to look at son and daughter. There are so many members involved. Don't be crazy. Don't do anything, for example, against cooperative. What are cooperative principles? Middlemen should be avoided. Okay, farmer welfare should be there. Cooperative, every member understood, sir. Disproportionate advance to vested interest group. Cooperative society earns interest also by giving loan. We are giving loan to our members only. Or you are managing committee, no. Series by, Ramesh by, Girish by. All three enjoy. In our society, all this only happen. Whatever written here, no, everything happen. Full funds they collect, then night party. I don't reply only. I said, do whatever you want. They are using funds for 2-3 members only enjoying the money. Like that, not allowed. Disproportionate advance to vested interest groups such as relatives of management. Okay, money is given to them. Advance without proper security and proper safeguards for judging the credit worthiness of party. You are giving loan without taking security, without judging credit worthiness. Last, personal profiting by members of managing committee. Array, for this, we have incurred this much expense in cooperative society. 25% you kept commission. Sir, bill to fake we can prepare. personal profit by members of managing committee. You understood the question? Important. Why? Because look at the points. Okay, now we'll learn. Tell me, special reporting to registrar in single audit will be done in what cases? FMDP, FMDP, FMDP. Fraud relating to expense purchase store. Mismanagement, decision against cooperative principle. 2D, disproportionate advance to vested interest group such as relatives of management. One more point, advance is given without judging credit worthiness of borrower and without security. P. Personal profiting by members of managing committee. All these point practically is exist. One last time. Sir. One last time. Special report will go to register in what case? Please tell. FMDP. FMDP. Fraud relating to expense purchase store. Mismanagement. Decision against cooperative principle. Disproportionate advance to vested interest group, that is relatives of management. Same advance given without judging credit worthiness of borrower and without proper security. Last point, personal profiting by members of managing committee. At that time special report will be there and they will take action. What action? Not given. I don't want to learn also. Small break, 10 seconds. 1, 2, 3, start. Tell me, special report will be sent in 4 cases. FMDP, FM, fraud relating to expense purchase store. M, mismanagement, decision against cooperative principle. D, disproportionate advance to vested interest group, that is relative of management. One more advance given without proper security and credit worthiness of borrower. P, personal profiting by members of managing committee. Now, all this time pass. Maybe MCQ can come. Okay. After entire audit is over, you give class to the society. A rating, B rating, C rating. In real life, no such rating is there. Maybe before 20 years this was there. Our new syllabus came, but nothing they changed in new syllabus except deleted few chapter. So that is what. I searched this unlimited time. What class is there? Never ever found. But still, forget it. After judgment of overall performance of the society, we give a class to the society as specified by the register. So they will give some criteria. Based on that, we will award a class. A rating, B rating, C rating. If management is not satisfied with their class, they will complain to register that this auditor little biased. He is not giving me proper marks. Like ICI, not proper. Register may direct the auditor to review. Review by why you give B rating. Again check, again. Sir, what difference does it make? Members will not join that cooperative society. Reputation will be affected. Oh, yeah. And if more member come, their power will be more. Yes, true. Everything you know. Last, before giving audit report, you have to discuss, tell secretary to conduct a meeting with managing committee and discuss with them. Why? If they feel certain points are bad, please remove them. Why? See, ultimate objective is member welfare, not to show off your knowledge. This is different, okay? On conclusion of audit, auditor will ask secretary, please conduct managing committee meeting to discuss draft audit report. Then discuss with them. If they feel their language little rude, remove. Over. Last chart, then half chapter over at least. Can you please explain last 2 bullet points of 4th audit concern? This one? This one? Fast write yes or no. This one? Left. This one? Whatever we earn money, whatever money we have earned, 25% will be transferred to reserve fund. After that, whatever left, 10% transferred to charitable purpose. Over. Your sum is done of that. Shall we go ahead? Charge on profit and appropriation of profit is what? Okay. See, once you earn profit, after that you transfer, that is appropriation. Charge means what? Before calculating profit, you have to minus. So education fund is not transfer of profit. It is charge of profit. In 11th standard, Bagodia sir taught all this. Full concept. Our school. Is it compulsory? What? Charge on, of course, compulsory. Now, I incur expenditure of water bottle. Now I will say no. It will not be deducted from my profit. Then from where to deduct? No, after earning profit, I will transfer profit. No. Understood? Of course, compulsory. Over. Moving on. Last point. Okay. Here also 3 favorite question are there. But I don't understand what new is there. It's a multi-state. Those cooperative society whose objectives are not restricted to one state is multi-state. Amul Mother Dairy. Amul Mother Dairy. Very good. Read. Applies to cooperative society whose objectives are not in one state. Most important, their fund cannot be used for political purpose. Usually why we form cooperative society? For politics, so we can give the fund. Okay, cannot be used, government is clearly said. Sir, who will do multi-state? See, it's multiple state, the stakes are higher. Only CA needed. But what if CA not available? Bring new CA. Very good. Sir, who cannot do audit? All this will not come. Why? Because it was in syllabus, they removed all this from company audit, but still it is there. Okay, but still we'll read. Body corporate, company can never do the audit. Why? Because in company, who will be liable? It's an artificial person. So CA, then we can say he is liable. Okay, body corporate not allowed. Officer or employee of multi-state cooperative society cannot do. What you will do audit? You are officer, you are employee, you are fully biased person. Very good. Person who is a member or is in employment of officer or employee. Okay, for example, I am an officer, my employee is Raj, he also cannot do audit. Why? Because he will listen to me and I will listen to cooperative society. So person who is a member or employment, one more time, member or employee of whom? Officer or employee, he also cannot do. Person who is indebted to multi-state cooperative society, my one loan is pending, what I will do audit? I will be fully biased, okay? Or I have given security for third person for more than 1,000 rupees. Audit not allowed. I am giving security of other person. Then directly they will tell, sir, that other person is not paying. Properly audit, don't find out points. Okay. So I hope clear. Just read once. Nothing great. I don't think it will come. Why? Your favoriteest questions are there. What they will ask this? But still, body corporate, officer or employee, member or employee of officer of employee, person who is indebted to multi-state cooperative society or who has given guarantee for more than 1,000 rupees. This will also not come. Then directly teach what will come? No. Like that we don't know how to teach. Power and duty of auditor. What? Right to access books, account, voucher. After accessing book, you have doubt. Ask doubt. Okay. Shall be entitled to officer or explanation to give such information as he may think necessary. Very simple. Tell me two power of auditor. Right to access books, account, voucher. Ask any information, doubt, explanation which he may think necessary for performance of duty as auditor. Here officer refers to central register. No, other officers, managing committee member. Central register has still not come into picture. Now we will come. Now all question important from year to year. Rattamar. Rattamar. What is Rattamar? Learn every single thing. Everything super duper important. Start. All these questions have come how many times? Counting stopped. Counting is stopped now. Start. Power of central. See, how do I know which question will come? Central government came, Narendra. Narendra will tell, do special audit of these people. Narendra Modi, sir. Okay, moving on. A power of central government to direct special audit. Tell me, central government will tell us, do special audit in 3 cases. To whom they will tell? Auditor. Central government will appoint. Sir, why? Central registrar is there no here. Central government came. Means important question. No sir, very important. Very good. In 3 cases we will get direction for special audit. Special audit will be done for multi-state cooperative society. Special audit will be done in 3 cases. One last time. When special audit is done? When central government tells SSS. Sushant Singh Rajput. Absolutely no. That is SSR. This is SSS. Number 1. Affairs of multi-state cooperative society are not managed as per sound business principle. What is a good principle? Welfare to member. No middleman. You are not doing all this. You are thinking about money. Gone. Special audit. Managed in a manner it's likely to cause injury or damage to the trade or business to which it pertains. You are causing injury to the business. Are you clear? You are intentionally selling at higher price. That is not your intention. Your entire industry you are spoiling. Okay, others are also suffering due to you. You are causing injury or trade. Okay, you are intentionally not supplying milk. Why? So tomorrow price will be more. All this not allowed. Endanger its solvency. You can become insolvent. Sir, if they become insolvent, good no. And member money will go. They have taken deposit from member. Okay, one last time. But you don't become so emotional. Just learn. Tell me, power of central government to do special audit in three cases. S, S, S. Okay, multi-state cooperative society is not managed as per sound business principle, or it's managed in a manner it's likely to cause serious injury, trade, serious injury it is likely to cause serious injury or damage to trade, industry or business to which it pertains. And last, endanger its solvency means it can become insolvent. Okay, it can become insolvent. One last time, tell me, special audit central government when? Central government can tell for special audit in three cases. To whom? To whom? To whom? Multi-state cooperative society. S, S, S. Affairs of multi-state cooperative society are not managed as per sound business principle. 2. It is managed in a way it's likely to cause serious injury or damage to trade, industry or business to which it pertains. Last, endanger its solvency means it can become insolvent. Learn nicely. Small break, 10 seconds. Time up. One, two, three, start. One last time. Tell me, when is special audit necessary? When multi-state cooperative society is not working as per sound business principle. Second, it's working in a way it's likely to cause serious injury or damage to trade, industry or business to which it pertains and endanger its solvency. Very simple. Now tell me, central government can tell special audit only when it holds more than 51% stake. See, if you are my dad only now, then only you can scold me. Otherwise, you can never tell me anything. If by mistake I tell my cousin is there, I will tell your child very bad. They don't like, they gossip at home. Arey, this third class, we will never go at his home only. Why is he telling? Our child we can scold. Any other child we scold, no, then no one likes. Are you clear? For example, if someone will scold my child, I to like, but my wife doesn't like. Are you clear? So it's mentality like that only. In India, what to do? So you can give me special audit only if you are my owner. If you are not my owner, who are you? Get out, central or state government. Simple. Lifetime you will understand. Central government will tell special audit only if central or state government hold 51% or more stake. Oh. Tell me, whom, wait. Report will go to whom? Don't learn. Whoever told for audit, central government. Special auditor will report to central government. On receipt of report, central government will take action in 4 months. Sir, what if they don't take action? We will send the report. They will send the report. Government will send the report to multi-state cooperative society, either full or extract, and tell them send it to member or read before members in the meeting. Okay. Last, sir, expenses who will determine? Central government. They have to write. No, CA will not do free audit. Okay, and it will be paid by multi-state cooperative society. If not paid, it is recoverable as area of land revenue. Sound business principle means what? Anything which is against cooperative society. You are trying to earn money. That is not allowed. Understood? Okay. Now, sir, this full again, can you explain? Very simple. Tell me, here. Don't read. Tell me, who will give special audit instruction? Central government shall order for special audit only if central or state government alone or together hold 51% or more share. Tell me, as soon as report is there, it will come to central government. Central government will take action in how many months? 4 months. Sir, if they don't take action, they will send the report to multi-state cooperative society, who will send it to member or tell them to be read before the member in the meeting. Last, expenses will be determined by central government. Who will pay? It will be paid by multi-state cooperative society. Sir, if not paid, it will be recoverable as arrears of land revenue. I hope it is clear, super clear. Last question and full 5 marks in your pocket. Now, central government is being over smart. Registrar is also there. You are registrar, to no authority only. Third class person. No, he is also important. Come now. Moving on. Registrar is also good person. Okay. Inquiry or inspection by registrar. Now, central government out of picture. Registrar. Tell me. First of all, understand logic. Tell me when inquiry or inspection will be done. When something wrong is there. Of course. Now, central government special audit. Inquiry, inspection, register. So, why central government? Good word. Because it's government, right? Okay. This is just register, local person. Inquiry or inspection. It will order for inquiry or inspection in 4 cases. Number 1, federal cooperative to which multi-state cooperative society is associated. What is federal? My colleague. Example, mother dairy complains, sir, Amul is doing malpractices. Amul is putting water in the milk. Sir, allowed? No, not allowed. Trust quality important members. Are you clear? You have to do welfare of people, not do such cheap things. Oh, so it may request from federal cooperative to which multi-state cooperative society is affiliated. Federal means what? Your colleague. Second, any complaint from creditor. More than one third of members of both. More than one fifth of total members of multi-state cooperative society. This one third is what? Board committee member. Your member, your. Okay, this is total member. Hold the inquiry or inspection into working and financial condition. What question can come? Tell me, when will inquiry and inspection take place? Central Register may hold inquiry and inspection in 4 cases. Number 1, federal cooperative to which multi-state cooperative society is associated. Creditor, more than one third member of the board, more than one fifth of total member of multi-state cooperative society hold inquiry and inspection into working and financial condition. But don't go like SEBI. Read, we are here. 15 days notice you have to give. Why? They might not be prepared. Tell them we are going to come. However, before holding inquiry, 15 days notice should be given to multi-state cooperative society. Very good. Sir, can we learn this again? Small break, 5 seconds. Time up? Yes, sir. Okay. Tell me, inquiry or inspection? Okay, from, tell me this central register. Federal cooperative to which multi-state cooperative society is associated. Creditor. Any one creditor also. Why? Because he has money is pending. Okay. Creditor. One third of member of the board. More than one fifth of member of multi may hold inquiry inspection into working and financial condition of multi-state cooperative society. However, before holding inquiry inspection, 15 days notice should be given. Okay, so they are prepared. Sir, what power he will have? What power? He will access books, accounts, vouchers, cash and other property. Anything he can do. Central register. Second, he may tell officer to hold a meeting. But before 7 days given notice, if he wants to call meeting, okay, he can tell officer call a meeting, but give him a notice of before 7 days of meeting. Last, summon any person, okay, to who has knowledge of multi-state to appear before him at head office or any other branch of multi-state cooperative society. Simple. He has 3 powers. Does this seem okay? I don't think they can ask, but still. Last question. Now, that was 4 months. Within 4 months, central government will take action here. Central register shall within a period of 3 months from the report communicate the report to multi-state cooperative society. Tell them your members are doing wrong or not doing wrong or whatever. Okay, within 3 months. One last time, sir, what power he can have? He can access books, accounts, voucher, cash, other property. Second, he may tell officer of the society to conduct a meeting, but before 7 days, you have to give a notice. Last, summon any person who has knowledge of matters of multi-state cooperative society to come at head office or any branch of multi-state cooperative society. Sir, Sir, tell me whom we will tell. After receiving the report within 3 months, central registrar will send the report to multi-state cooperative society that is there anything wrong in financial and working condition or everything is right. Sir, audit to auditor, after audit these questions are there. That is why these are important. Half chapter over. Any doubt? Now rest all is chintu pintu time pass. You have to fully not understand. Many people say understood, very good. Learn now. Learning should be there. Okay. Let's move on to the last part. 1 minute break, very important. We are starting. Listen for half an hour very nicely. Moving on. Any doubt? No. Today, please tick expected question in exam. Today, which all chapter? All chapter or this chapter? Not understood. All or this? Reply fast. All is available YouTube. For this chapter, I can tell all already available YouTube. We have shooted for everyone. Expected nothing is there. You look at the face and you should understand. See the first face. This has come in exam. Point number 4. Moving on. After point number 4, these two are important. Reserve fund. I already told. Whichever we have learned. Done. 3 questions told till now. Special reporting. Very important. 4 questions done. Done. Whichever you learned. Simple. 4. Then last 2 questions. Everything from here. This to this. This entire and this. This entire and done. In 2 pages also. Out of 3 pages, I am telling 5 marks will come. In BCom also, less they give. BCom also 5 pages you have to read for 1 question. This is easier than BCom also. Chalo, moving on. Let's not go into that. Now, 1, 2, 3, start. Rest all, as I told, are similar. Now again we are coming back. Half an hour. I want pin drop attention. Only half an hour. Listen very nicely. I want to finish 2 pages. Okay, let's start. And then after the break we will come study for 20-25 minutes. Come. Different entities. Till now we have discussed one question, it's second question. There are several entities, but what we have observed is any entity comes in exam, you can write certain common points. Okay, common points are what? General. Let anyone come. Okay, so education come, hotel come, hospital come, charitable come, club come, anything comes. Are you clear? General questions are there. Done. For all chapters we have already uploaded important. Okay, general things to be checked. So we divide our entire discussion into 5 parts. General points to be checked. After general, receipt, expenditure, asset, liability. 4 things in P&L. What is there? Receipt. This side what is there? Expenditure, asset, liability, and general point. Over. For every entity, whichever you want, we will take 3 demos before the break. Okay, any entity in the world, we will take 5 points. Out of 5, 4 you already know: asset, liability, income, expense. Let us discuss general points. General, what do you check? Review legal status of entity. Do I need to explain the sole proprietor, partnership, HUF, LLP? Second, obtain and study fundamental legal document. Example, for proprietor, we have Shop Act license. For partnership, we have partnership deed. For trust, there is some trust deed. HUF deed. Review and study fundamental legal document. Review internal control system of entity. This you know. First stage is ROMM. Review internal control. Third, examine the powers of members of managing committee or governing body. What power is there? Which checks they can sign? About which amount they can sign? What is the power of managing committee? Can they sanction all expenditure? All that. So for that we need to see the power. Study the minutes of board meeting, governing body or managing committee. Why? In minutes of the meeting it is written who will sign on bank account, who has the power to authorize expenditure, who has the power to sanction which expenditure, who has signing authority, etc. Last, examine accounting policy followed, accounting record maintained. Over. This is maximum we can study. Let any entity come, points are same. No need to learn them. One more time, 3 times you read, automatic it will be learned. Number 1, review legal status of the entity. Obtain and study fundamental legal document, whichever document is there. Come to the third point. Okay, review internal. Review internal control. Examine the powers of members of managing committee or governing body. Okay, study the minutes of the meeting of governing body, managing committee. Last, examine accounting policy followed, accounting record maintained. Don't feel it is hard. Just read once. Every time we don't need to get out of 5 a 5. If we get 3, it is okay. Every time if you get 3, do you understand how much marks you get? For every question, if we secure a 3 marks, okay, MCQ, let us assume out of 30 we get 25. So how much balance paper pending? 70. Let's assume 5 marks you don't know. One question you don't know. 65 marks. Multiply. You only get how much? 60%. Still it is 39 marks. 39 marks plus 25. 64. If all chapter you know half baked, still look at the answer. I hope you understood. 1, 2, 3, start. Tell me general things. Review legal status of the entity. Obtain and study fundamental legal document. Third point, everyone knows. Examine internal control system of the entity. Okay. Then examine the powers of members of managing committee or governing body. Study the minutes of the meeting of managing committee or governing body. Examine accounting policy followed, accounting record maintained. Small break of 5 seconds. 10-second take. Time up. Now, in receipt, what is there? There is one special receipt. Example, let's take school. Tell me what is the receipt, main thing in a school? Fees. What is in hotel? Room rent. What is in hospital? Okay, hospital, patient fees. Except that, main you have to understand, which is the main. Except that, there is one technique which is common, grid. Except the main, we have grid. What is grid full form? Government grant, rent, interest, dividend, donation. Government grant, rent, interest, dividend, donation. All. Take any one. I will never read these points now. If you want for demo, I will read 1 or 2 times. Same in all. Government grant, rent, interest, dividend, donation. Government grant, rent, interest, dividend, donation. How to audit? Simple points, remember. We want only 3 marks. Government grant. We will see whether grant is received by government for specific purpose. Are the funds used for same purpose? Over. 2 point done. Rent. If we are receiving C, we will see rent, whether it is properly received as per the rent agreement. Okay, we want to write more. If there is a escalation clause in the rent, C, the amount is received as per escalation clause. Over. Interest. Okay, we will see all the investments done in fixed deposit, obtain a register of investment, and see interest is properly received as per the agreed terms and conditions. Donation. Okay, see, we will compare the donation with the donation register, or in the magazine there is a subscription magazine. Okay, annual report. In the annual report we will see donation received, compare the figure with that. Second point, if donation is received for a specific purpose, we will see whether it is used for same purpose. Dividend, how to check? Okay, we will obtain a register of all investments done and see dividend is properly received for all investment. Over. But for that, once you should have read it, only once. Now tell me, if I was not there, you still know these points, but you will never write. Why? Because you did not listen once also. One last time again I will speak. Government grant. If government grant is received from government, see, are there conditions attached to the grant? Whether is it used for same purpose? Rent. We will see rent agreement and see rentals are properly received. We can also compare rental with bank account. If there is a escalation clause, see, properly we are receiving as per the clause. Interest. We will check investment register to see interest is received properly. Donation. If donations are for specific purpose, see, amount is used for same purpose. Compare the donation with subscription register or annual report. In expenditure, if you don't know anything what to write, okay, check various expenditure like staff, common with vouchers. Are you clear? We can also compare if there is capital expenditure, see, it is sanctioned by appropriate authority. Third and last point, all the expenditure we will see, is it matching with budgeted? If not, report to managing committee. Over. Over. Only 3 points. One last time, check all the expenditure with the voucher, compare expenditure with budgeted expenditure. Okay, if it is exceeding, tell report to managing committee. Capital expenditure is done, see, it is sanctioned by appropriate authority. Asset and liability, what to explain? Nothing good. Now, this to nothing I have made you study. I have just told you menu. This is what you are going to eat. Before we go to restaurant, we check out what is the rate and menu, right? Now, let's go to restaurant, okay? Till the time you are tired, I will keep teaching these points. How many times? In everything. But these days, what I taught you, no, good you listen, but it doesn't come like that. They ask one special point these days. What? I will tell. Start. Education Institute. General 2 points are there, they don't ask. Okay, let me explain normally and then I will tell you what they ask in exam. Okay, start. Examine trust deed or regulation. See, now all points they have not given you. Only 2 are given. We studied all 8, they have given only 2. Examine trust deed or regulation and see all provision affecting accounts. Read the minutes of managing committee or governing body regarding who will operate bank account and who will sanction expenditure. In minutes of meeting written, principal has the right, okay, account officer has the right. Now, receipt. Tell me what is the biggest receipt for education institute. Here we are talking of schools, okay. What's the biggest thing for school? Fees. Become emotional in fees. By mistake you don't know 2 point, okay, had I not read this, what I would write? Simple. Check the name in student register is matching with fees record. In student register, attendance record 22 students are there, fees only 21. Why? Check the name in fees register with the student register, and C, fees are recovered from all student. Second, examine. Now what you will check? Internal control regarding, okay, the amount of fees charged. Is it the same for all the student? Third, what I will check? Okay, cash book. I will check cash book. Compare entry in cash book with counterfoil of receipt issued. What is counterfoil of receipt? You know, in school when you go, there is a Xerox. They will give you one receipt and another Xerox is there, carbon is there. Okay, so that you have to check with carbon copy duplicate that all the amount is included in cash book. Many time I will tear a receipt and put money in pocket. Okay, so check entries in cash book with counterfoil of receipt issued. Counterfoil means Xerox of receipt issued. Okay. 3, if any student has paid advance fees, see it is properly carried. If fees are due, see it is carried forward to next year. If any student is not going to pay the fees, see it is properly authorized by managing committee. I want to speak more. See if concessions are given or scholarship is given, it is approved by properly authority. Over how much ever you know, whatever you know about fees, right? Maximum what will happen? He will give 2.5. Okay, I don't want your marks. Read. Now, if you mean, oh, I am not able to learn. No one is able to learn. I also said points just in time pass. Read. Check name in student register with class register. Of course, you will do this. And test check the amount of fees. Is there a system of internal check to ensure fees are properly charged? Check fees by comparing cash book with counterfoil of receipt. Fees paid in advance are carried forward. Fees that are irrecoverable are written off by appropriate authority principle. Oh, one point I forgot. See, it can happen. Admission fees are credited to capital account. You know, in school there are advance admission fee that is given as a refund once you go out of the school. So if I'm in KG, in 12th I will go out of the school. In 12th I will get those fees. Many people to forget only. So those are capital fees, not revenue. Admission fees are taken to capital account. Fines or late payment are received. Hostel dues are also received. Hostel also become emotional. You can write one more point. If damage is done to hospital, see this amount is recovered. Whatever we know, right, without thinking marks. True. Report old arrears. If old money is pending of fee, dormitory, report to managing committee. Now, favorite point came, grid. But they don't ask. These days what they ask, not receipt. They will only ask, write about fees, 4 marks. New ICI is there. Earlier what used to happen? I used to make you learn this only. For any write this. New ICI very smart. But still we will run full. Verify rental income with rent agreement. Over. Only 1 point given. Verify interest and dividend with income from investment and see various securities held. For every share, have we received dividend? Verify any government or local authority has given grant for playground, etc. See any expenditure is disallowed under grant. See donation received for school. Is the donation received for playground, hospital, water pub, God knows what you call in English. See money is used for that purpose. Liability. Caution money and deposit money received by student should be taken to liability. It's not a revenue. Over. Payment. Verify all the PF money of staff is invested in security. Provident fund, certain portion you pay to whom? If you don't know provident fund, certain portion is paid to staff and certain we invest. So they get at the time of retirement. So verify all the PF money is invested properly. Vouch all capital expenditure is sanctioned by appropriate authority. Vouch establishment routine expenditure like telephone, stationery, printing. Inquire into heavy expenditure. If any expenditure, anyways we will inquire. See if expenditure is more than budgeted, report to managing committee. I told you 3 points. Increase in salary of staff is approved by managing committee. Teacher salary increase. Asset, 2 point. Ascertain a system. There is a system for ordering. What? Provision, food stuff, clothing. That system is proper. You order food at times, okay, clothing at times, uniform, okay, proper. Whether inventory also do physical verification of hockey stick, cricket bat, furniture, staff. Over. Now tell me, had you read, you would have understood. Of course. Now what brain I will give what value addition in this? Maybe you know better because you qualified recently school. But by the way, whatever we are studying is all useless. These days school are fully electronic. Which school will give cash book? And which student will give fees in cash? Today no student gives fees in cash. Not allowed. In it is written no cash allowed and we are learning this. At times I wonder, hardest course of India, best institute in the world. The CA is the best degree. And what you are saying, we are teaching AI, we are teaching machine learning, artificial intelligence, latest new syllabus. This is the new syllabus of CA course. This is since when? Since I am studying. They have not changed one word also. All these points are useless. Someday, someone should take ICI, all people, once to school, that what school today is. There is no problem in learning. Nothing is true. Not even one word we can audit here. These days, private company are there in school. There is no committee. But forget. I hope you understood. Okay. Now let's move to second. All are same. How much ever you want, we can learn. Quality education, that is not our responsibility. We are auditor. Only financial things we will check. Only financial. Chalo, we'll do this two more. Okay. All is super simple. Super simple. Which one you want? Let's take hospital first. Why? Hotel, my favorite. Why? Because we have hotel, no? Those who don't know. Hotel, the full life I have seen in hotel only. Audit of hospital. First, in hospital, what is there? They will never ask, write a short note on audit of hospital. I know them. They will ask what patient. Become emotional in patient. Number one point, tell me what will be. We will vouch the register of patient and see bills are issued to all patient. No patient is pending. Second, okay, in case, same, that's their favorite point. Compare cash book with counterfoil of the receipt issued to all the patient. See if the medical bill is pending of patient, it is settled before the settlement of the patient. Okay, tell me what more we can write in patient. Nothing is there. I was thinking from where to find points. Vouch register of patient with copy of bill issued. Register, bills are issued to all patients. Bills are issued to all patients from whom recoverable. Check cash book with counterfoil of receipt issued. In hospital, by mistake, if you tell them no cash, they will look like God knows why he got cancer. Not allowed. Hospitals are, God knows how much big they have become. Investment rent. Shall I teach? I will stay. See investment register to see. Proper interest is received, dividend is received, rent is received. Donation. Trace all subscription and donation to the annual report or donation register. Whatever amount is mentioned in annual report or donation register, entire amount is received. I don't know whether they have written or not. If donation is for specific purpose, to build radiology, cardiology, see it is used for same purpose. Done. Grant. Government grant properly accounted. More time it will take in reading rather than explaining. Explaining is more easy. Whether particular amount of bill can we write? You can write, provided they've asked that point. Payment. Vouch all purchase and expense. See whether capital expenditure is incurred. It is sanctioned by appropriate authority. Compare the expenditure with budgeted. If exceed, report to managing committee. Increment is authorized. Same 4 points. Same. Asset. See depreciation is charged on all asset at appropriate rate. Inspect share, debenture, bond. Compare them with investment register. In this much written, are there this much only? Obtain inventory, especially stock, store, do physical verification. Examine internal check. Okay, Internal check regarding, internal check means system, internal control regarding receipt and issue of store, medicine, linen is bed sheet, apparatus means bathroom, you do know many times. In hospital, there is no bathroom. You cannot move also because surgery. So bathroom vessel is there. The apparatus, all vessel, clothing, instrument is properly done. See, there is a proper system and it is recorded in inventory. Do physical verification. Over. If you read, it takes more time. In explanation, less time. Now many people tell, how to learn all this? I also don't know. You just go read this 3 times. Once we are reading, 2 more times read. If they want good CA, you will pass. If they don't want, their hard luck. Now Mediclaim is there. Now entire world is in Mediclaim, but not even one point of Mediclaim. And this is a new syllabus, by the way. New syllabus, anti-drastic AI. And CA student like also a new syllabus came. Struggle is real. Here nothing new. These days, by mistake also, if you go to hospital without Mediclaim, whether hospital you will die or not, before that only you will die by looking at bill. If by mistake hospital will save you, you look at bill and you will die. That much expensive. Moving on. Hotel. Hotel pilferage is the biggest thing in hotel. What is pilferage? Small theft. They will steal dye, they will take vegetable, etc. So proper control should be there. Now tell me receipt. They will ask room sale, 5 marks. Tell me room sale, how to check? C. Entries in the guest register. And C. Bill is issued to all the guests. Are you clear? All the guest bill is issued. Entry register. Second, we can also compare standard rate of the room with the actual rent charge. Inquire into difference if any. Third, okay, if we can check number of persons for bill is charged with entry register. Why? Extra person charge is there. We are talking of Taj Hotel. Okay. By mistake, 4 people, you charged only 3,000 rupees extra bed charge is there. See, that is properly done. In big hotel, they prepare daily occupancy report. See, daily occupancy report is matching with entry register and that is matching with bill. Are you clear? Okay. Let me read now. Charge for room sale is posted to guest bill by receptionist. Receptionist will post. Or in case of large hotel, there is a night auditor. Okay. So receptionist will prepare the bill. What is night auditor? In Taj, Oberoi, night auditor comes. He comes, name is night auditor. Okay. He comes and prepare the bills and go like that. Check the correct guests are charged. Correct number of guests are charged with entry register. Any difference between standard rate and the actual rate charge should be inquired. In many cases, we prepare daily occupancy report. Compare that with guest register and the bill. Proper records are maintained for hall. Okay, if you are given hall, special party, see amount is recovered. What to explain? Now this is nice point. God knows how they thought this before 10 years. This point, how they thought before 10 years when syllabus was made. Okay. Auditor can also check restaurant bill with kitchen order ticket. You know what is kitchen order ticket? Many time you give order, so ticket is created. One paneer butter masala, one naan, one this, one that. Okay. Compare with that ticket, the bill, same things are there. Of course, it will be same, no. Many time what they will tell, sir, for paneer tikka pay us directly. We will charge 10 rupees less. People can do that. Are you clear? So like that, check the restaurant bill with kitchen order ticket to see there are proper control. Taxes received are paid to government. Kitchen order ticket is what? They take order, no? These days to directly in tablet only we give order. Directly. Travel agent, okay? Ensure if booking is taken from travel agent, my proper commission is deducted. These days, Make My Trip, you book the room. So Make My Trip deducts 30% and pay to our hotel. Money received from travel agent is as per the terms allowed. Payment. Cost of minor repair and decoration is charged to P&L. Major expenditure, if any done, is capitalized with sanction of appropriate authority. In hotel, don't write managing committee. Okay. Casual labor. Hotel depends a lot on casual labor. For example, there is a wedding, so I will call 20 people. C. There are proper controls for casual labor. In our hotel, though, our dad only there. So what control? Everything is sole proprietor. Commission paid to. See, many times it is pay at hotel. You know what is pay at hotel? You pay the amount at hotel and then pay to agent. My dad never pays only like that. But still, I am telling that is pay at agent. So in that, what happened? Commission is paid to travel agent as per terms of agreement. So example, 1,000 rupees, 30 rupees is commission of make my trip. You pay to make my trip. They will also pay if it advance booking. If pay at hotel, then this point will come. See inventory like silver, cutlery, all the inventory which is there. Many times that gold vessels are there, silver vessel, it can be treated as fixed asset also. Depends on the life of inventory. See inventories like silver, cutlery are fixed asset or inventory. It depends on accounting policy followed by hotel. And definitions of inventory and fixed asset are closely followed. Over. Any doubt? No. How much ever you want. Statue of Unity in Ahmedabad. Our hotel Porbandar. Porbandar, no development. Gandhiji birthplace. No development. Before 2-3 days, they are saying that all new things they have kept in statue. But I have visited hotel. Okay. Shall we go ahead or take break? I don't know. All this only we will continue. Yes, we have a 3-star hotel. Tell me what to do. Break. After break, hardly 15-20 minutes pending. But let's take break so we can learn. Okay. What time we come back? 10:10 is good. Reply fast. 10:10 is good. We will study for 20-25 minutes, not more. See you at 10:10. Bye bye. Chalo, welcome back. Welcome back. Welcome back. Welcome back. After finishing government, cooperative society, single multi, school, hotel, hospital, we are moving ahead in our journey. Club, charitable, NGO we will discuss, and then we'll discuss 2-3 more and then go ahead. Can we go ahead? Yes, sir. Start. Ready? 1, 2, 3. Club. Tell me, club means which club? Which we saw before 10 years. That kind of club, not the current club. Current club, if by mistake also you see, you will be dead. That much automation they do. I went with my friend. Of course, we don't have any club membership. Okay. We don't go only much out. But still, I went with my friend one day. Okay. Shocked. You walk, automatic debit charge is there. Okay. First of all, club fees are how much? 10 lakh, 20 lakh, 30 lakh. The registration fees. As soon as you go, there is a member charge also. So we 3 friends went together. Of course, his charge must be free. God knows, I never asked. But our 2 fees are properly debited. You have to check. In book, what is written? Check with entry register. There is no entry register in club these days. Everything high tech automation is there. Restaurant, you in club restaurant is there. Seafood prices are properly charged. Okay, member account is debited. Several things are there, but here what is written and what is the actual club is completely different. Okay, but let us read what is written here. General, they have given only 1 point. See, financial powers of secretary are there. If they have exceeded, report to managing committee. Means secretary is spending more than the limit required. Entrance fee, what they will give here, every time you walk to a club 10-20 rupees fees are there. Okay, vouch the entrance fees with register maintained where lot number of people are there. Okay, with register or counterfoil, this is not there in real life. Subscription in club, become emotional in subscription. Vouch the subscription with vouch the subscription with members register. How much ever members are there, subscription amount is received. Vouch total subscription with subscription due and subscription received. So total subscription 42 crore. Due is how much? 2 crore. 40 crore should be received. See, if last year arrears of subscription are there, they are properly carried forward. Third point, if advance subscription is given, see it is properly carried forward. If any subscription we are not going to receive, see it is written off with the sanction of appropriate authority. What more we can write in subscription? Okay, nothing we can write. Trace subscription with register of member. Reconcile total subscription with subscription received and subscription due. Okay, in each we have only this heads to check, right? Yes, only this much heads to check. General receipt liability, but they are specific question in one head these days. Okay, arrears from last year of subscription are brought forward. Arrears of last year are properly adjusted. Appropriate steps are taken for recovery of arrears. Amount irrecoverable of subscription is mentioned in audit report. Advance subscription is properly accounted. If I don't tell you also, you can write 5 points. Moving on. Food item in club, see if there is a proper internal check. You are charged for food stuff, drink provided. Okay, proper charges are debited for food stuff, drink and accessories you like billiard, tennis, swimming pool, etc. In fact, club charge even more higher than normal restaurant in many cases. Usually it is less. See debits in the register of supply, means members register debit should be there. You are keep on eating food but no debit, then problem. See debit and service a member to see member account is debited. Moving on. Payment. Vouch purchase of sports item, crockery, trace them with inventory. Verify purchase of food item, wine. See the sale price charged on food item is appropriate. So gross margin is earned. It should not happen. You are acquiring wine in 1,000, selling in 800. No, 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 no. Okay. Unsold goods should be in inventory. Of course, they will be in inventory. Assets, physically verify an investment. Nothing. Come here now. Charitable institute. What? See here. First of all, remember charitable and NGO. 2 points are very unique. They are exempt from tax. So you have to compulsory remember no taxes are paid by these people. So in case any tax is there, see the deduction is claimed or refund is claimed. Charitable purpose are for specific purpose only. See whether all objectives are as per that purpose. In that another charitable big fraud, what happens I will tell you. Okay, many times this charitable institute issue dummy receipt. For example, if really what happens, why this charitable and these are there, really I am telling you, charitable and NGO, why they are there, I am telling you. For example, my income is more, I have to pay more tax. But if you don't know, if I donate to charitable institute, any, there are several for education, Bal Mission Trust, this is for Bal means what, children. Okay, children trust. If I give to them, what will happen? Okay, that is allowed in income tax 100%. So I will give to them 2 lakh rupees, that much less tax I have to pay, some percentage. 2 lakh rupees I give to them, that much less tax I will pay. But in real life, what happens? As soon as I give to them, they charge 20% commission and pay out of 2 lakh rupees. 80 is how much? 1 lakh 60,000 they will repay to me. Then, what about children? Nothing, children. 20% they will keep in their pocket. This is what really happens in India. So I give 2 lakh rupees. What happens? 20% commission they charge. Why? For giving me dummy fake receipt. Many people charge 5% commission, many charge 4 every time, and then I get call. Now I don't get because I don't pick up only. That is what happens in India. So they will tell me 4% a commission is there, full amount we will repay, on the spot repay cash. You have to give check, so you get tax benefit, 4% they will deduct and they will refund. Entire racket. Government is doing a lot, but nothing they are doing to escape that. Read now. Where is liability not there, not given? Half they don't give only. Many things not given. Start. Study the constitution under which trust is set up. Examine the trust deed. Verify the trust is functioning in a matter as specified. Examine the system of internal check regarding money collected. Is there a proper system? Okay. Verify in detail. Whatever income is collected, is it deposited to bank account or fraud is going on? What I explained you. Receipt, subscription and donation. Same copy paste. As certain changes is made in annual life membership fee, whether official receipts are issued. Many times the trust gives fake receipt. There is no trust, but we get receipt and we claim deduction also. Government will catch. Government doesn't catch only. For government, these all peanut amount, nothing. So today, if I tell to government, 2 lakh rupees donation I gave, no one checks. For 2 lakh, what they will check? There are crores of people. 2 lakh is peanut for them. Understood? So official receipts are issued. Confirm control over unused receipt. Unused receipt book should be in proper custody. Otherwise, what will happen if I will keep on issuing receipt. Take. See counterfoil of receipt with cash book. Verify total subscription and donation with the figure mentioned in annual report. Is it matching with that? Examine system of internal check. See, charitable institute hold what? Box office, box collection day, flag collection day, dance collection day, celebrity day. Proper money is received of tickets and it is deposited to the charitable trust. Grant. See if the grant is received with the minute book. See the amount spent is for the same purpose for which grant is received. So simple. Interest, dividend, what to explain? Rent, what to explain? Special function, concert, drama, property money is collected. Income tax refund. If anywhere tax is paid, see, we claim proper refund from government as we are exempt from tax. Payment. Vouch the payment of grant are done according to the purpose of charitable institution. And no trustee or managing committee member is benefited from the payments. Verify cash and bank. Asset, nothing is given. Verify security, movable, immovable property by inspecting title deeds, okay, investment register, inventory, etc. Over. As you said, they keep 20% with them. It is not shown in books that 2 lakh received from someone. Then how they find fraud? No, those who show 2 lakh rupees. Those who show 2 lakh, many people don't show only. Many people they show 2 lakh. 20% they will keep and then they will say, we gave food in Kheda district. Now who will go to ask their children, Kheda district, you received food on 28th February. All this work, who will do? Anything I can write? No. Today, I fed 120 beggars. Yeah, road. Very good, sir. Proof, nothing. Many celebrity fake photo they take. They go there and give chocolate 5 rupees. They will all laugh. Oh, lovely meal like that. Forget, but more we speak, more everyone. More I open my mouth, more chance I will go to jail. NGO is also there. Shall we read this? After that, I am not reading. All are useless only. Local body also you read everything. Two I will teach, which are different ones. Leasing company and hire purchase. NGO. Last three contribution from my side. I want that I should teach leasing. If that comes, you can answer. But NGO is same. Shall I read? Chalo, in 5 minutes finish NGO and then we move on to hire purchase and leasing and we are done. Rest also you read once. See, outlook you understood. You also must be wondering, I am not doing only anything. Okay, but it is like that. Tomorrow, I forgot to tell you, is Thursday. Very good, sir. Thank you, you told. Thursday and Friday, we will discuss chapter number 5. It's a high weightage 12 to 15 marks chapter. So entire paper 15 marks is a lot of weightage. Okay, that is why we are giving 2 days. Enough. Slowly we have to go. No hurry we want. Okay, we might teach you 2 hours, but okay, no problem. Okay, start. Come here. NGO, knowledge of NGO vision, mission, knowledge of all statute you should have about NGO, legal form of organization. Okay, NGO chart you see who is responsible for what. Okay, examine the minutes of board meeting, managing committee, governing body, study accounting system, internal control, set materiality level. So about that only you check. Okay, involvement of expert review of previous year's report. Now, grant for project. If a particular grant is received for project, see the letter of the donor and see money is used for same purpose as mentioned in the grant. Sir, can you name few NGO? Being Human, Cry, Child Relief, and you. Okay, many are genuine NGOs also doing too good work. Okay, so that also we cannot escape the responsibility. Fundraising program. In case there is a fundraising program, they call celebrity, Salman Khan, Arbaz Khan. Okay, see proper controls are there, and whatever money we receive is deposited into bank account. That is important. Only doing program not important. Membership fee. NGO also membership is there. I came to know today. Fees received from membership. Ensure proper classification is made between entrance fee, annual fee, life membership fee. Life membership fee is what if you don't know? It's credited to capital account. But entrance and annual fee goes to P&L. Reconcile fees received with fees to be received. Okay, so total this much to be received, this much due, this much received. Subscription, check subscription with subscription register. Reconcile subscription with report in the magazine. Okay, interest, dividend, nothing to explain. Come here. Program and project expense. It is clearly mentioned in the project fund should be used for this purpose. See, it is used for this purpose. In case income tax is deducted, okay, then claim refund of the same. Verify agreement with donor supporting particular program. If donor wants to contribute towards education, see funds are used for education of underprivileged, etc. In case project involve contract, ensure income tax is deducted, deposited. Establishment, PF, ESIC, same points are given. Fixed asset, vouch all the acquisition, sale or disposal of fixed asset. Check donor's agreement for grant. If donor is told we will give you this ICU machine or this radiology machine, are you clear? Then same you have to check. Investment, check investment register. All investments are not in private name, they should be in the name of NGO. Cash in hand, bank balance, what to explain? Nothing. Last 2 points are good. Corpus fund. See, corpus is what? General. You can use for any purpose. So letter, vouch the letter from donor. It is written whether to use for specific project or corpus. Corpus is general. Okay, then treatment should be given accordingly. Reserve. Vouch letter from project with donor letter and board resolution of NGO. That how reserves can be used. Now we are moving to important. Concentrate. Not important. If they want to ask offbeat, they will ask this. Important, so nothing is there. Important, I only don't know what they can ask. Start. Come here. This will not come higher purchase, but I still want to explain you, so I am explaining why it will not come. Super simple. What is higher purchase? I buy a machine on hire, washing machine. When I will be owner, when I pay last EMI. So 30 EMI I will pay. On 30th EMI I become the owner. Are you clear? That you all you know. Now I will read. What I have to audit? Hire purchase agreement is in writing and signed by all parties. Second, hire purchase agreement should specify cash price of the goods, higher purchase price of the goods. What is the difference? Cash price means I can pay the machine in 30,000. But if I am doing higher purchase, EMI is there, so they will add interest. It will be 40,000. Okay, higher agreement should specify higher purchase price of good, cash price of the goods. If goods are acquired for cash, date on which agreement will start, number of installment, amount of installment, date and place of payment. Okay, goods to which the agreement relates, and ensure payment is received regularly. Simple. Even if I don't want to learn, I can learn. Here. 2 minutes over. Hire purchase agreement is in writing and signed by both parties. Hire purchase agreement clearly specifies 5 points. Higher purchase price of goods, cash price of goods if goods are purchased for cash, number of installments, amount of each installment, date and place of payment. Okay. Fourth, date the agreement will start, and fifth, goods to which the agreement relates. We have to see payment that regularly EMI is received. Over. Whenever goods are given on hire purchase, we have to see hire purchase agreement is there, and in writing 5 points. Last time I will speak because it will not come. Cash price of the goods, higher purchase price of the goods if goods are taken on higher purchase. Third, agreement on which date on which agreement will start. In an agreement, what is there? Okay, dates of payment, number of installment, amount of each installment, and last point is what? Okay, last point is goods to which the agreement relates, is washing machine, fridge, etc. Now understand lease. Definitely this can come. If the paper is off beat, of course we'll learn here itself. Okay, leasing company. Now understand there are two leases in India, operating and finance. If you know the difference. What is operating? It is same like rent. Okay, I am paying rent. For example, I want to purchase machine, car on lease. Okay, car is not given on lease, but let's assume car on lease. So I will just pay rent. Tell me who is the owner? Lessor. Who is the person who takes on lease? Lessee. Operating lease is same like rent. Now what is finance lease in real life? Because this entire is finance lease only. Finance lease is what? It is nothing but giving financing. Example, I go to Vijay Sales, I go to Chroma everyone knows. I want to buy a phone, I want to buy washing machine, I want to buy TV is a better example. I want to buy TV. Now I don't have money. So there is an agency, Bajaj Finance. Are you clear what Bajaj Finance will tell? Don't worry, sir. Pay 1 rupee, take TV. Or only one. Yes, sir, 1 rupee. Every month EMI pay. EMI. Oh, so basically Bajaj Finance is doing what? Tell me. It is just doing financing of TV. Okay, so that is what is the object of leasing company. Leasing company does what? In a finance lease, they will finance the asset. I don't have money, they will finance my TV. Tell me when I will become owner of TV? When I pay last EMI. Oh, so what's the difference between hire purchase and leasing? Leasing is basically what? Finance. They are doing financing. Hire purchase is on last EMI I will become. Here also on last EMI. But there is an option whether I can become owner or not. Of course, 100% I will become if I pay all EMI. I hope you understood, but that much knowledge is not required. Now, with this, let us start. You will understand better. Screen not visible. Yes, we have done. Please work. Please. Or net. Why net is God knows what happened. 1 second. One, two, three, start. Done. I don't know. Someone switched off, it seems. Oh, Bhagwan, fast. No heavy rain here. Full heat. Work. You are getting the voice. Oh, but screen, without screen, how to study? Yes, Porbandar is heavy, very heavy. Chalo, done. Where is connect? One, two, three, please work. Please. Chalo, done. Finally. Year. Start. Moving on. I hope you understood what is lease. 1, 2, 3, start. You have 360 years, 360-degree laptop is there. That we can move also. Concentrate now, concentrate. What is leasing? I hope you understood. So Bajaj Finance is basically doing what? Financing of my TV. Okay. So in that, what I will audit. Okay. What I will audit. No, two more points I want to explain. Okay. Whenever we want any asset on lease, no. First we have to send what? Lease proposal form. That lessor, I want the asset on lease. Lessee will tell to lessor, I want the asset on lease. After you got the asset, you have to again tell to lessor that the asset is acceptable. We will send the acceptance form that the asset is acceptable, and now we can start the lease. Remember these two things. Okay, start now. We just have to learn, very simple. Start. See, object clause of leasing company determine goods like capital goods, consumable, durable, in respect of which company can do such leasing. First point. See the object clause. You know what is clause? It is mentioned in a memorandum and article of association, all that. So object clause means what business it can do. See object clause of leasing company to see whether it can do leasing of capital goods, consumable, durables or not. First point. Second, see whether it can undertake financing activity. In many object clause it is written finance work not allowed. See whether it can do financing, because this is basically finance. Lease is financing only. No, you are just financing the asset and earning interest. See whether you can do financing activity or not. Okay, till now 2 points are done. Let us learn these 2 points. Audit of leasing company comes, copy paste you write, copy paste, full marks you will get 5 on 5. Okay, see object clause of leasing company to see whether company can do leasing of capital goods, consumable, durable. See object clause of the, see whether company can undertake such financing activity or not. Whether there exists a procedure to do credit analysis of lessee, like past track record, capital strength, collateral security. Whether there is a procedure where Bajaj Finance will check your documents. Usually they ask for PAN card number. Based on that, what happens? Your rating directly comes, credit rating. Okay. So if you have done any default, then you will not get loan. See, there exists a procedure to do credit analysis of lessee, whether his ability to meet the EMI, past track record, capital strength, collateral security. Simple. Next. Till now, how many points are done? 3. Let us remember this 3 points. See object clause of leasing company to see whether capital goods, consumable durables, whether they can do leasing. See whether company is allowed to do financing of such activities or not, financing of the asset or not. Third, see whether there exists a procedure to do credit analysis of lessee, like his ability to pay lease rental, credit record, past strength record, collateral security, etc. Now comes next point. Lease agreement will be seen, and see following points in the agreement. See, there is a proper lease agreement, then following points should be there. What will be there in agreement? Description of lessor, lessee and location where equipment is to be kept. Description of lessor, lessee and location where equipment is to be kept. Amount of tenure of the lease and date of payment, late charges, deposit or advance. Amount of tenure of the lease, date of payment, late charges, etc. Whether equipment shall be returned to lessor on termination of agreement and cost will be borne by lessee. Equipment will be returned or not. Whether agreement prohibits lessee from subletting the lease. Are you clear? Can you sublet the equipment? You have taken TV. Can you give to someone else? Yes or no? Will be written in agreement. Over. Now all points are super simple. This is agreement point. Examine lease proposal form is submitted by lessee to lessor requesting him to give equipment on lease. Examine lease proposal form is submitted by lessee requesting lessor to give equipment on lease. Lease proposal form. After that, you get the asset, so acceptance form. Examine acceptance letter from lessee is sent indicating equipment is acceptable to the lessee. So these two form we have to understand. Take small break 1 second. Whenever we want any asset, first we have to send lease proposal form. Examine lease proposal form is sent by lessee to the lessor requesting that we want this equipment on lease. After you get the equipment, examine whether asset acceptance letter, examine acceptance letter from lessee is received. Okay, that equipment is acceptable for the lease. Equipment is proper equipment, proper TVI received. Last 2 points. See board resolution authorizing particular director to execute lease agreement. There is a resolution. Only Mr. Shinde can sign on lease agreement. See Shinde's sign is there. See board resolution authorizing particular director to execute lease agreement. Last two. Insurance invoice. Insurance invoice. Ensure invoice is retained properly because lease is a long-term contract. Last, she copies of insurance policy have been obtained by lessor for his record. Insurance copy also you have kept. Tomorrow, if lessee will damage asset, you can claim the money. Super, super. Chalo, let us learn all points. You will feel it is hard, but it is absolutely not. We will speak all point except agreement. Agreement we will learn later. Here. See object clause of leasing company to see whether company can do leasing of capital goods, consumable, durable. See whether company can do such financing arrangement or not. Third point, whether there exists a procedure to do credit analysis of lessee, like checking his commitment to pay the funds, okay, a credit analysis, his collateral security, etc. Fourth point, see whether proper lease agreement is there and it is in the writing. What is inside lease agreement? Forget, okay. See whether it is written that particular director can only execute lease agreement, whether his signature is there or not, that also we have to see. Now 2 points are very favorite. Examine lease proposal form is sent by lessee, okay, that he wants particular asset on the lease. Examine whether asset acceptance form is sent by lessee that the asset is acceptable, okay. Last two, insurance invoice. Ensure invoice is retained as lease is a long-term contract. Ensure insurance copy is there with the lessor in case of any problem. Now, inside agreement, what is there? 4 points. Lease agreement will have description of lessor, lessee, and location where equipment is to be kept. Amount of tenure of the lease, okay. Date of payment, amount of payment, late charges. Third, whether equipment has to be returned to lessee after the agreement is over, whether equipment has to be returned to lessor on termination of agreement, and charges will be paid by lessee, whether agreement prohibits us from subletting the lease over. Last time we will try to learn. If this same question comes, all effort worth, otherwise zero, because understanding nothing is given here. Start. Leasing company. To audit leasing company, please write 5 points. We are learning all 8-9 points. See object clause of the leasing company to determine whether company can undertake leasing of capital goods, consumable, durable goods or not. Second, see whether company can undertake such financing activity or not. Third point, whether there exists a procedure to do credit analysis of lessee, like his ability to pay lease rental, past credit record, collateral security, etc. See whether lease agreement is in writing and signed by both parties. Try to write 2-3 points of lease. What will agreement describe? Description of lessor, lessee, and location where equipment is to be kept. Amount of lease rental, date of payment, late charges, total duration of the lease. Whether equipment has to be returned to lessor, equipment has to be returned to lessor and charges will be paid by lessor. Whether the agreement prohibits us from subletting the equipment. Are you clear? I hope you understood. Now, two points here. Examine lease proposal form is submitted by lessee requesting lessor to give equipment on lease. Examine asset acceptance form. Asset acceptance is given by the lessee to the lessor that the asset is acceptable to the lessee. Okay, last, examine whether there is a requirement that a particular director can execute lease agreement. His sign is there. Insurance invoice, insurance invoice, insurance invoice. Over. Ensure invoice is retained and it's a long-term contract. See copy of insurance policy have been obtained. Good. With this entire chapter in the bestest way we have tried, okay, to finish. Balance you can read, and see you tomorrow with a last chapter. Bye bye. Good night. Very good morning, guys. Warm welcome to the best lectures of FMSM and Audit nationwide. Welcome to your own YouTube channel. Many people fear, sir, chapter 5 is very hard. Audit of item of financial statement, P&L item, balance sheet item. Shall I skip this chapter? Remember, don't ever skip a chapter. The biggest crime is skipping a chapter. Always remember, audit portion or any subject portion, okay, they divide the paper into three parts. 30% of the paper is easy, 50% is medium, 20% is hard, okay. And usually why you find everything hard? Because you skip a chapter. Of course hard everyone will find hard, but 30% easy, that will come from a chapter which you have skipped. So they'll ask a very easy question from this chapter, but you will still find it hard because you skipped the chapter. So just watch this revision lecture. It's one of the best test lecture. Should I need to do anything else except this lecture? No, no, no. If you see this entire lecture 2 times, 3 times, your confidence will increase. And I assure you, everything will come from this lecture only. What you can expect from this lecture? Excellent conceptual clarity of all concepts, plus everything will be learned in the lecture itself, whatever things are required to be learned, of course, okay. Enjoy one of the best lectures of chapter number 5, audit of item of financial statement. And if you like, okay, if you like the lecture, do give a like button. It motivates us a lot, and share with your friends too. Thank you. Very good morning, guys. Warm welcome to the best lectures of FMSM and Audit nationwide. Welcome to beautiful chapter number 5. What is the name of the chapter? Audit of item of financial statement. And this is our last chapter. Sir, what do you mean by the word item of financial statement? Just look at balance sheet and P&L. Okay, visualize. There's a P&L. Yes, sir, I can see P&L. In P&L, this side, I think reverse will be there due to camera. But just to remind you, what is there this side? By sale of goods and service, by other income. Okay, come to this side. What is there? Sir, this side purchase is there. Sir, this side expenses are there. Sir, this side depreciation is there. Sir, this side amortization is there. Very simple. How will you audit these items? So simple. So what is the agenda for today? How to audit sale, how to audit other income, how to audit what purchase, how to audit depreciation, how to audit other expense. Every item. The only difference between a 30 and a 60 is this chapter. The only difference between 40 and 55 is this chapter. It's a high weightage, high octane chapter of 15 marks, out of which 5 marks I already know what question will come. So we are effectively studying this chapter only for 10 marks. Many people just fail. Not because they are unintelligent, because they have a nice fancy, I will skip to chapter 9 and 5. The day you decide that, no, it means though you might get 45, but actually you are 65 deserving. But you are getting 45 just because you have a wish of skipping two easiest chapters in the lot. This one's even more easy. We don't want 5 on 5. It's okay. 3.5, 3, 2.5, still fine. Something is better than nothing. Are you clear? So every item how to audit, we will learn here. Okay, moving on. Then today, later part of the day, or maybe tomorrow also some part, balance sheet how to audit. Now you'll say, sir, what is there in balance sheet? I have drawn so many balance sheet. Very good. Tangible, fixed asset, how to audit. Intangible asset, current asset, loan and advance. Okay, how to audit? What to check? Come this side, liability, share capital, how to audit, borrowings, how to audit, okay, current liability, how to audit. Every item how to audit. That's the only thing we have to study in this chapter. Any 1 or 2 item will come. As I said, 3 questions will come. 1 I already know, so 2 will come. Out of the 2, sometimes 1 they are so easy that had you not studied the chapter, still you would have known. But sometimes, okay, So effectively for one question we are studying everything. But leaving that aside, we are just studying conceptually. I hope you understood what is the background. Is it an important chapter? No, because this is very important chapter. Okay, all chapters are important, but this is favoriteest chapter of ICAI. Why? Because whatever student don't like, they definitely like. Okay, so very nice chapter, amazing chapter. Without wasting any time, let's start right away. Of course we'll go very slow in this chapter, reason being just like that, okay, because we have split it into 2 days, so we have no hurry whatsoever. We are going to go little slow in this chapter. Let's start. Little slow means we will not revise very fast, of course. Okay, start. Audit of items of financial statement. Our day gets divided into two parts. Okay, tomorrow we want the lecture to be a little small, so we'll take it bigger today. Start. First word before learning anything is assertion. Now many people might say, sir, I already know assertion. Very good. You know, others don't know. Okay. So again, I have to revise assertion. We have studied this in chapter number 4, but let's do it again. Okay. Fully. Do I have to learn? I will tell you what to learn. So whatever you have to learn in your ICI module, you will do double tick. Why ICI module? You don't have hard copy of this PPT, right? So that is why ICI module you open, do double tick there. It means that you have to learn. Rest all questions are just for understanding. Start. First word. Okay, any item, be it a balance sheet or PNL, I will check assertion. Your next doubt, sir, what is assertion? Assertions are representation by management, explicit or otherwise, that are embodied in the financial statement and checked by auditor to detect different misstatement that may occur. Absolutely not understood. Same here. Assertions are represent management is saying, for example, if here this is a PNL, I see sales figure of 800 crore. Okay. I am, oh, you are not able to see. Is this not changing? Hey, what happened? Shit, yaar. सानों के कदी आवन जावन चलो moving on. Sorry. Come here. अरे start. Okay, done. Start. So assertions are representation by management, like explicit or otherwise. I was explaining this much. Sale, sir, not very much visible. No need. Understand. Okay, so sale is 800. Okay, it's clearly a assertion. Management is clearly explicit, means what clearly management is saying. It means sales are measured properly. 800 crore figure means correct figure. It is right. Management is saying. Sir, what is otherwise? Otherwise means sometimes there are implied assertions also. What is the implied assertion? If it is of 800 crore, I know it's complete. They are not going to tell me, sir, this is complete. Implied it is. If I have mentioned this figure has to be complete. One more implied assertion. Presentation is proper. It is as per schedule 3. It's implied. Understood? Understood. So measurement is explained, otherwise implied. So every time I don't have to tell everything. Are you clear? Some things are implied. For example, our favorite example we take for this topic. Again, I am taking. Some girls, you tell I love you, she'll tell I love you too, baby. Okay. But some girls won't directly tell you I love you. They will just keep hand in your leg. Okay. You are sitting, in your hand, they'll keep a leg. Reverse I said, okay, in legs, in boy's leg, she will keep a hand. That also justifies love. Are you clear? If she is keeping a hand, it means she loves you. Now don't have to every time tell I love you too. Okay, it also signifies love. Kiss also signifies love, but kiss is too much ahead. I hope you understood. So assertion means telling. Assertions are representation by management. Explicit, what is explicit? Clearly explained, or otherwise some assertions are implied. Are you clear? Let's take another example. In a balance sheet, you are seeing share capital 800 crore or 1000 crore. It means share capital is properly presented. It's properly valued. I hope you understood. Okay. that are included in financial statement. Tell me, assertions are included where? Financial statement. Who will check this? And checked by auditor to detect different misstatement. Sir, one doubt. Why will auditor check all this? To find misstatement. What he will do of misstatement? That you already know. Past journal entry. So do we need to learn this? No. But I know, so I will make you learn. Assertions are representation by management. Explicit, clearly explained, otherwise implied, that are included in financial statement and checked by auditor to detect different misstatement. Over. Moving on. Now, there are separate assertions for P&L and balance sheet. So first, we will take P&L assertion, any item of P&L. Many people are asking, few items of P&L can you tell? Just close your eyes and draw a P&L. Sale is P&L item. Come this side, other income P&L, depreciation P&L, okay, purchase P&L, other expense P&L. Any item, I have to check these things. Over. Sir, I want to do audit of sale. Check 5 things. 5 things done means audit over. Yes, very good. Other income, check 5 things. Sir, purchase, check 5 things. Sir, other expense, check 5 things. Very good. Earlier, I used to make you learn this also. But now I realized ICI doesn't ask like that. They will ask any one point. Not at all understood. Because till now, no questions have come. Understood, sir. These are P&L. Once P&L is over, half part over. Then we move to second half. Start, sir. Now, I will explain briefly because we have to learn in detail. Okay, start. Occurrence. First thing you have to check in any P&L item is occurrence. Okay, a P&L full form profit and loss account if you don't know. Transaction has actually occurred. Tell me how to check whether sale has actually occurred. I will confirm with party. Oh yeah. I will see there is dispatch document. Tell me if dispatch document is there, it has actually occurred. If party is confirming it has occurred, okay, I will see whether GST is paid on that sale. Always remember, fake sale I can show, but I will never show fake tax. If I am paying tax, it means sales is real, baby. Occurrence. Sir, how to check occurrence? We will study. Briefly, you understood. Moving on. Second thing, completeness. All the transactions of P&L are complete. There is no understatement and overstatement. We are taking sales example, easy, that is why, and easy to understand. Usually there is never understatement of sale. I will try to show sale more only. My dad though shows very less. Your dad, we are not talking listed company. Now you will ask me why. See, tell me, if I show you more sale, then what will happen? Profit will be more. Profit more, share price more. Except in few situations, sometimes government gives subsidy. If you are very small, less than 10 crore, we will give subsidy, 10%. Then at that time, if it is getting to 10.5 crore, I will try to show less. But very rare situation. How to audit completeness? Very simple. See, the figures mentioned in GST are matching with financial statement. One way. See, sales day book is there. But we will learn in detail. I hope you understood. You just understand the word cut off. Cut off means what? Don't cut someone. Okay. New trailer came, Bagi 3. Cut. They are cutting. Third class trailer. But here different cutoff is there. Cutoff means the year has been properly cut. No transaction of March shall shift to April. What difference does it make? My company only. Remember, April sale you cannot show in March because year-wise accounting is done. Then no need of accounts only. Properly cut. Many times, my target is not achieved. So what I do? I prepare bill in March. But for example, we want to sell this company. I will tell our sale is what, this much. Inflate the sale of next batch and bring it to March only. Many people do like that, but it is not allowed. Proper cutoff should be there. Means income or expense are recognized in correct period. Okay. How to do? How to check? How to check? See when the sale is dispatched. Invoice so I can prepare full day. Okay. Today whole day I prepare invoice of 1000 crore. Very good. My sale? No. When risk and rewards are transferred, when I am giving service, properly cut is there. Okay, moving on. Measurement, it's recorded at right amount. How to check amount is right? Sir, first of all, no, opposite party, you will give quotation. Then opposite party will give purchase order. Then invoice is prepared. If all amount is matching, quotation amount 42 per unit, purchase order 42, my invoice 42, I have reasonable assurance there is nothing wrong. It's properly measured. Yeah, measured means amount. Last, presentation and disclosure is done as per part 2 of schedule 3. Always remember, any P&L item, part 2 of schedule 3. Balance sheet item, part 1 of schedule 3. Over. So for all items, I have to check this much. Shall I learn this? No, but earlier I used to make learn. So again, I will make you learn. But if you don't learn also, okay. Income statement assertion, OCM presentation, awesome presentation. Awesome spelling, why like this? Because fitting in technique. Occurrence, completeness, measurement, occurrence, completeness, cut off, measurement, occurrence, completeness, cut off, measurement, presentation and disclosure. Occurrence, completeness, cut off, measurement, presentation and disclosure. No need to learn, by the way. They will never ask, right? What they can ask? Very silly question, which came in last exam or last to last exam. They will give you 5 situations. Tell me which assertion is this. Is it easy? No, it is kindergarten question. Then we wonder, why did we attend a 5-hour lecture? Because entire thing asked in 5 minutes. So such questions also come. Just to check whether student has touched this chapter. Paper level is day by day reducing. Very hard paper has to come. Only then teacher value required. Okay. Now we are starting. Till now, how many questions we have discussed? Reply fast just to check whether you are active or not. Till now, how many questions we have done? Reply fast. None. Are you clear? 2. Wrong. None. I am just saying exam questions. Okay. These things though you knew. I did not give anything new. I did not teach you anything new. You forgot only. These things you already knew. Nothing new has been taught. Done, done, screen, done, screen, done, screen. Chalo, now we are starting our journey. Enough, we have spent time. For this, we believe not magic book, but PPT is best. So whatever is best, we have to do like that. Okay? Start. Again gone. I am getting late, but don't do all these rubbish things. Chalo. Seems good. One, two, three, four, five. Done. Chalo, done. 1, 2, 3. Moving on. Okay. Ready, ready, steady, go. Now we move on to P&L item. First item is sale. Okay. Till now nothing we have done, and now we are starting our display. I hope the base is clear. What we have to study, how we have to study. I will tell you questions. Okay. Only for 1 or 2 question max I am guiding you. One question is fixed. That also I will tell you. Mira already uploaded Hindi version. YouTube. Same thing. You can see there. Don't worry. Chalo, shall we go ahead? Yes, yes, same. For this chapter, absolutely same. Okay, moving on. Page number. Come to P&L. Come to P&L. 91. Chalo, start. Okay, 1, 2, 3, start. We are starting with the first item, that is sale. Okay, today we want to discuss P&L. Of course, start with balance sheet as well. Till now, nothing done. Okay, First thing, this will not come in exam, but still I don't want to skip one word also, so I am explaining to you. You already know this, okay? For any process, be any process in the world, sale, purchase, operating expense, tell me what is the first thing we do? Check ROMM. How to check ROMM? By doing walkthrough of one transaction from starting to end. You take one transaction, take that in detail to understand controls are strong or not. Okay, so first step, whether we do any process in the world, check ROMM by understanding or taking one transaction by doing walkthrough. Now, if I feel controls are good, do you control is good, then what to do? Different entities you can refer, but better refer this lecture. These are new, so it's more better, little better, so better to do the newer version. Okay, always. English is so very old, don't refer that YouTube, that is out. Okay, don't refer. Hindier version still okay. English don't refer. Chalo, 1 2 3 1 2 3 start. Now I will not talk, I will directly talk in the end. Lectures are getting uploaded, no Suvidha, you are the part of this batch. Every lecture getting uploaded, see from there only. Little detailed these are. 1 2 3. Okay, now I cannot talk with anyone till 11 o'clock. Concentrate. I will do ROMM. Check ROMM by understanding the walkthrough with the help of one transaction. Are you clear? If I feel controls are good, I will go ahead and test those controls. If controls are good, we will test those control. Okay. After testing, if controls are effective throughout the year, we will do more analytical, less substantive, more analytical, less substantive. But if controls are weak, then I will go ahead and check more transaction, that is do test of detail. I hope everyone knows this or forgot. I hope you remember. Again, I want to explain this. For any process in the world, I cannot read this. Why? Because all this is part of chapter number 3. They have given it again here. One last time. For any process I do, I want to do ROMM by taking one transaction from starting to end, doing walkthrough to understand the control. With the help of that, I know control risk and ROMM. If controls are good, we will go ahead and test those control to see are they good throughout the year. I take 25 sample. Third, after testing that controls are good throughout the year, okay, I will do less TOD and more analytical, okay, change. But if controls are weak, third class, why? When do I come to know? During walkthrough, when I check one transaction, or during TOC. I need to do more test of detail and less substantive. This will not come in exam. Why? Because it's in chapter number 3. Moving on. So for sale, same is written. Same is written. Let me read. Sale is the most important item as per SA 315. ROMM in sales is always high. Why? There is a high chance people will do fraud in sale area. They will try to show more sale. Obtain understanding of internal control by taking one transaction from starting to end. We will test the control to see how reliable they are. If controls are superbly good, we will do less substantive. We will select sample of item, PO, invoice, customer, etc. We can also do analytical like compare sale with last year, see month on month trend, okay, category wise sale we can see. Now we are moving to the first potential question. How I come to know question I am showing you. So tomorrow anything happens to me, you should know how question can be asked. Okay, come here everyone. Whatever I make you take, only that you have to learn. This ignore, it can never come. Now, wherever specific wording is used, those are potential questions. Like see here. Revenue is not overstated. So first I want to check occurrence of sale. Sale has actually occurred. See here. Sales is shipped. Revenue is not overstated. I need to do by following procedure. So they will ask for simple question. Okay. How to check occurrence of sale that revenue is not overstated. Wherever specific word is written, no, and points are given, those are questions. So this is the first question, double tick. Double tick means what? Important? No. This can only come. Many people also most IMP question. It's not most IMP. Syllabus is only this much. Understood? I am not giving IMP. I am giving you potentially what to read. Are you clear? Okay. So double tick. Revenue is not overstated. How to check revenue is not more? Okay, by doing follow. I should not show more revenue. Now forget everything. Okay, become little blank in life. Zero knowledge you have. You want to check occurrence of sale. Sale has actually occurred. Revenue you are not showing more. How to check? How to check? How to check? Had you asked me, had I not got this book, okay, or had I told you go for auditing, check revenue is not overstated, no more revenue is not shown, okay, also check properly occurred revenue, okay, what you will check? See, any invoice is recorded twice, okay, any invoice is recorded, any cancelled sale invoice is properly cancelled, okay, many times sale return is there, is it properly cancelled, that also you can check, okay, check confirmation from customer, take confirmation from customer where sales are little doubtful, okay. Fourth point, we can also check, okay, dispatch document, lorry receipt of the sale to know that sale has actually occurred, okay. Next, if you ask me what I can check, we can check the ratio of sale return to sale and compare with last year. If there are a lot of sale return this year, means there is a high chance that I tried to inflate the sale. Okay, I tried to increase the sale, and in April month, next month, sale return are so much. Oh, I will realize, oh my God, I was trying to do fraud. Are you clear? We will try to see all shipments are done. Whether any fictitious customers are recorded. Okay, review unusual journal entry transaction. Entries passed by CFO. Entries passed at night 10 o'clock, 11 o'clock, like that. If you think that you should know all points, impossible, but you have to understand, okay, same points I have written whichever are given here. If language little hard, I have tried to simplify because I don't want 5 on 5. There are enough people who will get 100 on 90. If I get 70 also, I am happy. 80 also, I am happy. If you are targeting 90, then don't refer PPT. Do module only, 90 marks. 70, then this is fine. Now, every point you will understand. Out of which, how many to remember? Earlier, I was mad. I used to tell you remember everything. Only 5 points. Logically, if you read 2 times, even if you don't want, you will remember. Even if you try, no, I don't want to remember. 101%. Start number 1. Check any invoices recorded twice or cancelled invoices recorded. Simple. Second, trace few invoices from entry in sales book. You know what is sale book? Okay. Every day I maintain rough book. Check whether in rough book entries are there. Is the invoice prepared? Many time I will prepare dummy invoice, but I have not entered in sales day book. It means fake sale is there. Trace few sale with entries in sales day book. Third, obtain confirmation from customer regarding genuineness of sale. Whether any fictitious or dummy sale are recorded, whether any shipment are done without consent of customer. Directly, I want to achieve 200 crore sale. So what I will do? I will dhapadhap do sale. I will tell Mr. Rajesh, I am sending you one parcel 100 crore. I don't want. No problem. Just take and return in April. Return in April. So any shipments are done without consent of customer. At year end, we have to check that. Very unearned revenue is earned. What is unearned? It's not our revenue. Still, we have recognized dummy sale again. Whether any uncertainty is there about collection of money. See, if I want to sell, I can do free. Books, take. Everyone will take book. Everyone will take lecture. Okay. But money, whether there is uncertainty about collection of money, then it is a wrong sale. Review sequence of sale invoice. Many time what happens, numbering is not proper. It means there is some fraud. Maybe some sale invoice I have put in pocket. Okay, I have not shown true sale. Okay, so review sequence of sale invoice. Calculate ratio of sale return to sale and compare with last year to know reasons for increase or decrease. Okay, and last, review journal entry for unusual transaction. Over. Now tell me, any 5 points can you write from here? If they are sale occurrence, sale is not overstated. 5 points can you write? Very simple. If again I want to revise, let me revise second time. Now what I will do, I will not read here. Once I read, once you will also read, third time, you will be at that stage, you will only tell. How to check that sales are not more? Okay, see, any cancel sale invoice is recorded or any sale is recorded twice. Okay, obtain. Now I know only good some points. No problem, no problem. Obtain confirmation from customer regarding genuineness of sale transaction. Okay, review sale return to sale and compare it with last year. Okay, and find out reasons for variation. Review unusual journal entry. Trace the shipping documents for every sale to recognize it is a genuine sale. Okay, see whether year-end sales are done without consent of the customer. Okay, many times whether any unearned revenue is recorded, whether there is uncertainty about collection of money but still sale is recorded. Are you clear? Over. Now can you write yes or no reply? Fast, fast, we are getting too late. 5 points can you write? Over. What more to explain? Only 5 you have to write. Shall we go ahead? Like this only we will learn. Whichever important ones I will tell you. Okay. Second question. Now if you want, you read from here. Absolutely copy paste we have done. It's just that few points very hard, then I skipped. Actually I have not skipped, only any. Next. Second question will can come is completeness. Sales are complete. There is no understatement or overstatement. This is also good question. Double tick, double tick, double tick. Sales are complete. There is no overstatement or understatement. Sir, but actually it is repeat telecast. See, overstated already covered here. Now again you are writing under and over. I don't understand what ICI wants in life. Do they don't read their book only? You have written your overstated, again repeat. What is this? But no problem, given. So check what to do. Okay, sales are complete and see here, underline two words. There is no under or over. But according to me, first question more nice because direct question is there. Here it is direct but not that direct. So completeness I have to check. Very, very simple. Okay. Of course, whichever point you wrote, same points can also come. Why? Because part of question only. But still, let's find out one new point. Perform cutoff procedure. In cutoff means what? Properly a year is cut into two parts. Perform cutoff procedure to recognize that any sales of April, okay, are not recorded in March. This usually happens in one case, when sales are recognized based on invoice. Remember, as per AS 9, every AS you know. Yes, AS I know very much because I have taught unlimited times. In days I don't know because I have never taught. AS9 tell what? Sales should be recognized when risk and rewards are transferred. So tell me, invoice preparing is not risk and rewards. Okay. So when risk and rewards are transferred, we will recognize sale that time. Now let me go little more in detail. Okay. There are 3-4 types of sale. You don't need to have so much knowledge, but I have whom to give. Okay. CIF, FOB, such terms are there. What is FOB sale? Free on board. It means I will only bring to the port. Parcel is there, I have to bring to the port. Okay, port, not airport. I hope you know that Navy port. I need to bring to the port. My responsibility over. From that date, I will recognize sale. As soon as it reaches port, over. There is another sale, CIF, cost insurance freight. It means customer is paying me for insurance, freight. It means it has to reach to doorstep of customer. When will my responsibility get over? When it reaches the doorstep. But why am I learning all this? Remember, if it is a FOB sale, you can recognize once it reaches port. But if it is CIF, never recognize on invoice, never recognize on port, recognize only when it reaches customer. Because in between some damage, you are responsible. I hope you understood. So perform cutoff procedure to see sales are properly recognized. Usually there is a fraud in cutoff if sales are recognized based on invoice and not risk and rewards. I hope it is clear. Okay. What more we can do? Check credit note. Okay. Credit note. You know sale entry is what? RAM to sale. But again, RAM account will be credited in sale return. Okay. So it will become RAM to sale, sale to RAM, sale return to RAM, like that. Okay. So credit note you can check. To know completeness of sale, very simple. One favorite point. Okay. Trace the sale with GST. Okay, you have to see in GST annual return how much sale I have shown, this much, but in books I have shown this much. It means I have shown fake sale. I have not paid tax on some sale. Okay, you can also review the reasonableness of sale. Whichever figure is mentioned in sale, multiply by 18%. So example, 1 crore multiply 18. Have I paid 18 lakh of GST? It's correct. Otherwise it is wrong. Over. I will just read once, you will feel it is most time pass question. Start. It's not under or overstated. Can I repeat those points? Big yes. Perform cutoff procedure to see sales are recognized in current period and are not tempered during year end. Okay, tempered means change. Cutoff usually error occur when sales are recognized based on invoice rather than when risk and rewards are transferred. What's the correct policy when risk and rewards? I already explained that in very much detail. Check credit note after year end to see whether dummy sale are recognized. Very simple if I want to do fraud. Raj to sale, sale return to Raj. If lot of sale return are there, again there is a fraud. It shows doubt on completeness of sale. It means I have to reverse last year only, not in April. Trace shipping documents with sales journal. Check do the reconciliation of total quantity of sale in sale register with stock record, financial record, statutory record. Good point, new point. Let me explain. Reconcile total sale is matching, quantity is matching with sale register. You maintain one register. Is the total quantity of sale matching with register? Is it matching with GST records? In GST also we have to mention quantity. Is it matching with stock records? Are you clear? Everything you see. Check total quantity of sale is matching with sales book, stock record, GST register, okay, and when we do reconciliation of stock. Next, review GST tax and return and ensure GST is matching with P&L. GST is reconciled with revenue reported in P&L. In GST I have shown this much revenue, P&L also same. Next, multiply the total sale with GST rate to see the reasonableness of GST paid and analyze the reason. If you ask me, if this question comes, less chance. Why? It's not that specific. But if it comes, in cutoff, can you write 2 points? Yes. Write 1 point credit note? Yes. Okay. And 2 points of GST. Over. Super simple. Become emotional in GST. Become emotional cutoff. One shipping point also write. Over. Shall we move ahead? Yes, sir. Come to the third one. Now, measurement has less chance of coming. Why? How you are making conclusion? Because nothing specific given here. They want to ask those things which are specifically under or overstated. It is not overstated. They can ask measurement, can ask. But less measurement means amount should be perfect. How to check amount is perfect? Okay, very simple. Take few transactions from starting to end. Starting to end means from the time you receive the order to the time you send the quotation. Third, they will give purchase order. Fourth, you will prepare invoice. Compare few transactions starting to end to know whether sales are properly recognized at correct amount. Simple. Measurement, amount is correct. Super simple this one. Only 3 points. They have only given 3. I can write 6. Trace few transactions from starting to end, from receiving order to billing to receipt of amount, okay, to know whether sales are properly measured. If you don't receive amount, then no use. Second, if export sale are there, AS11 has to be followed. Simple. Why? You have to restate. All exporters are very happy. Why? Our currency constant going down. So you receive more. If you did not understand, ignore. Auditor should understand client operation and related gap issue. What is gap? Generally accepted accounting principle. Tell me, which method is better for sale? Shall we follow point of sale or percentage completion? I don't know only all this. What is point of sale? Whenever sale is done, recognize. Or percentage completion. Which method better? Let me explain. Usually we follow point of sale. But in construction contract, you know what's construction? Construction, yes, yes, yes. In that, what happens? After 5 years, building is sold. You will keep on developing, developing, developing. After 5 long years, building is sold. So revenue directly comes in fifth year. First 4 year loss, loss, loss. No one will invest in such company. So for them, what is suitable? Percentage completion. 20% complete, recognize that much revenue. Next 40%. So what if it is not sold? You have to reverse them. It's okay. So understand the client operation and gap issue. Point of sale method is better or percentage? You have to take a judgment, whichever method. Compare the rate of sale with related party. Review them for collectability. Whether sale are properly authorized and whether the transaction is done at arm's length price. Related party to become emotional. Write whatever you want. Whenever sale is done to related party, review them for collectability. Are we going to receive the amount? Whether transaction is properly authorized by board of director. Whenever you do transaction with related party, board resolution is must. And last, transaction is done at arm's length price. Simple. This will not come, but if it comes, very simple. Measurement, here. Trace few transactions from starting to end. In seeing from order to dispatch to receiving the amount. Starting to end, you have to see. If export sale is there, we have to see compliance with AS11. We need to understand the client's business and related gap issue and see which method of sale recognition is best. Point of sale versus percentage completion. Are you clear? Compare the rate of sale with related party. Check three things there. Number one, review them for collectability. Are we going to receive the amount? Second, see transactions are properly authorized. Third, whether transaction is done at arm's length price, that is fair price. What you said when building not sold, reverse. Provision you have to do. Provision. Not sold, then what to do? Provision. Tell me this can come? According to me, zero chance. So till now I explained only one good question. Second was repeat telecast of that only. Little to GST point I added. Sir, what if I write few point here and there? They'll still give marks. They might not give full. Over. Now, this disclosures don't refer PPT disclosure. Why? Disclosure, if you see module, it's more better. Disclosure, less chance. Why? Because in disclosure, one question is fixed. They are specific question. I told you total 3 questions will come. One I know. So that will come. This usually doesn't come. But doesn't mean I skip. So that is why I am showing you. Sale. In sale, what you have to see? Whether disclosures are done as per part 2 of schedule 3. Why part 2? It's P&L. In respect of company other than finance company. What's finance? Loan. Other than loan company. Like this disclosure has to be done. I will just read once. Sir, what if this comes? No problem. No problem. My 1 mark will be less 5 marks. 95 mark paper I still have. Oh, understood. Sale of product. You have to learn this. Try if you are aiming 100. Sale of product, sale of service. Grant or donation received only for section 8 company. If you are not section 8, ignore. Other revenue. Sale of product, sale of service, other revenue. Less excise duty. If you are a finance company, NBFC, bank, interest and other service you have to show. Revenue under each head you have to show separately notes to accounts. Over. Whether brokerage and discount is given other than trade discount, that also disclose. Related party transactions separately showing notes to accounts. This will not come. Why? Because disclosure question fixing we have done with ICI. I know what they will ask. So they will not ask this. Then what they will ask? That I will tell you when we reach there. Understood? So first big item done. Are you ready? Any doubt? Any doubt? Shall we go ahead? Other income. Less chance of coming. Everything you are saying less only. Then what to do? It is too easy. By mistake, if you found this lecture little hard, now get ready for more easy. 3 other income are there. Then P&L over this side. Revenue side fully over. Other income there are 3. Dividend, interest and dividend interest. Profit or gain on sale of investment. Three other income are there in our life. DII. Said I remember this. By mistake also don't remember. I keep on remembering for my confidence to be happy at home. You don't remember. They will ask anyone for 2 marks. I don't think they will ask because it is too easy. But if they ask, become very happy. Dividend, interest, profit and loss on sale of investment. When is this recognized as income? Here now they are forgot. Or a awesome presentation, very big for everything to give. So they thought that let us give one common thing only. They have not given for all assertions separate point. They got tired. That is why. Now, don't look at the answer, because if you look at answer, no, you will feel, oh, it is hard. Tell me how to check interest income. Reply fast. How to check interest income? Reply fast. Array, interest income on FD I have received. How to check? Loan? No, 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 no. We are taking it's a normal company, not finance company. Normal company. What you are typing? Bank statement. Very good. Correct. Any other way? Obtain a list of all fixed deposit. See the number of days FD is done. Multiply by interest rate. Over. Obtain list of all investments. See the number of days the investment is done. Multiply interest rate. How much time it takes? It takes less time to do than explain. Explanation takes more time. See, interest should be recognized on time proportion basis, taking into account amount outstanding, interest rate. There are three FD: 10 lakh, 20 lakh, 30 lakh. One is this. Multiply by days. 10 lakh into 282 days, multiply by 365, divided by into 8%. Over. Now, can they ask this? If they ask, then I will be very happy. Wow! It is the income which is not our core operation. Understood. Thank you for telling. But they can ask this. So they have given rest, so they have not given dividend and profit and loss on sale of investment. They got tired. Interest they have still given separately, so it can come. I will read once. Is it easy? No, super easy. Okay. Interest income on FD. Occurrence, completeness, measurement, everything covered. Occurrence, complete, all together. All together. Now, can it come? For that, I have to just look once. If they ask, no, write short about all. That can come. What are total other income? That can come. The short answer you have to write, which I will explain. So, this can come. Double tick. Interest income on FD also cannot come. Sorry. Cannot come. But still, if I want to do check interest, how to check, I will just read. If I read 125%, you will understand. Obtain a list of all fixed deposits opened during the period under audit. Multiply those fixed deposits with interest rate and number of days the deposit is outstanding for. Second, verify arithmetical accuracy. Same is given. Okay, no, first only obtain a list. Second, verify the arithmetical accuracy by multiplying FD amount with interest rate and number of days. Then in first I just obtained the list. Second, I did multiplication. Third, for deposits outstanding at the year end, okay, also obtain confirmation from bank. Bank confirm our 3 FD are there, no, management not lying. Obtain confirmation, interest you calculated, obtain confirmation of interest income from bank also, and see it is matching with the calculation done by entity. Last point, you know there is form 26 AS. Nothing I know. I am telling you. Whenever bank will deduct your, see, interest income is there, no, FD, 8 lakh rupees. 8 lakh interest means he has done a FD of 80 lakh. Yes. Now 8 lakh you will not get full. They will deduct certain TDS. Government. Why TDS? Why? Array, because if you receive 8 lakh, what if you don't pay? So whenever you get income net only, you will get 7 lakh 20,000. You got 720 out of 8, 10% TDS deducted. Obtain a copy of form 26 AS. There you know TDS deducted. With the help of that, we can find out what amount, FD amount, and then compare that with books of accounts. Oh, amazing, amazing. Okay, see, obtain copy of 26 AS, TDS deducted by bank, and reconcile the interest mentioned in form 26 AS is matching with our calculation. Wow! Any doubt? Read once. Super simple. This you don't have to remember, but if you have to remember what to do, first 2 points so you know, obtain, second calculate, third and fourth obtain confirmation from bank regarding all deposits outstanding at your end. Obtain confirmation from bank regarding interest calculation done. Is it matching with our calculation? Last, obtain a copy of form 26 AS which shows TDS deducted by the bank. See the interest amount there matches with our sheet. Do you feel it can come? If it comes, bonus. Come to next, dividend. Tell me, dividend should be recognized when? Three conditions are there. We have to remember. Right to receive dividend is established. Amount can be reliably measured. Third, it is probable economic benefit will flow to the entity. By the way, if I explain real life, all 3 points done. What is real life? In real life, when will I recognize dividend? When I receive a mail from company, this is the rate of dividend, that time I will recognize the dividend, because that time it is fixed, company will pay dividend. So dividend should be recognized when? That they have written in English. They should have just written when we receive mail from company. Over. But they have not written. Okay, right to receive dividend is established. Tell me, when is right established? When I received mail. Amount can be reliably measured. How to measure amount? Face value into 5%, 6%, understood. It is probable that economic benefit will flow. Mail received means company will not run away. They will pay. Real life mail is received. In English, 3 points. Tell me, when is dividend recognized? 1, 2, 3. Right to receive dividend is established. Amount can be reliably measured. It is probable economic benefit will flow to the entity. Over. Sir, one more time. When is dividend recognized? Right to receive dividend is established. Amount can be measured. It is probable economic benefit will flow to the entity. All three in real life when mail. Gain or loss on sale of mutual fund. Oh, when is it this recognized? Okay. Gain or loss is recognized when there is transfer of title from the entity. Entity means they are not taking individual. Company as mutual fund. Oh, very good, very good, very good, very good. Tell me, when is transfer of title? When is transfer? When you click on that button, sale of mutual fund. At that time, title transfer of title, and difference is determined between redemption price and carrying value of investment. What is the meaning? Face value is this much, selling price of dividend is this much. Mutual fund scheme. Example, 10 rupees you purchased and it is 20. Okay, so 100% gain. Difference between redemption price and carrying value of investment. Compare the gain or loss with mutual fund statement. Statement you will receive, compare with that and match it with books of accounts. Real life, all this more easy. Okay, one last time. Tell me, when gain or loss is recognized, there is transfer of title from entity, and difference is determined between redemption price and carrying value of investment. We will also compare the gain or loss with mutual fund statement and see it is recognized in books of accounts. Only this question can, if FD comes, then so you are gone, they are gone. Fully you will write. See here. When this comes, when they desperately need CA in India, please pass. Please. Please. Same you have to write. Over. This question according to me will not come. Disclosure can come. disclosure is capital letter impossible. Why? What other income disclosure? Ha! If it comes, then they will lose one good CA. You. Part 2 of Schedule 3. What shall be disclosed? Interest income in case of finance company. Just write the II. Dividend income, gain or loss on sale of investment, interest income. Over. Now, these additional notes are there. Out of 7 to 8 additional note which we will do, one will come. If you make summary of all 8 notes, it will hardly take how much minute, 20 minutes. So whatever I teach in 20 minutes, one question will come. This is first such note which will not come. Why? By looking at face only I come to know whether it will come or not. This is non-deserving student. He will not pass. Still I will read once. Okay. So now always remember why they are not asking all this. Because all these disclosures are since years. They want you to know additional disclosure, extra, extra, extra. Out of those extra, one disclosure will definitely come because no one reads disclosure. They don't come to know that in 20 minutes I will get 5 marks. This is one such disclosure which you already know. Why? In CARO we have discussed. If any undisclosed income is disclosed as income as per Income Tax Act. Many times what they tell, show your black money as white money. See that undisclosed income is properly recognized in books of accounts. Over. This you already know. See, company has to give detail of any transaction not recorded in books of accounts has been disclosed as income under Income Tax Act. Modi Sahib will tell, show black money as white money. So you are showing the money, okay? Unless there is immunity, forget. Also state whether such income and related asset are recognized in the books of accounts. Very simple. Whether any undisclosed income is shown as income as per Income Tax Act, okay, has been surrendered or disclosed as income under tax assessment under Income Tax Act. See, it is properly recognized in books of accounts. Over. This will not come because this doesn't deserve 4 marks. By looking at face, I come to know. Over. Shall we go ahead? We are done with first part. Shall we go ahead? Shall we move to this side now? Purchase. Start? Yes, sir. Moving on towards purchase. Tell me, what is the first point? Auditor will see, okay, first find out risk of material misstatement related to purchase by taking one transaction from starting to end. Second, auditor also test whether controls for purchase are effective. If effective, then what we will do? We will see sample of transactions they've given, check purchase order, GRN, invoice, etc. etc. Analytical procedure is also must. Okay, all this okay. First question. Definitely it can come. Why? See, they have done bold here. Purchase are not over or understated. Occurrence. 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 Purchase are not over or understated. Occur. Actually, purchase has occurred. It is not a dummy purchase. Why I will show dummy purchase? Why? Many times I want to pay less tax. So I will intentionally show more purchase. So my profit will be less, tax will be less. Sometimes you tell profit more, sometimes less. Why don't you decide? That everyone has different thinking. When I was very small, not very small, your age, I always thought that save tax, save tax, save tax, save tax. Now when I become little big in life, I realize that share market, if you pay more, you get 20 times valuation, 30, 40 times. So right now I am in that generation, show more, show more, show more. After 10 years again, I will talk with you. Okay, what genre? I hope you understood, but forget all that. Come here. Now, how to check that purchase is not over or understated? Okay, number one, fake purchase should not be there. Okay, we will see there is a proper process for vendor selection process. Is there any chance of dummy vendors being included? I will tell that I ordered, okay, raw material from this person, money I will put in pocket. Is there a proper process for vendor selection? In many companies, you will be shocked vendor process. For example, there is one company, we will talk about them later today as well. That's Accent Microcell. What does it make? Medicine though we don't have, but rough medicine we have. This. Above every medicine there is capsule is there, right? You know, this is direct medicine. Sometimes capsule is there. So they make the upper part of capsule. That's called MCC. Okay, microcellulose, something like that. If you technical knowledge, you might have. I don't know. I never studied in school. Okay, so MCC. They make MCC. These people. Now, they were telling in their presentation that abroad company, whichever makes medicine, they take years to approve whether they will purchase from us or not. There is a huge process. They will come to your factory, do this, do this, do that. So, is there a vendor selection process, or do you just select vendors like that? If there is a robust process, there is a high chance purchase is not fake. Okay. So, is there vendor selection process? Now, very simple. Now, very simple. How to see whether purchase is not over or understated? It is real purchase. See, whenever purchase is done, there is entry in, okay, gatekeeper register. If entry is done, it means purchase is genuine. Second, see whether when purchase is done, there is entry in GRN, goods receipt note. After gatekeeper, there is a GRN. GRN is prepared. See, entry is in GRN. After GRN, see whether quality inspection of that purchase or goods is done. Fourth, see the records are updated in the stock register. If four people have done entry, how to remember? 1 second. First gatekeeper, after gatekeeper, GRN, after that quality check, after that updated in the stock register. Over 5 points. Over. Once I will read, you will feel, sir, very easy you have made it. So logical. Whenever any fictitious vendors are booked or purchase have been recorded, by reviewing vendor selection process, also perform procedure to ensure existence of vendor. See whether any fictitious vendor are there. Is there a vendor selection process? Also perform procedure to see existence of vendor. Is it not fake vendor? Second, now as I told you, 4 point, super duper point, all four in one order you will remember. Whether goods are received at factory gate, there is a entry in gatekeeper register, Mr. Rajesh entry. Second, after that, whether GRN is signed by appropriate client personnel, goods receipt note, after that GRN is prepared, proper document is there. Whether GRN is prepared by client personnel, whether quality inspection of the goods is done, very good, whether stock record is updated by stock personnel. If everything is done, it cannot be fake purchase, baby. Purchase is real. Purchase is real. Very good. Last, whether purchase invoice is approved as per delegation of authority matrix. You know what is delegation of authority matrix? Let me explain. Above 50,000 will be done by purchase manager. Above 1 lakh CFO. Above 2 lakh MD. Matrix. Is it done? Whether purchase invoice is approved as per delegation of authority matrix, or two or three-way match is done. Let me explain what is two or three-way match. PO, GRN, invoice. So first of all, I will give purchase order. Then I need 1,000 units at 50 rupees rate. Understood? Whatever. I need this 1,000 at 50. Moving on. Now. Tell me, bill what unit should be there? Only 1,000. Wrong. If in GRN they give me only 900 units, goods receipt note, then bill should come of 900. Why 1,000? And in invoice, I will check rate. Rate should match with PO, purchase order. Okay, if invoice rate is 52, I will call them. What is this rubbish? You send 900 units, so charge 900 first. And why the rate is 52? We agreed 50. So three-way match is done. That also you have to check. PO, GRN, invoice. PO understood. GRN is when you receive the amount, invoice. Done. This I don't want to learn, but I'm still able to learn. Sir, audit of purchase to check whether purchase is not over or understated. How to check? Whether any fictitious vendors are booked, whether there is a proper vendor selection process, okay, of reviewing vendor that ensures, okay, that there is a less chance of dummy vendor. Second point, whether entry is done in gatekeeper register when the purchases or goods are received. Second, whether there is a proper entry done by authorized personnel in GRN. After that, goods will be checked. Whether quality inspection of the goods is done. Whether goods are properly updated in which register? Stock register. Goods are updated in stock register. So many things. How can fake thing can be there? See whether purchases are authorized as per delegation of authority matrix, 3 level, whose right is there, and whether three-way match is done of PO, GR and invoice. By mistake, I taught all points. Over. Now, once if you read 100%, you will be able to remember. Now, this question is never asked, but look at this question. Special consideration for purchase. There will be nothing special, but they can ask this in exam. Why? By looking at face, you understand this is the worst question because it is too easy. Definitely it will come. Double tick. How I come to know? Special word given. No. Many people are out of syllabus. They ask special consideration. Module given. Points will be rubbish multiplied by 5. Direct, if you read at home, you will understand better. But still, I will read. What are special consideration? Special things while auditing purchase. Definitely, this is more important than that question. Why? They have written one word special. This is how they irritate. They will never check how real audit is done. First point. Purchase invoice should be original copy against which entity has recorded purchase. Specially check. Purchase invoice is original copy against which purchase recorded. Second, purchase invoice should be booked only when risk and rewards are transferred. See, don't recognize purchase when you place order. When you receive the goods, FOBCI. Purchase should be recognized when risk and rewards are transferred. Invoice should be in name of entity. Special consideration. In case purchase is done from related party, see, approval of board of director is obtained and transaction is done at arm's length price. Related party, 2 points are free of cost. Whenever purchase done from related party, 2 points are there. Number 1, approval is there of board of director and transaction is done at arm's length price. Auditor should see purchase is done of fixed asset or P&L. If fixed asset, capitalized. If other expense, charged to P&L. Special consideration. Review journal entry for unusual transaction. I just have to remember these words. Nothing I can explain. You know better than me this point. Still, we will try our best. Special consideration for audit of purchase. Whenever we do any purchase, okay, purchase invoice should be original, okay, and purchase invoice should be original. Purchase invoice should be original against which entity has recorded purchase. Second point, if you ask me, purchase invoice should be in the name of entity or the branch. Second. Third, if purchase is done from a related party, see, it is approved by board of director and transaction is done at arm's length price. So these 3 points are the super simple. Today I know now this is better word. This is better. We can check GSTR, one of vendor or all these to high-fi point you have told. Now, whether you will get marks or not, Arun, depends who is checker. If checker has zero knowledge, he is just working for money. Everyone works for money, right? Then he will not give marks. But if checker very intelligent, he will give marks. So in India, it depends. If he doesn't understand only GSTR, then zero mark. Suggested answer not matching GSTR. What is? If good checker, or 3.5 marks. Depends. Now, if I read once, it will be super simple. 1, 2, 3. Purchase invoice should be original copy and in the name of entity. Invoice should be in name of entity. Third, in case purchase from related party, see whether it is done at arm's length price and approved by board of director. Auditor should see purchase is capitalized or charged to P&L. Purchase invoice should be booked only when risk and rewards are transferred. Review journal entry for unusual transaction. Over? Yes, sir. Third question. Same thing is written here. Completeness and measurement, they have done together, I think. Yes. So less chance of coming. Why? Because they have done together. No. So what they will ask? Completeness and measurement. Less chance. But we will read once. 3 points are only there. First point. Perform cut-off procedure to see purchases are recorded in correct period. If you have received later, recognize next year. Many times you recognize just to reduce the loss, reduce the profit. Second, ensure correct accounting is done of goods in transit. In goods in transit, see what is the term of agreement. If it is FOB, then when they reach the port, you have to recognize purchase. If CIF, when you receive, you have to recognize. See, correct accounting is done of goods in transit when risk and rewards are transferred. Last point. Obtain written representation from management. All the purchase that should be recorded is properly recorded. Over. This will not come. Why? They don't want to give only anything. Now, this has come in exam. Definitely it can come here. In between, if you find unique point, no, they like. Why? Because they know you will not read. This double tick. This one was not double tick. This is double tick. In exam, they asked for 4 marks. How much line answer? 4 lines. Good question. Perform analytical procedure to get evidence about overall reasonableness of purchase quantity and price. You need to get evidence about reasonableness of what? Quantity or price? Both. What are analytical procedure done in purchase? If they ask you, very simple, just write this answer. Definitely it can come. Double tick. You might feel very hard. Super duper simple. Come here. What are analytical procedure for purchase to check reasonableness of quantity and price? Number 1, consumption analysis. See the raw material consumed in the current year. How you will know raw material? Opening stock plus purchase minus closing. See the RM consumed in the current year and compare it with last year and find out if there are significant variation. This year this much RM consumed but this much sale done. This much RM consumed, this much sale done. Are you clear? Compare. Find out if there is significant variation. If you have consumed, usually raw material is how much percentage of sale? 20%. This year it is 31. Why so much material? Are we inefficient? Simple. First, consumption. Auditor will see RM consumed as per manufacturing units made. We made this much unit, this much RM consumed. Compare with previous year by looking at closing stock. Now you will say, sir, how to find previous year? Closing stock and ask the reasons for variation. Simple. Consumption analysis. Here we will see the RM consumed as per manufacturing units made and compare the same RM consumed last year with the number of units made and ask reason for variation. Second, stock composition analysis. What is composition? How much this stock is there? We are auditing purchase, so raw material. We will see how much RM is as a percentage of total stock. RM, WIP, FG is there, do total. How much portion RM is there? Or last year it was 11%. This year RM 30. Why? Ask question. Sir, the rate is going to increase. No, that is why. Or reverse can also be there. Sir, this time RM 0. Why you are closing factory? GST rate will come down. No? So we will purchase that time. We are smart management. Oh, very good. Any reason they give, don't write here. Auditor should collect report for composition of RM as a part of total stock and compare the same with previous year. Ask reason. So consumption analysis, stock composition analysis. Last point, ratio. Auditor will perform creditor turnover ratio and stock turnover ratio. Compare with last year. What is creditor turnover? Purchase upon total creditor. Stock turnover, COGS upon average stock. Auditor will also do quantitative reconciliation of closing stock with opening stock, purchase, consumption. How this is done? Opening stock is this much, okay, purchase is this much, or you can go reverse also. Opening stock is this much, consumption this much, closing stock this much should be purchase. Or opening stock this much, purchase this much, closing stock this much. Is this the consumption? Quantitative reconciliation. If this comes, bonus question. What are analytical procedure to be done for purchase? In 1 minute over. Consumption analysis, stock composition analysis, ratio, consumption. Here we will see RM consumed as per manufacturing units made. Compare that with last year and find out significant variations, if any. Stock composition. Here we will see RM stock as a part of total stock. Compare that with last year. See significant variation. Ratio. Auditor will calculate creditor turnover ratio and inventory turnover ratio and compare with last year. Last point, we can do quantitative reconciliation of purchase of raw material with opening stock, closing stock and consumption. Full 4 marks I will get. Over. No need to read from here. Everything I have read. Disclosure will come, big no. Disclosure are done as per part 2. Purchase of stock in trade, changes in stock, transaction with related party. Over. Now, all chintu pintu expenses are coming. Easier one. Moving on towards employee benefit. Those who don't know, what is employee benefit? Payroll, salary to check. Is it easy? No, because it is too easy. To check this is super simple, but they will not ask this. Oh, in this it is not good. Only one question is there here. Of course, I will make you learn also. Though it will come, not come, I don't know. Look, let me look. It can come. Why? Because there is only one question. So sometimes they'll get chance. See, occurrence, completeness, measurement, all only one, only one, only one. Oh. So if payroll comes, what you have to do? 2 paragraphs are given. Payroll is employee benefit. Can we start? Yes, sir. How to audit? Okay, I will just explain briefly. If I was there to check payroll expense, salary expense, how I will check. Okay, 1, 2, 3, start. Obtain the entities method, obtain understanding of entities method for capturing attendance of employee. Is there a chance of dummy employee? Okay, if there is a chance, it's better to meet few employees in person. If dummy employee, what problem you have? Salary they will put in pocket. Obtain understanding of entities method for recording attendance. Is there a chance for dummy employee? If there is a chance, then what we will do? Try to meet few employees in person. Out of list of 2000 employees, tell them, I want to meet 200 people tomorrow, call. Randomly select. Very good. Obtain a list of all the employees. Divide them into three. Obtain list of all employees at year end. Okay. Month on month, I want list of 3 people. Joiners, leavers and continuing employee. One more time. Joiners, leavers, continuing employee. For all 3, I will write 1 point. Over. 5 point over. Joiner. Any new employee has joined. We will see whether they are paid salary as per the recruitment letter. Terms and condition in recruitment letter. We will check for sample of employees to see is there any fraud. Otherwise, what will happen? New employee join. Let us, no one will check salary now. So we will pay him less but put some money in pocket. For new employees, we will see that salary is paid as per the recruitment letter and terms and conditions in the recruitment letter. For all the levers, what we will check? Full and final settlement and check calculation is properly done in full and final settlement. For all the continuing employees, we will see, okay, production per employee per month is the proper, assuming it's a manufacturing entity, production per employee per month. Over. Some extra point? Yes, I can do 2, 3 more points also. PF, ESIC, let us see what they have given. First point, obtain understanding of entities process for capturing attendance of employee. There is a risk, there is a salary could be paid to dummy employee. Hence, best procedure is to meet few employee in person. Next, obtain list of all employee at year end along with monthly movement between new people, new hire, leaver and continuing employee. For all 3, 1 point, 5 points done. For new hires, obtain appointment letter, recruitment letter. See, salary for first and subsequent month is paid as per appointment letter. For resigned employee, obtain full and final settlement and see every due is recovered. Sometimes boy there, girl there, we are not recovering due, not allowed. Calculate average salary per employee per month and compare with previous year. If too much increase, ask question. Why? Sir, we took no 2 people. 1800 crore salary we paid Mark Zuckerberg, Meta, for AI. Verify. Last, now 2 points extra, 3 point extra. Verify. Provision is made for what? Bonus, gratuity, ESI, and obtain monthly deposit challan to see. Month on month liability is deposited. Why you need to make provision? You will pay next year, no? Verify provision is made for PF, ESIC, and see month on month challan to see. All government dues are deposited. Compare PF ESIC by multiplying basic salary with the rate. Basic salary rate of PF is 12%. Multiply. See, amount is coming approx, same approx. Perform analytical procedure to get reasonableness of the employee benefit expense. How to get reasonableness? By doing production per employee. They are assuming all people are doing manufacturing only. Calculate production per employee, compare with last year. How rubbish point. In our teaching industry, how to do production per employee? God knows. Only applicable to manufacturing, but given. Can you write 5 point? If they ask me this question too much, I will be emotional. Obtain understanding of management's process for recruiting new employee. We have to see salary is not paid to dummy employee. So if there is any chance, we'll try to meet few employees. Obtain list of all employees at the year end, okay, and month on month divide the list into new employee, leavers, and continuing employee. For new employee, see the recruitment letter to see first and subsequent salary is properly paid. For all the leavers, obtain full and final settlement statement and see amount is paid as per full and all the dues which should be recovered are recovered. For the continuing employees, we can see compare the salary per month per employee, compare with last year and find out reasons for variation. Now, we can also do, okay, production per employee. 2 points take together. Production per employee and compare with last year. Now, PF, ESIC. See, proper provision is done for PF, ESIC and month on month government dues are properly deposited. See the reasonableness of PF or ESIC by multiplying the basic salary with the rate applicable and see amount is coming approximately same. Full I said. Can you at least write few points? Of course. Full. Done. Disclosure can you teach? Nothing is there. Part 2. Employee benefits, salary, PF, ESOP, staff welfare. Now more and more we keep going ahead, more and more questions will keep on downgrading. Why? Because other expense, chiller. Come here now. Here what will come, I will tell you. Depreciation and amortization. Those who don't know, if you want, you can write there. On tangible asset, what is there? Depre. On intangible asset, what is there? Amortization. Tangible asset, depre. Intangible, amortization. Now, depreciation, amortization is very simple. So they will not ask. They are very smart. Very smart. They will ask this rubbish question. Auditor need to check following attribute. What are attribute? Characteristic for verifying depre and amortization. Question. What attribute auditor need to check for verifying depreciation and amortization? What attribute? You will out of syllabus. This one. Your basic given no depreciation how to check. They will not ask. Let us do something new in life. So more people feel. Attribute. Which one is more simple? What they ask? Attribute. But what India reads? This one. ICI. दिल में आता है समझ में नहीं. In 1 second I will make you learn. What are attributes? Means what points you check, characteristic you check for verifying depre and amortization. Super simple question. Double tick I told na, and double tick will be finished here itself. Auditor needs to check following attributes for depre and amortization. Number 1. Obtain understanding of accounting policy used for depreciation and amortization. Which policy? SLM, WDV. Second, ensure company's policy for charging depreciation or amortization is as per Companies Act 2013. Third, whether appropriate method is used for each depreciable component. What is each? Furniture and fixture, plant and machinery, okay, land and building. Proper method is used for each component of the fixed asset, each depreciable component. So 3 points are done. Number 1, obtain understanding of the method used by the management for charging depreciation. Ensure that the method used by the management is as per Companies Act 2013. Whether appropriate method of depreciation is used for each depreciable component. Accounting policy is consistently applied year on year, and if there are changes, it is adequately disclosed. If I am following SLM, every year same. If I am changing, then whatever effect written in AS6, prospective, retrospective, I will give. Consistently applied. If there is any change, disclosed. Moving on. Now, last 3 points are the super simple. Whether depreciation is calculated after adjusting residual value from cost of asset. They are saying formula in 6th standard it came cost minus residual value. Minus, don't forget. Who will forget? Who will forget? I don't know. Residual value deduct. Last 3 are chiller time pass point. Whether depreciation and amortization charges are properly calculated and recorded. Properly only we will calculate now. Second, are they valid? Last, whether they are recorded in correct period. Don't record next year depreciation this year. More I look at this point and more I feel how they can ask, but they've asked everything. Same you have to write in exam. Only then marks you will get. Easy, very easy. Let us try to learn. Obtain understanding of accounting policy used for depreciation and amortization. Evaluate whether the accounting policy used for depreciation and amortization is as per Companies Act 2013. See, if there is change, see, the accounting policy used for depreciation is consistently applied year on year. If there is any changes, effect is properly disclosed. Accounting policy, okay, whether proper method is used for each depreciable component. Then what I said. Last, whether depreciation is calculated after deducting residual value from the cost of asset. Whether depreciation and amortization charges are properly calculated and recorded. Whether depreciation and amortization charges are valid. Last point, whether depreciation and amortization charges are recorded in correct period. What to explain? Read, small break, 10 seconds. Shall we go ahead? Tell me, any doubt? Now, how to actually do depreciation amortization audit, that will come now. Occurrence, they forgot. They said now tired. Simple method they have given. Tell me, if I don't read this, can I write 5 points? How to audit depreciation? If they don't ask attribute, normal question. Obtain list of all the assets from fixed asset register. See, depreciation is charged on all the items. Second, evaluate accounting policy. Same points also I can write. Evaluate accounting policy used for depreciation is as per Companies Act. If there is any changes in the life of asset, see effect is given. If there is change in method of depreciation, see effect is retrospectively given. 4 point done. More points. I can also do depreciation rationalization. Obtain list of all assets. See the rate applicable. Calculate how much depreciation is. Is it matching with the sheet given by entity? Yes. Okay. What more in depreciation amortization? Nothing more, I think. God knows what. One more time. Depreciation is charged from ready to use and not put to use. See, intangible assets are properly amortized as per criteria given in AS 26. I have not read a single point. I have just whatever I feel. Can I write 6 points? Yes. Let us read now. Obtain understanding of entities method for depreciation. Obtain fixed asset register as revenue items can also be capitalized. Obtain list of all addition with proper approval. Select sample of assets from fixed asset register and see depreciation rate and depreciation charge. Few items select. Obtain list of all components identified by management. Ensure intangible asset like patent, goodwill, copyright are properly amortized. Depreciation is charged from ready to use and not put to use. Depreciation on revalued item is properly accounted from revaluation reserve. Whatever in A6, no, unique point, all copy. Depreciation, this I forgot, good point. Depreciation as per IT Act. Okay, as per Income Tax Act, see, additions are tallying with our Companies Act. Additions in Income Tax are tallying with Companies Act. Perform analytical procedure to see reasonableness of depreciation and amortization by multiplying asset value. Ensure depreciation is charged on useful life of PPE and other asset. Residual value are proper. Depreciation and amortization is calculated prospectively when there is change in life of asset. From formula only you can write 5 points, I think. Over. But what high chance I told that will come. This I have zero chance. I feel it will not come. Why? Because whole India can write. Disclosure, accounting policy, useful life, residual value, depreciation will not come. By the way, good news, we are on to last item. P&L over. Last item is easy? No. Easy multiply by 100. This they will not ask. If they ask, then to gone they are. Most easiest paper of decade. So what they will ask? Other expense are what? Power, fuel, repair, plant, rent, etc. Come here. What they will ask this? Attributes for other expense. While auditing other expense, what attributes we need to keep in mind? This is their new favorite question. While the auditor may analyze monthly trend for rent fuel, auditor prefers to vouch following attributes in other expense. So double tick. Of course, as I said, I will make you learn this. Rest to nothing is there. Nothing. Only this can come. Start. If this comes huge, lot of people will fail. Why? Because they don't read. It is very simple, but they will fail. What are attributes for verifying other expense? Whether expenditure has been classified under correct head. Power, fuel, legal. Head is correct. Of course, it will be correct. Second, whether expenditure is a revenue expenditure and not capital. Capital, then capitalize. Third, whether expenditure pertains to current period under audit. Don't take next year expense. Very simple. 3 point. Don't learn, automatic learn. Whether expenditure pertains, whether expenditure is classified under correct head, whether expenditure is qualified as a revenue and not capital expenditure, whether expenditure is recognized in correct period, whether expenditure has relevant supporting document like travel, insurance policy. Supporting document should be their power, fuel, travel, etc. Whether expenditure is approved as per delegation of authority matrix. Above 1 lakh, who will approve? Department head. Above 5 lakh, who will approve? Purchase head. Above 10 lakh, CFO. Whether expenditure is approved as per delegation of authority matrix. Last, whether it is a business expense and not a personal expense. Over. Asnir Grover, Shark Tank. What he did? He intentionally, his wife and he flew to Italy. All wife expense of makeup, this, that, he charged to company's account. This point. Is it simple? Fully super duper simple. Let us learn. 1, 2, 3, start. Sir, while auditing other expense, what I will check attribute whether expenditure is classified under correct head, whether expenditure is a revenue expenditure and not capital expenditure. Third, whether expenditure pertains to correct period under audit. Are you clear? Next point, whether expenditure is supported by supporting documents. I think the last point, whether expenditure is approved as per delegation of authority matrix. Last point, whether expenditure is an entity expense and not a personal expense. For all expenses, you have to check these points. Super simple. Small break, 10 seconds. Just once read. Done? Moving on. Now, shall I speak once? Tell me. Things to be kept in mind for checking other expense. Whether expenditure is classified under correct head. Whether expenditure is a revenue expenditure and not capital. Whether expenditure pertains to correct period under audit. Next, whether expenditure is supported by supporting document. Whether expenditure is approved as per delegation of authority matrix. Whether it is a not a personal expense but a entity's expense. Now, very simple. Don't learn anything. Tell me what to check. Rent. How will you check rent in real life? Obtain the rent agreement and see whatever is written in the agreement. These rentals are the same. Rent is paid as per same. Second, if there is a escalation clause, okay, escalation means rent will increase. See, the effect is properly given. Over. Month-wise rent is properly paid. Verify all 12 months expenses booked. Third, special consideration is given to escalation clause and it is recorded. One last thing. See, rent is paid for the by the entity. Are we using that premise? And rent agreement is in name of entity. Over. It can never come. If it comes, everyone will write. Next, power fuel. Tell me what to check. Check month-wise schedule of power and fuel. We can also compare, okay, the unit of power and fuel charge rate per unit is matching properly as per the guidelines given by the bill per provider. Third, we can also do analytical procedure based on production units, okay, compare month on month production and month on month power and fuel. Factory you can compare, no, this much production, this much fuel, this much production, this much fuel. See if there is any significant change. Over. Multiply power units with the rate to see total bill. Link the units of electricity consumed with finished goods production and see significant variation. Insurance expense. How to check? Obtain a list of all insurance policy and see insurance premium is properly debited to P&L. See policies are in the name of company. Third and last point, most important, in case insurance is a different date, for example it's 1st September to 1 year, then see proper prepaid expenses given. Over. Obtain summary of all insurance policy. Verify expenses are correctly classified between prepaid and current. Legal professional fee. How to check? Obtain a list of all contract with the lawyers. See if there is a monthly retainership agreement. Charges for all 12 months are debited. If there is new legal and expense fee, any new legal and expense fee, are you clear? Then see the provision for the same is done in court case. If new legal expenses come, where is that case? C. The corresponding case is recorded in contingent liability. Good point. Month-wise and consultant-wise summary. In case of monthly agreement, see all 12 months expenses booked of that lawyer. In case of non-recurring expense, verify a sample and vouch attribute of the same. In case legal expense is there, unusual, see provision for the same is made. Dispute, that dispute should be recorded, no? You have paid fees. Now they got tired. Travel, repair, printing, stationery. They said, what is all this? Prepare a monthly summary of all expense and compare month on month. Second, perform analytical procedure to see. Calculate travel, repair per unit of production. Heights of time pass. What relation travel will have with production? They are assuming all our production company. I mean, Infosys can never do all this. But forget, auditor can also see. Calculate expense per unit of sale and compare with last year. If they ask, their insult will happen. Over. Can it come? Big no. If it comes, then you will write better answer. Over. Congratulations. We are done with half. Any doubt, feel free to ask. Any doubt? Total 8. What was that sure question which will come? Till now it has not come only. Till now that has not come. Total 8 question you have to learn. Not like that. Generally so many we have learned. You found 8. Maybe any other can also come. Chalo, what is the mood? Shall we go ahead? Yes, sir. Now, our half chapter is over. Tell me what is pending first of all. What is pending you should know. Balance sheet. Now, that sure question has come. Of course, that sure I told it is of 20-25 minutes. Okay. Right now we will discuss only how much minute? 5 minutes. Okay. Rest 15 minutes pending. Come here. Whichever are additional notes, out of that one note will come. Whichever are additional notes, out of that one note will come. Why? Because they don't want to ask normal disclosure. One note will come. So every additional note you have to remember. All additional note, if I want to teach, it takes 25 minutes. Okay. But all will come at once. Your head will pain. So 2 have come right now. We will learn both. Very simple. Start. After that, we start balance sheet. Balance sheet also we have to discuss 2 items and then we are done. Start. To be disclosed. These are additional info. All these notes are super important. All have come. All have come. CSR. So in CSR, what to write? Where a company is covered under section 135, company will disclose the following. Corporate social responsibility is 2% of profit. Where a company is covered under section 135, company will disclose the following. Number 1, amount of CSR required to be spent. For example, your profit is this much, 2%. Amount of CSR, I have to calculate. You just have to copy. Amount of CSR required to be spent. Second, amount incurred. Now, out of, let's assume 1 crore, you incurred 60 lakh. Amount of shortfall, 40 lakh. Or a previous year also shortfall is there. Total of previous year's shortfall. Or why you are not doing CSR? Reason for shortfall. Nature of CSR, what CSR you are doing? Are you doing school, hotel, hospital? Hotel not CSR, sir. Okay. Hospital, school, nursery, NGO, education. These days, all big company, Reliance, Tata, what they do? They create their own company who will do CSR. They actually don't do CSR. If you give to others, they will also not do CSR. So better I will only create my company who will not do CSR. But at least money will come to me only. Detail of related party transaction. Whether contribution is given to a trust which is controlled by company. You are giving your trust money. Nita Ambani Foundation. Reliance gives money to Nita Ambani Foundation. Where a provision is made, you made provision for that in starting of the year. Whether you have incurred the expenditure, whether provision is made in respect of liability. Movement in provision during the year. Very hard. This to how to remember. Here. Where a company under section 135 CSR is applicable, we will disclose the following. All points you have to write. Number 1, amount of CSR required to be spent. Second, amount actually incurred. Total shortfall. Fourth point, total of previous year shortfall. Reason of shortfall. Whether CSR is given to related party. Whether CSR is given to related party. Reason of short. Nature of CSR. Sorry, I forgot. Detail of related party transaction. Contribution is to a trust which is controlled by company. Where a provision is made. Movement in provision during the year. Where provision is made in respect of liability. Movement in provision during the year. If you try to learn, you cannot learn. Logical it is. Where a company under section 135 has to incur CSR expenditure, we will disclose the following. Sir, if 1 point not missing, 4 marks you will get. Oh, good. This number 1, amount of CSR incurred to be incurred during the year. Amount actually incurred. Amount of shortfall. Total of previous year shortfall. Reason of shortfall. Nature of CSR. Whether contribution is to a trust, that is related party. And last point, where provision is made in respect of liability. Movement in provision during the year. Shall I teach more or understood? This has come in exam, 4 marks. Big yes. Shall we go ahead or you want to read one more time? Reply fast. Understood. Cryptocurrency can also come. Separate question. Where a company has invested in cryptocurrency or virtual currency. 3 points. Profit and loss on cryptocurrency. Amount of cryptocurrency held during the reporting date. Deposit or advance from any person for trading into cryptocurrency. Super simple. Where a company has traded into cryptocurrency, 3 things. Profit and loss on sale of cryptocurrency or virtual currency. Amount of crypto or virtual currency kept at the year end. Whether we have taken advance from any person for trading in cryptocurrency. Government wants to know all this. Profit and loss. Amount of cryptocurrency at year end. Whether we have taken advance from any person. Any doubt? Over. Like this small disclosure are there, one they will ask. Now, balance sheet, shall we do a break or continue? Break. But what I will do is, I will explain assertions and then take break. Shall I explain assertion word in balance sheet? Though you know it. Then take break. So after the break, what we have to do? Just learn one item. Property, plant, equipment, tangible, intangible, then bye-bye. Start. 1, 2, 3, start. Tell me in balance sheet what to check. Occurrence, completeness, measurement. No. Or balance sheet item. Existence. See, transaction will just listen 5 minutes lecture over. Only 5. Not over, break. Okay. Remember, break. Listen. Take small break of 2 seconds. Welcome back. In P&L, transaction has occurred, but asset never occurs. One asset give, one plant and machinery occur. No, exist. Liability exists. Sir, how to check existence? Physical verification. Oh. How to check borrowings? Loan agreement. Understood. But you will teach this in detail. Yes. Same word. Instead of occurrence, it is existence. Because asset will exist, they will never occur. Rishta wahi soch nahi. Same words. Let's take another example. See, person is person, human. But boy is called boy, girl is called girl. Why like that? Why can't we reverse? It's like that. It's more suitable. Boy, girl. Same way, for P&L there is occurrence, for balance sheet we call existence. How to check existence of inventory? Physical verification. Over. Completeness, nothing to explain, copy paste. Cut off, transactions are recorded in correct period. If I acquire asset in April, I will not record in March. Oh my god! Measurement is for transactions are measured, assets are valued. Why? Asset can never be measured. Bad English. Fixed asset is measured. Fixed assets are valued. Borrowings are valued. How to check? Invoice cost minus depre. Over. Can you tell girl you are looking like boy? She might not like. Same way for P&L, measurement, balance sheet, valuation. Rights and obligation. Entity has the right to receive the asset and liability to settle obligation. How to know this is my asset? I will check title deed. Our home, if you tell it is my home, what I will tell? Court case. It's my right. It's my right. How to check? Legal ownership document. How to check it is my obligation? I will say, I take one loan of 5 crore. I will not pay. Loan agreement. Your dad also has to pay. Obligation. Asset is a right, liability is an obligation. Presentation disclosure as per part 1 of schedule 3. So only 3 words we have to learn here. Abba, dabba, jabba. Rest all same. Existence, valuation, rights and obligation. Occurrence is always for transactions. For balance sheet, it is existence. Always remember, transactions are measured, but balance sheet is valued. And asset is my right, liability is my obligation. How to check all this? See you after short commercial break. 10:15 is good. See you 10:15. Bye-bye.